and before January 1st, 2026, 37.5%. 2, during calendar year 2026, 40%. 3, during calendar year 2027, 45%. 4, under calendar year 2028, 50%. 5, during calendar year 2029, 55%. And 6, after December 31st, 2029, 60%. And 2, in the case of energy storage technology, the construction of which begins 1, during calendar year 2026, 55%. 2, during calendar year 2027, 60%. 3, during calendar year 2028, 65%. 4, during calendar year 2029, 70%, and 5, after December 31st, 2029, 75%. C, threshold percentage for eligible components. One, in general, for purposes of subparagraph A2, the threshold percentage shall be 1, in the case of any solar energy component such term is defined in section 45XC3A, which is sold AA, during calendar year 2026, 50%. BB, during calendar year 2027, 60%. CC, during calendar year 2028, 70%. DD, during calendar year 2029, 80%. And EE, after December 31st, 2029, 85%. 2, in the case of any wind energy component as such term is defined in section 45X C4A, which is sold AA, during calendar year 2026, 85%, and BB, during calendar year 2027, 90%. 3, in the case of any inverter described in subparagraphs B through G of section 45XC2, which is sold AA during calendar year 2026, 50%, BB during calendar year 2027, 55%, CC during calendar year 2028, 60%, DD during calendar year 2029, 65%, and EE after December 31st, 2029, 70%. 4, in the case of any qualified battery component such as term is defined in section 45XC5A, which is sold AA during calendar year 2026, 60%, BB during calendar year 2027, 65%, CC during calendar year 2028, 70%. DD during calendar year 2029, 80%, and EE after December 31st, 2029, 85%, and 5, subject to clause 2 in the case of any applicable critical mineral as such term is defined in section 45XC6, which is sold AA, after December 31st, 2025, and before January 1st, 2030, 0%. BB during calendar year 2030, 25%. CC during calendar year 2031, 30%. DD during calendar year 2032, 40%. And EE after December 31st, 2032, 50%. 2, adjusted threshold percentage for applicable critical minerals. Not later than December 31st, 2027, the Secretary shall issue threshold percentages for each of the applicable critical minerals described in section 45XC6, which shall 1, apply in lieu of the threshold percentage determined under clause 1.4 of each calendar year, 1.5 of each calendar year, and 2, equal or exceed the threshold percentage which would otherwise apply with respect to such applicable critical minerals under such clause for such calendar year, taking into account AA, domestic geographic ability, BB, supply chain constraints, CC, domestic processing capacity needs, and DD, national security concerns. D, materials assistance cost ratio. 1, qualified facilities and energy storage technology. For purpose of term, material assistance cost ratio means the amount expresses a percentage equal to the quotient of 1, an amount equal to AA, the total direct cost to the taxpayer attributable to all manufactured products, including components which are incorporated into the qualified facility or energy storage technology upon completion of construction, minus BB, the total direct cost to the taxpayer attributable to all manufactured products, including components which are AA, incorporated into the qualified facility or energy storage technology upon completion of construction, and BB, mined, produced, or manufactured by a foreign prohibited foreign entity divided by 537. 2, the amount described in subclause 1AA. 2, eligible components. For the purposes of subparagraph A, 2, the term material assistance cost ratio means the amount expressed as a percentage equal to the quotient of 1, an amount equal to AA with respect to an eligible component, the direct material costs that are paid or incurred within the meaning of Section 461 and any regulations issued under Section 263A by the taxpayer for production of such eligible component, minus BB with respect to an eligible component, the total direct material costs that are paid or incurred within the meaning of Section 461 and any regulations issued under Section 263A by the taxpayer for production of such eligible component that are attributable to prohibited foreign entity divided by 2, the amount described in subclause 1AA. 3, safe harbor tables. 1, in general, not later than December 31st, 2026, the Secretary shall issue safe harbor tables and such other guidance as deemed necessary. 2, AA, identify the percentage of total direct costs of any manufactured product which is attributable to a prohibited foreign entity. BB, identify the percentage of total direct material costs of any eligible component which is attributable to a prohibited foreign entity. And CC, provide all rules necessary to determine the amount of a taxpayer's material assistance from a prohibited foreign entity within the meaning of this paragraph. 2, safe harbor prior to issuance. For the purposes of this paragraph, prior to the date on which the Secretary issues the safe harbor tables described in subclause 1, and for the construction of qualified facility or energy storage technology which begins on or before the date, which is 60 days after the date of issuance of such tables, a taxpayer may, A, use the tables included in Internal Revenue Service Notice 2025-8 to establish the percentage of the total direct costs of any listed eligible component and any manufactured product, and BB, rely on a certification by the supplier of the manufactured product, eligible component, or constituent element, material, or subcomponent of an eligible component. AA, of the total direct cost of the total direct material costs as applicable of such product or component that was not produced or manufactured by a prohibited foreign entity, or BB, that such product or component was not produced or manufactured by a prohibited foreign entity. 3, exception, notwithstanding subclauses 1 and 2, AA, if the sub-taxpayer knows or has reason to know that a manufactured product or eligible component was produced or manufactured by a prohibited foreign entity, the taxpayer shall treat all direct costs with respect to such manufactured product or indirect material costs with respect to eligible components and attributable to a prohibited foreign entity. And BB, if the taxpayer knows or has reason to know that the certification referred to in Clause 2BB pertaining to a manufactured product or an eligible component is inaccurate, the taxpayer may not rely on such certification. 4, certification requirement. In a manner consistent with Treasury Regulation Section 1.45X 4C41 as in effect on the date of the enactment of this paragraph, the certification referred to in subclause 2BB shall AA, include AA, the supplier's employee identification number, or BB, any such similar identification number issued by a foreign government. BB, be signed under penalties of perjury. CC, be retained by the supplier and the taxpayer for a period of not less than 6 years, and shall be provided to the Secretary upon request. And DD, be from the supplier from which the taxpayer purchased any manufactured product, eligible component, or constituent elements, materials, or subcomponents of an eligible component, stating either AA, that such property was not produced or manufactured by a prohibited foreign entity, and that the supplier is not aware that any prior supplier in the chain of production of that property is a prohibited foreign entity. BB, for the purposes of Section 45X, the total direct material cost for such component, constituent element, material, or subcomponent that were not produced or manufactured by a prohibited entity, or CC, for purposes of Section 45Y or Section 48E, the total direct costs attributable to all manufactured products that were not produced or manufactured by a prohibited foreign entity. 4, existing contract. Upon the election of the taxpayer in such form and manner as the Secretary shall designate, in the case of any manufactured product, eligible component, or constituent element, material, or subcomponent of an eligible component, which is 1, acquired by the taxpayer or manufactured or assembled by or for the taxpayer pursuant to a binding written contract which was entered prior to June 16, 2025, and 2A, placed in service before January 1st, 2030, or in the case of an applicable facility as defined in Section 45Y D4B before January 1st, 2028, or BB, in the case of constituent element, material, or subcomponent used in a product sold before January 1st, 2030. The cost to the taxpayer with respect to such product, component, element, material, or subcomponent shall not be included for purposes of determining the material assistance cost ratio under this subparagraph. 5, Anti-circumvention rules. The Secretary shall prescribe such regulations and guidance as may be necessary or appropriate to prevent circumvention of the rules under this paragraph, including prevention of 1. Any abuse of the exception provided under Clause 4 under the stockpiling of any manufactured product, eligible component or constituent element, material or subcomponent of an eligible component during any period prior to the application of the requirements under the paragraph, or 2. Any evasion with respect to the requirements of the subparagraph where the facts and circumstances demonstrate the beginning of construction of a qualified facility or energy storage technology that has not in fact occurred. E. Other definitions. For purposes of this paragraph, 1. Eligible component. The term eligible component means 1. Any property described in Section 45XC1, or 2. Any component which is identified by the Secretary pursuant to regulations or guidance issued under subparagraph G. 2. Energy storage technology. The term energy storage technology has the same meaning given term under Section 48EC2. 3. Manufactured product. The term manufactured product means 1. A manufactured product which is a component of a qualified facility as described in Section 45Y G11B, and any guidance issued thereunder, or 2. Any product which is identified by the Secretary pursuant to regulations or guidance issued under subparagraph G. 4. Qualified facility. The term qualified facility means 1. A qualified facility is defined in Section 45YB1. 2. A qualified facility is defined in Section 48EB3. And 3. Any qualified interconnection property is defined in Section 48EB4, which is part of the qualified investment with respect to a qualified facility as described in Section 48EB1. F. Beginning of construction. Rules similar to the rules under paragraph 51J shall apply for purposes of this paragraph. G. Regulations and guidance. The Secretary may prescribe such regulations and guidance as may be necessary or appropriate to carry out the provisions of this paragraph, including 1. Identification of components or products for purposes of clauses, and 2. And for clauses 1 and 3 of subparagraph E, and 2. For purposes of subparagraph A2, rules to address facilities which produce more than one eligible component. D. Denial of credit for certain wind and solar leasing agreements. Section 45Y is amended by adding at the end the following new subsection. H. Denial of credit for wind and solar leasing agreements. No credit shall be determined under this section with respect to any production of electricity during the taxable year with respect to property described in paragraph 1 or 4 of Section 45D as applied by substituting lessee for taxpayer if the taxpayer rents or leases such property for a third party during such taxable year. E. Emissions rates table. Section 45YB2C is amended by adding at the following new clause. 3. Existing studies. For purposes of Clause 1 in determining greenhouse gas emission rates for types or categories of facilities for the purposes of determining whether a facility satisfies the requirements under paragraph 1, the Secretary shall consider studies published on or before the date of enactment of this clause, which demonstrate a net life cycle greenhouse gas emissions rate, which is not greater than 0 using widely accepted life cycle assessment concepts, such as concepts described in standards developed by the International Organization for Standards. F. Nuclear energy communities. 1. In general, Section 45B11 is amended. A. In subparagraph B. 1 in clause 2.2 by striking or at the end. 2 in clause 3.2 by striking the period at the end, inserting comma or comma, and 3 by adding at the end of the following new clause. 4 for purposes of any qualified facility which is an advanced nuclear facility, a metropolitan statistical area which has or at any time during the period beginning after December 31st, 2009 had 0.17% or greater direct employment related to the advancement of nuclear power, including employment related to 1. An advanced nuclear facility. 2. Advanced nuclear power research and development. 3. Nuclear fuel cell cycle research, development, or production, including mining, enrichment, manufacture, storage, disposal, or recycling of nuclear fuel. And 4. The manufacturing or assembly of components used in an advanced nuclear facility. And B. By adding at the end following new subparagraph. C. Advanced nuclear facilities. 1. In general, subject to clause 2 for purposes of subparagraph B4. The term advanced nuclear facility means any nuclear facility, the reactor design for which is approved in the manner described in Section 45J D2. Special rule. For purposes of Clause 1, a facility shall be deemed to have a reactor design which is approved in the manner described in Section 45JD2 if the Nuclear Regulatory Commission has authorized construction and issued a site-specific construction permit or combined license with respect to such facility. 2. Non-application for clean electricity investment credits, Section 48E3A1, is amended by inserting, as applied without regard to, Clause 4 thereof after Section 45B11B, G, conforming amendments. 1. Paragraph 1 of Section 48DC is amended to read as follows. 1 is not specified for an entity as defined in Section 7701A51B, and 2, Section 45YB1 as is amended, A, by redesignating subparagraph D as subparagraph E, and B, inserting after subparagraph C the following new subparagraph, D, determination of capacity. For purposes of subparagraph C, additions of capacity of a facility shall be determined in any reasonable manner, including based on 1, determinations by or reports to the Federal Energy Regulatory Commission, including interconnection agreements, the Nuclear Regulatory Commission, or any similar entity reflecting additions of capacity. 2, determinations or reports reflected in additions or capacity made by an independent professional engineer. 3, reports to or issued by regional transmission organizations or independent system operators reflecting additions of capacity, or 4, any other method or manner provided by the Secretary. H, prohibition on transfer of credits to specified foreign entities. Section 6418G is amended by adding at the end of the following new paragraph. 5, prohibition on transfer of credits to specified foreign entities. With respect to any eligible credit described in Clause 3, 4, 6, 7, 8, or 11 of subsection F1A, an eligible taxpayer may not elect to transfer any portion of such credit to a taxpayer that is a specified foreign entity as defined in Section 7701A51B. 1, extension of period of limitations for errors relating to determining of material assistance from a prohibited foreign entity. Section 6501 is amended 1 by redesignating subsection O as subsection P, and 2 by inserting after subsection N the following new subsection. O, material assistance from a prohibited foreign entity. In the case of a deficiency attributable to an error with respect to the determination under Section 7701A52 for any taxable year, such deficiency may be assessed at any time within 6 years after the return of such year was filed. J, imposition of accuracy-related penalties. 1, in general, Section 6662 is amended by adding at the end the following new subsection. M, substantial understatement of income tax due to disallowance of applicable energy credits. 1, in general, in the case of a taxpayer which there is a disallowance of an applicable energy credit for any taxable year for purposes of determining whether there is a substantial understatement of income tax for such taxable year, subsection D1 shall be applied. A, in subparagraphs A and B by substituting 1% for 10% each place it appears, and B, without regard to subparagraph C, 2, disallowance of an applicable energy credit. For purposes of this subsection, the term disallowance of an applicable energy credit means a disallowance of a credit under Section 45X, 45Y, or 48E by reason of overstating the material assistance cost ratio as determined under Section 7701A52 with respect to any qualified facility, energy storage technology, or facility which produces eligible components. 2, conforming amendment. Section 6417D6 is amended by adding at the end the following new subparagraph. D, disallowance of an applicable energy credit. In the case of an applicable entity which made an election under subsection A with respect to an applicable credit for which there is a disallowance described in Section 6662M2 subparagraph A, shall apply with respect to any excessive payment resulting from such disallowance. K, penalty for substantial misstatements on certification provided by the supplier. 1, in general, Part 1 of Subchapter B of Chapter 68 is amended by inserting after Section 6695A the following new subsection. Section 6695B, penalty for substantial misstatements on certification provided by supplier. A, imposition of penalty if 1, a person A provides a certification described in Clause 3 to BB of Section 7701A52D,
With respect to any manufactured product, eligible component, or constituent element, material, or subcomponent of an eligible component, and knows or reasonably should have known that the certification would be used in connection with a determination under such section. Such certification is inaccurate or false with respect to A, whether such property was produced or manufactured by a prohibited foreign entity, or B, the total direct costs or total direct material costs of such property that was not produced or manufactured by a prohibited foreign entity that were provided on such certification, and 3, the inaccuracy or falsity described in paragraph 2 resulted in the disallowance of an applicable energy credit as defined in section 6662 M2 and an understatement of income tax within the meaning of section 6662 D2 for the taxable year in an amount which exceeds the lesser of A, 5% of the tax required to be shown on the return for the taxable year, or B, $100,000. Then such person shall pay a penalty in the amount determined under subsection B. B, amount of penalty. The amount of the penalty imposed under subsection A on any person with respect to a certification shall be equal to the greater of 10% of the amount of the underpayment as defined in section 6664A, solely attributable to the inaccuracy or falsity described in subsection A2, or 2, $5,000. C, exception. No penalties shall be imposed under subsection A if the person establishes to the satisfaction of the Secretary that any inaccuracy or falsity described in subsection A2 is due to a reasonable cause and not willful neglect. D, definitions. Any term used in this section, which is also used in section 7701A 52, shall have the meaning given in such term in such section. 2, clerical amendments. A, section 6696 is amended 1 in the heading by striking and 6695A and inserting 6695A and 6695B. 2, in subsections A, B, and C by striking and 6695A, each place it appears, and inserting 6695A and 6695B. 3, in subsection C by striking or 6695A and inserting 6695A or 6695B. And 4, in subsection D, 1, in paragraph 1 by inserting or in the case of any penalty under section 6695B, 6 years, after assessed within 3 years. And 2, in paragraph 2 by inserting or in the case of any claim for refund of an overpayment of any penalty assessed under section 6695B, 6 years, after filed within 3 years. B, the table of sections for Part 1 of Chapter B of Chapter 68 is amended by inserting, after item related to Section 6695A, the following new item, Section 6695B, penalty for substantial misstatements on certification provided by supplier. 1, excise tax on facilities that receive material assistance from prohibited foreign entities. 1, in general, subtitle D is amended by adding at the end of the following new chapter, Chapter 50B, material assistance from prohibited foreign entities, Section 5000E-1, imposition of tax, Section 5000E-1, imposition of tax. A, in general, in the case of an applicable facility for which there is a material assistance cost ratio violation, a tax is hereby imposed for the taxable year in which such facility is placed in service in the amount determined under subsection D with respect to such facility. B, applicable facility. For purposes of this section, the term applicable facility means a facility owned by the taxpayer, one which, A, uses wind to produce electricity, within the meaning of such term as used in Section 45D1, as determined without regard to any requirement under such section with respect to the date on which construction of property begins, or B, uses solar energy to produce electricity, within the meaning of such term as used in Section 45D4, as determined without regard to any requirement under such section with respect to the date on which construction of property begins, and 2, either A, the construction of which begins after the date of the enactment of this section and before January 1st, 2028, and which is placed in service after December 31st, 2027, or B, the construction of which begins after December 31st, 2027, and before January 1st, 2036. C, material assistance cost ratio violation. For purposes of this section, the term material assistance cost ratio violation means, with respect to an applicable facility, that the construction of such facility includes any material assistance from a prohibited foreign entity, as defined in Section 7701A 52. D, amount of tax. 1, in general, the amount determined under this subsection with respect to any applicable facility shall be equal to the applicable percentage of the amount equal to the product of A, the amount expressed in percentage points by which the threshold percentage, as determined under Section 7701A 52B1, exceeds the material assistance cost ratio, as determined under Section 7701A 52D1, multiplied by B, the total direct costs to the taxpayer attributable to all manufactured products, including components, which are incorporated into the applicable facility upon completion of construction, as determined under Section 7701A 52D1I. 2, applicable percentage. For purposes of paragraph 1, the applicable percentage shall be A, in the case of a facility described in subparagraph A of subsection B1, 30%, or B, in the case of a facility described in subparagraph B of such subsection, 50%. E, rule of application. For purposes of this section, with respect to the application of Section 7701A 52, or any provision thereof, such section shall be applied by substituting applicable facility for qualified facility each place it appears. 2, clerical amendment. The table of chapters for subtitle D is amended by inserting after the item related to Chapter 50A the following new item. Chapter 50B, material assistance from prohibited foreign entities. M, effective dates. 1, in general, except as provided in paragraphs 2, 3, 4, and 5, the amendments made by this section shall apply to taxable years beginning after the date of enactment of this act. 2, material assistance from prohibited foreign entities. The amendments made by subsection B1 shall apply to facilities for which construction begins after June 16th, 2025. 3, excise tax on facilities that receive material assistance from prohibited foreign entities. The amendments made by subsection 1 shall apply to facilities for which construction begins after June 16th, 2025. 4, penalty for substantial misstatements on certification provided by supplier. The amendments made by subsection K shall apply to certifications provided after December 31st, 2025. B, termination for wind and solar facilities. The amendments made by subsection A shall apply to facilities the construction of which begins after the date of enactment of this act. Section 7513, termination and restrictions on clean electricity investment credit. A, termination for wind and solar facilities. Section 48E is amended 1 in paragraph 1 by striking the amount of and inserting subject to paragraph 4, the amount of, and 2 by adding at the end of the following new paragraph. 4, termination for wind and solar facilities. A, in general, this section shall not apply to any qualified property placed in service by the taxpayer after December 31st, 2027, which is part of an applicable facility. B, applicable facility. For purposes of this paragraph, the term applicable facility means a qualified facility which, 1, uses wind to produce electricity within the meaning of such term as used in Section 45D1, as determined without regard to any requirement under such section with respect to the date on which construction of the property begins. Or 2, uses solar energy to produce electricity within the meaning of such term as used in Section 45D4, as determined without regard to any requirement under such section with respect to the date on which construction of property begins. C, exception. This paragraph shall not apply with respect to any energy storage technology which is placed in service at any applicable facility. B, restrictions relating to prohibited foreign entities. 1, in general, Section 48E is amended A in subsection B, 1, by redesignating paragraph 6 as paragraph 7, and 2, by inserting after paragraph 5 the following new paragraph. 6, material assistance from prohibited foreign entities. A, in general, subject to subparagraph B, the terms qualified facility and qualified interconnection property shall not include any facility or property, the construction, reconstruction, or erection of which begins after December 31st, 2025, if the construction, reconstruction, or erection of such facility or property includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52. B, applicable facilities. The term qualified facility shall not include any applicable facility, as defined in subsection E4B, for which construction begins after June 16th, 2025, if the construction of such facility includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52, and B, in subsection C, by adding at the end the following new paragraph. 3, material assistance from prohibited foreign entities. The term energy storage technology shall not include any property, the construction of which begins after December 31st, 2025, if the construction of such property includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52. 2. Additional restrictions. Section 48ED is amended by adding at the end the following new paragraph. 6. Restrictions relating to prohibited foreign entities. A. In general, no credit shall be determined under subsection A for any taxable year if the taxpayer is 1. A specified foreign entity as defined in Section 77A 51B, or 2. A foreign influenced entity as defined in Section 7701A 51D without regard to Clause 1, 2 thereof. B. Effective control. In the case of a taxpayer for which Section 7701A 51D12 is determined to apply for any taxable year, no credit shall be determined under subsection A for such taxable year if such determination relates to a qualified facility described in subsection B3 or energy storage technology described in subsection C2. Recapture. A. In general, Section 50A is amended. 1. By redesignating paragraphs 4 through 6 as paragraphs 5 through 7, respectively. 2. By inserting after paragraph 3 the following new paragraph. 4. Payments to prohibited foreign entities. A. In general, if there is an applicable payment made by a specified taxpayer before the close of the 10-year period beginning on the date such taxpayer placed in service investment credit property, which is eligible for the Clean Electricity Investment Credit under Section 48EA, then the tax under this chapter for the taxable year in which such applicable payment occurs shall be increased by 100% of the aggregate decrease in the credits allowed under Section 38 for all prior taxable years, which would have resulted solely from reducing to zero any credit determined under Section 46, which is attributable to the Clean Electricity Investment Credit under Section 48EA with respect to such property. B. Applicable payment. For purposes of this paragraph, the term applicable payment means, with respect to any taxable year, a payment or payments described in Section 7701A 51D12. C. Specified taxpayer. For purposes of this paragraph, the term specified taxpayer means any taxpayer who has been allowed a credit under Section 48EA for any taxable year beginning after the date, which is 2 years after the date of enactment of this paragraph. 3. In paragraph 5, as redesignated by Clause 1, by striking or any applicable transaction to which paragraph 3A applies, and inserting any applicable transaction to which paragraph 3A applies, or any applicable payment to which paragraph 4A applies. And 4. In paragraph 7, as redesignated by Clause 1, by striking or 3 and inserting 3 or 4. B. Conforming amendments. 1. Section 1371D1 is amended by striking Section 50A5 and inserting Section 50A6. 2. Section 6418G3 is amended by striking subsection A5, each place it appears, and inserting subsection A7. C. Denial of credit for expenditures for certain wind and solar leasing agreements. 1. In general, Section 48E is amended A by redesignating subsection 1 as subsection J, and B by inserting after subsection H the following new subsection. 1. Denial of credit for expenditures for wind and solar leasing agreements. No credit shall be determined under this section for any qualified investment during the taxable year with respect to property described in paragraph 1 or 4 of Section 25DD as applied by substituting lessee for taxpayer if the taxpayer rents or leases such property to a third party during such taxable year. 2. Conforming rules. Section 50 is amended by adding at the end the following new subsection. E. Rules for geothermal heat pumps. For purposes of this section and Section 168, the ownership of energy property described in Section 48A3A7 shall be determined without regard to whether such property is readily usable by a person other than the lessee or service recipient. D. Domestic content rules. Subparagraph B of Section 48EA3 is amended to read as follows. B. Domestic content. Rules similar to the rules of Section 48A12 shall apply, except that, for purposes of subparagraph B of such section and the application of rules similar to the rules of Section 45B9B, the adjusted percentage, as determined under Section 45B9C, shall be determined as follows. 1. In the case of any qualified investment with respect to any qualified facility, the construction of which begins before June 16, 2025, 40%, or in the case of a qualified facility which is an offshore wind facility, 20%. 2. In the case of any qualified investment with respect to any qualified facility, the construction of which begins on or after June 16, 2025, and before January 1, 2026, 45%, or in the case of a qualified facility which is an offshore wind facility, 27.5%. 3. In the case of any qualified investment with respect to any qualified facility, the construction of which begins during calendar year 2026, 50%, or in the case of a qualified facility, which is an offshore wind facility, 35%. 4. In the case of any qualified investment with respect to any qualified facility, the construction of which begins after December 31st, 2026, 55%. E, elimination of energy credit for certain energy property. Section 48A2 is amended, 1, in subparagraph A2 by striking 2% and inserting 0%, and 2, by adding at the end of the following new subparagraph. C, non-application of increases to energy percentage. For purposes of energy property described in subparagraph A2, the energy percentage applicable to such property pursuant to such subparagraph shall not be increased or otherwise adjusted by any provision of this section. F, application of clean electricity investment credit to qualified fuel cell property. Section 48E, as amended by subsection C, is amended, 1, by redesignating subsection J as subsection K, and 2, by inserting after subsection I the following new subsection. J, application to qualified fuel cell property. For purposes of this section, in the case of any qualified fuel cell property, as defined in section 48C1, as applied without regard to subparagraph E thereof, 1, subsection B3A shall be applied without regard to clause 3 thereof. 2, for purposes of subsection A1, the applicable percentage shall be 30%, and such percentage shall not be increased or otherwise adjusted by any other provision of this section. And 3, subsection G shall not apply. G, effective dates. 1, in general, except as provided in paragraphs 2, 3, 4, and 5, the amendments made by this section shall apply to taxable years beginning after the date of enactment of this act. 2, domestic content rules. The amendment made by subsection D shall apply on or after June 16, 2025. 3, elimination of energy credit for certain energy property. The amendments made by subsection E shall apply to property the construction of which begins on or after June 16, 2025. 4, application of clean electricity investment credit to qualified fuel cell property. The amendments made by subsection F shall apply to property the construction of which begins after December 31st, 2025. 5, termination for wind and solar facilities. The amendments made by subsection A shall apply to facilities the construction of which begins after the date of enactment of this act. Section 7514, phase out and restrictions on advanced manufacturing production credit. A, modification of provision relating to sales of integrated components. Paragraph 4 of section 45XD is amended to read as follows. 4, sale of integrated components. A, in general, for purposes of this section, a person shall be treated as having sold an eligible component to an unrelated person if, 1, such component, referred to in this paragraph as the primary component, is integrated, incorporated, or assembled into another eligible component, referred to in this paragraph as the secondary component, produced within the same manufacturing facility as the primary component, and 2, the secondary component is sold to an unrelated person. B, additional requirements. Subparagraph A shall only apply with respect to a secondary component for which not less than 65% of the total direct material costs which are paid or incurred within the meaning of section 46(1) and any regulations issued under section 263A by the taxpayer to produce such secondary component are attributable to primary components which are mined, produced, or manufactured in the United States. B, phase out and termination. Section 45XB3 is amended. 1, in the heading by inserting and termination after phase out. 2, in subparagraph A, in the matter of preceding clause I, by striking subparagraph C and inserting subparagraph C and D, and 3, by striking subparagraph C and inserting the following. C, phase out for applicable critical minerals other than metallurgical coal. 1, in general, the case of any applicable critical mineral other than metallurgical coal produced after December 31st, 2030, the amount determined under this subsection with respect to such mineral shall be equal to the product of I, the amount determined under paragraph 1 with respect to such mineral as determined without regard to this subparagraph, multiplied by 2, the phase-out percentage under clause 2. 2, phase-out percentage for applicable critical minerals other than metallurgical coal. The phase-out percentage under this clause is equal to 1, in the case of any applicable critical mineral produced during calendar year 2031, 75%. 2, in the case of any applicable critical mineral produced during calendar year 2032, 50%. 3, in the case of any applicable critical mineral produced during calendar year 2033, 25%. And 4, in the case of any applicable critical mineral produced after December 31st, 2033, 0%. D, termination for wind energy components. This section shall not apply to any wind energy component produced and sold after December 31st, 2027. E, termination for metallurgical coal. This section shall not apply to any metallurgical coal produced after December 31st, 2029. C, restrictions relating to prohibited foreign entities. Section 45X is amended. 1, in subsection C1 by adding at the end the following new subparagraph. C, material assistance from prohibited foreign entities. In the case of taxable years beginning after the date of enactment of this subparagraph, the term eligible component component shall not include any property, which includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52, as applied by substituting used in a product sold before January 1st, 2027 for used in a product sold before January 1st, 2030 in subparagraph D3V BB thereof. And 2, in subsection D, as amended by subsection A of this section, by adding at the end the following new paragraph. 4, restrictions relating to prohibited foreign entities. A, in general, no credit shall be determined under subsection A for any taxable year if the taxpayer is 1, a specified foreign entity, as defined in Section 7701A51B, or 2, a foreign influenced entity, as defined in Section 7701A51D, without regard to Clause 2 thereof. B, effective control. In the case of a taxpayer for which Section 7701A51D12 is determined to apply for the taxable year, no credit shall be determined under subsection A for such taxable year if such determination relates to an eligible component described in subsection C1. D, modification of definition of battery module. Section 45XC5B3 is amended. 1, in subclass IBB by striking and at the end. 2, in subclause 2 by striking the period at the end and inserting and 3, by adding at the end the following new subclause. 3, which is comprised of all other essential equipment needed for battery functionality, such as current collector assemblies and voltage sense harnesses, thermal collection assemblies, or other essential energy collection equipment. E, inclusion of metallurgical coal as an applicable critical mineral for purposes of the Advanced Manufacturing Production Credit. 1, in general, Section 45XC6 is amended. A, by redesignating subparagraphs R through Z as subparagraphs S through AA, respectively, and B, by inserting after subparagraph Q the following new subparagraph R, metallurgical coal. Metallurgical coal, which is suitable for the use in the production of steel within the meaning of the notice published by the Department of Energy entitled Critical Mineral List, addition of metallurgical coal used for steel making, 90 Federal Regulation 22711, May 29th, 2025, regardless of whether such production occurs inside or outside of the United States. 2, credit amount. Section 45XB1M is amended by inserting 2.5% in the case of metallurgical coal after 10%. F, effective dates. 1, in general, except as provided in paragraph 2, the amendments made by this section shall apply to taxable years beginning after the date of the enactment of this act. 2, modification of provision relating to sale of integrated components. The amendment made by subsection A shall apply to components sold during taxable years beginning after December 31st, 2026. Section 7515, restriction on the extension of Advanced Energy Product Credit Program. A, in general, Section 48C E3C is amended by striking shall be increased and inserting shall not be increased. B, effective date. The amendment is made by this section shall take effect on the date of enactment of this act. Subchapter B, enhancement of America First energy policy. Section 7521, extension and modification of clean fuel production credit. A, prohibition on foreign feedstocks. 1, in general, Section 45ZF1A is amended. A, in clause 1, 2, BB by striking and at the end. B, in clause 2 by striking a period at the end and inserting and C, by adding at the end the following new clause. 3, such fuel is exclusively derived from a feedstock by which was produced or grown in the United States, Mexico, or Canada. 2, effective date. The amendments made by this subsection shall apply to transportation fuel produced after December 31st, 2025. B, prohibition on negative emission rates. 1, in general, Section 45ZB1 is amended. A, by striking subparagraph C and inserting the following. C, rounding of emissions rate. The Secretary may round the emissions rate under subparagraph B to the nearest multiple of 5 kilograms of CO2e per MMBTU, and B, by adding at the end the following new subparagraph. E, prohibition on negative emission rates. For purposes of this section, the emissions rate for a transportation fuel may not be less than 0. 2, effective date. The amendments made by this subsection shall apply to emissions rates published for transportation fuel produced after December 31st, 2025. C, determination of emissions rate. 1, in general, Section 45ZB1B is amended by adding at the end the following new clauses. 4, exclusion of indirect land use changes. Notwithstanding clauses 1, 2, and 3, the emissions rate shall be adjusted as necessary to exclude any emissions attributed to indirect land use change. Any such adjustment shall be based on regulations or methodologies determined by the Secretary. 5, animal manures. With respect to any transportation fuel which is derived from animal manure, the Secretary, 1, shall provide a distinct emissions rate with respect to such fuel based on the specific animal manure feedstock, which may include dairy manure, swine manure, poultry manure, or any other sources as are determined appropriate by the Secretary. And 2, notwithstanding subparagraph E, may provide an emissions rate that is less than 0. 2, conforming amendment. Section 45Z B1 is amended by striking clauses 2 and 3 and inserting clauses 2, 3, 4, and 5. 3, effective date. The amendments made by this subsection shall apply to emissions rates published for transportation fuel produced after December 31st, 2025. D, extension of clean fuel production credit. Section 45ZG is amended by striking December 31st, 2027 and inserting December 31st, 2029. E, preventing double credit. Section 45ZD5 is amended 1 in subparagraph A, in Clause 2 by striking "and" at the end, B, in Clause 3 by striking the period at the end and inserting "and C, by adding at the end the following new clause. 4, is not produced from a fuel for which a credit under this section is allowable, and 2, by adding at the end the following new subparagraph. C, regulations and guidance. The Secretary shall issue such regulations or other guidance as the Secretary determines necessary to carry out the purposes of subparagraph A4. F, sales to unrelated persons. Section 45Z F3 is amended by adding at the end the following. The Secretary may prescribe additional related person rules similar to the rule described in the preceding sentence for entities which are not described in such sentence, including rules for related persons with respect to which the taxpayer has reason to believe will sell fuel to an unrelated person in a manner described in subsection A4. G, treatment of sustainable aviation fuel. 1, coordination of credits. A, in general, Section 45ZA3 is amended, 1, in the heading by striking special and inserting adjusted, and 2, by adding at the end the following new subparagraph. C, coordination of credits. In the case of a transportation fuel, which is sustainable aviation fuel, which is sold before October 1st, 2025, the amount of the credit determined under paragraph 1 with respect to any gallon of such fuel shall be reduced by an amount equal to the amount of the sustainable aviation fuel credit allowable under Section 6426K1. B, effective date. The amendments made by this paragraph shall apply to fuel sold after December 31st, 2025. 2, elimination of special rate. A, in general, Section 45ZA3, as amended by paragraph 1, is amended by 1, striking subparagraph A, and 2, by redesignating subparagraph C as subparagraph A. B, conforming amendment. Section 45ZC1 is amended by striking the $1 amount in subject A to B, the 35-cent amount in subsection A3A1, and the $1.75 amount in subsection A3A2, and inserting "and the $1 amount in subsection A2B. C, effective date. The amendments made by this paragraph shall apply to fuel produced after December 31st, 2025. H, sustainable aviation fuel credit. Section 6426K is amended by adding at the end the following new paragraph. 4, termination. This subsection shall not apply to any sale or use for any period after September 30th, 2025. 1, regulation or registration of producers of fuel eligible for clean fuel production credit. 1, in general, Section 13704B5 of Public Law 117169 is amended by striking after Section 6426K3 and inserting after Section 40B. 2, effective date. The amendment made by this subsection shall apply to transportation fuel produced after December 31st, 2024. J, extension and modification of small agrobiodiesel producer credit. 1, in general, Section 48 is amended, A, in subsection B4, 1, in subparagraph A, by striking 10 cents and inserting 20 cents. 2, in subparagraph B, by inserting "in a manner which complies with the requirements under Section 45Z F1A3 after produced by an eligible small agrobiodiesel producer. And 3, by adding at the end of the following new subparagraph. D, coordination with clean fuel production credit. The credit determined under this paragraph with respect to any gallon of fuel shall be in addition to any credit determined under Section 45Z with respect to such gallon of fuel. And B, in subsection G, by inserting "or" in the case of the small agrobiodiesel producer credit, any sale or use after December 31st, 2026, after December 31st, 2024. 2, transfer of credit. Section 6418F1A is amended by adding at the end the following new clause. XII, so much of the biodiesel fuels credit determined under Section 40A, which consists of the small agrobiodiesel producer credit determined under subsection B4 of such section. 3, effective date. The amendments made by this subsection shall apply to fuel sold or used after June 30th, 2025. K, restrictions relating to prohibited foreign entities. 1, in general, Section 45ZF is amended by adding at the end the following new paragraph. 8, restrictions relating to prohibited foreign entities. A, in general, no credit shall be determined under subsection A for any taxable year beginning after the date of enactment of this paragraph if the taxpayer is a specified foreign entity as defined in Section 7701A 51B. B, other prohibited foreign entities. No credit shall be determined under subsection A for any taxable year beginning after the date, which is 2 years after the date of enactment of this paragraph, if the taxpayer is a foreign influenced entity, as defined in section 77(0)(a)(51)(d), without regard to clause 1(2) thereof. 2, effective date. The amendment made by this subsection shall apply to taxable years beginning after the date of enactment of this act. Section 7522, restrictions on carbon oxide sequestration credit. 1, restrictions relating to prohibited foreign entities. Section 45QF is amended by adding at the end the following new paragraph. 10, restrictions relating to the prohibited foreign entities. No credit shall be determined under subsection A for any taxable year beginning after the date of enactment of this paragraph. The taxpayer is A, a specified foreign entity as defined in section 77(0)(a)(51)(b), or B, a foreign influenced entity as defined in section 77(0)(1)(a)(51)(d), determined without regard to clause 1(2) thereof. B, parity for different uses and utilizations of qualified carbon oxide. Section 45Q is amended. 1, in subsection A,
A, in paragraph 2B2 by adding and at the end. B, in paragraph 3 by striking subparagraph B and inserting the following. B1, disposed of by the taxpayer in secure geological storage and not used by the taxpayer as described in clause 2 or 3. 2, used by the taxpayer as a tertiary injectant in a qualified enhanced oil or natural gas recovery project and disposed of by the taxpayer in secure geological storage. Or 3, utilized by the taxpayer in a manner described in subsection F5 and C by striking paragraph 4(2) in subsection B, A in paragraph 1 by striking subparagraph A and inserting the following. A in general, except as provided in subparagraph B or C, the applicable dollar amount shall be an amount equal to 1, for any taxable year beginning in a calendar year after 2024 and before 2027, $17, and 2, for any taxable year beginning in a calendar year after 2026, an amount equal to the product of $17 and the inflation adjustment factor for such calendar year determined under section 43B3B for such calendar year, determined by substituting 2025 for 1990, and 2, in subparagraph B by striking shall be applied and all that follows through the period and inserting shall be applied by substituting $36 for $17 each place it appears. B, in paragraph 2B by striking paragraphs 3A and 4A and inserting paragraph 3A and C in paragraph 3 by striking the dollar amounts applicable under paragraph 3 or 4 and inserting the dollar amount applicable under paragraph 3. 3, in subsection F, A, in paragraph 5B1 by striking 4B2 and inserting 3B3, and B, in paragraph 9 by striking paragraphs 3 and 4 of subsection A and inserting subsection A3 and 4 in subsection H3A2 by striking paragraph 3A or 4A of subsection A and inserting subsection A3A. C, conforming amendment section 6417D3C12BB is amended by striking paragraph 3A or 4A of section 45QA and inserting section 45QA3A. D, effective dates. 1, restrictions relating to prohibited foreign entities. The amendment made by subsection A shall apply to taxable years beginning after the date of enactment of this Act. 2, parity for different uses and utilizations of qualified carbon oxide. The amendments made subsections B and C shall apply to facilities or equipment placed in service after the date of enactment of this Act. Section 70523, intangible drilling and development costs taken into account for purposes of computing adjusted financial statement income. A, in general, Section 56A, C13 is amended. 1, by striking paragraph A and inserting the following. A, reduced by 1, depreciation deductions allowed under Section 167 with respect to property to which Section 168 applies to the extent of the amount allowed as deductions in computing taxable income of the year, and 2, any deduction allowed for expenses under Section 263C, including any deduction for such expenses under Section 59E or 291B2 with respect to property described therein, to the extent of the amount allowed as deductions in computing taxable income for the year, and 2, by striking subparagraph B1 and inserting the following. 1, to disregard any amount of 1, depreciation expense that is taken into account on the taxpayer's applicable financial statement with respect to such property, and 2, depletion expense that is taken into account on the taxpayer's applicable financial statement with respect to the intangible drilling and development costs of such property, and B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70524, income from hydrogen storage, carbon capture, advanced nuclear, hydropower, and geothermal energy added to qualifying income of certain publicly traded partnerships. A, in general, Section 7704 D1E is amended. 1, by striking income and gains derived from the exploration and inserting the following. Income and gains derived from 1, the exploration, 2, by inserting or before industrial source, and 3, by inserting or the transportation or storage and all that follows and inserting the following. 2, the transportation of storage or storage of 1, any fuel described in subsection B, C, D, E, or K of section 6426, or any alcohol fuel defined in section 6426B4A, or any biodiesel fuel as defined in section 40AD1, or sustainable aviation fuel as defined in section 40BD1, or 2, liquefied hydrogen or compressed hydrogen. 3, in the case of qualified facility as defined in section 45QD, without regard to any date by which construction of the facility or equipment is required to begin, not less than 50% of the total carbon oxide production of which is qualified carbon oxide as defined in section 45QE. 1, the generation, availability for such generation or storage of electric power at such facility, or 2, the capture of carbon dioxide by such facility. 4, the production of electricity from any advanced nuclear facility as defined in section 45JD2. 5, the production of electricity or thermal energy exclusively using a qualified energy resource described in subparagraph D or H of section 45C1, or 4 or 6, the operation of energy property described in clause 3 or 7 of section 48A3A determined without regard to any requirement under such section with respect to the date on which construction of property begins. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70525, allow for payments to certain individuals who die fuel. A, in general, subchapter B of chapter 65, as amended by the preceding provisions of this act, is amended by adding at the end the following new section. Section 6435, died fuel. A, in general, if a person establishes to the satisfaction of the Secretary that such person meets the requirements by subsection B with respect to diesel fuel or kerosene, then the Secretary shall pay to such person an amount without interest equal to the tax described in subsection B2A with respect to such diesel fuel or kerosene. B, requirements. 1, in general, a person meets the requirements of this subsection with respect to diesel fuel or kerosene if such person removes from a terminal eligible indelibly dyed diesel fuel or kerosene. 2, eligible indelibly dyed diesel fuel or kerosene defined. The term eligible indelibly dyed diesel fuel or kerosene means diesel fuel or kerosene A, with respect to which a tax under Section 4081 was previously paid and not credited or refunded, and B, which is exempt from taxation under Section 4082A. C, cross-reference for civil penalty for excessive claims under this section. See Section 6675. B, conforming amendments. 1. Section 6206 is amended. A, by striking or 6427, each place it appears, and inserting 6427 or 6435, and B, by striking 6420 and 6421 and inserting 6420, 6421, and 6435. 2. Section 6430 is amended. A, by striking or at the end of paragraph 2, by striking the period at the end of paragraph 3 and inserting or, and by adding at the end of the following new paragraph 4, which are removed as eligible indelibly dyed diesel fuel or kerosene under Section 6435. 3. Section 6675 is amended. A, in subsection A, by striking or 6427 relating to fuels not used by taxable purposes and inserting 6427 relating to fuels not used for taxable purposes, or 6435 relating to eligible indelibly dyed fuel, and B, in subsection B1, by striking 6421 or 6427 and inserting 6421, 6427, or 6435. 4. The table of sections for subchapter B of Chapter 65, as amended by the preceding provisions of this Act, is amended by adding at the end the following new item. C, 6435, dyed fuel. C, effective date. The amendments made by this section shall apply to eligible indelibly dyed diesel fuel or kerosene removed on or after the date that is 180 days after the date of the enactment of this section. Subchapter C, other reforms. Section 70531, modifications to de minimis entry privilege for commercial shipments. Civil penalty. 1. Additional penalty imposed. Section 321 of the Tariff Act of 1930. 19 U.S.C. 1321 is amended by adding at the end the following new subsection. C. Any person who enters, introduces, facilitates, or attempts to introduce an article into the United States using the privilege of this section, the importation of which violates any other provision of United States customs law, shall be assessed, in addition to any other penalty permitted by law, a civil penalty of up to $5,000 for the first violation. 2. Effective date. The amendment made by paragraph 1 shall take effect 30 days after the date of the enactment of this Act. B. Repeal of commercial shipment exemption. 1. Repeal Section 321A2 of such Act. 19 U.S.C. 1321A2 is amended by striking of this Act or and all that follows through subdivision 2 and inserting of this Act and 2. Conforming repeal. Subsection C of such Section 321 as added by subsection A of this section is repealed. 3. Effective date. The amendments made by this subsection shall take effect on July 1, 2027. Chapter 6, enhancing deduction and income tax credit, guardrails, and other reforms. Section 70601, modification and extension of limitation on excess business losses of non-corporate taxpayer. A, rule made permanent. Section 461 L1 is amended by striking, and before January 1, 2029, each place it appears. B, adjustment of amounts for calculation of excess business loans. Section 46113C is amended. 1, in the matter preceding clause 1 by striking December 31, 2028 and inserting December 31, 2025, and 2, in clause 2 by striking 2017 and inserting 2024. C, effective dates. 1, rule made permanent. The amendment made by subsection A shall apply to taxable years beginning after December 31, 2026. 2, adjustment of amounts for calculation of excess business loan. The amendments made by subsection B shall apply to taxable years beginning after December 31, 2025. Section 70602, treatment of payments for partnerships to partners for property or services. A, in general, Section 707A2 is amended by striking under regulations prescribed and inserting except as provided. B, effective date. The amendment made by this section shall apply to services performed and property transferred after the date of the enactment of this act. C, rule of construction. Nothing in this section or the amendments made by this section shall be construed to create any inference with respect to the proper treatment under Section 707A of the Internal Revenue Code of 1986 with respect to payments from a partnership to a partner for services performed or property transferred on or before the date of the enactment of this act. Section 70603, excessive employee remuneration from control group members and allocation of deduction. A, application of aggregation rules. Section 162M is amended by adding at the end of the following new paragraph. 7, remuneration from control group members. A, in general, in the case of any publicly held corporation which is a member of a control group, 1, paragraph 1 shall be applied by substituting specified covered employee for covered employee, and 2, if any person which is a member of such control group other than such publicly held corporation provides applicable employee remuneration to an individual who is a specified covered employee of such control group, and the aggregate amount described in subparagraph B2 with respect to such specified covered employee exceeds $1 million, 1, paragraph 1 shall apply to such person with respect to such remuneration, and 2, paragraph 1 shall apply to such publicly held corporation and to each such related person by substituting the allocable limitation amount for $1 million. B, allocable limitation amount for purposes of this paragraph. The term allocable limitation amount means with respect to any member of the control group referred to in subparagraph A with respect to any specified covered employee of such control group, the amount which bears the same ratio to $1 million as 1, the amount of applicable employee remuneration provided by such member with respect to such specified covered employee bears to 2, the aggregate amount of applicable employee remuneration provided by all such members with respect to such specified covered employee. C, specified covered employee. For purposes of this paragraph, the term specified covered employee means with respect to any control group, 1, any employee described in subparagraph A, B, or D of paragraph 3 with respect to the publicly held corporation which is a member of such control group, and 2, any employee who would be described in subparagraph C of paragraph 3 if such subparagraph were applied by taking into account the employees of all members of the controlled group. D, controlled group. For purposes of this paragraph, the term controlled group means any group treated as a single employer under subsections B, C, M, or O of section 414. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31, 2025. Section 70604, third-party litigation funding reform. A, in general, subtitle D as amended by the preceding provisions of this act is amended by adding at the end the following new chapter, Chapter 50C, Litigation Financing, Section 500F1, Tax Imposed, Section 5000F2, Definition, Section 5000F3, Special Rules, Section 5000F1, Tax Imposed. In general, a tax is hereby imposed for each taxable year in an amount equal to 31.8% of any qualified litigation proceeds received by a covered party. B, application of tax for pass-through entities. In the case of a covered party that is a partnership, S corporation, or other pass-through entity, the tax imposed under subsection A shall be applied at the entity level. Section 5000F2, definitions. In this chapter, 1, civil action. A, in general, the term civil action means any civil action, administrative proceeding, claim, or cause of action. B, multiple actions. The term civil action may, unless otherwise indicated, include more than one civil action. 2, covered party. A, in general, the term covered party means with respect to any civil action, any third party, including an individual, corporation, partnership, or sovereign wealth fund to such action which 1, receives funds pursuant to a litigation financing agreement, and 2, is not an attorney representing a party to such civil action. B, inclusion of domestic and foreign entities. Subparagraph A shall apply to any third party without regard to whether such party is created or organized in the United States or under the law of the United States or any state. 3, litigation financing agreement. A, in general, the term litigation financing agreement means, with respect to any civil action, a written agreement, 1, whereby a third party agrees to provide funds to one of the named parties or any law firm affiliated with such civil action, and 2, which creates a direct or collateralized interest in the proceeds of such action by settlement, verdict, judgment, or otherwise, which 1 is based in whole or in part on a funding-based obligation to AA, such civil action, BB, the appearing counsel, CC, any contractual co-counsel, or DD, the law firm of such counsel or co-counsel, and 2 is executed with 606. AA, any attorney representing a party to such civil action, BB, any co-counsel in such civil action with a contingent fee interest in the representation of such party, CC, any third party that has a collateral-based interest in the contingency fees of the counsel or co-counsel firm which is related in whole or in part to the fees derived from representing such party, or DD, any named party in such civil action. B, substantially similar agreements. The term litigation financing agreement shall include any contract, including any option, forward contract, futures contract, short position, swap, or similar contract, or other agreement which, as defined by the Secretary, is substantially similar to an agreement described in subparagraph A. C, exceptions. The term litigation financing agreement shall not include any agreement, 1, under which the total amount of funds described in subparagraph A1 with respect to an individual civil action is less than $10,000, or 2, in which the third party described in subparagraph A1 has a right to receive proceeds which are derived from or pursuant to such agreement that are limited to AA, repayment of the principal of a loan, BB, repayment of the principal of a loan plus any interest on such loan, provided that the rate of interest does not exceed the greater amount of AA 7%, or BB, a rate equal to twice the average annual yield on 30-year United States Treasury securities, 608, as determined for the year preceding the date on which such agreement was executed, or CC, reimbursement of attorney's fees, or 2, bears a relationship described in section 267B to the named party receiving the payment described in subparagraph A1. 4, qualified litigation proceeds. A, in general, the term qualified litigation proceeds means, with respect to any taxable year, an amount equal to the realized gains, net income, or other profit received by a covered party during such taxable year, which is derived from or pursuant to any litigation financing agreement. B, anti-netting. Any gains, income, or profit described in subparagraph A shall not be reduced or offset by any ordinary or capital loss in the taxable year. C, prohibition on exclusion of certain amounts. In determining the amounts of realized gain under subparagraph A, amounts described in section 104A2 and 892A1 shall not be excluded. Section 5000F3, Special Rules. A, withholding of tax on litigation proceeds. Any applicable person having the control, receipt, or custody of any proceeds from a civil action by settlement, judgment, or otherwise, with respect to which such person had entered into a litigation financing agreement, shall deduct and withhold from such proceeds a tax equal to 15.9% of the qualified litigation proceeds, which are required to be paid to a third party pursuant to such agreement. B, applicable person. For purposes of this section, the term applicable person means any person which, 1, is a named party in a civil action or law firm affiliated with such civil action, and 2, has entered into a litigation financing agreement with respect to such civil action. C, application of withholding provisions. 1, liability for withheld tax. Every person required to deduct and withhold any tax under this chapter is hereby made liable for such tax and is hereby indemnified against the claims and demands of any person for the amount of any payments made in accordance with the provisions of this chapter. 2, withheld tax as credit to recipient of qualified litigation proceeds. Qualified litigation proceeds on which any tax is required to be withheld at the source under this chapter shall be included in the return of the recipient of such proceeds. By any amount of tax so withheld shall be credited against the amount of tax as computed in such return. 3, tax paid by recipient of qualified litigation proceeds if A, any person in violation of the provisions of this chapter fails to deduct and withhold any tax under this chapter, and B, thereafter the tax against which such tax may be credited is paid. The tax is also required to be deducted and withheld, shall not be collected from such person, but this paragraph shall in no case relieve such person from liability for interest or any penalties or additions to the tax otherwise applicable in respect of such failure to deduct and withhold. 4, refunds and credits with respect to withheld tax. Where there has been any overpayment of tax under this chapter, any refund or credit made under Chapter 6.5 shall be made to the withholding agent unless the amount of such tax was actually withheld by the withholding agent. B, exclusion from definition of capital assets. Section 1221A is amended. 1, in paragraph 7 by striking or at the end. 2, in paragraph 8 by striking the period at the end and inserting or, and 3, by striking at the end the following new paragraph. 9, any financial arrangement created by or any proceeds derived from a litigation financing agreement as defined under Section 5000F2. C, removal from gross income, Part 3 of Subchapter B of Chapter 1, as amended by the preceding provisions of this Act, is amended by inserting after Section 139L the following new section. Section 139M, qualified litigation proceeds. Gross income shall not include any qualified litigation proceeds as defined in Section 5000F2. D, clerical amendments. 1, Section 7701A16 is amended by inserting 5000F-3C1 before 1441. Two, the table of chapters for subtitle D as amended by the preceding provisions of this Act is amended by inserting after the item relating to Chapter 50B the following new item, Chapter 50C, litigation financing. 3, the table of sections for Part 3 of Subchapter B of Chapter 1 as amended by the preceding provisions of this Act is amended by inserting after the item relating to Section 139L the following new item, Section 139M, qualified litigation proceeds. E, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70605, excise tax on certain remittance transfers. A, in general, Chapter 36 is amended by inserting after Subchapter B the following new subchapter. Subchapter C, remittance transfers. Section 4475, imposition of tax. Section 4475, imposition of tax. A, in general, there is hereby imposed on any remittance transfer a tax equal to 1% of the amount of such transfer. B, payment of tax.
One, in general, the tax imposed by this section with respect to any remittance transfer shall be paid by the sender with respect to such transfer. 2, collection of tax. The remittance transfer provider with respect to any remittance transfer shall collect the amount of the tax imposed under subsection A with respect to such transfer from the sender and remit such tax quarterly to the Secretary at such time and in such manner as provided by the Secretary. 3, secondary liability. Where any tax imposed by subsection A is not paid at the time the transfer is made, then to the text that such tax is not collected, such tax shall be paid by the remittance transfer provider. C, tax limited to cash and similar instruments. The tax imposed under subsection A shall apply only to any remittance transfer to which the sender provides cash, a money order, a cashier's check, or any other similar physical instrument as determined by the Secretary to the remittance transfer provider. D, non-application to certain non-cash remittance transfers. Subsection A shall not apply to any remittance transfer for which the funds being transferred are withdrawn from an account held in or by a financial institution, A, which is described in subparagraphs A through H of Section 5312A2 of Title 31 United States Code, and B, that is subject to the requirements under subchapter 2 of Chapter 53 of such title, or 2, funded with a debit card or a credit card which is issued in the United States. E, definitions. For purpose of this section, 1, in general, the terms remittance transfer provider, and sender shall each have their respective meanings given such terms by Section 919G of the Electronic Fund Transfer Act, 15 U.S.C. 169301G. 2, credit card. The term credit card has the same meaning given each such term under Section 920C3 of the Electronic Fund Transfer Act, 15 U.S.C. 169302C3. 3, debit card. The term debit card has the same meaning given under such term such Section 920C2 of the Electronic Fund Transfer Act, 15 U.S.C. 169302C2, without regard to subparagraph B of such section. F, application of anti-conduit rules for purposes of Section 7701L with respect to any multiple party arrangements involving the sender. A remittance transfer shall be treated as a financing transaction. B, conforming amendment. The table of subchapters for Chapter 36 is amended by inserting after the item relating to Subchapter B the following new item: Subchapter C, remittance transfers. C, effective date. The amendments made by this section shall apply to transfers made after December 31, 2025. Section 70606, enforcement provisions with respect to COVID-related employee retention credits. A, assessable penalty for failure to comply with due diligence requirements. 1, in general, any COVID ERTC promoters which provides aid, assistance, or advice with respect to any COVID ERTC document and which fails to comply with due diligence requirements imposed by the Secretary with respect to determining eligibility for or the amount of any credit or advance payment of a credit under Section 3134 of the Internal Revenue Code of 1986 shall pay a penalty of $1,000 for each such failure. Due diligence requirements. The due diligence requirements referred to in paragraph 1 shall be similar to the due diligence requirements imposed under Section 6695G of the Internal Revenue Code of 1986. 3, restriction to documents used in connection with returns or claims for refund. Paragraph 1 shall not apply with respect to any COVID ERTC document unless such document constitutes or relates to a return for claim for refund. 4, treatment as assessable penalty, etc. For purposes of the Internal Revenue Code of 1986, the penalty imposed under paragraph 1 shall be treated as a penalty which is imposed under Section 6695G of such code and assessed under Section 6201 of such code. 5, Secretary. For purposes of this subsection, the term Secretary means the Secretary of the Treasury or the Secretary's delegate. B, COVID ERTC promoter. For purposes of this section, 1, in general, the term COVID ERTC promoter means with respect to any COVID ERTC document, any person which provides aid, assistance, or advice with respect to such document if A, such person charges or receives a fee for such aid, assistance, or advice, which is based on the amount of the refund or credit with respect to such document and with respect to such person's taxable year in which such person provided such assistance or the preceding taxable year, the aggregate of the gross receipts of such person for aid, assistance, and advice with respect to all COVID ERTC documents exceeds 20% of the gross receipts of such person for such taxable year, or B, with respect to such person's taxable year in which such person provided such assistance or the preceding taxable year. 1, the aggregate of the gross receipts of such person for aid, assistance, and advice with respect to all COVID ERTC documents exceeds 50% of the gross receipts of such person for such taxable year, or both. 2, both. Such aggregate gross receipts exceed 20% of the gross receipts of such person for such taxable year, and 2, the aggregate of the gross receipts of such person for aid, assistance, and advice with respect to all COVID ERTC documents determined after application of paragraph 3 exceeds $500,000. 2, exception for certified professional employer organizations. The term COVID ERTC promoter shall not include a certified professional employer organization as defined in Section 7705 of the Internal Revenue Code of 1986. 3, aggregation rule. For purposes of paragraph 1, all persons treated as a single employer under subsection A or B of Section 52 of the Internal Revenue Code of 1986 or subsection M or O of Section 414 of such code shall be treated as one person. 4, short taxable years. In the case of any taxable year of less than 12 months, a person shall be treated as a COVID ERTC promoter if such person is described in paragraph 1, either with respect to such taxable year or by treating any reference to such taxable year as a reference to the calendar year in which such taxable year begins. C, COVID ERTC document. For purposes of this section, the term COVID ERTC document means any return, affidavit, claim, or other document related to any credit or advance payment of a credit under Section 3134 of the Internal Revenue Code of 1986, including any document related to eligibility for or the calculation or determination of any amount directly related to any such credit or advance payment. D, limitation on credits and refunds. Notwithstanding Sections 6511 of the Internal Revenue Code of 1986, no credit under Section 3134 of the Internal Revenue Code of 1986 shall be allowed, and no refund with respect to any such credit shall be made after the date of the enactment of this Act unless a claim for such credit or refund was filed by the taxpayer on or before January 31, 2024. E, extension of limitation on assessment. Section 3134L is amended to read as follows. 1, extension of limitation on assessment. 1, in general, notwithstanding Section 6501, the limitation on the time period for the assessment of any amount attributable to a credit claimed under this section shall not expire before the date, that is 6 years after the latest of A, the date on which the original return, which includes the calendar quarter with respect to such credit, is determined as filed, B, the date on which such return is treated as filed under Section 6501B2, or C, the date on which the claim for credit or refund with respect to such credit is made. Deduction 2, deduction for wages taken into account in determining improperly claimed credit. A, in general, notwithstanding Section 6511 in the case of an assessment attributable to a credit claimed under this section, the limitation on the time period for credit or refund of any amount attributable to a deduction for improperly claimed ERTC wages shall not expire before the time period for such assessment expires under paragraph 1. B, improperly claimed ERTC wages. For purposes of this paragraph, the term improperly claimed ERTC wages means with respect to an assessment attributable to a credit claimed under this section, the wages with respect to which a deduction would not have been allowed if the portion of the credit to which such assessment relates had been properly claimed. F, amendment to penalty for erroneous claim for refund or credit. Section 6676A is amended by striking income tax and inserting income or employment tax. G, effective dates. 1, in general, the provisions of this section shall apply to aid, assistance, and advice provided after the date of the enactment of this Act. 2, limitation on credits and refunds. Subsection D shall apply to credits and refunds allowed or made after the date of the enactment of this Act. 3, extension of limitation on assessment. The amendment made by subsection E shall apply to assessments made after the date of the enactment of this Act. 4, amendment to penalty for erroneous claim for a refund or credit. The amendment made by subsection F shall apply to claims for credit or refund after the date of the enactment of this Act. H, regulations. The Secretary, as defined in subsection A5, shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this section and the amendments made by this section. Section 70607, Social Security number requirement for American Opportunity and Lifetime Learning Credits. A, Social Security number of taxpayer required. Section 25AG1 is amended to read as follows. 1, identification requirement. A, Social Security number requirement. No credit shall be allowed under subsection A to an individual unless the individual includes on the return of tax for the taxable year 1, such individual's Social Security number, and 2, in the case of a credit with respect to the qualified tuition and related expenses of an individual other than the taxpayer or the taxpayer's spouse, the name and Social Security number of such individual. B, institution. No American Opportunity tax credit shall be allowed under this section unless the taxpayer includes the employer identification number of any institution to which the taxpayer paid qualified tuition and related expenses taken into account under this section on the return of tax for the taxable year. C, Social Security number defined. For purposes of this amendment, the term Social Security number shall have the meaning given such term in Section 24H7. B, omission treated as mathematical or clerical error. Section 6213G2J is amended by striking TIN and inserting Social Security number or employer identification number. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70608, Task force on the replacement of direct file. Out of any money in the Treasury not otherwise appropriated, there is hereby appropriated for the fiscal year ending September 30, 2026, $15 million to remain available until September 2026 for necessary expenses of the Department of the Treasury to deliver to Congress within 90 days following the date of enactment of this act a report on 1, the cost of enhancing and establishing public-private partnerships which provide for free tax filing for up to 70% of all taxpayers calculated by adjusted gross income, and to replace any direct e-file programs run by the Internal Revenue Service. 2, taxpayer opinions and preferences regarding a taxpayer-funded government-run service or a free service provided by the private sector. 3, assessment of the feasibility of a new approach, how to make the options consistent and simple for taxpayers across all participating providers, and how to provide features to address taxpayer needs. And 4, the cost, including options for differential coverage based on taxpayer-adjusted gross income and return complexity of developing and running a free direct e-file tax return system, including costs and build and administer such release. Subtitle B, Health, Chapter 1, Medicaid. Subchapter A, Reducing Fraud and Improving Enrollment Processes. Section 71101, Moratorium on Implementation of Rule Relating to Eligibility and Enrollment in Medicare Savings Programs. The Secretary of Health and Human Services shall not, during the period beginning on the date of enactment of this section and ending September 30, 2034, implement, administer, or enforce the provisions of the final rule published by the Centers for Medicare and Medicaid Services on September 21, 2023, entitled Streamlining Medicaid, Medicare Savings Program Eligibility Determination Enrollment, 88 Fed Reg 65230, and shall not implement, administer, or enforce the amendments made to the following sections of Title 42 Code of Federal Regulations. 1, Section 406.21C, 2, Section 435.4, 3, Section 435.601, 4, Section 435.909, 5, Section 435.911, 6, Section 435.952, Section 71102, moratorium on eligibility, on implementation of rule relating to eligibility and enrollment for Medicaid CHIP and the Basic Health Program. The Secretary of Health and Human Services shall not, during the period beginning on the date of enactment of this section and ending September 30, 2024, implement, administer, or enforce the provisions of the final rule published by the Centers for Medicaid and Medicaid Services on April 2, 2024, entitled Medicaid Program, Streamlining the Medicaid Children's Health Insurance Program and Basic Health Program Application, Eligibility Determination, Enrollment, and Renewal Processes, 89 Fed Reg 22780, and shall not implement, administer, or enforce the amendments made by the following sections of Title 42 Code of Federal Regulations. 1, Part 431A, Section 431.10, C1, 1A2, B, Section 431.10, C11A3, C, Section 431.213D, 213D, 2, Part 435, A, Section 435.222, B, Section 435.223, C, Section 435.407, D, Section 435.601, E, Section 435.608, F, Section 435.831G, G, Section 435.907, H, Section 435.911C, 1, I, Section 435.912, J, Section 435.916, K, Section 435.919, L, Section 435.940, M, Section 435.952, N, Section 435.1200, 3, Part 436, A, Section 436.601, B, Section 436.831G, 4, Part 447, Section 447.56A15, 5, Part 457, A, Section 457.65D, B, Section 457.340D, C, Section 457.340F, D, Section 457.344, E, Section 457.348, F, Section 457.350, G, Section 457.480, H, Section 457.570, I, Section 457.805, B, J, Section 457.810A, K, Section 457.960, L, Section 457.1140, D4, M, Section 457.1170, N, Section 457.1180, Section 71103, reducing duplicate enrollment under the Medicaid and CHIP programs. A, Medicaid, 1, in general, Section 1902 of the Social Security Act 42 U.S.C. 1396A is amended A in subsection A, 1, in paragraph 86 by striking "and" at the end, 2, in paragraph 87 by striking the period and inserting "and 3, by inserting after paragraph 87 the following new paragraph. 88, provide, A, beginning not later than January 1, 2027, in the case of one of the 50 states and the District of Columbia, for a process to regularly obtain address information for individuals enrolled under such plan or a waiver of such plan, and in accordance with subsection and B, beginning not later than October 1, 2029, 1, for the state to submit to the system established by the Secretary under subsection U with respect to individual enrolled or seeking to enroll under such plan not less frequently than once each month or during such determination or redetermination of the eligibility of such individual for medical assistance under such plan or waiver of such plan. 1, the Social Security number of such individual, if such individual has a Social Security number and is required to provide such number to enroll under such plan or waiver, and 2, such other information with respect to such individual as determined necessary by the Secretary for purposes of preventing individuals from simultaneously being enrolled under state plans or waivers of such plans of multiple states. 2, for the use of such system to prevent such simultaneous enrollment. And 3, in the case that such system indicates that an individual enrolled or seeking to enroll under such plan or waiver of such plan is enrolled under a state plan or waiver of such a plan of another state, for the taking of appropriate action as determined by the Secretary to identify whether such an individual resides in the state and disenroll an individual from the state plan of such state if such individual does not reside in such state unless such individual meets such an exception as the Secretary may specify, and B, by adding at the end the following new subsections. UU, prevention of enrollment under multiple state plans. 1, in general, not later than October 1, 2029, the Secretary shall establish a system to be utilized by the Secretary and states to prevent an individual from being simultaneously enrolled under the state plans of multiple states. Such system shall A, provide for the receipt of information submitted by a state under subsection A88B1, and B, not less than once each month, transmit information to a state or allow the Secretary to transmit information to a state regarding whether an individual enrolled or seeking to enroll under the state plan of such state or waiver of such plan is enrolled under the state plan or waiver of such plan of another state. 2, standards. The Secretary shall establish such standards as determined necessary by the Secretary to limit and protect information submitted under such system and ensure the privacy of such information consistent with subsection A7. 3, implementation funding. There are appropriated to the Secretary out of the amounts of the Treasury not otherwise appropriated, in addition to amounts otherwise available. For fiscal year 2026, $10 million for purposes of establishing the system and standards required under this subsection to remain available until expended, and B, for fiscal year 2029, $20 million for purposes of maintaining such system to remain available until expended. BV, process to obtain enrollee address information. 1, in general, for purposes of subsection A88A, a process to regularly obtain address information for individuals enrolled under a state plan or a waiver of such plan shall obtain address information from reliable data sources described in paragraph 2 and take such actions as the Secretary shall specify with respect to any changes to such address based on such information. 2, reliable data sources described for purposes of paragraph 1. The reliable data sources described in this paragraph are the following. A, mail returned to the state by the United States Postal Service with a forwarding address. B, the National Change of Address database maintained by the United States Postal Service. C, a managed care entity as defined in Section 1932A1B or prepaid inpatient health care or prepaid ambulatory health plan, as such terms are defined in Section 1903M9D, that has a contract under the state plan if the address information is provided to such entity or plan directly from or verified by such entity or plan directly with such individual. D, other data sources as identified by the state and approved by the Secretary. 2, conforming amendments. A, Paris, Section 1903R3 of the Social Security Act, 42 U.S.C. 1396BR3 is amended. 1, by striking in order and inserting A in order. 2, by striking through the public and inserting through 1 the public. 3, by striking the period at the end and inserting semicolon, and 2, beginning October 1, 2029, the system established by the Secretary under Section 1902 UU, and 4, by adding at the end the following new subparagraph. B, beginning October 1, 2029, the Secretary may determine that a state is not required to have in operation an eligibility determination system which provides for data matching for purposes of address verification under Section 1902 VV through the system described in subparagraph A1 to meet the requirements of this paragraph. Managed care. Section 1932 of the Social Security Act, 42 U.S.C. 1396U-2, is amended by adding at the end the following new subsection. J, transmission of address information. Beginning January 1, 2027, each contract under a state plan with a managed care entity is defined in Section 1932A1B or with a prepaid inpatient health care or prepaid ambulatory health plan, as such terms are defined in Section 1903M9D, shall provide that such entity or plan shall promptly transmit to the state any address information for an individual enrolled in such entity or plan that is provided to such entity or plan directly from or verified by such entity or plan directly with such individual. B, CHIP. 1. In general, Section 2107E1 of the Social Security Act, 42 U.S.C. 1397GGE1, is amended, A, by redesignating subparagraphs H through U as subparagraphs I through V, 1 through 5, respectively, and B, by inserting after subparagraph G the following new subparagraph. H, Section 1902A88 relating to address information for enrollees and prevention of simultaneous enrollments. 2, managed care. Section 2103F3 of the Social Security Act, 42 U.S.C. 1397CCF3, is amended by striking and E and inserting E and J. Section 71104, ensuring deceased individuals do not remain enrolled. Section 1902 of the Social Security Act, 42 U.S.C. 1396, is amended by Section 71103, is further amended, 1, in subsection A, in paragraph 87 by striking and inserting a semicolon. B, in paragraph 88 by striking the period at the end and inserting and C, by inserting after paragraph 88 the following new paragraph. 89, provide that the state shall comply with the eligibility verification requirements under subsection WW, except that this paragraph shall apply only in the case of the 50 states and the District of Columbia, and 2, by adding at the end of the following new subsection, WW, verification of certain eligibility criteria. 1, in general, for purposes of subsection A89, the eligibility verification requirements beginning January 1, 2028 are as follows. A, quarterly screening to verify enrollee status. The state shall, not less frequently than quarterly, review the death master file as such term is defined in Section 203D of the Bipartisan Budget Act of 2013 or a successor system that provides such information needed to determine whether any individuals enrolled for medical assistance under the state plan or waiver of such plan are deceased. B, disenrollment under state plan. If the state determines, based on information obtained from the death master file, that an individual enrolled for medical assistance under the state plan or waiver of such plan is deceased, the state shall, 1, treat such information as factual information confirming the death of a beneficiary, 2, disenroll such individual from the state plan or waiver of such plan in accordance with subsection A3, and 3, discontinue any payments for medical assistance under this title made on behalf of such individual, other than payments for any items or services furnished to such individual prior to the death of such individual. C, reinstatement of coverage in the event of error. If a state determines that an individual was misidentified as deceased based on information obtained from the death master file and was erroneously disenrolled for medical assistance under the state plan or waiver of such plan, based on such misidentification, the state shall immediately re-enroll such individual under the state plan or waiver of such plan, retroactive to the date of such disenrollment. 2, rule of construction. Nothing under this subsection shall be construed to preclude the ability of a state to use other electronic data sources to timely identify potentially deceased beneficiaries, so long as the state is also in compliance with the requirements of this subsection and all other requirements under this title relating to Medicaid eligibility determination and redetermination. Section 71105, ensuring deceased providers do not remain enrolled. Section 1902 KK1 of the Social Security Act, 42 U.S.C. 1396A KK1 is amended, 1, by striking the state and inserting A in general the state, and 2, by adding at the end the following new subparagraph. B, provider screening against death master file. beginning January 1, 2028, as part of the enrollment or re-enrollment or revalidation of enrollment of a provider or supplier under this title, and not less frequently than quarterly during that period that such provider or supplier is so enrolled, the state conducts a check of the death master file, as such term is defined in Section 203D of the Bipartisan Budget Act of 2013, to determine whether such provider or supplier is deceased. Section 71106, payment reduction related to certain erroneous excess payments under Medicaid. In general, Section 1903U1 of the Social Security Act, 42 U.S.C. 1396B-U1 is amended 1 in subparagraph A by inserting for any audits conducted by the Secretary or at the option of the Secretary, audits conducted by the state after exceeds 0.03, 2 in subparagraph B, A, by striking the Secretary and inserting 1 subject to Clause 2, the Secretary, and B, by adding at the end the following new clause. 2, the amount waived under Clause 1 for a fiscal year may not exceed an amount equal to the erroneous excess payments for medical assistance described in subparagraph D1, 2, made for such fiscal year. 3, in subparagraph 2, by striking he and each place it appears and inserting the Secretary in such place. And 4, in subparagraph D1, A, in subclause 1, by striking and at the end. B, in subclause 2, by striking the period at the end of and inserting or payments where insufficient information is available to confirm eligibility, and C, by adding at the end the following new subclause. 3, payments other than payments described in subclause 1 for items and services furnished to an individual who is not eligible for medical assistance under the state plan or a waiver of such plan with respect to such items and services or payments where insufficient information is available to confirm eligibility. B, effective date. The amendments made by subsection A shall apply beginning with respect to fiscal year 2030. Section 71107, eligibility redeterminations, A in general. Section 1902E14 of the Social Security Act, 42 U.S.C. 1396A E14, is amended by adding at the end the following new subparagraph. L, frequency of eligibility redeterminations for certain individuals. 1, in general, subject to Clause 2 with respect to redeterminations of eligibility for medical assistance under a state plan or a waiver of such plan, scheduled on or after the first day of the first quarter that begins after December 31, 2026, the state shall make such a redetermination once every 6 months for the following individuals. 1, individuals enrolled under subsection A10A18. 2, individuals described in such subsection who are the otherwise enrolled under a waiver of such plan that provides coverage that is equivalent to a minimum essential coverage as described in section 5000AF1A of the Internal Revenue Code of 1986 and determined in accordance with standards prescribed by the Secretary and regulations to all individuals described in subsection A10A18. 2, exemption. The requirements described in section 1 shall not apply to any individual described in subsection X 9A22. 3, state defined. For purposes of this subparagraph, the term state means one of the 50 states or the District of Columbia. B, guidance. Not later than 180 days after the date of enactment of this section, the Secretary of Health and Human Services, acting through the Administrator of the Centers for Medicare and Medicaid Services, shall issue guidance relating to the implementation of the amendments made by this section. Section 71108, revising home equity limit for determining eligibility for long-term care services under the Medicaid program, revising home equity limit. Section 1917F1 of the Social Security Act, 42 U.S.C. 1396PF1 is amended. 1, in subparagraph B.
A, by striking A state and inserting I, A state. B, in clause I, as inserted by subparagraph A. I, by striking $500,000 and inserting the amount specified in subparagraph A, and II by inserting in the case of an individual's home that is located on a lot that is zoned for agricultural use after apply subparagraph A and C by adding at the end the following new clause. II, a state may elect without regard to the requirements of section 1902A 1 relating to statewideness and section 1902A10B relating to comparability to apply subparagraph A in the case of an individual's home that is not described in clause I by substituting for the amount specified in such subparagraph an amount that exceeds such amount but does not exceed $1 million, and 2, in subparagraph C. A, by inserting other than the amount specified in subparagraph B, II, relating to certain non-HIFE agricultural homes after specified in this paragraph, and B, by adding at the end the following new sentence in the case that application of the preceding sentence would result in a dollar amount other than the amount specified in subparagraph BI relating to certain agricultural homes exceeding $1 million such amount shall be deemed to be equal to $1 million. B, clarification. Section 1902 of the Social Security Act, 42 U.S.C. 1396A is amended, 1, in subsection R2 by adding at the end the following new subparagraph C. This paragraph shall not be construed as permitting a state to determine the eligibility of an individual for medical assistance with respect to nursing facility services or other long-term care services without application of the limit under section 1917 F1 and 2 in subsection E14D IV A by striking subparagraphs and inserting I in general subparagraphs and B by adding at the end the following new subclause. II, application of home equity interest limit. Section 1917F shall apply for purposes of determining the eligibility of an individual for medical assistance with respect to nursing facility services or other long-term service care. C, effective date. The amendments made by subsection A shall apply beginning on January 1, 2028. Sec 71109, Alien Medicaid Eligibility. A, Medicaid. Section 1903V of the Social Security Act, 42 U.S.C. 1396BV is amended, 1, in paragraph 1 by striking and 4 and inserting 4 and 5 and 2 by adding at the end the following new paragraph. 5, notwithstanding the preceding paragraphs of this subsection beginning on October 1, 2026, except as provided in paragraph 2 and 4, in no event shall payment be made to a state under this section for medical assistance furnished to an individual unless such individual is A, a resident of one of the 50 states, the District of Columbia, or a territory of the United States, and B, either I, a citizen or national of the United States, II, and an alien lawfully admitted for permanent residence as an immigrant, as defined by sections 101A 15 and 101A 20 of the Immigration and Nationality Act, excluding, among others, alien visitors, tourists, diplomats, and students who enter the United States temporarily with no intention of abandoning their residence in a foreign country. III, an alien who has been granted the status of Cuban and Haitian entrant, as defined in Section 501E of the Refugee Education Assistance Act of 1980, Public Law 96422, or IB, an individual who lawfully resides in the United States in accordance with a compact of a free association referred to in Section 402B2G of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996. B, CHIP, Section 2107E1 of the Social Security Act, as amended by Section 71103B, is further amended, 1, by redesignating subparagraphs R through V as paragraphs V through W, respectively, and 2, by inserting the paragraph Q, the following. R, Section 1903V5 relating to payments for medical assistance furnished to aliens, except in relation to payments for services provided under Section 2105A1D II, Sec 71110. Expansion FMAP for certain states providing payments for health care furnished to certain individuals. Section 1905 of the Social Security Act, 42 U.S.C. 1396D is amended, 1, in subsection Y. A, in paragraph 1E by inserting or 4 calendar quarters beginning on or after October 1, 2027. In the case such state is a specified state with respect to such calendar quarter, 80% after thereafter, and B, in paragraph 2 by adding at the end the following new subparagraph. C, specified state. The term specified state means with respect to a quarter, a state that I, provides any form of financial assistance from a state general fund during such quarter in whole or in part, whether or not made under a state plan or a waiver of such plan, under this title or under another program established by the state to or on behalf of an alien who is not a qualified alien, is not a child or pregnant woman, who is lawfully residing in the United States and eligible for medical assistance pursuant to Section 1903V4, or for child health assistance or pregnancy-related assistance pursuant to Section 2107E1Q for the purchasing of health insurance coverage as defined in Section 2791B1 of the Public Health Service Act for an alien who is not a qualified alien and is not a child or pregnant woman, or II provides any form of comprehensive health benefits coverage except such coverage required by federal law during such quarter, whether or not under a state plan or waiver of such plan, under this title or under another program established by the state, and regardless of the source of funding for such coverage, to an alien who is not a qualified alien and is not such a child or pregnant woman. D, immigration terms. I, alien. The term alien has the meaning given such term in Section 101A of the Immigration and Nationality Act. II, qualified alien. The term qualified alien has the meaning given such term in Section 431 of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996, except that the references to, in the opinion of the agency providing such benefits in subsection C of such Section 431 shall be treated as references to, in the opinion of the state in which such comprehensive health benefits coverage or such financial assistance is provided as applicable, and to, in subsection Z2. A, in subsection A, by striking for such year and inserting for such quarter, and B, in subparagraph B, I, in the matter preceding subclause I, by striking for year and inserting for calendar quarter in a year, and II, in subclause II, by striking for the year and inserting for the quarter for the state. Sec 71111, expansion FMAP for emergency Medicaid. Section 1905 of the Social Security Act, 42 U.S.C. 1396D, is amended by adding at the end the following new subsection. KK, FMAP for treatment of an emergency medical condition notwithstanding subsection Y and Z, beginning on October 1, 2026, the federal medical assistance percentage for payments for care and services described in paragraph 2 of subsection 1903V furnished to an alien described in paragraph 1 of such subsection shall not exceed the federal medical assistance percentage determined under subsection B for such state. Subchapter B, preventing wasteful spending. Sec 71112, moratorium on implementation of rule relating to staffing standards for long-term care facilities under the Medicare and Medicaid programs. The Secretary of Health and Human Services shall not, during the period beginning on the date of the enactment of this section and ending September 30, 2034, implement, administer, or enforce the provisions of the final rule published by the Centers for Medicare and Medicaid Services on May 10, 2024, entitled Medicare and Medicaid Programs, Minimum Staffing Standards for Long-Term Care Facilities, and Medicaid Institutional Programs Transparency Reporting. 89, Fed Reg 40876, and shall not implement, administer, or enforce the amendments made to the following sections of Part 483 of Title 42, Code of Federal Regulations. 1, Section 483.5. 2, Section 483.35. Sec 71113, reducing state Medicaid costs. A, in general, Section 1902A34 of the Social Security Act, 42 U.S.C. 1396A, A34, is amended to read as follows. 34, provide that in the case of any individual who has been determined to be eligible for medical assistance under the plan and A, is enrolled under paragraph 10AIV III, such assistance will be made available to the individual for care and services, including under the plan and furnished in or after the month, before the month in which the individual made application or application was made on the individual's behalf, in the case of a deceased individual. For such assistance, if such individual was, or upon application would have been eligible for such assistance at the time such care and services were furnished, or B, is not described in subparagraph A. Such assistance will be made available to the individual for care and services, including under the plan and furnished in or after the second month before the month in which the individual made an application or application was made on the individual's behalf in the case of a deceased individual. For such assistance, if such individual was, or upon application would have been eligible for such assistance at the time such care and services were furnished. B, definition of medical assistance, Section 1905A of the Social Security Act, 42 U.S.C. 1396D8, is amended by striking in or after the third month before the month in which the recipient makes application for assistance and inserting, with respect to an individual described in Section 1902A34A, in or after the month before the month in which the recipient makes application for assistance and with respect to an individual described in Section 1902A34B, in or after the second month before the month in which the recipient makes application for assistance. C, CHIP, Section 2102B1B of the Social Security Act, 42 U.S.C. 1397BB, B1B, is amended, 1, in Clause IV by striking and at the end. 2, in Clause V by striking the period and inserting semicolon and. 3, by adding at the end the following new clause. VI shall, in the case that the state elects to provide child health or pregnancy-related assistance to an individual for any period prior to the month in which the individual made application for such assistance or application was made on behalf of the individual, provide that such assistance is not made available to such individual for items and services included under the state child health plan or waiver of such plan that are furnished before the second month preceding the month in which such individual made application or application was made on behalf of such individual for assistance. D, effective date. The amendments made by this section shall apply to medical assistance, child health assistance, and pregnancy-related assistance with respect to individuals whose eligibility or such assistance, child health assistance, or pregnancy-related assistance is based on an application made on or after the first day of the first quarter that begins after December 31st, 2026. Sec 71114, prohibiting federal Medicaid and CHIP funding for certain items and services. A, Medicaid, Section 1903I of the Social Security Act, 42 U.S.C. 1396b1, is amended, 1, in paragraph 26 by striking semi and inserting a semicolon. 2, in paragraph 27 by striking the period at the end and inserting colon or. 3, by inserting paragraph 27, the following new paragraph. 28, with respect to any amount expanded for specified gender transition procedures as defined in section 1905 LL, furnished to an individual enrolled in a state plan or waiver of such plan. And 4, in the flush left matter at the end by striking and 18 and inserting 18 and 28. B, CHIP, section 2107E 1. Of the Social Security Act, 42 US 1397 GGE10, as redesignated by Section 71103B 1A, is amended by striking and 17 and inserting 17 and 28. C, specified gender transition procedures defined. Section 1905 of the Social Security Act, 42 U.S.C. 1396D, is amended by adding at the end the following new subsection. LL, specified gender transition procedures. 1, in general, for purposes of Section 1903 I-28, except as provided in paragraph 2, the term specified gender transition procedure means, with respect to an individual, any of the following when performed for the purpose of intentionally changing the body of such individual, including by disrupting the body's development, inhibiting its natural functions, or modifying its appearance to no longer correspond to the individual's sex. A, performing any surgery including I, castration, II, sterilization, III, orchiectomy, IV, serotoplasty, V, vasectomy, VI, tubal ligation, VII, hysterectomy, B, tripi, oophorectomy, IX, ovariectomy, X, medoidoplasty, XI, clitoroplasty, XII, reconstruction of the fixed part of the urethra with or without a medoidoplasty or a phalloplasty, X tripi, penectomy, XIV, phalloplasty, XV, vaginoplasty, XVI, vaginectomy, XVI, vulvoplasty, XV, tripi, reduction, thyrochondroplasty, XIX, chondrolaryngoplasty, XX, mastectomy, and XXI, any plastic, cosmetic, or aesthetic surgery that feminizes or masculinizes the facial or other body features of an individual. B, any placement of chest implants to create feminine breasts or any placement of erection or testicle prosthesis. C, any placement of fat or artificial implants in the gluteal region. D, administering, prescribing, or dispensing to an individual medications including I, gonadotropin releasing hormone, GnRH, analogs, or other puberty-blocking drugs to stop or delay normal puberty, and II, testosterone, estrogen, or other androgens to an individual at doses that are supraphysiologic that would normally be produced endogenously in a healthy individual of the same age and sex. 2, exception. Paragraph 1 shall not apply to the following when furnished to an individual by a healthcare provider if the individual is a minor with consent of such individual's parents with or legal guardian. A, puberty suppression or blocking prescription drugs for the purpose of normalizing puberty for an individual experiencing precocious puberty. B, medically necessary procedures or treatments to correct for I, a medically verifiable disorder of sex development, including I-46XX chromosomes with viralization, II 46XY chromosomes with underviralization, and III, both ovarian and testicular tissues. II, sex chromosome structure, sex steroid hormone production of or sex hormone action if determined to be abnormal by a physician through genetic or biochemical testing. III, infection, disease, injury, or disorder caused or exacerbated by a previous procedure described in paragraph 1, or a physical disorder, physical injury, or physical illness that would, as certified by a physician, place the individual in danger of death or impairment of a major bodily function unless the procedure is performed, not including procedures performed for the alleviation of mental distress or IV procedures to restore or reconstruct the body of the individual in order to correspond to the individual's sex after one or more previous procedures described in paragraph 1, which may include the removal of a pseudophallus or breast augmentation. 3. Sex. For purposes of paragraph 1, the term sex means either male or female as biologically determined and defined in paragraphs 4 and 5 respectively. 4. Female. For purposes of paragraph 3, the term female means an individual who naturally has, had, will have, or would have, but for a developmental or genetic anomaly or historical accident, the reproductive system that at some point produces, transports, and utilizes eggs for fertilization. 5. Male. For purposes of paragraph 3, the term male means an individual who naturally has, had, will have, or would have, but for a developmental or genetic anomaly or historical accident, the reproductive system that at some point produces, transports, and utilizes sperm for fertilization. Section 71115, federal payments to prohibit entities. A, in general. No federal funds that are considered direct spending and provided to carry out a state plan under Title XIX of the Social Security Act or a waiver of such a plan shall be used to make payments to a prohibited entity for items and services furnished during the 1-year period beginning on the date of the enactment of this act, including any payments made directly to the prohibited entity or under a contract or other arrangement between a state and a covered organization. B, definitions in this section. 1. Prohibited entity. The term prohibited entity means an entity including its affiliates, subsidiaries, successors, and clinics. A, that as of the first day of the first quarter beginning after the date of enactment of this act, I, as an organization described in Section 501c3 of the Internal Revenue Code of 1986 and exempt from tax under Section 501a of such code, II as an essential community provider described in Section 156.235 of Title 45 Code of Federal Regulations as in effect on the date of enactment of this act, that is primarily engaged in family planning services, reproductive health, and related medical care. And III provides for abortions other than an abortion, I, if the pregnancy is a result of an act of rape or incest, or II in the case where a woman suffers from a physical disorder, physical injury, or physical illness, including a life-endangering physical condition caused by or arising from the pregnancy itself. That would, as certified by a physician, place the woman in danger of death unless an abortion is performed, and B, for which the total amount of federal and state expenditures under the Medicaid program under Title XIX of the Social Security Act for medical assistance furnished in fiscal year 2023, made directly or by a covered organization to the entity or to any affiliates, subsidiaries, successors, or clinics of the entity, or made to the entity or to any affiliates, subsidiaries, successors, or clinics of the entity as part of a nationwide health care provider network, exceeded $800,000. 2. Direct spending. The term direct spending has the meaning given the term under Section 250C of the Balanced Budget and Emergency Deficit Control Act of 1985, 2 U.S.C. 900C. 3. Covered organization. The term covered organization means a managed care entity as defined in Section 1932A1B of the Social Security Act 42 U.S.C. 1396U 2A1B, or a prepaid inpatient health plan or prepaid ambulatory health plan, as such terms are defined in Section 1903M9D of such Act 42 U.S.C. 1396 M9D. 4. State. The term state has the meaning given such term in Section 1101 of Social Security Act 42 U.S.C. 1301. Subchapter C. Stopping abusive financing practices. Section 71116. Sunsetting increased FMAP incentive. Section 1905 II3 of the Social Security Act 42 U.S.C. 1396D II3 is amended 1 by striking which has not and inserting the following which. A has not. 2 in subparagraph A as so inserted by striking the period at the end and inserting and. 3 by adding at the end the following new subparagraph. B begins to expend amounts for all such individuals prior to January 1, 2026. Section 71117, provider taxes. A, changes in threshold for hold harmless provisions of broad-based health care related taxes. Section 1903, W4 of the Social Security Act 42 U.S.C. 1396B, W4 is amended 1. In subparagraph C, II by inserting and for fiscal years beginning on or after October 1, 2026, the applicable percent determined under subparagraph D shall be substituted for 6%. each place it appears, after each place it appears, and 2, by inserting the subparagraph C, II, the following new subparagraph, DI. For purposes of subparagraph CII, the applicable percent determined under this subparagraph is I. In the case of a non-expansive estate and a class of healthcare items or services described in Section 443.56A of Title 42 Code of Federal Regulations as in effect on May 1, 2025. AA. If on the date of enactment of this subparagraph, the non-expansive state has enacted a tax and imposes such tax on such class, and the Secretary determines that the tax is within the hold harmless health threshold as of that date, the applicable percent of net patient revenue attributable to such class has been so determined, and B, if on the date of enactment of this subparagraph, the non-expansive state has not enacted or does not impose a tax with respect to such class, 0%, and II, in the case of an expansive state and a class of healthcare items or services described in Section 433.56A of Title 42 Code of Federal Regulations, as in effect on May 1, 2025, subject to Clause IB. AA, if on the date of enactment of this subparagraph, the expansion state has enacted a tax and imposes such tax on such class, and the Secretary determines that the tax is within the hold harmless threshold as of the date, the lower of AA, the applicable percent of net patient revenue attributable to such class that has been so determined, and BB, the applicable percent specified in Clause II for the fiscal year, and BB, if on the date of enactment of this subparagraph, the expansion state has not enacted or does not impose a tax with respect to such class, 0%. For purposes of Clause II, AABB, the applicable percent is I for fiscal year 2028, 5.5%, II for fiscal year 2029, 5%, III for fiscal year 2030 at 4.5%, IB for fiscal year 2031, 4%, and B for fiscal year 2032 and each subsequent year, 3.5%. III for purposes of Clause I expansion estate. The term expansion state means a state that, beginning on January 1, 2014, or on any date thereafter, elects to provide medical assistance to all individuals described in Section 1902 A10 AIV III under the state plan under this title or under a waiver of such plan. II, non-expansion state. The term non-expansion state means a state that is not an expansion state. IB, in the case of a tax of an expansion state in effect on the date of enactment of this clause that applies to a class of healthcare. Items or services that is described in paragraph 3 or 4 of Section 433.56A of Title 42 Code of Federal Regulations as in effect on May 1, 2025, and for which, on such date of enactment, is within the hold harmless threshold as determined by the Secretary, the applicable percent of net patient revenue attributable to such class that has been so determined shall apply for a fiscal year instead of the applicable percent specified in Clause II for the fiscal year. B, non-application to territories. The amendments made by this section shall only apply with respect to a state that is one of the 50 states or the District of Columbia. C, implementation funding. For the purpose of carrying out the provisions of and the amendments made by this section, they are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services, $6 million for fiscal year 2026 to remain available until expended. Sec. 71118, State-Directed Payments, A in general. Subject to subsection B, the Secretary of Health and Human Services in this section referred to as the Secretary shall revise Section 438.6 C2 III of Title 42 Code of Federal Regulations for successor regulation such that with respect to a payment described in such section made for a service furnished during a rating period beginning on or after the date of the enactment of this act. The total payment rate for such service is limited to 1, in the case of a state that provides coverage to all individuals described in Section 1902 A10 AIB III of the Social Security Act, 42 U.S.C. 1396A A10 AIB III, that is equivalent to minimum essential coverage as described in Section 5000A F1A of the Internal Revenue Code of 1986, and determined in accordance with standards prescribed by the Secretary in regulations under the state plan or waiver of such plan of such state under Title XIX of such Act, 100% of the specified total published Medicare payment rate, or in the absence of a specified total published Medicare payment rate, the payment rate under a Medicaid state plan or under a waiver of such plan, or 2, in the case of a state other than a state described in paragraph 1, 110% of that of the specified total published Medicare payment rate, or in the absence of a specified total published Medicare payment rate, the payment rate under a Medicaid state plan or under a waiver of such plan. B, grandfathering certain payments in the case of a payment described in Section 438.6C2 III of Title 42 Code of Federal Regulations, or a successor regulation for which written prior approval or a good faith effort to receive such approval as determined by the Secretary was made before May 1, 2025, or a payment described in such section for a rural hospital as defined in subsection D2, for which written prior approval or a good faith effort to receive such approval as determined by the Secretary was made by the date of enactment of this Act. For the rating period occurring within 180 days of the date of the enactment of this Act, beginning with the rating period on or after January 1, 2028, the total amount of such payment shall be reduced by percentage points each year until the total payment rate for such service is equal to the rate for such service specified in subsection A. C, treatment of expansion states. The revisions described in subsection A shall provide that, with respect to a state that begins providing the coverage described in paragraph 1 of subsection on or after the date of the enactment of this Act, the limitation described in such paragraph shall apply to such state with respect to a payment described in section 438.6C2 III of Title 42 Code of Federal Regulations or a successor regulation for a service furnished during a rating period beginning on or after the date of the enactment of this Act. D, definitions in this section. 1, rating speed. Rating period. The term rating period has the meaning given such term in section 438.2 of Title 42 Code of Federal Regulations or a successor regulation. 2, rural hospital. The term rural hospital means the following. A subsection D, hospital, as defined in paragraph 1B of section 1886D, that I is located in a rural area as defined in paragraph 2D of such section. II is treated as being located in a rural area pursuant to paragraph 8E of such section, or III is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Fed Reg 6725. B, a critical access hospital as defined in section 1861 MM1. C, a sole community hospital as defined in section 1886D 5D III. D, a Medicare dependent small rural hospital as defined in section 1886D 5G IV. E, a low volume hospital as defined in section 1886D 12C. F, a rural emergency hospital as defined in section 1861 K2. 3, state. The term state means one of the 50 states or the District of Columbia. 4, total published Medicare payment rate. The term total published Medicare payment rate means amounts calculated as payment for specified services, including the service furnished, that have been developed under Part A or Part B of the Title XVIII of the Social Security Act, 42 U.S.C. 1395 et seq. 5, written prior approval. The term written prior approval has the meaning given such term in section 438.6C2I of Title 42 Code of Federal Regulations or a successor regulation. E, funding. There are appropriated out of any monies in the Treasury not otherwise appropriated $7 million for each of fiscal years 2026 through 2033 for purposes of carrying out this section to remain available until expended. Sec. 71119. Requirements regarding waiver of uniform tax requirement for Medicaid provider tax. A, in general, Section 1903W of the Social Security Act 42 U.S.C. 1396W is amended. 1, in paragraph 3E, by inserting after clause II the following new clause. III, for purposes of clause III, a tax is not considered to be generally redistributive if any of the following conditions apply. I, within a permissible class, the tax rate imposed on any taxpayer or tax rate group as defined in paragraph 7J, explicitly defined by its relatively lower volume or percentage of Medicaid taxable units as defined in paragraph 7H, is lower than the tax rate imposed on any other taxpayer or the tax rate group explicitly defined by its relatively higher volume or percentage of Medicaid taxable units.
2, within a permissible class, the tax rate imposed on any taxpayer or tax rate group as so defined based upon its Medicaid taxable units as so defined is higher than the tax rate imposed on any taxpayer or tax rate group based upon its non-Medicaid taxable unit as defined in paragraph 7(1). 3, the tax excludes or imposes a lower tax rate on any taxpayer or tax rate group as so defined based on or defined by any description that results in the same effect as described in subclause 1 or 2 for a taxpayer or tax rate group. Characteristics that may indicate such type of exclusion include the use of terminology to establish a tax rate group. AA, based on payments or expenditures made under the program under this title without mentioning the term Medicaid or any similar term to accomplish the same effect as described in subclause 1 or 2, or BB, that closely approximates a taxpayer or tax rate group under the program under this title to the same effect and is described in subclause 1 or 2, and 2 in paragraph 7 by adding at the end the following new subparagraphs. H, the term Medicaid taxable unit means a unit that is being taxed within a health care-related tax that is applicable to the program under this title. Such term includes a unit that is used as the basis for 1, payment under the program under this title, such as Medicaid bed days, 2, Medicaid revenue, 3, costs associated with the program under this title, such as Medicaid charges, claims, or expenditures, and 4, other units associated with the program under this title as determined by the Secretary. 1, the term non-Medicaid taxable unit means a unit that is being taxed within a health care-related tax that is not applicable to the program under this title. Such term includes a unit that is used as the basis for 1, payment by non-Medicaid payers, such as non-Medicaid bed days, 2, non-Medicaid revenue, 3, costs that are not associated with the program under this title, such as non-Medicaid charges, non-Medicaid claims, or non-Medicaid expenditures, and 4, other units not associated with the program under this title as determined by the Secretary. J, the term tax rate group means a group of entities contained within a permissible class of a health care-related tax that are taxed at the same rate. B, non-application to territories. The amendments made by this section shall only apply with respect to the state that is one of 50 states or the District of Columbia. C, effective date. The amendments made by this section shall take effect upon the date of enactment of this act, subject to any applicable transition period determined appropriate by the Secretary of Health and Human Services, not to exceed 3 fiscal years. Section 71120, requiring budget neutrality for Medicaid demonstration projects under Section 1115. A, in general, Section 1115 of the Social Security Act, 42 U.S.C. 1315, is amended by adding at the end the following new subsection. G, requirement of budget neutrality for Medicaid demonstration projects. 1, in general, beginning January 1st, 2027, the Secretary may not approve an application for, or renewal or amendment of, an experimental, pilot, or demonstration project undertaken under subsection A to promote the objectives of Title 19 in a state in this subsection referred to as Medicaid demonstration project unless the chief actuary for the Centers for Medicare and Medicaid Services certifies that such project, based on expenditures for the state program in the preceding fiscal year, or in the case of a renewal, the duration of the preceding waiver, is not expected to result in an increase in the amount of federal expenditures compared to the amount that such expenditures would otherwise be in the absence of such project. For purposes of this subsection, expenditures for the coverage of populations and services that the state could have otherwise provided through its Medicaid state plan or other authority under Title 19, including expenditures that could be made under such authority, but for the provision of such services at a different site of service than authorized under such state plan or other authority, shall be considered expenditures in the absence of such a project. 2, treatment of savings. In the event of that expenditures with respect to a state under a Medicaid demonstration project are, during an approval period for such project, less than the amount of such expenditures that would have otherwise been made in the absence of such project, the Secretary shall specify the methodology to be used with respect to the subsequent approval period for such project for purposes of taking the difference between such expenditures into account. Implementation funding. For the purposes of carrying out the provisions of and the amendments made by this section, they are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services, $5 million for each of fiscal years 2026 and 2027 to remain available until expended. Subchapter D, increasing personal accountability. Section 71121, requirement for states to establish Medicaid community engagement requirements for certain individuals. A, in general, Section 1902 of the Social Security Act, 42 U.S.C. 1396A, as amended by Section 71103 and 71104, in further amended by adding at the end of the following new subsection. 20, community engagement requirement for applicable individuals. 1, in general, except as provided in paragraph 11, beginning not later than the first day of the first quarter that begins after December 30th, 2026, or at the option of the state under a waiver or demonstration project under section 1115 of the state plan, such earlier date as the state may specify, subject to the succeeding provisions of this subject, a state shall provide, as a condition of eligibility for medical assistance for an applicable individual, that such individual is required to demonstrate community engagement under paragraph 2. A, in the case of an applicable individual who has filed an application for medical assistance under a state plan or a waiver of such plan under this title for 1 or more but not more than 3, as specified by the state, consecutive months immediately preceding the months during which such individual applies for such medical assistance, and B, in the case of an applicable individual enrolled and receiving medical assistance under a state plan or under a waiver of such plan under this title for 1 or more as specified by the state months, whether or not consecutive. 1, during the period between such individual's most recent determination or redetermination as applicable of eligibility and such individual's next regularly scheduled redetermination of eligibility, as verified by the state as part of such regularly scheduled redetermination of eligibility, or 2, in the case of a state that has elected under paragraph 4 to conduct more frequent verifications of compliance with the requirement to demonstrate community engagement during this period between the most recent and next such verification with respect to such individual. 2, community engagement compliance described. Subject to paragraph 3, an applicable individual demonstrates a community engagement under this paragraph for a month if such individual meets 1 or more of the following conditions with respect to such month, as determined in accordance with criteria established by the Secretary through regulation. A, the individual works not less than 80 hours. B, the individual completes not less than 80 hours of community service. C, the individual participates in a work program for not less than 80 hours. D, the individual is enrolled in an educational program at least half-time. E, the individual engages in any combination of the activities described in subparagraphs A through D for a total of not less than 80 hours. F, the individual has a monthly income that is not less than the applicable minimum wage standard under Section 6 of the Fair Labor Standards Act of 1938, multiplied by 80 hours. G, the individual had an average monthly income over the preceding 6 months that is not less than the applicable minimum wage requirement under Section 6 of the Fair Labor Standards Act of 1938, multiplied by 80 hours, and is a seasonal worker, as described in Section 45 RD 5B of the Internal Revenue Code of 1986. 3, exceptions. A, mandatory exception for certain individuals. The state shall deem an applicable individual to have demonstrated community engagement under paragraph 2 for a month and may elect to not require an individual to verify information resulting in such deeming if, 1, for part of all such month, the individual, 1, was a specified excluded individual as defined in paragraph 9A2, or 2, was AA under the age of 19, BB entitled to or enrolled for benefits under Part A of Title XVIII or enrolled for benefits under Part B of Title XVIII or CC described in any of subclasses 1 through 7 of subsection A10A1, or 2, at any point during the 3-month period ending on the first day of such month, the individual was an inmate of a public institution. B, optional exception for short-term hardship events. 1, in general, the state plan or waiver of such plan may provide, in the case of an applicable individual who experiences a short-term hardship event during a month, that the state shall, under procedures established by the state in accordance with standards specified for the Secretary, in the case of a short-term hardship event described in Clause 2.2, and upon the request of such individual, a short-term hardship event described in subclause 1 or 3 of Clause 2, deem such individual to have demonstrated community engagement under paragraph 2 for such month. 2, short-term hardship event defined. For purposes of this subparagraph, an applicable individual experiences a short-term hardship event during a month if, for part or all of such month, 1, such individual receives inpatient hospital services, nursing facility services, services in an intermediate care facility for individuals with intellectual disabilities, inpatient psychiatric hospital services, or such other services of similar acuity, including outpatient care relating to other services specified in this subclause, as the Secretary determines appropriate. 2, such individual resides in a county or equivalent unit of local government, AA, in which there exists an emergency or disaster declared by the President pursuant to the National Emergencies Act or the Robert T. Stafford Disaster Relief and Emergency Assistance Act, or BV, that subject to the request from the state to the Secretary, made in such form at such time and containing such information as the Secretary may require, has an employment rate that is at or above the lesser of AA 8% or BB 1.5 times the national unemployment rate, or 3. Such individual or their dependent must travel outside of their community for an extended period of time to receive medical services necessary to treat a serious or complex medical condition as described in paragraph 9A2VEE that are not available within their community of residence. 4. Option to conduct more frequent compliance verifications. With respect to an applicable individual enrolled in receiving medical assistance under a state plan or a waiver of such plan under this title, the state shall verify, in accordance with procedures specified by the Secretary, that each such individual has met the requirement to demonstrate community engagement under paragraph 1 during each such individual's regularly scheduled redetermination of eligibility, except that a state may provide for such verifications more frequently. 5. Ex parte verifications. For purposes of verifying that an applicable individual has met the requirement to demonstrate community engagement under paragraph 1 or determining such individual to be deemed to have demonstrated community engagement under paragraph 3, or that an individual is a specified excluded individual under paragraph 9A2, the state shall, in accordance with standards established by the Secretary, establish processes and use reliable information available to the state, such as payroll data or payments or encounter data under this title for individuals and data on payments to such individuals for the provision of services covered under this title, without requiring, where possible, the applicable individual to submit additional information. 6. Procedure in the case of noncompliance. A. In general, if a state is unable to verify that an applicable individual has met the requirement to demonstrate community engagement under paragraph 1, including, if applicable, by verifying that such individual was deemed to have demonstrated community engagement under paragraph 3, the state shall, in accordance with standards specified by the Secretary, 1. Provide such individual with the notice of noncompliance described in subparagraph B. 2. 1. Provide such individual with a period of 30 calendar days beginning on the date on which such notice of noncompliance is received by the individual. 2. AA. Make a satisfactory showing to the state of compliance with such requirement, including, if applicable, by showing that such individual was or should be deemed to have demonstrated community engagement under paragraph 3, or BB, make a satisfactory showing to the state that such requirement does not apply to such individual on the basis that such individual does not meet the definition of applicable individual under 9A, paragraph 9A, and 2, if such individual is enrolled under the state plan or a waiver of such plan under this title, continue to provide such individual with medical assistance during such 30-day calendar period, and 3, if no such satisfactory showing is made and the individual is not a specified excluded individual described in paragraph 9A2, deny such individual's application for medical assistance under the state plan or waiver of such plan, or, as applicable, disenroll such individual from the plan or waiver of such plan not later than the end of the month following the month in which such 30 calendar day period ends, provided that 1, the state first determines whether, with respect to the individual, there is any other basis for eligibility for medical assistance under the state plan or waiver of such plan, or for another insurance affordability program. And 2, the individual is provided written notice and granted an opportunity for a fair hearing in accordance with subsection A3. B, notice. The notice of noncompliance provided to an applicable individual under the paragraph A1 shall include information in accordance with standards specified by the Secretary on 1, how such individual may make a satisfactory showing of compliance with such requirement as described in subparagraph A2, or make a satisfactory showing that such requirement does not apply to such individual on the basis that such individual does not meet the definition of applicable individual under paragraph 9A, and 2, how such individual may reapply for medical assistance under the state plan or a waiver of such plan under this title in the case that such individual's application is denied, or as applicable in the case of such individual is disenrolled from the plan or waiver. Treatment of noncompliant individuals in relation to certain other provisions. A, certain FMAP increases. A state shall not be treated as not providing medical assistance to all individuals described in section 1902A10A18, or as not expending amounts for all such individuals under the state plan or waiver of such plan solely because such an individual is determined ineligible for medical assistance under the state plan or waiver on the basis of failure to meet requirements to demonstrate community engagement under paragraph 1. B, other provisions. For purposes of section 36BC2B of the Internal Revenue Code of 1986, an individual shall be deemed to be eligible for minimum essential coverage described in Section 5000 AF1A2 of such code for a month if such individual would have been eligible for medical assistance under a state plan or a waiver of such plan under this title, but for a failure to meet the requirement to demonstrate community engagement under paragraph 1. 8. Outreach. A. In general, in accordance with standards specified by the Secretary beginning not later than the date that precedes December 31st, 2026, or if the state elects under paragraph 1 to specify an earlier date, such earlier date by the number of months specified by the state under paragraph 1A plus 3 months, and periodically thereafter, the state shall notify applicable individuals enrolled under a state plan or waiver that this title, the requirement to demonstrate community engagement under the subsection, such notice shall include information on 1, how to comply with such requirement, including an explanation of the exceptions to such requirement under paragraph 3, and the definition of the term applicable individual under paragraph 9A. 2, the consequences of noncompliance with such requirement, and 3, how to report to the state any change in the individual status that could result in 1, the applicability of an exception under paragraph 3, or the end of the applicability of such an exception, or 2, the individual qualifying as a specified excluded individual under paragraph 9A2. B, form of outreach notice. A notice required under subparagraph A shall be delivered, 1, by regular mail, or if elected by the individual, to an electronic format, and 2, in 1 or more additional forms, which may include telephone, text message, an internet website, other commonly available electronic means, and such other forms as the Secretary determines appropriate. 9, definitions in this subsection. A, applicable individual. In general, the term applicable individual means an individual other than a specified excluded individual as defined in Clause 2. 1, who is eligible to enroll or is enrolled under the state plan under subsection A10, A1-8, or 2, who AA is otherwise eligible to enroll or is enrolled under a waiver of such plan that provides coverage that is equivalent to minimum essential coverage as described in Section 5000 AF1A of the Internal Revenue Code of 1986, and as determined in accordance with standards prescribed by the Secretary and regulations. And BB has attained the age of 19 and is under 65 years of age, is not pregnant, is not entitled to or enrolled for benefits under Part A of Title 18, or enrolled for benefits under Part B of Title 18, and is not otherwise eligible to enroll under such plan. 2, specified excluded individual. For purposes of Clause 1, the term specified excluded individual means an individual as determined by the state in accordance with standards specified by the Secretary. 1, who is described in subsection A10A19. 2, who AA is an Indian or an urban Indian, as such terms are defined in paragraphs 13 and 28 of Section 4 of the Indian Healthcare Improvement Act. BB is a California Indian described in sections 809A of such act, or CC, has otherwise been determined eligible as an Indian for the Indian Health Service under regulations promulgated by the Secretary. 3, who is the parent, guardian, caretaker, relative, or family caregiver as defined in Section 2 of the Raise Family Caregivers Act of a dependent child 13 years of age and under, or a disabled individual. 4, who is a veteran with a disability rated as total under Section 1155 of Title 38 United States Code. 5, who is medically frail or otherwise has special medical needs as defined by the Secretary, including an individual, AA, who is blind or disabled, as defined in Section 1614. BB, with a substance use disorder. CC, with a disabling mental disorder. DD, with a physical, intellectual, or developmental disability that significantly impairs their ability to perform one or more of the activities of daily living, or EE, with a serious or complex medical condition. 6, who AA is in compliance with any requirements imposed by the state pursuant to Section 407, or BB, is a member of a household that receives supplemental nutrition assistance program benefits under the Food and Nutrition Act of 2008 and is not exempt from a work requirement under such act. 7, who is participating in a drug addiction or alcoholic treatment and rehabilitation program as defined in Section 3H of the Food and Nutrition Act of 2008. 8, who is an inmate of a public institution, or 9, who is pregnant or entitled to postpartum medical assistance under paragraph 5 or 16 of subsection E. B, educational program. The term educational program includes 1, an institution of higher education as defined in Section 101 of the Higher Education Act of 1965, and 2, a program of career and technical education as defined in Section 3 of the Carl D. Perkins Career and Technical Education Act of 2006. C, state. The term state means one of the 50 states or the District of Columbia. D, work program. The term work program has the meaning given such term in Section 601 of the Food and Nutrition Act of 2008. 10, prohibiting waiver of community engagement requirements. Notwithstanding Section 1115A, the provisions of this subsection may not be waived. 11, special implementation rule. A, in general, subject to subparagraph C. The Secretary may exempt a state from compliance with the requirements of this subsection if, 1, the state submits to the Secretary a request for such exemption made in such form and at such time as the Secretary may require, and including the information specified in subparagraph B. And 2, the Secretary determines that based on such request, the state is demonstrating a good faith effort to comply with the requirements of this subsection. B, good faith effort determination. In determining whether a state is demonstrating a good faith effort for purposes of subparagraph A2, the Secretary shall consider 1, any actions taken by the state toward compliance with the requirements of this subsection. 2, any significant barriers to or challenges in meeting such requirements, including related to funding, design, development, procurement, or installation of necessary systems or resources. 3, the state's detailed plan and timeline for achieving full compliance with such requirements, including any milestones of such plan as defined by the Secretary. And 4, any other criteria determined appropriate by the Secretary. C, duration of exemption. 1, in general, an exemption granted under subparagraph A shall expire not later than December 31st, 2028, and may not be renewed beyond such date. 2, early termination. The Secretary may terminate an exemption granted under subparagraph A prior to the expiration date of such exemption if the Secretary determined that the state has 1, failed to comply with the reporting requirements described in subparagraph D, or 2, based on the information provided pursuant to subparagraph D, failed to make continued good faith efforts toward compliance with the requirements of this subsection. D, reporting requirements. A state granted an exemption under subparagraph A shall submit to the Secretary 1, quarterly progress reports on the state's status in achieving the milestones toward full compliance described in subsection B3, and 2, information on specific risks or newly identified barriers or challenges to full compliance, including the state's plan to mitigate such risks, barriers, or challenges. B, conforming amendment, section 1902 A10A18 of the Social Security Act, 42 U.S.C. 1396 AA 10A18 is amended by striking subject to subsection K and inserting subject to subsection K and XX. C, prohibiting conflicts of interest. A state shall not use a Medicaid managed care entity or other specified entity as such terms are defined in section 1903 M9D or other contractor to determine beneficiary compliance under such section unless the contractor has no direct or indirect financial relationship with any Medicaid managed care entity or other specified entity that is responsible for providing or arranging for coverage of medical assistance for individuals enrolled with the entity pursuant to a contract with such state. D, interim final rulemaking. Not later than June 1st, 2026, the Secretary of Health and Human Services shall promulgate an interim final rule for purposes of implementing the provisions of and the amendments made by this section. Any action taken to implement the provisions of and the amendments made by this section shall not be subject to the provisions of Section 553 of Title V United States Code. E, development of government efficiency grants to states. 1, in general, in order for states to establish systems necessary to carry out the provisions of and amendments made by this section or other sections of this chapter that pertain to conducting eligibility determinations or redeterminations, the Secretary of Health and Human Services shall A, out of the amount appropriated under paragraph 3A, award to each state a grant equal to the amount specified in paragraph 2 for such state, and B, out of amounts appropriated under paragraph 3B, distribute an equal amount among such states. 2, amounts specified. For purposes of paragraph 1A, the amount specified in this paragraph is an amount that bears the same ratio to the amount appropriated under paragraph 3A as the number of applicable individuals, as defined in section 1902 XX of the Social Security Act, as added by subsection A, residing in such states bear to the total number of such individuals residing in all states as of March 31st, 2025. Funding. there are appropriated out of any monies in the Treasury not otherwise appropriated $100 billion for fiscal year 2026 for purposes of awarding grants under paragraph 1A to remain available until expended, and B, $100 million for fiscal year 2026 for purposes of awards grants under paragraph 1B to remain available until expended. For definition, in this subsection, the term state means one of the 50 states and the District of Columbia. F, implementation funding for the purposes of carrying out the provisions of and the amendments made by this section. They are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services, $50 million for fiscal year 2026 to remain available until expended. Section 71122, modifying cost-sharing requirements for certain expansion individuals under the Medicaid program. A, in general, Section 1916 of the Social Security Act, 42 U.S.C. 1396-0 is amended, 1, in subsection A, in the matter preceding paragraph 1, by inserting, other than beginning October 1st, 2028, specified individuals as defined in subsection K3. After individuals, and 2, by adding at the end of the following new subsection K, special rules for certain expansion individuals. 1, premiums. Beginning October 1st, 2028, the state plan shall provide that in the case of a specified individual as defined in paragraph 3, who is eligible under the plan, no enrollment fee, premium, or similar charge will be imposed under the plan. 2, required imposition of cost sharing. A, in general, subject to subparagraph B, the subsection J, in the case of a specified individual, the state plan shall, beginning October 1st, 2028, provide for the imposition of such deductions, cost sharing, or similar charges determined appropriate by the state, in an amount greater than $0 with respect to certain care items or services furnished to such an individual as determined by the state. B, limitations. 1, exclusion of certain services. In no case may a deduction, cost sharing, or similar charge be imposed under the state plan with respect to care items or services described in any of the subparagraphs B through J of subsection A2 or any primary care services, mental health services, substance use disorder services, or services provided by a federally qualified health center. As defined in 1905-12, certified community behavioral health clinic as defined in section 1905-JJ2, or rural health clinic as defined in 1905-11, furnished to a specified individual. 2, item and service limitation. 1, in general, except as provided in subclause 2, in no case may a deduction, cost sharing, or similar charge imposed under the state plan with respect to care or an item or service furnished to a specified individual exceed $35. 2, special rules for prescription drugs. In no case may a deduction, cost sharing, or similar charge imposed under the state plan with respect to the prescription drug furnished to a specified individual exceed the limit that would be applicable under paragraph 2A1 or 2B of section 1916AC with respect to such drug and individual if such drug so furnished were subject to cost sharing under such section. 3, maximum limit on cost sharing. The total aggregate amount of deductions, cost sharing, or similar charges imposed under the state plan for all individuals in the family may not exceed 5% of the family income of the family involved, as applied on a quarterly or monthly basis as specified by the state. C, cases of non-payment, notwithstanding subsection E, a state may permit a provider participating under the state plan to require as a condition for the provision of care, items, or services to a specified individual entitled to medical assistance under this title for such care, items, or services, the payment of any deductions, cost sharing, or similar charges authorized to be imposed with respect to such care, items, or services. Nothing in this subparagraph shall be construed as preventing a provider from reducing or waiving the application of such deductions, cost sharing, or similar charges on a case-by-case basis. 3, specified individual defined. For purposes of this subsection, the term specified individual means an individual who has a family income as determined in accordance with section 1902E14 that exceeds the poverty line as defined in section 2110C5, applicable to a family of the size involved, and A, is enrolled under section 1902A10A18, or B,
B is described in such subsection and otherwise enrolled under a waiver of the state plan that provides coverage that is equivalent to minimum essential coverage as described in section 5000A F1A of the Internal Revenue Code of 1986 and determined in accordance with standards prescribed by the Secretary and regulations to all individuals described in section 1902A 10A18. 4, state defined. For purposes of the subsection, the term state defined means one of the 50 states or the District of Columbia. B, conforming amendments. 1, required applications. Section 1902A14 of the Social Security Act, 42 U.S.C. 1396A, A14, is amended by inserting and provide for imposition of such deductions, cost sharing, or similar charges for care, items, or services furnished to specific individuals as defined in paragraph 3 of section 1916K, in accordance with paragraph 2 of such section after section 1916. 2, non-applicability of alternative cost sharing. Section 1916A(1) of the Social Security Act, 42 U.S.C. 1396-01A1, is amended in the second sentence by striking or J and inserting J or K. Subchapter E, expanding access to care, section 71123, making certain adjustments to coverage of home or community-based services under Medicaid. A, expanding HCBS coverage under section 1915C waivers. Section 1915C of the Social Security Act, 42 U.S.C. 1396NC, is amended, 1, in paragraph 3 by inserting paragraph 11 or before subsection H2, and 2, by adding at the end of the following new paragraph, 11, expanding coverage for home or community-based services. A, in general, beginning July 1st, 2028, notwithstanding paragraph 1, the Secretary may approve a waiver that is a standalone from any other waiver approved under the subsection to include as medical assistance under the state plan of such state payment for part or all part of the cost of home or community-based services other than room and board, as described in paragraph 1, approved by the Secretary, which are provided pursuant to a written plan of care to individuals described in some paragraph B3. A waiver approved under this paragraph shall be for an initial term of 3 years and, upon the request of the state, shall be extended for additional 5-year periods unless the Secretary determines that the previous waiver period, the requirements specified under this subsection, excluding those accepted under subparagraph B, have not been met. B, state requirements. In addition to the requirements specified under the subsection, except for the requirements described in some paragraphs C and D of paragraph 2, and any other requirements specified under the subsection that the Secretary determines to be inapplicable to the context of a waiver that does not require individuals to have a determination described in paragraph 1, a state shall meet the following requirements as a condition of waiver approval. 1, as the date that such request a waiver, this subsection to provide home or community-based services to individuals scheduled in Clause 3, all other waivers, if any, granted under this subsection to such state meet the requirements of this subsection. 2, the state demonstrates to the Secretary that approval of a waiver under the subsection with respect to individuals described in Clause 3 will not result in a material increase of the average amount of time that individuals with respect to whom a determination described in paragraph 1 has been made will need to wait to receive home or community-based services under any other waiver granted under this subsection as determined by the Secretary. 3, the state establishes needs-based criteria subject to the approval of the Secretary regarding who will be eligible for home or community-based services under a waiver approved by this paragraph without requiring such individual to have a determination described in paragraph 1 and specifies the home or community-based services such individuals are so eligible will receive. 4, the state establishes needs-based criteria for determining whether an individual described in Clause 3 requires a level of care provided in a hospital, nursing facility, or in an intermediate care facility for individuals with developmental disabilities under the state plan or under any waiver of such plan that are more stringent than the needs-based criteria established under Clause 3 for determining eligibility for home or community-based services. 5, the state attests that the state's average per capita expenditure for medical assistance under the state plan or waiver of such plan, provided with respect to such individuals enrolled in a waiver under this paragraph, will not exceed the state's average per capita expenditure for medical assistance for individuals receiving institutional care under the state plan or waiver of such plan for the duration that the waiver under this paragraph is in effect. 6, the state provides to the Secretary data in such form and manner as the Secretary may specify regarding the number of individuals described in Clause 3 with respect to a state seeking approval of a waiver under the subsection, to whom the state will make such services available under such waiver. 7, the state agrees to provide to the Secretary, not less frequently than annually, data for purposes of paragraph 2E in such form and manner as the Secretary may specify regarding with respect to each preceding year in which a waiver under this subsection to provide home or community-based services to individuals described in Clause 3 was in effect. 1, the cost of such terms defined by the Secretary of such services furnished to individuals described in Clause 3, broken down by type of service. 2, with respect to each type of home or community-based service provided under the waiver, the length of time that such individuals have received such service. 3, a comparison between the data described in subclause 1 and any comparable data available with respect to individuals with respect to with a determination described in paragraph 1 has been made, and with respect to individuals receiving institutional care under this title. And 4, the number of individuals who have received home or community-based services under the waiver during this preceding year. C, limitation on payments. No payments made to carry out this paragraph shall be used to make payments to a third party on behalf of an individual practitioner for benefits such as health insurance, skills training, and other benefits customary for employees in the case of a class of practitioners for which the program established under this title is the primary source of revenue. B, implementation funding. 1, in general, there are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services. A, for fiscal year 2026, $50 million for purposes of carrying out the provisions of and the amendments made by this section to remain available until expended. And B, for fiscal year 2027, $100 million for purposes of making payments to states, subject to paragraph 2, to support state systems to deliver home or community-based services under section 1915C of the Social Security Act, 42 U.S.C. 1396 NC, as amended by this section, to remain available until expended. 2, payments based on the state HCBS eligible population. Payments to states from the amounts made available by paragraph 1B shall be made with respect to a state on the basis of the proportion of the population of the state that is eligible for home or community-based services under section 1915C of the Social Security Act, 42 U.S.C. 1396 NC, as amended by the section, as compared to all states. Section 71124, determination of FMAP for high poverty states. Section 1905B of the Social Security Act, 42 U.S.C. 1396D, is amended in the first sentence, 1, by striking and 6 and inserting 6, and 2, by inserting before the period the following, comma, and 7, only for purposes of payments for medical assistance under this title, excluding any such payments that are based on the enhanced FMAP described in section 2105B in the case of a state for which the Secretary issues under the authority of section 673(2) of the Omnibus Budget Reconciliation Act of 1981, a separate poverty guidance for any calendar year occurring during or after the date of enactment of this clause that is higher than the poverty guideline issued by the Secretary for such calendar year that is applicable to the majority of the states. The regular federal medical assistance percentage determined for such a state under this subsection without regard to any adjustments to such percentage for the first fiscal year quarter that begins after such date of enactment, and for each fiscal year quarter beginning thereafter shall be increased after such determination, but prior to any increase which may be applicable and in no case to exceed 100%, by the case of the state with the highest separate poverty guideline for the calendar year. 25% of the average regular federal medical assistance percentage determined without regard to any adjustments to such percentage for the fiscal year for states which do not have a separate poverty guideline issued for them for such calendar year, and in the case of the state with the second highest separate poverty guideline for the calendar year, 15% of the average regular federal medical assistance percentage determined without regard to any adjustments to such percentage. For the fiscal year for states which do not have a separate poverty guideline issued for them for such calendar year. Chapter 2, Medicare, Subchapter A, Strengthening Eligibility Requirements, Section 71201, Limiting Medicare Coverage of Certain Individuals. Title 18 of the Social Security Act, 42 U.S.C. 1395 et sec, is amended by adding at the end of the following new section. Section 1899C, limiting Medicare coverage of certain individuals. A, in general, subject to subsection B, an individual may be entitled to or enrolled for benefits under this title only if the individual is 1, a citizen or national of the United States, 2, an alien who is lawfully admitted for permanent residence under the Immigration and Nationality Act, 3, an alien who has been granted the status of Cuban and Haitian entrant as defined in Section 501(c)(e) of the Refugee Education Assistance Act of 1980, Public Law 96-422, or 4, an individual who lawfully resides in the United States in accordance with the Compact of Free Association referred to in Section 402(b)(2)(g) of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996. B, application to individuals currently entitled to or enrolled for benefits. 1, in general, in the case of an individual who is entitled for or enrolled for benefits under this title as of the date of the enactment of this section, subsection A shall apply beginning on the date that is 18 months after such date of enactment. 2, review by Commissioner or Social Security. A, in general, not later than 1 year after the date of the enactment of this section, the Commissioner of Social Security shall complete a review of individuals entitled to or enrolled for benefits under this title of such date of enactment for purposes of identifying individuals not described in any of the paragraphs 1 through 4 of subsection A. B, notice. The Commissioner of Social Security shall notify each individual identified under the review conducted under subparagraph A that such individual's entitlement to or enrollment for benefits under this title will be terminated as of the date that is 18 months after the date of the enactment of the section. Such notification shall be made as soon as practical after such identification and in the manner designed to ensure such individual's comprehension of such notification. Subchapter B, Improving Services for Seniors, Section 71202, Temporary Payment Increase under the Medicare Physical Fee Schedule to account for exceptional circumstances. A, in general, Section 1848T1 of the Social Security Act, 42 U.S.C. 1395W4T1 is amended. 1, in the matter preceding subparagraph A by striking and 2024 and inserting 2024 and 2026. 2, in subparagraph D by striking and at the end. 3, in subparagraph E by striking the period at the end and inserting semicolon and 4, by adding at the end of the new subparagraph F. Such services furnished on or after January 1, 2026 and before January 1, 2027 by 2.5%. B, conforming amendment. Section 1848C2B45 of the Social Security Act, 42 U.S.C. 1395 W4C2B45, is amended by striking or 2024 and inserting 2024 or 2026. Section 71203, expanding and clarifying the exclusion for orphan drugs under the Drug Price Negotiation Program. A, in general, Section 1192E of the Social Security Act, 42 U.S.C. 1320F1E is amended. 1, in paragraph 1, in the matter preceding subparagraph A, by striking and 3 and inserting through 4. 2, in paragraph 3A, A, by striking only one rare disease or condition and inserting one or more rare disease or conditions, and B, by striking such rare disease or condition and inserting one or more such rare diseases or conditions as such term is defined in Section 526A2 of the Federal Food, Drug, and Cosmetic Act, and 3, by adding at the end of the following new paragraph. 4. Treatment of former orphan drugs. In the case of a drug or biological product that, as of the date of approval or licensure of such drug or biological product, is a drug or biological product described in paragraph 3A, paragraph 1A2, or 1B2 as applicable, shall apply as if the reference to the date of such approval or the date of such licensure, respectively, were instead a reference to the first day after the date of such approval for which such drug is not a drug described in paragraph 3A, or the first day after the date of such licensure for which such biological product is not a biological product described in paragraph 3A, respectively. B, application. The amendments made by subsection A shall apply with respect to initial price applicability years as defined in section 1191B of the Social Security Act, 42 U.S.C. 1320 FB, beginning on or after July 1st, 2028. Section 71204, application of cost of living adjustment to non-labor related portion for hospital outpatient department services furnished in Alaska and Hawaii. Section 1833T of the Social Security Act, 42 U.S.C. 1395 LT, is amended by adding at the end the following new paragraph. 23, application of cost of living adjustment to non-labor related portion for hospital outpatient department services furnished in Alaska and Hawaii. A, in general, with respect to OPD services furnished on or after January 1st, 2027, the Secretary shall provide for adjustments to the payment amounts under the subsection for such services in the same manner that is provided under Section 1886D5H with respect to the application of the cost of living adjustment to the non-labor related portion of such payment amounts to take into account the unique circumstances of hospitals located in Alaska or Hawaii. Such adjustments shall not apply to payment amounts for a separately payable drug, biological, or medical device. B, application without regard to budget neutrality. Adjustments to payment amounts made under this paragraph, 1, shall not be considered an adjustment under paragraph 2E, and 2, shall not be implemented in a budget neutral manner. Chapter 3, Health Tax. Subchapter A, Improving Eligibility Criteria. Section 71301, permitting premium tax credit only for certain individuals. A, in general, Section 36BE1 is amended by inserting or in the case of aliens who are lawfully present are not eligible aliens, after individuals who are not lawfully present. B, eligible aliens. Section 36BE2 is amended. 1, by striking for purposes of this section an individual and inserting for purposes of this section A, in general, an individual, and 2, by adding at the end of the following new subparagraph. B, eligible aliens. An individual who is an alien and lawfully present shall be treated as an eligible alien if such individual is and is reasonably expected to be for the entire period of enrollment for which the credit under this section is being claimed. 1, an alien who is lawfully admitted for permanent residence under the Immigration and Nationality Act, 8 U.S.C. 1101 et sec. 2, an alien who has been granted the status of Cuban and Haitian entrant as defined in Section 501E of the Refugee Education Assistance Act of 1980, Public Law 96-422, or 3, an individual who lawfully resides in the United States in accordance with the Compact of Free Association referred to in Section 402B2G of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996, 8 U.S.C. 1612B2G. C, conforming amendments. 1, verification of information. Section 1411 of the Patient Protection and Affordable Care Act, 14 U.S.C. 18081 is amended. A, in subsection A, 1, in paragraph 1 by striking and section 36BE of the Internal Revenue Code, and 2, in paragraph 2, 1 in subparagraph A by striking and at the end, 2, in subparagraph B by adding and at the end, and 3 by adding at the end the following new subparagraph. C, in the case such individual is an alien lawfully present in the United States, whether such individual is an eligible alien within the meaning of Section 36B(e)(2) of such code. B, in subsection B3 by adding at the end the following new subparagraph. D, immigration status. In the case the individual's eligibility is based on an attestation of the enrollee's immigration status, an attestation that such individual is an eligible alien without the meaning of 36B(e)(2) of the Internal Revenue Code of 1986, and C, in subsection C2B2 by adding at the end the following new subclause. 3, in the case of an individual described in clause 1.1 with respect to whom a premium tax credit under Section 36B of the Internal Revenue Code of 1986 is being claimed, the attestation that the individual is an eligible alien within the meaning of Section 36B(e)(2) of such code. 2, advanced determinations. Section 1412D of the Patient Protection and Affordable Care Act, 42 U.S.C. 18082D is amended by inserting before the period at the end the following, comma, or credits under Section 36B of the Internal Revenue Code of 1986 for aliens who are not eligible aliens within the meaning of Section 36B(e)(2) of such code. 3, effective date. The amendments made by the subsections shall apply with respect to plan years beginning on or after January 1, 2027. D, clerical amendments. 1, the heading for this section, 36BE, is amended by inserting "and not eligible aliens" after individuals not lawfully present. 2, the heading for this section, 36BE2, is amended by inserting "eligible aliens" after lawfully present. E, requirement to maintain minimum essential coverage. Section 5000A(d)(2)(d)(3) is amended by striking "an alien lawfully present in the United States" and inserting "an eligible alien" within the meaning of Section 36BE2. F, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. G, effective date. The amendments made by this section, other than the amendments made by subsection C, shall apply to taxable years beginning after December 31st, 2026. Section 71302, disallowing premium tax credit during periods of Medicaid ineligibility due to alien status. A, in general, Section 36B(c)(1) is amended by striking subparagraph B. B, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Subchapter B, preventing waste, fraud, and abuse. Section 71303, requiring verification of eligibility for premium tax credit. A, in general, Section 36B(c) is amended by adding at the end the following new paragraphs. 5, exchange enrollment verification requirement. A, in general, the term coverage month shall not include, with respect to any individual covered by a qualified health plan enrolled through an exchange, any month beginning before the exchange verifies using applicable enrollment information that shall be provided or verified by the applicant such individuals' eligibility, 1, to enroll in the plan through the exchange, and 2, for any advance payment under Section 1412 of the Patient Protection Affordable Care Act of the credit allowed under this section. B, applicable enrollment information. For purposes of subparagraph A, applicable enrollment information shall include affirmation of at least the following information to the extent relevant in determining eligibility described in subparagraph A. 1, household income and family size. 2, whether the individual is an eligible alien. 3, any health coverage status or eligibility for coverage. 4, place of residence. 5, such other information as may be determined by the Secretary in consultation with the Secretary of Health and Human Services as necessary to the verification prescribed under subparagraph A. C, verification of past months. In the case of a month that begins before verification prescribed by subparagraph A, such month shall be treated as a coverage month if and only if the exchange verifies for such month using applicable enrollment information that shall be provided or verified by the applicant, such individual's eligibility to have so enrolled and for such advance payment. D, exchange participation. Coordination with other procedures for determining eligibility. An individual shall not, solely by reason of failing to meet the requirements of this paragraph with respect to a month, be treated for such month as ineligible to enroll in a qualified health plan through an exchange. E, waiver for certain special enrollment periods. The Secretary may waive the application of subparagraph A in the case of an individual who enrolls in a qualified health care plan through an exchange for 1 or more months in the taxable year during a special enrollment period provided by the exchange on the basis of a change in the family size of the individual. F, information and reliance on third-party sources. An exchange shall be permitted to use any data available in the exchange and any reliable third-party sources in collecting information for verification by the applicant. 6, exchange compliance with filing requirements. The term coverage month shall not include with respect to any individual covered by a qualified health plan enrolled in through an exchange any month for which the exchange does not meet the requirements of Section 155.305F43 of Title 45 Code of Federal Regulations as published in the Federal Registrar on June 25, 2025, 90 FR 27074, applied as though it applied to all plan years after 2025 with respect to the individual. B, pre-enrollment verification, process required. Section 36BC3A is amended, 1, by striking health plan, the term, and inserting health plan 1, in general, the term, and 2, by adding at the end of the following the new clause, 2, pre-enrollment verification process required. Such term shall not include any plan enrolled in through an exchange unless such exchange provides a process for pre-enrollment verification through which any applicant may, beginning not later than August 1st, verify with the exchange the applicant's household income and eligibility for enrollment in such plan for plans years beginning in the subsequent year. C, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2027. Section 71304, disallowing premium tax credit in case of certain coverage enrolled in during special enrollment period. A, in general, Section 36B(c)(3)A, as amended by the preceding provisions of this Act, is amended by adding at the end the following new clause. 3, exception in case of certain special enrollment periods. Such term shall not include any plan enrolled in during a special enrollment period provided for by an exchange, 1, on the basis of the relationship of the individual's expected household income to such a percentage of the poverty line or such other amount as is prescribed by the Secretary of Human Services for purposes of such period, and 2, not in connection with the occurrence of an event or change in the circumstances specified by the Secretary of Health and Human Services for such purposes. B, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. C, effective date. The amendments made by this section shall apply with respect to the plan years beginning after December 31st, 2025. Section 71305, eliminating limitation on recapture of advance payment of premium tax credit. A, in general, Section 36B(f)(2) is amended by striking subparagraph B. B, conforming amendments. 1, Section 36B(f)(2) is amended by striking advance payments and all that follows through if the advance payments, and inserting the following: advance payments if the advance payments. 2, Section 35G12B2 is amended by striking then Section 36B(f)(2)B shall be applied by substituting the amount determined under Clause 1 for the amount determined under Section 36B(f)(2)A, and inserting then the amount determined under Clause 1 shall be substituted for the amount determined under Section 36B(f)(2). C, special rule for creation in certain individuals treated as applicable taxpayers. Paragraph 1 of Section 36BC is amended by adding at the end the new following subparagraph. E, special rule for certain individuals treated as applicable taxpayers. In the case of a taxable year beginning after December 31st, 2025, if an individual, one, is determined by an exchange at the time of enrollment in a qualified health plan through such exchange to have projected annual household income for the taxable year which equals or exceeds 100% of an amount equal to the poverty line for a family of the size involved, and two, receives an advance payment of the credit under the section for one or more months during such taxable year under Section 1412 of the Patient Protection and Affordable Care Act, such individual shall not fail to be treated as an applicable taxpayer for such taxable year solely because the actual household income of the individual for the taxable year is less than 100% of an amount equal to the poverty line for a family of the size involved, unless the Secretary determines that the individual provided incorrect information to the exchange with intentional or reckless disregard for the facts. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025.
Subchapter C, Enhancing Choice for Patients. Section 71306, Permanent Extension of Safe Harbor for Absence of Deductible for Telehealth Services. A, in general, subparagraph E of Section 223C2 is amended to read as follows. E, safe harbor for absence of deductible for telehealth. A plan shall not fail to be treated as a high deductible health plan by reason of failing to have a deductible for telehealth and other remote care services. B, certain coverage disregarded. Clause 2 of Section 223C1B is amended by striking in the case of months or plan years to which paragraph 2E applies. C, effective date. The amendments made by this section shall apply to plan years beginning after December 31st, 2024. Section 71307, allowance of bronze and catastrophic plans in connection with health savings accounts. A, in general, Section 223C2 is amended by adding at the end of the following new subparagraph H, bronze and catastrophic plans treated as high deductible health plans. The term high deductible health plan shall include any plan which is 1, available as individual coverage through an exchange established under Section 1311 or 1321 of the Patient Protection and Affordable Care Act, and 2, described in subsection D1A or E of Section 1302 of such act. B, effective date. The amendment made by this section shall apply to months beginning after December 31st, 2025. Section 71308, treatment of direct primary care service arrangements. A, in general, Section 223C1 is amended by adding at the end the following new subparagraph. E, treatment of direct primary care service arrangements. 1, in general, a direct primary care service arrangement shall not be treated as a health plan for purposes of subparagraph A2. 2, direct primary care service arrangement. For purposes of this subparagraph, 1, in general, the term direct primary care service arrangement means, with respect to any individual, an arrangement under which such individual is provided medical care, as defined in Section 213D, consisting solely of primary care services provided by primary care practitioners, as defined in Section 1833X2A of the Social Security Act, determined without regard to Clause 2 thereof, if the sole compensation for such care is a fixed periodic fee. 2, limitation. With respect to any individual for any month, such term shall not include any arrangement if the aggregate fees for all the direct primary care service arrangements determined without regard to this subclause with respect to such individual for such month exceed $150, twice such dollar amount in the case of an individual with any direct primary care service arrangement as so determined that covers more than one individual. 3, certain services specifically excluded from treatment as primary care services. For purposes of this subparagraph, the term primary care services shall not include 1, procedures that require the use of general anesthesia, 2, prescription drugs other than vaccines, and 3, laboratory services not typically administered in an ambulatory primary care setting. The Secretary, after consultation with the Secretary of Health and Human Services, shall issue regulations or other guidance regarding the application of this clause. B, direct primary care service arrangement fees treated as medical expenses. Section 223D2C is amended by striking or at the end of Clause 3, by striking the period at the end of Clause 4 and inserting or, and by adding at the end of the following new clause, 5, any direct primary care service arrangement. C, inflation adjustment. Section 223 G1 is amended. 1, by striking in subsections B2 and C2A and inserting in subsections B2, C2A, and in the case of taxable years beginning after 2026, C1E22. 2, in subparagraph B, by striking clause 2 in clause 1 and inserting clauses 2 and 3, by striking and at the end of clause 1, by striking the period at the end of clause 2 and inserting and by inserting after clause 2 the following new clause. 3, in the case of the dollar amount in subsection C1E22, calendar year 2025, and 3, by inserting C1E22 after B2 in the last sentence. D, effective date. The amendments made by this section shall apply to months beginning after December 31st, 2025. Chapter 4, Protecting Rural Hospitals and Providers. Section 71401, Rural Health Transformation Program. A, in general, Section 2105 of the Social Security Act 42 U.S.C. 1397EE is amended by adding at the end the following new subsection. H, Rural Health Transformation Program. 1, appropriation. A, in general, there are appropriated out of any money in the Treasury not otherwise appropriated to the administrator of the Centers for Medicare and Medicaid Services, in this subsection referred to as the administrator, to provide allotments to states for purposes of carrying out the activities described in paragraph 6. 1, $10 billion for fiscal year 2028. 2, $10 billion for fiscal year 2029. 3, $2 billion for fiscal year 2030. 4, $2 billion for fiscal year 2031. And 5, $1 billion for fiscal year 2032. B, unexpended or unobligated funds. 1, in general, any amounts appropriated under subparagraph A that are unexpected or unobligated as of October 1st, 2034, shall be returned to the Treasury of the United States. 2, redistribution of unexpended or unobligated funds. In carrying out subparagraph A, the administrator shall, not later than March 31st, 2030, and annually thereafter through March 31st, 2034, 1, determine the amount of funds, if any, that are available under such subparagraph for a previous fiscal year are unexpended or unobligated with respect to such fiscal year and will not be available to a state in the current fiscal year pursuant to clause 3. And 2, if the administrator determines that any such funds from a previous fiscal year remain, redistribute such funds in the current fiscal year to states that have an application approved under this subsection for such fiscal year in accordance with an allotment methodology specified by the administrator. 3, availability of funds. 1, in general, amounts allotted to a state under this subsection for a year shall be available for expenditure by the state through the end of the fiscal year following the fiscal year in which such amounts are allotted. 2, availability of amounts redistributed. Amounts redistributed to a state under Clause 2 with respect to a fiscal year shall be available for expenditure by the state through the end of the fiscal year following the fiscal year in which such amounts are redistributed, except in the case of amounts redistributed in fiscal year 2034, which shall only be available for expenditure through September 30th, 2034. 4, misuse of funds. If the administrator determines that a state is not using amounts allotted or redistributed to the state under this subsection in a manner consistent with the description provided by the state in its application approved under paragraph 2, the administrator may withhold payments to, or reduce payments to, or recover previous payments from the state under this subsection as the administrator deems appropriate, and any amounts so withheld or that remain after any such reduction or so recovered shall be returned to the Treasury of the United States. 2, application. A, in general, to be eligible for an allotment under this subsection, a state shall submit to the administrator during an application submission period to be specified by the administrator, but that ends not later than April 1st, 2027, an application in such form and manner as the administrator may specify. That includes 1, a detailed rural health transformation plan developed in consultation with the State Office of Rural Health. 1, to improve access to hospitals, other healthcare providers, and healthcare items and services furnished to rural residents of the state. 2, to improve healthcare outcomes of rural residents of the state. 3, to prioritize the use of new and emerging technologies that emphasize prevention and chronic disease management. 4, to initiate, foster, and strengthen local and regional strategic partnerships between rural hospitals and other healthcare providers in order to promote measurable quality improvement, increase financial stability, maximize economies of scale, and share best practices in care delivery. 5, to enhance economic opportunity for and the supply of healthcare clinicians through enhanced recruitment and training. 6, to prioritize data and technology-driven solutions that help rural hospitals and other rural healthcare providers furnish high-quality healthcare services as close to a patient's home as is possible. 7, that outlines strategies to manage long-term financial solvency and operating models of rural hospitals in the state. And 8, that identifies specific causes driving the accelerating rate of standalone rural hospitals becoming at risk of closure, conversion, or service reduction. 2, a certification that none of the amounts provided under this subsection shall be used by the state for an expenditure that is attributable to an intergovernmental transfer, certified public expenditure, or any other expenditure to finance the non-federal share of expenditures required under any provision of law, including under the state plan established under this title, the state plan established under Title XIX, or under a waiver of such plans, and 3, such other information as the administrator may require. B, deadline for approval. Not later than September 30th, 2027, the administrator shall approve or deny all applications submitted for an allotment under this subsection. C, one-time application. If an application of a state for an allotment under this subsection is approved by the administrator, the state shall be eligible for an allotment under this subsection for each of fiscal years 2028 through 2032, except as provided in paragraph 1B4. D, eligibility. Only the 50 states shall be eligible for an allotment under this subsection, and all references in this subsection to a state shall be treated as only referring to the 50 states. 3, allotments. A, in general, for each of the fiscal years 2028 through 2032, the administrator shall determine under subparagraph B the amount of the allotment for such fiscal year for each state with an approved application under this subsection. B, amount determined. From the amounts appropriated under paragraph 1A for each of fiscal years 2028 through 2032, the administrator shall allot 1, 50% of the amounts appropriated for each such fiscal year equally among all states with an approved application under this subsection, and 2, 50% of the amounts appropriated for each such fiscal year among all such states in an amount to be determined by the administrator in accordance with subparagraph C. C, considerations. In determining the amount to be allotted to a state under subparagraph B2 for a fiscal year, the administrator shall consider the following: the percentage of the state population that is located in a rural census tract of a metropolitan statistical area, as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Federal Register 6725. 2, the proportion of rural health facilities as defined in subparagraph D in the state relative to the number of rural health facilities nationwide. 3, the situation of hospitals in the state as described in section 1902A13A4. 4, any other factors that the administrator determines appropriate. D, rural health facility defined. For the purposes of subparagraph C2, the term rural health facility means the following: 1, a subsection D hospital as defined in paragraph 1B of section 1886D, that 1 is located in a rural area as defined in paragraph 2D of such section. 2 is treated as being located in a rural area pursuant to paragraph 8E of such section. Or 3 is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Federal Register 6725. 2, a critical access hospital as defined in section 1861MM1. 3, a sole community hospital as defined in section 1886D5D3. 4, a Medicare-dependent small rural hospital as defined in section 1886D5G4. 5, a low-volume hospital as defined in section 1886D12C. 6, a rural emergency hospital as defined in section 1861KKK2. 7, a rural health clinic as defined in section 1861AA2. 8, a federally qualified health center as defined in section 1861AA4. 9, a community mental health center as defined in section 1861FF3B. X, a health center that is receiving a grant under section 330 of the Public Health Service Act. 11, an opioid treatment program as defined in section 1861JJJ2 that is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Federal Register 6725. 12, a certified community behavioral health clinic as defined in section 1905JJ2 that is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Federal Register 6725. 4, no matching payment. A state approved for an allotment under this subsection for a fiscal year shall not be required to provide any matching funds as a condition for receiving payments from the allotment. 5, terms and conditions. The administrator shall specify such terms and conditions for allotments to states provided under this subsection as the administrator deems appropriate, including the following. A, each state shall submit to the administrator at a time and in a form and manner specified by the administrator, 1, a plan for the state to use its allotment to carry out 3 or more of the activities described in paragraph 6, and 2, annual reports on the use of allotments, including such additional information as the administrator determines appropriate. B, not more than 10% of the amount allotted to a state for a fiscal year may be used by the state for the administrative expenses. C, in the event that a state uses amounts from an allotment to provide payments to healthcare providers in accordance with subparagraph B or J of paragraph 6, the state shall ensure that such amounts are not used to reimburse any expense or loss that 1, has been reimbursed from any other source, or 2, any other source is obligated to reimburse. 6, use of funds. Amounts allotted to a state under this subsection shall be used for 3 or more of the following health-related activities. A, promoting evidence-based, measurable interventions to improve prevention and chronic disease management. B, providing payments to healthcare providers as defined by the administrator for the provision of healthcare items or services as specified by the administrator. C, promoting consumer-facing, technology-driven solutions for the prevention and management of chronic diseases. D, providing training and technical assistance for the development and adoption of technology-enabled solutions that improve care delivery in rural hospitals, including remote monitoring, robotics, artificial intelligence, and other advanced technologies. E, recruiting and retaining clinical workforce talent to rural areas with commitments to serve rural communities for a minimum of 5 years. F, providing technical assistance, software, and hardware for significant information technology advances designed to improve efficiency, enhance cybersecurity capability development, and improve patient health outcomes. Assisting rural communities to right-size their healthcare delivery systems by identifying needed preventative, ambulatory, pre-hospital, emergency, acute inpatient care, outpatient care, and post-acute care service lines.
Pursuant to the order of February 29th, 1960, the hour of 12 noon having arrived, the Senate having been in continuous session since yesterday, the Senate will suspend for a prayer by the Senate chaplain.
Let us pray. Lord of creation, you establish day and night and the orderly movements of the seasons. That same providence orders the lives of our senators, our nation, and our world. As our lawmakers seek to do what is right, give them the wisdom to discern what is best. Show them the pitfalls to avoid and the opportunities to seize. Lord, keep them from becoming weary in their pursuit of your purposes as they remember your promise to bring a bountiful harvest. May they cling to the enduring principles of your truth that will lead them to your desired destination. We pray in your wonderful name. Amen.
The clerk will continue reading.
H, supporting access to opioid use disorder treatment services as defined in section 1861 JJJ1, other substance use disorder treatment services and mental health services. I, developing projects that support innovative models of care that include value-based care arrangements and alternative payment models as appropriate. J, additional uses designed to promote sustainable access to high-quality rural health care services as determined by the administrator. 7, exemptions. Paragraphs 2, 3, 5, 6, 8, 10, 11, and 12 of subsection C do not apply to payments under this subsection. 8, review. There shall be no administrative or judicial review under Section 1116 or otherwise of amounts allotted or redistributed to states under this subsection, payments to states withheld or reduced under this subsection, or previous payments recovered from states under this subsection. B, conforming amendments. Title XXI of the Social Security Act, 42 U.S.C. 1397AA is amended. 1. In Section 2101, A, in subsection A, in the matter of preceding paragraph 1, by striking the purpose and inserting except with respect to the Rural Health Transformation Program established in Section 2105H, the purpose. And B, in subsection B, in the matter preceding paragraph 1, by inserting subsection A or G of before Section 2105. 2. In Section 2105C1, by striking and may not include and inserting or to carry out the Rural Health Transformation Program established in subsection H, and except in the case of amounts made available under subsection H, may not include and. 3. In subsection 2106A1, by inserting subsection A or G of before Section 2105. C, implementation. The administrator of the Centers for Medicare and Medicaid Services shall implement this section, including the amendments made by this section, by program instruction or other forms of program guidance. Subtitle C, increase in debt limit. Section 72001, modification of limitation on the public debt. The limitation under Section 3101B of Title 31 United States Code, as most recently increased by Section 401B of Public Law 118.5, 31 U.S.C. 3101 note, is increased by $5 trillion. Title VIII, Committee on Health, Education, Labor, and Pensions. Subtitle A, exemption of certain assets. Section 80001, exemption of certain assets. A, exemption of certain assets. Section 480F2 of the Higher Education Act of 1965, 20 U.S.C. 1087 VV F2 is amended. 1, by striking net value of the and inserting the following: net value of A, the. 2, by striking the period at the end and inserting a semicolon. And 3, by adding at the end the following: B, a family farm on which the family resides. C, a small business with not more than 100 full-time or full-time equivalent employees, or any part of such a small business that is owned and controlled by the family. Or D, a commercial fishing business and related expenses, including fishing vessels and permits owned and controlled by the family. B, effective date and application. The amendments made by subsection A shall take effect on July 1st, 2026, and shall apply with respect to award year 2026 through 2027, and each subsequent award year as determined under the Higher Education Act of 1965, 20 U.S.C. 1001, Subtitle B, loan limits. Section 81001, establishment of loan limits for graduate and professional students and parent borrowers, termination of graduate and professional plus loans. Section 455A of the Higher Education Act of 1965, 20 U.S.C. 1087EA is amended. 1, in paragraph 3A, in the paragraph heading, by inserting and federal direct plus loans after loans, by striking subparagraph A and inserting the following: A, termination of authority to make interest-subsidized loans to graduate and professional students, subject to subparagraph B and notwithstanding any provision of this part or Part B. 1, for any period of instruction beginning on or after July 1st, 2012, a graduate or professional student shall not be eligible to receive a federal direct Stafford loan under this part. And 2, for any period of instruction beginning on July 1st, 2012, and ending on June 30th, 2026, the maximum annual amount of federal direct unsubsidized Stafford loans such a student may borrow in any academic year, as defined in Section 481A2, or its equivalent shall be the maximum annual amount for such student determined under Section 428H, plus an amount equal to the amount of federal direct Stafford loans the student would have received in the absence of this subparagraph. And C, by adding at the end the following: C, termination of authority to make federal direct plus loans to graduate and professional students, subject to paragraph 8 and notwithstanding any provision of this part or Part B, for any period of instruction beginning on or after July 1st, 2026, a graduate or professional student shall not be eligible to receive a federal direct plus loan under this part. And 2, by adding at the end the following: 4, graduate and professional annual and aggregate limits for federal direct unsubsidized Stafford loans beginning July 1st, 2026. A, annual limits beginning July 1st, 2026. Subject to paragraphs 7A and 8, beginning on July 1st, 2026, the maximum annual amount of federal direct unsubsidized Stafford loans. 1, a graduate student who is not a professional student may borrow in any academic year or its equivalent shall be $20,500. And 2, a professional student may borrow in any academic year or its equivalent shall be $50,000. B, aggregate limits. Subject to paragraph 6, 7A, and 8, beginning on July 1st, 2026, the maximum aggregate amount of federal direct unsubsidized Stafford loans, in addition to the amount borrowed for undergraduate education that, 1, is a graduate student, 1, who is not and has not been a professional student, may borrow for programs of study described in subparagraph C1, shall be $100,000, or 2, who is or has been a professional student, may borrow for programs of study described in subparagraph C1, shall be an amount equal to AA, $200,000 minus BB, the amount such student borrowed for programs of study described in subparagraph C2, and 2, a professional student, 1, who is not and has not been a graduate student, may borrow for programs of study described in subparagraph C2, shall be $200,000, or 2, who is or has been a graduate student, may borrow for programs of study described in subparagraph C2, shall be an amount equal to AA, $200,000 minus BB, the amount such student borrowed for programs of study described in subparagraph C1. C, definitions. 1, graduate student. The term graduate student means a student enrolled in a program of study that awards a graduate credential, other than a professional degree, upon completion of the program. 2, professional student. In this paragraph, the term professional student means a student enrolled in a program of study that awards a professional degree, as defined under Section 668.2 of Title 34, Code of Federal Regulations, as in effect on the date of enactment of this paragraph, upon completion of the program. 5, parent borrower annual and aggregate limits for federal direct plus loans beginning July 1st, 2026. A, annual limits, subject to paragraph 8 and notwithstanding any provision of this part or part B, beginning on July 1st, 2026, for each dependent student, the total maximum annual amount of federal direct plus loans that may be borrowed on behalf of that dependent student by all parents of that dependent student shall be $20,000. B, aggregate limits, subject to paragraph 8 and notwithstanding any provision of this part or part B, beginning on July 1st, 2026, for each dependent student, the total maximum aggregate amount of federal direct plus loans that may be borrowed on behalf of that dependent student by all parents of that dependent student shall be $65,000, without regard to any amounts repaid, forgiven, canceled, or otherwise discharged on any such loan. 6, lifetime maximum aggregate amount for all students. Subject to paragraph 8 and notwithstanding any provision of this part or part B, beginning on July 1st, 2026, the maximum aggregate amount of loans made, insured, or guaranteed under this title that a student may borrow other than a federal direct plus loan or a loan under Section 428B made to the student as a parent borrower on behalf of a dependent student shall be $257,500 without regard to any amount enrolled in a program of study of an institution of higher education on less than a full-time basis during any academic year. The amount of a loan that student may borrow for an academic year or its equivalent shall be reduced in direct proportion to the degree to which that student is not so enrolled on a full-time basis, rounded to the nearest whole percentage point, as provided in a schedule of reductions published by the Secretary, computed for purposes of this subparagraph. B, institutionally determined limits, notwithstanding the annual loan limits established under this section, and for undergraduate students under this part and part B, beginning on July 1st, 2026, an institution of higher education, at the discretion of a financial aid administrator at the institution, may limit the total amount of loans made under this part for a program of study for an academic year that a student may borrow and that a parent may borrow on behalf of such student, as long as any such limit is applied consistently to all students enrolled in such program of study. 8, interim exception for certain students. A, application of prior limits. Paragraphs 3C, 4, 5, and 6 shall not apply, and paragraph 3A2 shall apply as such paragraph was in effect for periods of instruction ending before June 30th, 2026, during the expected time to credential described in subparagraph B, with respect to an individual who, as of June 30th, 2026, 1, is enrolled in a program of study at an institution of higher education, and 2, has received a loan, or on whose behalf a loan was made, under this part for such program of study. B, expected time to credential. For purposes of this paragraph, the expected time to credential of an individual shall be equal to the lesser of 1, 3 academic years, or 2, the period determined by calculating the difference between 1, the program length for the program of study in which the individual is enrolled, and 2, the period of such program of study that such individual has completed as of the date of the determination under this subparagraph. C, definition of program length. In this paragraph, the term program length means the minimum amount of time in weeks, months, or years that is specified in the catalog, marketing materials, or other official publications of an institution of higher education for a full-time student to complete the requirements for a specific program of study. Subtitle C, loan repayment. Section 82.0 payment. A, transition to income-based repayment plans, 2028. Each borrower who has one or more loans that are in a repayment status in accordance with or an administrative forbearance as associated with an income contingent repayment plan authorized under Section 455E of the Higher Education Act of 1965, referred to in this subsection as covered income contingent loans, selects one of the following income-based repayment plans that is otherwise applicable and for which that borrower is otherwise eligible for the repayment of the covered income contingent loans of the borrower. A, the repayment assistant plan under Section 455Q of the Higher Education Act of 1965. B, the income-based repayment plan under Section 493C of the Higher Education Act of 1965. C, any other repayment plan as authorized under Section 455D1 of the Higher Education Act of 1965. 2, commencement of new repayment plan. Beginning on July 1st, 2028, a borrower described in paragraph 1 shall begin repaying the covered income contingent loans of the borrower in accordance with the repayment plan selected under paragraph 1, unless the borrower chooses to begin repaying in accordance with the repayment plan selected under paragraph 1 before such date. 3, failure to select. In the case of a borrower described in paragraph 1 who fails to select a repayment plan in accordance with such paragraph, the Secretary of Education shall, A, enroll the covered income contingent loans of such borrower in 1, the repayment assistant plan under Section 455Q of the Higher Education Act of 1965 with respect to loans that are eligible for the repayment assistant plan under such subsection, or 2, the income-based repayment plan under Section 493C of such act with respect to loans that are not eligible for the repayment assistance plan, and B, require the borrower to begin repaying income contingent loans according to the plans under subparagraph A on July 1st, 2028. B, repayment plans. Section 455D of the Higher Education Act of 1965, 20 U.S.C. 1087 ED is amended. 1, in paragraph 1, A, in the matter preceding subparagraph A, by inserting before July 1st, 2026, who has not received a loan made under this part or on or after July 1st, 2026, after made under this part. B, in subparagraph D, 1, by inserting before June 30th, 2028, before an income contingent repayment plan, and 2, by striking and after the semicolon. C, in subparagraph E, 1, by striking that enables borrowers who have a partial financial hardship to make a lower monthly payment.
Two, by striking a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on such federal direct plus loan or a loan under Section 428B made on behalf of a dependent student and inserting an accepted consolidation loan as defined in Section 493C A2 and 3 by striking the period at the end and inserting and D, by adding at the end of the following F, beginning on July 1, 2026, the income-based repayment assistance plan under subsection Q, provided that 1, such plan shall not be available for the repayment of accepted loans as defined in paragraph 7E, and 2, the borrower is required to pay each outstanding loan of the borrower made under this part under such repayment assistance plan, except that a borrower of an accepted loan, as defined in paragraph 7E, may repay the accepted loan separately from other loans under this part obtained by the borrower. 2, in paragraph 5, by amending subparagraph B to read as follows. B, repay the loan pursuant to an income-based repayment plan under subsection Q or section 493C as applicable. And 3, by adding at the end of the following 6, termination and limitation of repayment authority. A, sunset of repayment plans available before July 1, 2026. Paragraphs 1 through 4 of this subsection shall only apply to loans made under this part before July 1, 2026. B, prohibitions. The Secretary may not, for any loan made under this part on or after July 1, 2026, 1, authorize the borrower of such a loan to repay such loan pursuant to a repayment plan that is not described in paragraph 7A, or 2, carry out or modify a repayment plan that is not described in such paragraph. 7, repayment plans for loans made on or after July 1, 2026. A, design and selection, beginning on July 1st, 2026, the Secretary shall offer a borrower of a loan made under this part on or after such date, including such borrower who also has a loan made under this part before such date, 2 plans for repayment of the borrower's loans under this part, including principal and interest on such loans. The borrower shall be entitled to accelerate without penalty repayment on such loans. The borrower may choose 1, a standard repayment plan, 1, with a fixed monthly repayment amount paid over a fixed period of time equal to the applicable period determined under subclause 2, and 2, with the applicable period of time for repayment determined based on the total outstanding principal of all loans of the borrower made under this part before, on or after July 1, 2026, at the time the borrower is entering repayment under such plan as follows. AA, for a borrower with total outstanding principal of less than $25,000, a period of 10 years. BB, for a borrower with total outstanding principal of not less than $25,000 and less than $50,000, a period of 15 years. CC, for a borrower with total outstanding principal of not less than $50,000 and less than $100,000, a period of 20 years, and DD, for a borrower with total outstanding principal of $100,000 or more, a period of 25 years, or 2, the income-based repayment assistance plan under subsection Q. B, selection by Secretary. If a borrower of a loan made under this part on or after July 1, 2026 does not select a repayment plan described in subparagraph A, the Secretary shall provide the borrower with the standard repayment plan described in subparagraph A1. C, selection applies to all outstanding loans. A borrower is required to pay each outstanding loan of the borrower made under this part under the same selected repayment plan, except that a borrower who selects the repayment assistance plan and also has an accepted loan that is not eligible for repayment under such repayment assistance plan shall repay the accepted loan separately from other loans under this part obtained by the borrower. D, changes of repayment plan. A borrower may change the borrower's selection of 1, the standard repayment plan under subparagraph 4.1, or the Secretary's selection of such plan for the borrower under subparagraph B, as the case may be, to the repayment assistance plan under subparagraph A2 at any time. 2, the repayment assistance plan under subparagraph A2 to the standard repayment plan under subparagraph A1 at any time. Repayment for E, repayment for borrowers with accepted loans made on or after July 1, 2026. 1, standard repayment plan required, notwithstanding paragraphs A through D, beginning on July 1, 2026, the Secretary shall require a borrower who has received an accepted loan made on or after such date, including such a borrower who also has an accepted loan made before such date, to repay each accepted loan, including principal and interest on those accepted loans under the standard repayment plan under subparagraph A1. The borrower shall be entitled to accelerate without penalty repayment on such loans. 2, accepted loan defined. For the purposes of this paragraph, the term accepted loan means a loan with an outstanding balance that is 1, a federal direct plus loan that is made on behalf of a dependent student, or 2, a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on AA, an accepted plus loan as defined in section 493CA1, or BB, an accepted consolidation loan as such term is defined in section 493CA2A, notwithstanding subparagraph B of each section. C, elimination of authority to provide income contingent repayment plans. 1, repeal section E of section 455 of the Higher Education Act of 1965, 20 U.S.C. 1087 EE is repealed. 2, further amendments to eliminate income contingent repayment. A, section 428 of the Higher Education Act of 1965, 20 U.S.C. 1078 is amended. 1, in subsection B, 1D, by striking B subject to income contingent repayment in accordance with subsection M, and inserting B subject to income-based repayment in accordance with subsection M, and 2, in subsection M, 1, in the subsection heading by striking income contingent, and 2, by amending paragraph 1 to read as follows. 1, authority of secretary to require the secretary may require borrowers who have defaulted on loans made under this part that are assigned to the secretary under subsection C8 to repay those loans pursuant to an income-based repayment plan under section 493C, and 3, in the heading of paragraph 2, by striking income contingent, or B, section 28C of the Higher Education Act of 1965, 20 U.S.C. 1078-3 is amended. 1, in subsection A3B1 5AA, by striking for the purposes of obtaining income contingent repayment or income-based repayment, and inserting for the purposes of qualifying for an income-based repayment plan under section 455Q or section 493C as applicable. 2, in subsection B5, by striking be repaid either pursuant to income contingent repayment under Part D of this title, pursuant to income-based repayment under Section 493C, or pursuant to any other repayment provision under this section, and inserting be repaid pursuant to an income-based repayment plan under Section 493C or any other repayment provision under this section. And 3, in subsection C, 1, in paragraph 2A, by striking or by the terms of repayment pursuant to income contingent repayment offered by the Secretary under subsection B5, and inserting or by the terms of repayment pursuant to an income-based repayment plan under section 493C. And 2, in paragraph 3B, by striking except as required by the terms of repayment pursuant to income contingent repayment offered by the Secretary under subsection B5, and inserting except as required by the terms of repayment pursuant to an income-based repayment plan under section 493C. C, section 485D1 of the Higher Education Act of 1965, 20 U.S.C. 1092D1 is amended by striking income contingent, and D, section 494A2 of the Higher Education Act of 1965, 20 U.S.C. 1098HA2 is amended. 1, in the paragraph heading by striking income contingent and income-based and inserting income-based, and 2, in subparagraph A, 1, in the matter preceding clause 1, by striking income contingent or, and 2, in clause 2.1, by striking section 455E8 or the equivalent for the procedures established under section 493C 2B as applicable, and inserting section 493C2. 3, effective date. The amendments may be made by this section shall take effect on July 1, 2028. D, repayment assistance plan. Section 455 of the Higher Education Act of 1965, 20 U.S.C. 1087E is amended by adding at the end of the following new subsection Q, repayment assistance plan. 1, in general, notwithstanding any other provision of this act beginning on July 1, 2026, the Secretary shall carry out an income-based repayment plan to be known as the repayment assistance plan that shall have the following terms and conditions. A, the total monthly repayment plan amount owed by a borrower for all of the loans of the borrower that are repaid pursuant to the repayment assistance plan shall be equal to the applicable monthly payment of a borrower calculated under paragraph 4B, except that the borrower may not be precluded from repaying an amount that exceeds such amount for any month. B, the Secretary shall apply the borrower's applicable monthly payment under this paragraph first toward interest due on each such loan, next toward any fees due on each loan, and then toward the principal of each loan. C, any principal due and not paid under subparagraph B or paragraph 2B shall be deferred. D, a borrower who is not in a period of deferment or forbearance shall make an applicable monthly payment for each month until the earlier of 1, the date on which the outstanding balance of principal and interest due on all of the loans of the borrower that are repaid pursuant to the repayment assistance plan is $0, or 2, the date on which the borrower has made 360 qualifying monthly payments. E, the Secretary shall cancel any outstanding balance of principal and interest due on a loan made under this part to a borrower. 1, who, for any period of time, participated in the repayment assistance plan under this subsection. 2, whose most recent payment for such loan prior to the loan cancellation under this subparagraph was made under such repayment assistance plan. And 3, who has made 360 qualifying monthly payments on such loan. F, for the purposes of this subsection, the term qualifying monthly payment means any of the following. 1, an on-time applicable monthly payment under this subsection. 2, an on-time monthly payment under the standard repayment plan under subsection D7A1 of not less than the monthly payment required under such plan. 3, a monthly payment under any repayment plan, excluding the repayment assistance plan under the subsection of not less than the monthly payment that would be required under a standard repayment plan under Section 455D1A with a repayment period of 10 years. 4, a monthly payment under Section 493C of not less than the monthly payment required under such section, including a monthly payment equal to the minimum payment amount permitted under such section. 5, a monthly payment made before July 1, 2028 under an income contingent repayment plan carried out under Section 455D1D or under an alternative repayment plan in lieu of repayment under such an income contingent repayment plan, if placed in such an alternative repayment plan by the Secretary, of not less than the monthly payment required under such a plan, including a monthly payment equal to the minimum payment amount permitted under such a plan. 6, a month when the borrower did not make a payment because the borrower was in deferment under subsection F2B or due to an economic hardship described in subsection F2D. 7, a month that ended before the date of enactment of the subsection when the borrower did not make a payment because the borrower was in a period of deferment or forbearance described in section 685-209K44 of Title 34 Code of Federal Regulations as in effect on the date of enactment of this subsection. G, the procedures established by the Secretary under section 493CC shall apply for annually determining the borrower's eligibility for the repayment assistance plan, including verification of a borrower's annual income and the annual amount due on the total amount of loans eligible to be repaid under this subsection, and such other procedures as are necessary to effectively implement income-based repayment under this subsection. With respect to carrying out section 494A2, for the repayment assistance plan, an individual may elect to opt out of the disclosures required under section 491A2A2 in accordance with the procedures established under section 493C2. 2, balance assistance for distressed borrowers. A, interest subsidy with respect to a borrower of a loan made under this part for each month for which such a borrower makes an on-time applicable monthly payment required under paragraph 1A, and such monthly payment is insufficient to pay the total amount of interest that accrues for the month on all loans of the borrower repaid pursuant to the repayment assistance plan under this subsection. The amount of interest accrued and not paid for the month shall not be charged to the borrower. B, matching principal payment. With respect to a borrower of a loan made under this part and not in a period of deferment or forbearance, for each month for which a borrower makes an on-time applicable monthly payment required under paragraph 1A, and such monthly payment reduces the total outstanding principal balance of all loans of the borrower repaid pursuant to the repayment assistance plan under this subsection by less than $50, the Secretary shall reduce such outstanding principal balance of the borrower by an amount that is equal to one, the amount that is the lesser of one, $50, or two, the total amount paid by the borrower for such month pursuant to paragraph 1A, minus two, the total amount paid by the borrower for such month pursuant to paragraph 1A that is applied to such total outstanding principal balance. 3, additional documents. A borrower who chooses or is required to repay a loan under the subsection and for whom adjusted gross income is unavailable or does not reasonably reflect the borrower's current income shall provide to the Secretary other documentation of income satisfactory to the Secretary, which documentation the Secretary may use to determine repayment under this subsection. 4, definitions. In this subsection, A, adjusted gross income. The term adjusted gross income, when used with respect to a borrower, means the adjusted gross income as such term is defined in Section 62 of the Internal Revenue Code of 1986 of the borrower and the borrower's spouse as applicable for the most recent taxable year, except that in the case of a married borrower who files a separate federal income tax return, the term does not include the adjusted gross income of the borrower's spouse. B, applicable monthly payment. 1, in general, except as provided in Clause 2, 3, or 6, the term applicable monthly payment means, when used with respect to a borrower, the amount equal to 1, the applicable base payment of the borrower divided by 12 minus 2, $50 for each dependent of the borrower, which in the case of a married borrower filing a separate federal income tax return shall include only each dependent that the borrower claims on that return. 2, minimum amount. In the case of a borrower with an applicable monthly payment amount calculated under Clause 1 that is less than $10, the applicable monthly payment of the borrower shall be $10. 3, final payment. In the case of a borrower whose total outstanding balance of principal and interest on all of the loans of the borrower that are repaid pursuant to the repayment assistance plan is less than the applicable monthly payment calculated pursuant to Clause 1 or 2 as applicable, then the applicable monthly payment of the borrower shall be the total outstanding balance of principal and interest on all such loans. 4, base payment. The amount of the applicable base payment for a borrower with an adjusted gross income of 1, not more than $10,000 is $120. 2, more than $10,000 and not more than $20,000 is 1% of such adjusted gross income. 3, more than $20,000 and not more than $30,000 is 2% of such adjusted gross income. 4, more than $30,000 and not more than $40,000 is 3% of such adjusted gross income. 5, more than $40,000 and not more than $50,000 is 4% of such adjusted gross income. 6, more than the $50,000 and not more than $60,000 is 5% of such adjusted gross income. 7, more than $60 and not more than $70 is 6% of such adjusted gross income. 8, more than $70,000 and not more than $80,000 is 7% of such a gross adjusted income. 9, more than $80,000 and not more than $90,000 is 8% of such adjusted gross income. 10, more than $90,000 and not more than $100,000 is 9% of such adjusted gross income, and 11, more than $100,000 is 10% of such adjusted gross income. 5, dependent. For the purposes of this paragraph, the term dependent means an individual who is a dependent under Section 152 of the Internal Revenue Code of 1986. 6, special rule. In the case of a borrower who is required by the Secretary to provide information to the Secretary to determine the applicable monthly payment of the borrower under this subparagraph and who does not comply with such requirement, the applicable monthly payment of the borrower shall be 1, the sum of the monthly payment amounts the borrower would have paid for each of the borrower's loans made under this part under a standard repayment plan with a fixed monthly repayment amount paid over a period of 10 years based on the outstanding principal due on such loan when such loan entered repayment, and 2, determined pursuant to this clause until the date on which the borrower provides such information to the Secretary. E, federal consolidation loans. Section 455G of the Higher Education Act of 1965, 20 U.S.C. 1087 EG is amended by adding at the end of the following new paragraph 3, consolidation loans made on or after July 1, 2026, a federal direct consolidation loan offered to a borrower under this part on or after July 1, 2026 may only be repaid pursuant to a repayment plan described in Clause 1 or 2 of subsection D7A of this section as applicable, and the repayment schedule of such a consolidation loan shall be determined in accordance with such repayment plan. F, income-based repayment. 1, amendments. A, accepted consolidation loan defined. Section 493C(a)(2) of the Higher Education Act of 1965, 20 U.S.C. 1098 E(a)(2) is amended to read as follows. 2, accepted consolidation loan. A, in general, the term accepted consolidation loan means 1, a consolidation loan under Section 428C or a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on an accepted plus loan, or 2, a consolidation loan under Section 428C or a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on a consolidation loan under Section 428C or a federal direct consolidation loan described in Clause 1. B, exclusion. The term accepted consolidation loan does not include a federal direct consolidation loan described in paragraph A, in subparagraph A, that on any date during the period beginning on the date of enactment of the subparagraph and ending on June 30th, 2028 was being repaid. 1, pursuant to the income contingent repayment ICR plan in accordance with Section 685-209B of Title 34 Code of Federal Regulations as in effect on June 30, 2023, or 2, pursuant to another income-driven repayment plan. B, termination of partial financial hardship eligibility, Section 493C(a)(3) of the Higher Education Act of 1965, 20 U.S.C. 1098 E(a)(3) is amended to read as follows. 3, applicable amount. The term applicable amount means 15% of the result obtained by calculating on at least an annual basis the amount by which A, the borrower's and the borrower's spouse, if applicable, adjusted gross income exceeds B, 150% of the poverty line, applicable to the borrower's family size as determined under Section 673(2) of the Community Services Block Grant Act 42 U.S.C. 99022. C, terms of income-based repayment, Section 493CB of the Higher Education Act of 1965, 20 U.S.C. 1098 EB is amended. 1, by amending paragraph 1 to read as follows. 1, a borrower of any loan made, insured, or guaranteed under Part B or D other than accepted plus loan or accepted consolidation loan may elect to have the borrower's aggregate monthly payment for all such loans not exceed the applicable amount divided by 12. 2, by striking paragraph 6 and inserting the following. 6, if the monthly payment amount calculated under this section for all loans made to the borrower under Part B or D other than an accepted plus loan or accepted consolidation loan exceeds the monthly amount calculated under Section 428B9A1 or 455D1A based on a 10-year repayment period when the borrower first made the election described in this subsection, referred to in this paragraph as the standard monthly repayment amount, or if the borrower no longer wishes to continue the election under this subsection, then A, the maximum monthly payment required to be paid for all loans made to the borrower under Part B or D other than an accepted plus loan or accepted consolidation loan shall be the standard monthly repayment amount, and B, the amount of time the borrower is permitted to repay such loans may exceed 10 years. 3, in paragraph 7B4, by inserting as such section was in effect on the day before the date of the repeal of Section 455E, after Section 455D 1D and 4 in paragraph 8, by inserting or the repayment assistance program under Section 455Q after standard repayment plan. D, eligibility determinations, Section 493CC of the Higher Education Act of 1965, 20 U.S.C. 1098 EC is amended to read as follows. C, eligibility determinations, automatic recertification. 1, in general, the Secretary shall establish procedures for annually determining, in accordance with paragraph 2, the borrower's eligibility for income-based repayment, including the verification of a borrower's annual income and the annual amount due on the total amount of loans made, insured, or guaranteed under Part B or D, other than an accepted plus loan or accepted consolidation loan, and such other procedures as are necessary to effectively implement income-based repayment under this section. The Secretary shall consider, but is not limited to, the procedures established in accordance with Section 455E1 as in effect on the day before the date of repeal of subsection E of Section 455, or in connection with income-sensitive repayment schedules under Section 428B9A3 or 428CB1E. 2, automatic recertification. A, in general, the Secretary shall establish and implement, with respect to any borrower enrolled in an income-based repayment program under this section or under Section 455Q, procedures to 1, use return information disclosed under Section 6103.113 of the Internal Revenue Code of 1986 pursuant to approval provided under Section 494 to determine for repayment obligation of the borrower without further action by the borrower. 2, allow the borrower or the spouse of the borrower at any time to opt out of disclosure under such Section 6103.113 and instead provide such information as the Secretary may require to determine the repayment obligation of the borrower or withdraw from the repayment plan under this section or under Section 455Q as the case may be. And, okay, right there.
3, provide the borrower with an opportunity to update the return information so disclosed before the determination of the repayment obligation of the borrower. B, applicability. Subparagraph A shall apply to each borrower of a loan eligible to be repaid under this section or under Section 455Q who, on or after the date on which the Secretary establishes procedures under such subparagraph A, 1, selects or is required to repay such loan pursuant to an income-based repayment plan under this section or under Section 455Q, or 2, recertifies income or family size under such plan. E, special terms for new borrowers on and after July 1, 2014. Section 493CE of the Higher Education Act of 1965, 20 U.S.C. 1098EE is amended 1 in the subsection heading by inserting and before July 1, 2026 after July 1, 2014, and 2 by inserting and before July 1, 2026 after July 1, 2014. 2, effective date and application. The amendments made by this subsection shall take effect on the date of enactment of this title and shall apply with respect to any borrower who is in repayment before, on, or after the date of enactment of this title. G, FFEL adjustment, Section 428B9AV of the Higher Education Act of 1965, 20 U.S.C. 1078B9AV is amended by striking who has a partial financial hardship. Section 82002, deferment forbearance. A, sunset of economic hardship and unemployment deferments, Section 455F of the Higher Education Act of 1965, 20 U.S.C. 1087EF is amended 1 by striking the subsection heading and inserting the following: deferment forbearance. 2, in paragraph 2, A and subparagraph B, by striking not in and inserting subject to paragraph 7, not in, and B in subparagraph D by striking not in and inserting subject to paragraph 7, not in, and 3 by adding at the end the following. 7, sunset of unemployment and economic hardship deferments. A borrower receives a loan made under this part on or after July 1, 2027, shall not be eligible to defer such loan under subparagraph B or D of paragraph 2. B, forbearance on loans made under this part on or after July 1, 2027, Section 455F of the Higher Education Act of 1965, 20 U.S.C. 1087-EF, is amended by adding at the end the following. 8, forbearance of loans made under this part on or after July 1, 2027. A borrower who receives a loan made under this part on or after July 1, 2027 may only be eligible for a forbearance on such loan pursuant to Section 428C3B that does not exceed 9 months during any 24-month period. Section 82003, loan rehabilitation. A, updating loan rehabilitation limits. 1, FFEL and direct loans, Section 428FA5 of the Higher Education Act of 1965, 20 U.S.C. 1078-6A5 is amended by striking 1 time and inserting 2 times. 2, Perkins loans, Section 464H1D of the Higher Education Act of 1965, 20 U.S.C. 1087DDH1D is amended by striking once and inserting twice. 3, effective date. The amendments made by this subsection shall take effect beginning on July 1, 2027, and shall apply with respect to any loan made, insured, or guaranteed under Title IV of the Higher Education Act of 1965, 20 U.S.C. 1070, B, minimum monthly payment amount. Section 428FA1B of the Higher Education Act of 1965, 20 U.S.C. 1078-6A1B is amended by adding at the end the following. With respect to a borrower who has 1 or more loans made under Part D on or after July 1, 2027 that are described in subparagraph A, the total monthly payment of the borrower for all such loans shall not be less than $10. Section A2004, public service loan forgiveness. Section 455M1A of the Higher Education Act of 1965, 20 U.S.C. 1087EM1A is amended, 1, in Clause 3 by striking or and inserting a semicolon. 2, in Clause 4 by striking and inserting as in effect on the day before the date of the repeal of subsection E of this section, or, and 3, by adding at the end of the following new clause. 5, one-time payments under the repayment assistance plan under subsection Q and Section 82005, student loan servicing. Paragraph 1 of Section 458A of the Higher Education Act of 1965, 20 U.S.C. 1087HA1 is amended to read as follows. 1, additional mandatory funds for servicing. There shall be available to the Secretary, in addition to any other amounts appropriated under the Appropriations Act for administrative costs under this part and Part B, and out of any money in the Treasury not otherwise appropriated, $1 billion to be obligated for administrative costs under this part and Part B, including the cost of servicing the direct loan student loan programs under this part, which shall remain available until expended. Subtitle D, Pell Grants. Section 83001, eligibility. Foreign income and federal Pell Grant eligibility. 1, adjusted gross income defined. Section 401A2A of the Higher Education Act of 1965, 20 U.S.C. 1070AA2A is amended to read as follows. A, the term adjusted gross income means 1, in the case of a dependent student for the second tax year preceding the academic year, 1, the adjusted gross income as defined in Section 62 of the Internal Revenue Code of 1986 of the student's parents, plus 2, for federal Pell Grant determinations made for academic years beginning on or after July 1, 2026, the foreign income as described in Section 480B5 of the student's parents, and 2, in the case of an independent student for the second tax year preceding the academic year, 1, the adjusted gross income as defined in Section 62 of the Internal Revenue Code of 1986 of the student and the student's spouse, if applicable, plus 2, for federal Pell Grant determinations made for academic years beginning on or after July 1, 2026, the foreign income as described in Section 480B5 of the student and the student's spouse, if applicable. 2, sunset Section 401B1D of the Higher Education Act of 1965, 20 U.S.C. 1070AB1D is amended, A, by striking a student and inserting for each academic year beginning before July 1, 2026, a student, and B, by inserting as in effect for such academic year after Section 479A-B1B-V. 3, conforming amendments. A, in general, Section 479A A, B1B of the Higher Education Act of 1965, 20 U.S.C. 1087 TT B1B is amended, 1, by striking Clause 5, and 2, by redesignating Clauses 6 and 7 as Clauses 5 and 6 respectively. B, effective date. This amendment made by subparagraph A shall take effect on July 1, 2026. B, federal Pell Grant ineligibility due to a high student aid index. 1, in general, Section 401B1 of the Higher Education Act of 1965, 20 U.S.C. 1070A B1 is amended by adding at the end the following. F, ineligibility of students with a high student aid index. Notwithstanding subparagraphs A through E, a student shall not be eligible for a federal Pell Grant under this subsection for an academic year in which the student has a student aid index that equals or exceeds twice the amount of the total maximum federal Pell Grant for such academic year. 2, effective date. The amendment made by paragraph 1 shall take effect on July 1, 2026. Section 83002, Workforce Pell Grants. A, in general, Section 401 of the Higher Education Act of 1965, 20 U.S.C. 1070A is amended by adding at the end the following. K, Workforce Pell Grant Program. 1, in general, for the award year beginning on July 1, 2026, and each subsequent award year, the Secretary shall award grants to be known as Workforce Pell Grants to eligible students under paragraph 2 in accordance with this subsection. 2, eligible students. To be eligible to receive a Workforce Pell Grant under this subsection for any period of enrollment, a student shall meet the eligibility requirements for a federal Pell Grant under this section. They shall be enrolled or accepted for enrollment in an eligible program under Section 481B3, hereinafter referred to as an ineligible worker. May not, 1, be enrolled or accepted for enrollment in a program of study that leads to a graduate credential, or 2, have attained such a credential. 3, terms and conditions of awards. The Secretary shall award Workforce Pell Grants under this subsection in the same manner and with the same terms and conditions as the Secretary awards federal Pell Grants under this section, except that A, each use of the term eligible program, except in subsection B9A, shall be substituted by eligible workforce program under Section 481B3. B, the provisions of subsection D3 shall not be applicable to eligible workforce programs. And C, a student who is eligible for a grant equal to or less than the amount of the minimum federal Pell Grant because of the eligible workforce program in which the student is enrolled or accepted for enrollment is less than an academic year in hours of instructions or weeks of duration may still be eligible for a Workforce Pell Grant in an amount that is prorated based on the length of the program. 4, prevention of double benefits. No eligible student described in paragraph 2 may concurrently receive a grant under both this subsection and A, subsection B, or B, subsection C. 5, duration limit. Any period of study covered by a Workforce Pell Grant awarded under this subsection may be included in determining a student's duration limit under subsection D5. Program eligibility for Workforce Pell Grants. Section 481B of the Higher Education Act of 1965, 20 U.S.C. 1088B is amended, 1, by redesignating paragraphs 3 and 4 as paragraphs 4 and 5 respectively, and 2, by inserting after paragraph 2 the following. 3A, a program is an eligible program for purposes of the Workforce Pell Grant Program under Section 401K only if, 1, it is a program of at least 150 clock hours of instruction but less than 600 clock hours of instruction, or an equivalent number of credit hours offered by an eligible institution during a minimum of 8 weeks, but less than 15 weeks. 2, it is not offered as a correspondence course as defined in 600.2 of Title 34 Code of Federal Regulations as in effect on July 1, 2021. 3, the governor of a state, after consultation with the state board, determines that the program, 1, provides an education aligned with the requirements of high skill, high wage as identified by the state pursuant to Section 122 of the Carl D. Perkins Career and Technical Education Act, 20 U.S.C. 2342, or in-demand industry sectors or occupations. 2, meets the hiring requirements of potential employers in the sectors or occupations described in subclause 1. 3, either AA, leads to a recognized post-secondary credential that is stackable and portable across more than one employer, or BB, with respect to students enrolled in the program. AA, prepares such students for employment in an occupation for which there is only one recognized post-secondary credential, and BB requires such students with such a credential upon completion of such program. And 4, prepares students to pursue one or more certificate or degree programs at one or more institutions of higher education which may include the eligible institution providing the program, including by ensuring AA that a student upon completion of the program and enrollment in such a related certificate or degree program will receive academic credit for the workforce Pell program that will be accepted toward meeting such certificate or degree program requirements, and BB, the acceptability of such credit toward meeting such certificate or degree program requirements, and 4, after the governor of such state makes the determination that the program meets the requirements under Clause 3, the Secretary determines that 1, the program has been offered by the eligible institution for not less than 1 year prior to the date on which the Secretary makes the determination under this clause. 2, for each award year, the program has a verified completion rate of at least 70% with 150% of the normal time for completion. 3, for each award year, the program has a verified job placement rate of at least 70% measured 180 days after completion. And 4, for each award year, the total amount of the published tuition and fees of the program for such year is an amount that does not exceed the value-added earnings of students who received federal financial aid under this title and who completed the program 3 years prior to the award year. As such earnings are determined by calculating the difference between AA, the median earnings of such students as adjusted by the state and metropolitan area regional price parities of the Bureau of Economic Analysis based on the location of such program, and BB, 150% of the poverty line applicable to a single individual as determined under Section 6732 of the Community Services Block Grant Act, 42 U.S.C. 99022 for such year. B, in this paragraph, 1, the term eligible institution means an eligible institution for purposes of Section 401. 2, the term governor means the chief executive of a state. 3, the terms in-demand industry sector or occupation, recognized post-secondary credential, and state board have the meanings given such terms in Section 3 of the Workforce Innovation and Opportunity Act. C, effective date, applicability. The amendments made by this section shall take effect on July 1, 2026, and shall apply with respect to award year 2026 through 2027 and each succeeding award year. Section 83003, Pell shortfall. Section 401B7A3 of the Higher Education Act of 1965, 20 U.S.C. 1070A-B7A3 is amended by striking $2,170 million and inserting $12,670 million. Section 83004, Federal Pell Grant exclusion relating to other grant aid. Section 401D of the Higher Education Act of 1965, 20 U.S.C. 1070A-D is amended by adding at the end the following. 6, exclusion. Beginning on July 1, 2026, and notwithstanding this subsection or subsection B, a student shall not be eligible for a federal Pell Grant under subsection B during any period for which the student receives grant aid from non-federal sources, including states, institutions of higher education, or private sources, in an amount that equals or exceeds the student's cost of attendance for such period. Subtitle E, accountability, Section 84001, ineligibility based on low earning outcomes. Section 454 of the Higher Education Act of 1965, 20 U.S.C. 1087D is amended 1 in subsection A, in paragraph 5 by striking and after the semicolon, B, by redesignating paragraph 6 as paragraph 7, and C, by inserting after paragraph 5 the following. 6, provide assurances that beginning on July 1, 2026, the institution will comply with all requirements of subsection C, and 2 in subsection B2 by striking and 6 and inserting 6 and 7. 3, by redesignating subsection C as subsection D, and 4 by inserting after subsection B the following. C, ineligibility for certain programs based on low earning outcomes. 1, in general, notwithstanding Section 481B, an institution of higher education subject to this subsection shall not use funds under this part for student enrollment in an educational program offered by the institution that is described in paragraph 2. 2, low earning outcome programs described. An educational program at an institution is described in this paragraph if the program awards an undergraduate degree, graduate or professional degree, or graduate certificate for which the median earnings, as determined by the Secretary of the programmatic cohort of students who received funds under this title for enrollment in such program, who completed such program during the academic year that is 4 years before the year of the determination, who are not enrolled in any institutions of higher education and who are working, are for not less than 2 or 3 years of the 3 years immediately preceding the date of the determination, less than the median earnings of a working adult described in paragraph 3 for the corresponding year. 3, calculation of median earnings. A, working adult. For purposes of applying paragraph 2 to an educational program at an institution, a working adult described in this paragraph is a working adult who, for the corresponding year, 1, is aged 25 to 34, 2, is not enrolled in an institution of higher education, and 3, 1, in the case of a determination made for an educational program that awards a baccalaureate or lesser degree, has only a high school diploma or its recognized equivalent, or 2, in the case of a determination made for a graduate or professional program, has only a baccalaureate degree. B, source of data. For purposes of applying paragraph 2 to an educational program at an institution, the median earnings of a working adult as described in subparagraph A shall be based on data from the Bureau of the Census, 1, with respect to an educational program that awards a baccalaureate or lesser degree, 1, for the state in which the institution is located, or 2, if fewer than 50% of the students enrolled in the institution reside in the state where the institution is located for the entire United States, and 2, with respect to an educational program that is a graduate or professional program, 1, for the lowest median earnings of AA, a working adult in the state in which the institution is located, BB, a working adult in the same field of study as determined by the Secretary, such as by using the 2-digit CIP code in the state in which the institution is located, and CC, a working adult in the same field of study as so determined in the entire United States, or 2, if fewer than 50% of the students enrolled in the institution reside in the state where the institution is located for the lower median earnings of AA, or working adult in the entire United States, or BB, a working adult in the same field of study as so determined in the entire United States. 4, small programmatic cohorts. For any year in which the programmatic cohort described in paragraph 2 for an educational program of an institution is fewer than 30 individuals, the Secretary shall A, first, aggregate additional years of programmatic data in order to achieve a cohort of at least 30 individuals, and B, second, in cases in which the cohort, including the individuals added under subparagraph A, is still fewer than 30 individuals, aggregate additional cohort years of programmatic data for educational programs of equivalent length in order to achieve a cohort of at least 30 individuals. 5, appeals process. An educational program shall not lose eligibility under this subsection unless the institution has had the opportunity to appeal the programmatic median earnings of students working and not enrolled determination under paragraph 2 through a process established by the Secretary. During such appeal, the Secretary may permit the educational program to continue to participate in the program under this part. 6, notice to students. A, in general, if an educational program of an institution of higher education subject to this subsection does not meet the cohort median earnings requirements as described in paragraph 2 for 1 year during the applicable covered period, but has not yet failed to meet such requirements for 2 years during such covered period, the institution shall promptly inform each student enrolled in the educational program of the eligible program's low cohort meeting earnings, and that the educational program is at risk of losing its eligibility for funds under this part. B, covered period. In this paragraph, the term covered period means the period of the 3 years immediately preceding the date of a determination made under paragraph 2. 7, regaining programmatic eligibility. The Secretary shall establish a process by which an institution of higher education has an educational program that has lost eligibility under this subsection may, after a period of not less than 2 years of such program's ineligibility, apply to regain such eligibility subject to the requirements established by the Secretary that further the purpose of this subsection. Subtitle F, regulatory relief. Section 85001, delay of the rule relating to borrower defense to repayment. A, delay. Beginning at the date of enactment of this section for loans that first originated before July 1, 2035, the provisions of Subpart D of Part 685 of Title 34 Code of Federal Regulations relating to borrower defense to repayment, as added or amended by the final regulations published by the Department of Education on November 1, 2022, entitled Institutional Eligibility under the Higher Education Act of 1965 as amended, Student Assistance General Provisions, Federal Perkins Loan Programs, Federal Family Education Loan Programs, and William D. Ford Federal Loan Program, 87 Fed Reg 65904 shall not be in effect. B, effect. Beginning on the date of enactment of this section with respect to loans that first originate before July 1, 2035, any regulations relating to borrower defense to repayment that took effect on July 1, 2020 are restored and revived as such regulations were in effect on such date. Section 85002, delay of ruling related to closed school discharges. A, delay. Beginning on the date of enactment of this section, for loans that first originate before July 1, 2035, the provisions of sections 674.33G, 682.402D, and 685.214 of Title 34 Code of Federal Regulations related to closed school discharges as added or amended by the federal regulations published by the Department of Education on November 1, 2022, entitled Institutional Eligibility under the Higher Education Act of 1965 as amended, Student Assistance General Provisions, Federal Perkins Loan Program, Federal Family Education Loan Program, and William D. Ford Federal Direct Loan Program, 87 Fed Reg 65904 shall not be in effect. B, effect. Beginning on the date of enactment of this section with respect to loans that first originate before July 1, 2035, the portions of the Code of Federal Regulations described in subsection A and amended by the final regulations described in subsection A shall be in effect as of if the amendments made by such federal regulations had not been made. Subtitle G, limitation on authority. Section 86001, limitation on proposing or issuing regulations and executive actions. Part G of Title IV of the Higher Education Act of 1965, 20 U.S.C. 1088 et sec is amended by inserting after Section 492 the following. Section 492A, limitation on proposing or issuing regulations and executive actions. A, proposed or final regulations and executive actions. Beginning on the date of enactment of this section, the Secretary may not issue a proposed regulation, final regulation, or executive action to implement this title if the Secretary determines that the regulation or executive action will increase the subsidy cost as cost is defined in Section 502 of the Federal Credit Reform Act of 1990 to U.S.C. 661A of a loan program under this title by more than $100 million. B, relationship to other requirements. The requirements of subsection A shall not be construed to affect any other cost analysis required under any source of law for a regulation implementing this title. Subtitle H, Garden of Heroes, Section 87001, Garden of Heroes. In addition to amounts otherwise available, they are appropriated to the National Endowment for the Humanities for fiscal year 2025 out of any money of the Treasury not otherwise appropriated to remain available through fiscal year 2028, $40 million for the procurement of statues as described by an Executive Order 13934, 85 Fed Reg 41165, relating to building and rebuilding monuments to American heroes, Executive Order 13978, 86 Fed Reg 6809, relating to building the National Garden of American Heroes, and Executive Order 14189, 90 Fed Reg 8849, relating to celebrating America's birthday. Subtitle 1, Office of Refugee Resettlement, Section 88001, Potential Sponsor Vetting for Unaccompanied Alien Children Appropriation. A, appropriation in addition to amounts otherwise available, there is appropriated to the Office of Refugee Resettlement for fiscal year 2025 out of any money of the Treasury not otherwise appropriated, $300 million to remain available until September 30, 2028 for the purposes described in subsection B. B, use of funds. The funds made available under subsection A may only be used for the Office of Refugee Resettlement to support costs associated with 1, background checks on potential sponsors, which shall include A, the name of the potential sponsor and of all adult residents of the potential sponsor's household, B, the Social Security number or taxpayer identification number of the potential sponsor and of all adult residents of the potential sponsor's household, C, the date of birth of the potential sponsor and of all adult residents of the potential sponsor's household, D, the validated location of the residence at which the unaccompanied alien child will be placed, E, an in-person or virtual interview with and suitability study concerning the potential sponsor and all adult residents of the potential sponsor's household. F, contact information for the potential sponsor and for all adult residents of the potential sponsor's household. And G, the results of all background and criminal record checks for the potential sponsor and for all adult residents of the potential sponsor's household, which shall include at a minimum an investigation of the public records sex offender registry, a public records background check, and a national criminal history background check on fingerprints. 2, home studies of potential sponsors of unaccompanied alien children. 3, determining whether an unaccompanied alien child possesses a danger to self or others by conducting an examination of the unaccompanied alien child for gang-related tattoos and other gang-related markings and coverings. Such tattoos or markings while the child is in the care of the Office of Refugee Resettlement. 4, data systems improvement and sharing that supports the health, safety, and well-being of unaccompanied alien children by determining the appropriateness of potential sponsors of unaccompanied alien children and of adults residing in the household of the potential sponsor, and by assisting with the identification, investigation of child labor, exploitation, and child trafficking. And 5, coordinating and communicating with state welfare, child welfare agencies regarding the placement of unaccompanied alien children in such states by the Office of Refugee Settlement. C, definitions in this section. 1, potential sponsor. The term potential sponsor means an individual or entity who applies for the custody of an unaccompanied alien child. 2, unaccompanied alien child. This term, unaccompanied alien child, has the meaning given in such term in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G. Title 9, Committee on Homeland Security and Governmental Affairs, Subtitle A, Homeland Security Provisions, Section 90001, Border Infrastructure and Wall System. In addition to amounts otherwise available, there is appropriated to the Commissioner of U.S. Customs and Border Protection for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30, 2029, $46,555 million for necessary expenses related to the following elements of the border infrastructure and wall system. 1, construction, installation, or improvement of new or replacement primary waterborne and secondary barriers. 2, access roads. 3, barrier system attributes, including cameras, lights, sensors, and other detection technology. 4, any work necessary to prepare the ground at or near the border to allow U.S. Customs and Border Protection to conduct its operations, including the construction and maintenance of the barrier system. Section 90002, U.S. Customs and Border Protection personnel, fleet vehicles, and facilities. In general, in addition to amounts otherwise available, there was appropriated to the Commissioner of U.S. Customs and Border Protection for fiscal year 2025 out of any money of the Treasury not otherwise appropriated the following. Personnel, $4,100 million to remain available until September 30, 2029 to hire and train additional Border Patrol agents, Office of Field Operations Officers, Air and Marine agents, rehired, annuitants, and U.S. Customs and Border Protection field support personnel. 2, retention, hiring, and performance bonuses, $2,052,630,000 to remain available until September 30, 2029 to provide recruitment bonuses, performance awards, or annual retention bonuses to eligible Border Patrol agents, Office of Field Operations Officers, and Air and Marine agents. 3, vehicles, $855 million to remain available until September 30, 2029 for the repair of existing patrol units and the lease or acquisition of additional patrol units. 4, facilities, $5 billion for necessary expenses relating to lease acquisition, construction, design, or improvement of facilities and checkpoints owned, leased, or operated by the U.S. Customs and Border Protection. B, restriction. None of the funds made available by subsection A may be used to recruit, hire, or train personnel for the duties of processing coordinators after October 31, 2028. Section 90003, detention capacity A in general. In addition to any amounts otherwise appropriated, there is appropriated to U.S. Immigration
and custom enforcement for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. $45 billion for single adult alien detention capacity and family residential center capacity. B, duration and standards. Aliens may be detained at family residential centers as described in subsection A pending a decision under the Immigration and Nationality Act 8 U.S.C. 1101 et seq. on whether the aliens are to be removed from the United States and if such aliens are ordered removed from the United States until such aliens are removed. The detention standards for the single adult detention capacities described in subsection A shall be set in the discretion of the Secretary of Homeland Security consistent with applicable law. C, definition of family residential center. In this section, the term family residential center means a facility used by the Department of Homeland Security to detain family units of aliens, including alien children who are not unaccompanied alien children, as defined in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G, who are encountered or apprehended by the Department of Homeland Security, regardless whether the facility is licensed by the state or a political subdivision of the state in which the facility is located. Sec 9004, border security technology screening. A, in general, in addition to amounts otherwise available, there is appropriated to the Commission of U.S. Customs and Border Protection for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029 $6,168,000,000 for the following. One, procurement and integration of new non-intrusive inspection equipment and associated civil works, including artificial intelligence, machine learning, and other innovative technologies, as well as other mission support to combat the entry or exit of illicit narcotics at ports of entry and along the southwest, northern, and maritime borders. Two, air and marine operations, upgrading and procurement of new platforms for rapid air marine response capabilities. Three, upgrades and procurement of border surveillance technologies along the southwest, northern, and maritime borders. Four, necessary expenses, including the deployment of technology relating to the biometric entry and exit system under Section 7208 of the Intelligence Reform and Terrorism Prevention Act of 2004, 8 U.S.C. 1365b. 5, screening persons entering or exiting the United States. 6, initial screenings of unaccompanied alien children as defined in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G, consistent with the William Wilberforce Trafficking Victims Protection Reauthorization Act of 2008, Public Law 110457, 122, Stat 5044. 7, enhancing border security by combating drug trafficking, including fentanyl and its precursor chemicals, at the southwest, northern, and maritime borders. 8, commemorating efforts and events relating to border security. B, restrictions. None of the funds made available under subsection A may be used for the procurement or deployment of surveillance towers along the southwest border and northern border that have not been tested and accepted by U.S. Customs and Border Protection to deliver autonomous capabilities. C, definition of autonomous. In this section, with respect to capabilities, the term autonomous means a system designed to apply artificial intelligence, machine learning, computer vision, or other algorithms to accurately detect, identify, classify, and track items of interest in real time, such that the system can make operational adjustments without the active engagement of personnel or continuous human command or control. Sec 90005, state and local assistance. A, state Homeland Security grant programs, one in general. In addition to amounts otherwise available, there is appropriated to the administrator of the Federal Emergency Management Agency for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, to be administered under the state Homeland Security grant program authorized under Section 2004 of the Homeland Security Act of 2002, 6 U.S.C. 605, to enhance state, local, and tribal security through grants, contracts, cooperative agreements, and other activities. A, $500 million for state and local capabilities to detect, identify, track, or monitor threats from unmanned aircraft systems, as such term is defined in Section 44801 of Title 49 United States Code, consistent with Titles 18 and 49 of the United States Code. B, $625 million for security and other costs relating to the 2026 FIFA World Cup. C, $1 billion for security planning and other costs related to the 2028 Olympics, and D, $450 million for the Operation Stone Garden grant program. 2, terms and conditions. None of the funds made available under subparagraph B or C or paragraph 1 shall be subject to the requirements of Section 2004E1 or Section 2008A12 of the Homeland Security Act of 2002, 6 U.S.C. 605E1, 609A12. B, State Border Security Reinforcement Fund. 1, establishment. There is established in the Department of Homeland Security a fund to be known as the State Border Security Reinforcement Fund. 2, purpose. The Secretary of Homeland Security shall use amounts appropriate or otherwise made available for the fund for grants to eligible states and units of local government for any of the following purposes. A, construction or installation of a border wall, border fencing, or other barrier or buoys along the southern border of the United States, which may include planning, procurement of materials, and personal costs related to such construction or installation. B, any work necessary to prepare the ground at or near land borders to allow construction and maintenance of a border wall or other barrier fencing. C, detection and interdiction of illicit substances and aliens who have unlawfully entered the United States and have committed a crime under federal, state, or local law, and transfer or referral of such aliens to the Department of Homeland Security as provided by law. D, relocation of aliens who are unlawfully present in the United States from small population centers to other domestic locations. 3, appropriation. In addition to amounts otherwise available for the purposes described in paragraph 2, there is appropriated for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to the Department of Homeland Security for the State Border Security Reinforcement Fund established by paragraph 1, $10 billion to remain available until September 30th, 2034 for qualified expenses for such purposes. 4, eligibility. The Secretary of Homeland Security may provide grants from the fund established by paragraph 1 to state agencies and units of local governments for expenditures made for completed, ongoing, or new activities in accordance with law that occurred on or after January 20th, 2021. 5, application. Each state desiring to apply for a grant under this subsection shall submit an application to the Secretary containing such information in support of the application as the Secretary may require. The Secretary shall require that each state include in its application the purposes for which the state seeks the funds and a description of how the state plans to allocate the funds. The Secretary shall begin to accept applications not later than 90 days after the date of the enactment of this act. 6, terms and conditions. Nothing in this subsection shall authorize any state or local government to exercise immigration or border security authorities reserved exclusively to the federal government under the Immigration and Nationality Act, 8 U.S.C. 1101 Exet, or the Homeland Security Act of 2002, 6 U.S.C. 101 Exet. The Federal Emergency Management Agency may use not more than 1% of the funds made available under this subsection for the purpose of administering grants provided for in this section. Sec 90006, Presidential Residence Protection. A, in general. In addition to amounts otherwise available, there is appropriated to the Administrator of the Federal Emergency Management Agency for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $300 million to remain available until September 30th, 2029 for the reimbursement of extraordinary law enforcement personnel costs for protection activities directly and demonstrably associated with any residence of the President's designated pursuant to Section 3 or 4 of the Presidential Protection Assistance Act of 1976, Public Law 94524, 18 U.S.C. 3056 note, to be secured by the United States Secret Service. B, availability. Funds appropriated under this section shall be available only for costs that a state or local agency, 1, incurred or incurs on or after July 1st, 2024. 2, demonstrates to the administration of the Federal Emergency Management Agency as being A, in excess of typical law enforcement operational costs, B, directly attributable to the provision of protection described in this section, and C, associated with a non-governmental property designated pursuant to Section 3 or 4 of the Presidential Protection Assistance Act of 1976, Public Law 94524, 18 U.S.C. 3056 note, to be secured by the United States Secret Service, and 3, certifies to the administrator as compensating protection activities requested by the United States Secret Service. C, terms and conditions. The Federal Emergency Management Agency may use not more than 3% of the funds made available under this section for the purpose of administering grants provided for in this section. Sec 90007, Department of Homeland Security Appropriations for Border Support. In addition to amounts otherwise available, there are appropriated to the Secretary of Homeland Security for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $10 billion to remain available until September 30th, 2029 for reimbursement of costs incurred in undertaking activities in support of the Department of Homeland Security's mission to safeguard the borders of the United States. Subtitle B, Governmental Affairs Provisions. Sec 90101, FEHB Improvements. A, short title. This section may be cited as the FEHB Protection Act of 2025. B, definitions. In this section, 1, director. The term director means director of the Office of Personnel Management. 2, health benefit plans. Member of family, the term health benefits plan and member of family have the meanings given those terms in section 8901 of Title V United States Code. 3, open season. The term open season means an open season described in section 390.301F of Title V Code of Federal Regulations or any successor regulation. 4, program. The term program means the health insurance programs carried out under Chapter 89 of Title V United States Code, including the program carried out under Section 8903C of that title. 5, qualifying life event. The term qualifying life event has the meaning given the term in Section 892.101 of Title V Code of Federal Regulations or any successor regulation. C, verification requirements. Not later than 1 year after the date of enactment of this act, the director shall issue regulations and implement a process to verify. 1, the veracity of any qualifying life event through which an enrollee in the program seeks to add a member of family with respect to this enrollee to a health benefit plan under the program, and 2, that when an enrollee in the program seeks to add a member of family with respect to the enrollee to the health benefits plan of the enrollee under the program, including during any open season, the individual so added is a qualifying member of family with respect to the enrollee. D, fraud risk assessment. In any fraud risk assessment conducted with respect to the program on or after the date of enactment of this act, the director shall include an assessment of individuals who are enrolled in or covered under a health benefits program under the program, even though those individuals are not eligible to be so enrolled or covered. E, family member eligibility verification audit. 1, in general. During the 3-year period beginning on the date, this is 1 year after the date of enactment of this act, the director shall carry out a comprehensive audit regarding members of family who are covered under an enrollment in a health benefits plan under the program. 2, contents. With respect to the audit carried out under paragraph 1, the director shall review marriage certificates, birth certificates, and other appropriate documents that are necessary to determine eligibility to enroll in a health benefits plan under the program. F, disenrollment or removal. Not later than 180 days after the date of the enactment of this act, the director shall develop a process by which any individual enrolled in or covered under a health benefits plan under the program who is not eligible to be so enrolled or covered shall be disenrolled or removed from enrollment in or coverage under that health benefits plan. G, earned benefits and healthcare administrative services associated oversight and audit funding. Section 8909 of Title V United States Code is amended. 1, in subsection A2 by inserting before the period at the end the following, except that the amounts required to be set aside under subsection B2 shall be subject to the limitations that may be specified annually by Congress. And 2, in subsection B, A, by redesignating paragraph 2 as paragraph 3, and B, by inserting after paragraph 1 the following. 2, in fiscal year 2026. Fiscal year 2026. In fiscal year 2026, 66 million to be derived from all contributions and to remain available until the end of fiscal year 2035 for the Director of Office to carry out subsections C through F of the FEHB Protection Act of 2025. Section 90102, Pandemic Response Accountability Committee. A, Pandemic Response Accountability Committee funding availability. In addition to amounts otherwise available, there is appropriated for fiscal year 2026 out of any money in the Treasury not otherwise appropriated, $88 million to remain available until expended for the Pandemic Response Accountability Committee to support oversight of the coronavirus response and of funds provided in this act or any other act pertaining to the coronavirus pandemic.
B, CARES Act. Section 15010 of the CARES Act, Public Law 116-136, 134, Stat 533, is amended. 1, in subsection A6, A, in subparagraph E, by striking or at the end, B, in subparagraph F, by striking and at the end and inserting or, and C, by adding at the end the following. G, the act titled An Act to Provide for Reconciliation pursuant to Title II of H. Con. Res. 14 and 2 in subsection K by striking 2025 and inserting 2034. Section 90103, Appropriation for the Office of Management and Budget. In addition to amounts otherwise available, there is appropriated to the Office of Management and Budget for fiscal year 2025, out of any money in the Treasury not otherwise appropriated, $100 billion, to remain available until September 30th, 2029, for purposes of finding budget and accounting efficiencies in the executive branch. Title 10, Committee on the Judiciary. Subtitle A, Immigration and Law Enforcement Matters. Part 1, Immigration Fees. Section 100001, Applicability of the Immigration Laws. A, applicability. The fees under this subtitle shall apply to aliens in the circumstances described in this subtitle. B, terms. The terms used under this subtitle shall have the meanings given such terms in Section 101 of the Immigration and Nationality Act, 8 U.S.C. 1101. C, references to Immigration and Nationality Act. Except as otherwise expressly provided, any reference in this subtitle to a section or other provision shall be considered to be to a section or other provision of the Immigration and Nationality Act, 8 U.S.C. 1101 et sec. Section 100002, asylum fee. A, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security or the Attorney General, as applicable, shall require the payment of a fee equal to the amount specified in this section by any alien who files an application for asylum. Under Section 208, 8 U.S.C. 1158, at the time such application is filed. B, initial amount. During fiscal year 2025, the amount specified in this section shall be the greater of 1, $100, or 2, such amount as the Secretary or the Attorney General, as applicable, may establish by rule. C, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this section shall be equal to the sum of 1, the amount of the fee required under this section for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in paragraph 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. D, disposition of asylum fee proceeds exceeding during each fiscal year. 1, 50% of the fees received from aliens filing applications with the Attorney General, A, shall be credited to the Executive Office for Immigration Review, and B, may be retained and expended without further appropriation. 2, 50% of fees received from alien filing applications with the Secretary of Homeland Security, A, shall be credited to the U.S. Citizenship and Immigration Services, B, shall be deposited into the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and C, may be retained and expended without further appropriation. And 3, any amounts received in fees required under this section that were not credited to the Executive Office for Immigration Review pursuant to paragraph 1 or to U.S. Citizenship and Immigration Services pursuant to paragraph 2 shall be deposited into the general fund of the Treasury. E, no waiver fee. Fees required to be paid under the section shall not be waived or reduced. Section 10003, Employment Authorization Document Fees. A, asylum applicants. 1, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in the subsection by any alien who files any initial application for employment authorization under Section 208D2, 8 U.S.C. 1158D2, at the time such initial employment authorization application is filed. 2, initial amount. During fiscal year 2025, the amount specified in the subsection shall be the greater of A, $550, or B, such amount as the Secretary of Homeland Security may establish by rule. 3, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this section shall be equal to the sum of A, the amount of the fee required under this section for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10.
For disposition of employment authorization document fees. During each fiscal year, A, 25% of the fees collected pursuant to this subsection, I, shall be credited to U.S. Citizenship and Immigration Services. 2, shall be deposited into the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and 3, may be retained and expended by U.S. Citizenship and Immigration Services without further appropriation, provided that not less than 50% is used to detect and prevent immigration benefit fraud, and B, any amounts collected pursuant to this subsection that are not credited to U.S. Citizenship and Immigration Services pursuant to subparagraph A shall be deposited into the general fund of the Treasury. 5, no fee waiver. Fees required to be paid under this subsection shall not be waived or reduced. B, parolees. 1, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in this subsection by any alien paroled into the United States for any initial application for employment authorization at the time such initial application is filed. Each initial employment authorization shall be valid for a period of 1 year or for the duration of the alien's parole, whichever is shorter. 2, initial amount. During fiscal year 2025, the amount specified in this subsection shall be the greater of A, $550, or B, such amount as the Secretary of Homeland Security may establish by rule. 3, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this subsection shall be equal to the sum of A, the amount of the fee required under this subsection for the amount recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next level multiple of $10. 4, disposition of parolee employment authorization application fees. All of the fees collected pursuant to this subsection shall be deposited into the general fund of the Treasury. 5, no fee waiver. Fees required to be paid under this subsection shall not be waived or reduced. C, temporary protected status. 1, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in this subsection by any alien who files an initial application for employment authorization under Section 244A 1B 8 U.S.C. 1254A A 1B at the time such initial application is filed. Each initial employment authorization shall be valid for a period of 1 year or for the duration of the alien's temporary protected status, whichever is shorter. 2, initial amount. During fiscal year 2025, the amount specified in this subsection shall be the greater of A, $550, or B, such amount as the Secretary of Homeland Security may establish by rule. 3, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this subsection shall be equal to the sum of A, the amount of the fee required under this subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplications of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 4, disposition of employment authorization application fees collected from aliens granted temporary protected status. All of the fees collected pursuant to this subsection shall be deposited into the general fund of the Treasury. 5, no fee waiver. Fees required to be paid under this subsection shall not be waived or reduced. Sec 10004, immigration parolee fee. A, in general, except as provided under subsection B, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in this section, in addition to any other fee authorized by law by any alien who is paroled into the United States. B, exceptions. An alien shall not be subject to the fee otherwise required under subsection A if the alien establishes to the satisfaction of the Secretary of Homeland Security on an individual case-by-case basis that the alien is being paroled because 1A, the alien has a medical emergency, and B, the alien cannot obtain necessary treatment in the foreign state in which the alien is residing, or 2, the medical emergency is life-threatening and there is insufficient time for the alien to be admitted to the United States through the normal visa process. 2A, the alien is the parent or legal guardian of an alien described in paragraph 1, and B, the alien described in paragraph 1 is a minor. 3A, the alien is needed in the United States to donate an organ or other tissue for transplant, and B, there is insufficient time for the alien to be admitted to the United States through the normal visa process. 4A, the alien has a close family member in the United States whose death is imminent, and B, the alien could not arrive in the United States in time to see such family member alive if the alien were to be admitted to the United States during the normal visa process. 5A, the alien is seeking to attend the funeral of a close family member, and B, the alien could not arrive in the United States in time to attend such funeral if the alien were to be admitted to the United States through the normal visa process. 6, the alien is an adopted child. A, who has an urgent medical condition. B, who is in the legal custody of the petitioner for a final adoption-related visa. And C, whose medical treatment is required before the expected award of a final adoption-related visa. 7, the alien. A, is a lawful applicant for adjustment of status under Section 2458 U.S.C. 1255, and B, is returning to the United States after temporary travel abroad. 8, the alien. A, has been returned to his contiguous country pursuant to Section 235B2C, 8 U.S.C. 1225B2C, and B, is being paroled into the United States to allow the alien to attend the alien's immigration hearing. 9, the alien has been granted the status of Cuban and Haitian entrant as defined in Section 501E of the Refugee Education Assistance Act of 1980, Public Law 96-422, 8 U.S.C. 1522 note, or 10, the Secretary of Homeland Security determines that a significant public benefit has resulted or will result from the parole of an alien. A, who has assisted or will assist the United States government in a law enforcement matter. B, his presence is required by the United States government in furtherance of such law enforcement matter. And C, I, who is inadmissible or does not satisfy the eligibility requirements for admission as a non-immigrant, or 2, for which there is insufficient time for the alien to be admitted to the United States through the normal visa process. C, initial amount. For fiscal year 2025, the amount specified in this section shall be the greater of 1, $1,000, or 2, such amount as the Secretary of Homeland Security may establish by rule. D, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this section shall be equal to the sum of 1, the amount of the fee required under this subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in paragraph 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. E, disposition of fees collected from aliens granted parole. All of the fees collected pursuant to this section shall be deposited to the general fund of the Treasury. F, no fee waiver, except as provided in subsection B. Fees required to be paid under this section shall not be waived or reduced. Set 10005, special immigrant juvenile fee. A, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in this section by any alien parent or legal guardian of an alien applying for special immigrant juvenile status under Section 101A, 27J, 8 U.S.C. 1101A, 27J. B, initial amount. For fiscal year 2025, the amount specified in this section shall be the greater of 1, $250, or 2, such amount as the Secretary of Homeland Security may establish by rule. C, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this section shall be equal to the sum of 1, the amount of the fee required under this subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in paragraph 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of 10.
D, disposition of special immigrant juvenile fees. All of the fees collected pursuant to this section shall be deposited into the general fund of the Treasury. Section 10006, temporary protected status fee. Section 244C1B of the Immigration and Nationality Act, 8 U.S.C. 1254AC1B is amended. 1, by striking the Attorney General and inserting the following. 1, in general, the Attorney General. 2, in Clause 1, as redesignated by striking $50 and inserting $500, subject to the adjustments required under Clause 2. And 3, by adding at the end of the following. 2, annual adjustments for inflation. During the fiscal year 2026 and during each subsequent fiscal year, the maximum amount of the fee authorized under Clause 1 shall be equal to the sum of 1, the maximum amount of the fee authorized under this subparagraph for the most recent concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in subclause 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustments takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3. Disposition of temporary protected status fees. All of the fees collected pursuant to this subparagraph shall be deposited into the general fund of the Treasury. 4. No fee waiver. Fees required to be paid under this subparagraph shall not be waived or reduced. Section 100007, Visa Integrity Fee. A. Visa Integrity Fee. 1. In general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in this subsection by any alien issued a non-immigrant visa at the time of such issuance. 2. Initial amount for fiscal year 2025. The amount specified in this section shall be the greater of A, $250, or B, such amount as the Secretary of Homeland Security may establish by rule. 3. Annual adjustments for inflation during fiscal year 2026 and during each subsequent fiscal year. The amount specified in this section shall be equal to the sum of A, the amount of the fee required under this subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers but for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month for the preceding calendar year, rounded down to the nearest dollar. 4. Disposition of Visa integrity fees. All of the fees collected pursuant to this section that are not reimbursed pursuant to subsection B shall be deposited into the general fund of the Treasury. 5. No fee waiver. Fees required to be paid under the subsection shall not be waived or reduced. B. Fee reimbursement. The Secretary of Homeland Security may provide a reimbursement to an alien of the fee required under subsection A for the issuance of a non-immigrant visa after the expiration of such non-immigrant visa's period of validity if such alien demonstrates that he or she, 1, after admission to the United States pursuant to such non-immigrant visa, complied with all conditions of such non-immigrant visa, including the condition that an alien shall not accept unauthorized employment, and 2A, has not sought to extend his or her period of admission during such period of validity and departed the United States not later than 5 days after the last day of such period, or B, during such period of validity was granted an extension of such non-immigrant status or an adjustment to the status of a lawful permanent resident. Section 100008, Form 1 I-94 fee. A, fee authorized. In addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in subsection B by any alien who submits an application for a Form I-94 arrival departure record. B, amount specified. 1, initial amount. For fiscal year 2025, the amount specified in this section shall be the greater of A, $24, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in the section shall be equal to the sum of A, the amount of the fee required under this subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded down to the nearest dollar. C, disposition of Form I-94 fees. During each fiscal year, 1, 20% of the fees collected pursuant to this section, A, shall be deposited into the Land Border Inspection Fee account in accordance with Section 286Q2, 8 U.S.C. 1356Q2, and B, shall be made available to U.S. Customs and Border Protection to retain and spend without further appropriation for the purpose of processing Form I-94. And 2, any amounts not deposited into the Land Border Inspection Fee account pursuant to paragraph 1A shall be deposited into the general fund of the Treasury. D, no fee waiver. Fees required to be paid under this section shall not be waived or reduced. Section 100009, annual asylum fee. A, fee authorized. In addition to any other fee authorized by law for each calendar year that an alien's application for asylum remains pending, the Secretary of Homeland Security or the Attorney General, as applicable, shall require the payment of a fee equal to the amount specified in subsection B by such alien. B, amount specified. 1, initial amount for fiscal year 2025. The amount specified in this section shall be the greater of A, $100, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, The amount specified in this section shall be equal to the sum of A, the amount of the fee required under the subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded down to the nearest dollar. C, disposition of annual asylum fees. All of the fees collected pursuant to this section shall be deposited into the general fund of the Treasury. D, no fee waiver. Fees required to be paid under the section shall not be waived or reduced. Section 100010, fee relating to renewal and extension of employment authorization for parolees. A, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in subsection B for any parolee who seeks a renewal or extension of employment authorization based on a grant of parole. The employment authorization for each alien paroled into the United States or any renewal of extension of such parole shall be valid for a period of 1 year or for the duration of the alien's parole, whichever is shorter. B, amount specified. 1, initial amount. For fiscal year 2025, the amount specified in the subsection shall be the greater of A, $275, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this subsection shall be equal to the sum of A, the amount of the fee required under the subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. C, disposition of fees relating to renewal and extension of employment authorization for parolees during each fiscal year. 1, 25% of the fees collected pursuant to this section, A, shall be credited to the U.S. Citizenship and Immigration Services. B, shall be deposited into the Immigration Examinations Fee Account established under Sections 286M, 8 U.S.C. 1356M, and C, may be retained and expanded by U.S. Citizenship and Immigration Services without further appropriation, and 2, any amounts collected pursuant to this section are not credited to the U.S. Citizenship and Immigration Services pursuant to subparagraph A shall be deposited into the general fund of the Treasury. No fee waiver. D, no fee waiver. Fees required to be paid under this section shall not be waived or reduced. Section 100011, fee relating to renewal or extension of employment authorization for asylum applications. A, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee of not less than $275 by any alien who has applied for asylum for each renewal or extension of employment authorization based on such application. B, termination. Each initial employment authorization or renewal of extension of such authorization shall terminate. 1, immediately following the denial of an asylum application by an asylum officer unless the case is referred to an immigration judge. 2, on the date that is 30 days after the date on which an immigration judge denies an asylum application unless the alien makes a timely appeal to the Board of Immigration Appeals. Or 3, immediately following the denial of the Board of Immigration Appeals of an appeal of a denial of an asylum application. C, disposition of fees relating to renewal and extension of employment authorization for asylum applicants during each fiscal year. 1, 25% of the fees collected pursuant to this section A shall be credited to the U.S. Citizenship and Immigration Services. B, shall be deposited into the Immigration Examination Fee Account established under 286M, 8 U.S.C. 1356M, and C, may be retained and expended by the U.S. Citizenship and Immigration Services without further appropriation, and 2, any amounts collected pursuant to this section that are not credited to U.S. Citizenship and Immigration Services pursuant to subparagraph A shall be deposited into the general fund of the Treasury. D, no fee waiver. Fees required to be paid under this section shall not be waived or reduced. Section 100012, fee relating to renewal and extension of employment authorization for aliens granted temporary protected status. A, in general, in addition to any other fee authorized by law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in subsection B by any alien at the time such alien seeks a renewal or extension of employment authorization based on a grant of temporary protected status. Any employment authorization for an alien granted temporary protected status or any renewal of extension of such employment authorization shall be valid for a period of 1 year or for the duration of the designation of temporary protected status, whichever is shorter. B, amount specified. 1, initial amount for fiscal year 2025. The amount specified in this subsection shall be the greater of A, $275, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in the section shall be equal to the sum of A, the amount of the fee required under the subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in the subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. C, disposition of fees relating to renewal and extension of employment authorization for temporary protected status applicants. During each fiscal year, 1, 25% of the fees collected pursuant to this section, A, shall be credited to the U.S. Citizenship and Immigration Services. B, shall be deposited into the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and C, may be retained and expended by U.S. Citizenship and Immigration Services without further appropriations. And 2, any amount collected pursuant to this section that are not credited to U.S. Citizenship and Immigration Services pursuant to subparagraph A shall be deposited into the general fund of the Treasury. D, no fee waiver. Fees required to be paid under this section shall not be waived or reduced. Section 10013, fees relating to applications for adjustments of status. A, fee for filing an application to adjust status to that of a lawful permanent resident. 1, in general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 of any alien who files an application with an immigration court to adjust the alien status to that of lawful permanent resident, or those whose application to adjust his or her status to that of lawful permanent resident is adjudicated in immigration court. Such fee shall be paid at the time of such application is filed or before such application is adjudicated by the immigration court. 2, amount specified. A, initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1, $1,500, or 2, such amount as the Attorney General may establish by rule. B, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1, the amount of the fee required under the subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3, disposition of adjustments of status application fees. During each fiscal year, A, not more than 25% of the fees collected pursuant to this subsection 1 shall be derived by transfer from the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and 2, shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation, and B, any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the general fund of the Treasury. B, fee for filing application for a waiver of grounds of inadmissibility. 1, in general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files an application with an immigration court for a waiver of a ground of inadmissibility, or before such application is adjudicated by the immigration court. 2, amounts specified. A, initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1, $1,050, or 2, such amount as the Attorney General may establish by rule. B, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1, the amount of the fee required under the subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, round to the next lowest multiple of $10. 3, disposition of waiver of ground of admissibility application fees. During each fiscal year, A, not more than 25% of the fees collected pursuant to this subsection 1 shall be derived by transfer from the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and 2, shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation, and B, any amount not derived by transfer and credited pursuant to subparagraph A shall be deposited into the general fund of the Treasury. C, fee for filing an application for temporary protected status. 1. In general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files an application with an immigration court for temporary protected status, or before such an application is adjudicated by the immigration court. 2. Amount specified. A. Initial amount. For fiscal year 2025, the amount specified in the paragraph shall be the greater of 1. $500, or 2. Such amount as the Attorney General may establish by rule. B. Annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1. The amount of the fee required under the subsection for the most recently concluded fiscal year, and 2. The product resulting from multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the consumer price index for all urban consumers for the same month the preceding calendar year, rounded to the next lowest multiple of $10. 3. Disposition of temporary protected status application fees. During each fiscal year, A. Not more than 25% of the fees collected pursuant to this subsection 1 shall be derived by transfer from the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and 2 shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation, and B. Any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the General Fund of the Treasury. D. Fee for filing an appeal of a decision of an immigration judge. 1. In general, except for as provided in paragraph 3, the Attorney General shall require, in addition to any other fees authorized by law, the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files an appeal from a decision of an immigration judge. 2. Amount specified. A. Initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1. $900, or 2. Such amount as the Attorney General may establish by rule. B. Annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1. The amount of the fee required under the subsection for the most recently concluded fiscal year, and 2. The product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July, preceding the date on which such adjustment takes effect, exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3. Exception. The fee required under paragraph 1 shall not apply to the appeal of a bond decision for disposition of fees for appealing immigration judge decisions during each fiscal year. A. Not more than 25% of the fees collected pursuant to the subsection 1 shall be derived by transfer from the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and 2 shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation. And B. Any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the General Fund of the Treasury. E. Fee for filing an appeal from a decision of an officer of the Department of Homeland Security. 1. In general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files an appeal of a decision of an officer of the Department of Homeland Security. 2. Amount specified. A. Initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1. $900, or 2. Such amount as the Attorney General may establish by rule. B. Annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1. The amount of fee required under the subsection for the most recently concluded fiscal year, and 2. The product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3. Disposition of fees for appealing Department of Homeland Security officer decisions during each fiscal year. A. Not more than 25% of the fees collected pursuant to the subsection 1 shall be derived from transfer from the Immigration Examinations Fee account established under Section 286M, 8 U.S.C. 1356M, and 2 shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation. And B. Any amounts not derived by transfer and credit pursuant to subparagraph A shall be deposited into the General Fund of the Treasury. F. Fee for filing an appeal from a decision of an adjudicating official in a practitioner disciplinary case. 1. In general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any particular by any practitioner at the time such practitioner files an appeal from a decision of an adjudicating official in a practitioner disciplinary case. 2, amount specified in A, initial amount for the fiscal year 2025. The amount specified in this paragraph shall be the greater of 1, $1,325, or 2, such amount as the Attorney General may establish by rule. B, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1, the amount of the fee required under this subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3, disposition of fees for appealing Department of Homeland Security officer decisions. During each fiscal year, A, not more than 25% of fees collected pursuant to the subsection 1 shall be derived from transfer from the immigration examinations fee account established under section 286M, 8 U.S.C. 1356M, and 2, shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation, and B, any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the general fund of the Treasury. G, fee for filing a motion to reopen or a motion to reconsider. 1, in general, except as provided in paragraph 3, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files a motion to reopen or a motion to reconsider a decision of an immigration judge or the Board of Immigration Appeals. Two, amount specified. A, initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1, $900, or 2, such amount as the Attorney General may establish by rule. B, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1, the amount of the fee required under the subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in Clause 1 of the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3, exceptions. The fee required under paragraph 1 shall not apply to A, a motion to reopen a removal order entered in absentia if such motion is filed in accordance with section 240B 5C2, 8 U.S.C. 1229AB 5C2. Or B, a motion to reopen a deportation order entered in absentia if such motion is filed in accordance with section 242B C3B prior to April 1st, 1997. 4, disposition of fees for filing certain motions. During each fiscal year, A, not more than 25% of fees collected pursuant to this subsection 1 shall be derived by transfer from the immigration examinations fee account established under sections 286M, 8 U.S.C. 1356M, and 2 shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation, and B, any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the general fund of the Treasury. H, fee for filing application for suspension of deportation. 1, in general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files an application with an immigration court for suspension of deportation. 2, amount specified. A, initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1, $600, or 2, such amount as the Attorney General may establish by rule. B, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1, the amount of the fee required in the subsection for the most recently concluded fiscal year, and 2, the product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3, disposition of fees for filing application for suspension of deportation during each fiscal year. A, not more than 25% of the fees collected pursuant to this subsection shall be derived by transfer from the immigration examination fee account established under section 286M, 8 U.S.C. 1356M, and 2, shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation, and B, any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the general fund of the Treasury. I, fee for filing application for cancellation of removal for certain permanent residents. 1. In general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien at the time such alien files an application with an immigration court, an application for cancellation of removal for an alien who is a lawful permanent resident. 2. Amount specified. A. Initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1. $600, or 2. Such amount as established by the Attorney General may establish by rule. B. Annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1. The amount of the fee required under this subsection for the most recently concluded fiscal year, and 2. The product resulting from the multiplication of the amount referred to in Clause 1 by the percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustments take effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, round to the next lowest multiple of $10. 3. Disposition of fees for filing application for cancellation of removal during each fiscal year. A. Not more than 25% of the fees collected pursuant to this subsection 1 shall be derived by transfer from the immigration examinations fee account established under Section 286M, 8 U.S.C. 1356M, and 2. Shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation. And B. Any amounts not derived by transfer and credited pursuant to subparagraph A shall be deposited into the general fund of the Treasury. J. Fee for filing an application for cancellation of removal and adjustment of status for certain non-permanent residents. 1. In general, in addition to any other fees authorized by law, the Attorney General shall require the payment of a fee equal to the amount specified in paragraph 2 by any alien who is not a lawful permanent resident at the time such alien files an application with an immigration court for cancellation of removal and adjustment of status for any alien. 2. Amount specified. A. Initial amount. For fiscal year 2025, the amount specified in this paragraph shall be the greater of 1. $1,500, or 2. Such amount as the Attorney General may establish by rule. B. Annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this paragraph shall be equal to the sum of 1. The amount of the fee required under the subsection for the most recently concluded fiscal year, and 2. The product resulting from the multiplication of the amount referred to in Clause 1 by the paragraph percentage, if any, by which the Consumer Price Index for all urban consumers for the month of July preceding the date on which such adjustment takes effect exceeds the Consumer Price Index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. 3. Disposition of fees for filing application for cancellation or removal during each fiscal year. A. Not more than 25% of the fees collected pursuant to this subsection 1 shall be derived by transfer from the immigration examinations fee account established under Section 286M 8 U.S.C. 1356M, and 2 shall be credited to the Executive Office for Immigration Review to retain and spend without further appropriation. And B. Any amounts not derived by transfer and credit pursuant to subparagraph A shall be deposited into the general fund of the Treasury. K. Limitation of use of funds. No fees collected pursuant to the section shall be expended by the Executive Office for Immigration Review for the Legal Orientation Program or for any successor program.
Section 100014, Electronic System for Travel Authorization Fee. Section 127H3B, 8 U.S.C. 1187H3B is amended. 1. In Clause 1, A. In Subclause 1 by striking and at the end. B. In Subclause 2, I by inserting of not less than $10 after an amount. And 2. By striking the period at the end and inserting semicolon. And C, by adding at the end of the following. 3, not less than $13 per travel authorization. 2, in Clause 3, by striking October 31, 2028, and inserting October 31, 2034. And 3, by adding at the end the following. 4, subsequent adjustment during fiscal year 2026 and each subsequent fiscal year, the amount specified in clause 1(2) for a fiscal year shall be equal to the sum of 1, the amount of the fee required under the subparagraph during the most recent concluded fiscal year, and 2, the product of the amount referred to in subclause 1 multiplied by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustments take effect exceeds consumer price index for all urban consumers for the same month of the preceding calendar year. Section 100015, electronic visa update system fee. A, in general, in addition to any other fee authorized by the law, the Secretary of Homeland Security shall require the payment of a fee in the amount specified in subsection B by any alien subject to the electronic visa update system at the time of such alien's enrollment in such system. B, amount specified. 1, in general, for fiscal year 2025, the amount specified in the subsection shall be the greater of A, $30, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and each subsequent fiscal year, the amount specified in the subsection shall be equal to the sum of A, the amount of the fee required under the subsection during the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage of any by which the consumer price index for all urban consumers for the month of July preceding the date on which adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the lowest multiple of 25 cents. C, disposition of electronic visa update system fees. 1, in general, section 286(8) U.S.C. 1356 is amended by adding at the end the following. W, CBP electronic visa update system account. 1, establishment. There is established in the general fund of the Treasury a separate amount which shall be known as the CPB electronic visa update system account. Refer to this in the subsection as the account. 2, deposits. There shall be deposited into the account an amount equal to the difference between A, all of the fees received pursuant to section 100015 of the Act entitled An Act to Provide for Reconciliation pursuant to Title II of H. Congress 14, 119th Congress, and B, an amount equal to $5 multiplied by the number of payments collected pursuant to each section. 3, appropriations. Amount deposited in the account, A, are hereby appropriated to make payments and offset program costs in accordance with section 100015 of the Act entitled An Act to Provide for Reconciliation pursuant to Title II of H. Congress 14, 119th Congress, without further appropriation, and B, shall remain available until expended for any U.S. Customs and Border Protection costs associated with administering the CBP electronic visa update system. 2, remaining fees. Of the fees collected pursuant to the section, an amount equal to $5 multiplied by the number of payments collected pursuant to the section shall be deposited into the general fund of the Treasury. D, no fee waiver. Fees required to be paid under the section shall not be waived or reduced. Section 100016, fee for aliens ordered removed in absentia. A, in general, as partial reimbursement for the cost of arresting an alien described in the section, the Secretary of Homeland Security, except as provided in subsection C, shall require the payment of a fee equal to the amount specified in subsection B on any alien who, 1, is ordered removed in absentia pursuant to section 240B5, 8 U.S.C. 1229A-B5, and 2, is subsequently arrested by U.S. Immigration and Customs Enforcement. B, amount specified. 1, initial amount for the fiscal year 2025, the amount specified in the section shall be the greater of A, $5,000, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this subsection in the section shall be equal to the sum of A, the amount of the fee required under this subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which such adjustments take effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded to the next lowest multiple of $10. C, exception. The fee described in this section shall not apply to any alien who was ordered removed in absentia if such order was rescinded pursuant to section 240B5C, 8 U.S.C. 1229A, B5C. D, disposition of removal in absentia fees. During each fiscal year, 1, 50% of the fees collected pursuant to this section A shall be credited to U.S. Immigration and Customs Enforcement. B, shall be deposited into the detention and removal office fee account, and C, may be retained and expended by U.S. Immigration and Customs Enforcement without further appropriation. And 2, any amounts collected pursuant to this section are not credited to U.S. Immigration and Customs Enforcement pursuant to paragraph 1 shall be deposited into the general fund of the Treasury. E, no fee waiver. Fees required to be paid under the section shall not be waived or reduced. Section 100017, an admissible alien apprehension fee. A, in general, in addition to any other fee authorized by the law, the Secretary of Homeland Security shall require the payment of a fee equal to the amount specified in subsection B by any inadmissible alien at the time of such alien is apprehended between ports of entry. B, amount specified. 1, initial amount. For fiscal year 2025, the amount specified in the section shall be the greater of A, $5,000, or B, such amount as the Secretary of Homeland Security may establish by rule. 2, annual adjustments for inflation. During fiscal year 2026 and during each subsequent fiscal year, the amount specified in this section shall be equal to the sum of A, the amount of the fee required under the subsection for the most recently concluded fiscal year, and B, the product resulting from the multiplication of the amount referred to in subparagraph A by the percentage, if any, by which the consumer price index for all urban consumers for the month of July preceding the date on which adjustment takes effect exceeds the consumer price index for all urban consumers for the same month of the preceding calendar year, rounded up to the next lowest multiple of $10. C, disposition of inadmissible alien apprehension fees. During each fiscal year, 1, 50% of the fees collected pursuant to this section A shall be credited to U.S. Immigration and Customs Enforcement. B, shall be deposited into the detention and removal office fee account. And C, may be retained and expended by U.S. Immigration and Customs Enforcement without further appropriation. And 2, any amounts collected pursuant to this section are not credited to U.S. Immigration and Customs Enforcement pursuant to paragraph 1 shall be deposited into the general fund of the Treasury. D, disposition of inadmissible alien apprehension fees. All of the fees collected pursuant to the section shall be deposited into the general fund of the Treasury. Section 100018, amendment to authority to apply for asylum. Section 208D3, 8 U.S.C. 1158D3 is amended. 1, in the first sentence by striking may and inserting shall. 2, by striking such fees shall not exceed, and all that follows, and inserting the following. Nothing in this paragraph may be construed to limit the authority of the Attorney General to set additional adjudication and naturalization fees in accordance with Section 286M. Part 2, Immigration and Law Enforcement Funding, Section 100051, appropriation for the Department of Homeland Security. In addition to the amounts otherwise available, there is appropriated to the Secretary of Homeland Security for fiscal year 2025 out of any money in the Treasury not or otherwise appropriated $2,055 million to remain available through September 30th, 2029 for the following purposes. 1, immigration and enforcement activities, hiring and training of additional U.S. Customs and Border Protection Agency and the necessary support staff to carry out immigration enforcement activities. 2, departures and removal, funding for transportation costs and related costs associated with the departure of or removal of aliens. 3, personal assignments, funding for the assignment of Department of Homeland Security employees and state officers to carry out immigration enforcement activities pursuant to sections 103A and 287G of the Immigration and Nationality Act, 8 U.S.C. 1103A and 1357G. 4, background checks, hiring additional staff and investing the necessary resource to enhance screening and vetting of all aliens seeking entry into the United States, consistent with Section 212 of such Act, 8 U.S.C. 1182, or intending to remain in the United States consistent with Section 237 of such Act, 8 U.S.C. 1227. 5, protecting alien children from exploitation. In instances of alien and alien children entering the United States without a valid visa, funding is provided for the purposes of A, collecting fingerprints in accordance with Section 262 of the Immigration and Nationality Act, 8 U.S.C. 1302, and subsections A, 3, and B of Section 235 of such Act, 8 U.S.C. 1225, and B, collecting DNA in accordance with Sections 235D and 287B of the Immigration and Nationality Act, 8 U.S.C. 1225D and 1357B. 6, transporting and return of aliens from contiguous territory. Transporting and facilitating the return pursuant to Section 235B2C of the Immigration and Nationality Act 8 U.S.C. 1225B2C of aliens arriving from contiguous territory. 7, state and local participation. Funding for state and local participation in Homeland Security efforts for the purposes of A, ending the presence of criminal gangs and criminal organizations throughout the United States. B, addressing crime and public safety threats. C, combating human smuggling and trafficking networks throughout the United States. D, supporting immigration enforcement activities. And E, providing reimbursement for state and local participation in such efforts. 8, removal of specified unaccompanied alien children. A, in general, funding removal operations for specified unaccompanied alien children. B, A4. C, definitions. In this paragraph, 1, specified unaccompanied alien child. The term specified unaccompanied alien child means unaccompanied alien child. The term specified unaccompanied alien child means unaccompanied alien child as defined in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G, who the Secretary of Homeland Security determines on a case-by-case basis. 1, has been found by an immigration officer at a land border or port of entry of the United States and is inadmissible under the Immigration and Nationality Act 8 U.S.C. 1101 et sec. 2, has not been a victim of severe forms of trafficking in persons, and there is no credible evidence that such child is at risk of being trafficked upon return of the child to the child's country of nationality or country of last habitual residence. And 3, does not have a fear of returning to the child's country of nationality or country of last habitual residence owing to a credible fear of persecution. 2, severe forms of trafficking in persons. The term severe forms and trafficking in persons has the meaning given such term in Section 103 of the Trafficking Victims Protection Act of 2000, 22 U.S.C. 7102. 9, expedited removal of criminal aliens. Funding for the expedited removal of criminal aliens in accordance with the provisions of Section 235B1 of the Immigration and Nationality Act, 8 U.S.C. 1225B1. 10, removal of certain criminal aliens without further hearings. Funding for the removal of certain criminal aliens without further hearings in accordance with the provisions of Section 235C of the Immigration and Nationality Act, 8 U.S.C. 1225C. 11, criminal and gang checks for unaccompanied alien children. Funding for criminal and gang checks of unaccompanied alien children is defined in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G, who are 12 years of age and older, including the examination of such unaccompanied alien children for gang-related tattoos and other gang-related markings. 12, information technology investments to support immigration purposes, including improvements to fee and revenue collections. Section 100052, appropriation for U.S. Immigration and Customs Enforcement. In addition to amounts otherwise available, there is appropriated to the Secretary of Homeland Security for U.S. Immigration and Customs Enforcement for fiscal year 2025 out of any money in the Treasury not otherwise appropriated. $29,850 million to remain available through September 30th, 2029 for the following purposes. 1, hiring and training additional U.S. Immigration and Customs Enforcement personnel, including officers, agents, investigators, and support staff to carry out immigration enforcement activities, and prioritizing the streamlining and hiring of retired U.S. Immigration and Customs Enforcement personnel. 2, performance, retention, and signing bonuses. A, in general, providing performance, retention, and signing bonuses for qualified U.S. Immigration and Customs Enforcement personnel in accordance with this subsection. B, performance bonuses. The Director of U.S. Immigration and Customs Enforcement, at the Director's discretion, may provide performance bonuses to any U.S. Immigration and Customs Enforcement agent, officer, or attorney who demonstrates exemplary service. C, retention bonuses. The Director of U.S. Immigration and Customs Enforcement may provide retention bonuses to any U.S. Immigration and Customs Enforcement agent, officer, or attorney who commits to 2 years of additional service with U.S. Immigration and Customs Enforcement to carry out immigration enforcement activities. D, signing bonuses. The Director of U.S. Immigration and Customs Enforcement may provide a signing bonus to any U.S. Immigration and Customs Enforcement agent, officer, or attorney who, 1, is hired on or after the date of the enactment of this act, and 2, who commits to 5 years of service with U.S. Immigration and Customs Enforcement to carry out immigration enforcement activities. E, service agreement. In providing a retention or signing bonus under this paragraph, the Director of U.S. Immigration and Customs Enforcement shall provide each qualifying individual with a written service agreement that includes 1, the commencement and termination dates of the required service period or provisions of the determination of such dates, 2, the amount of the bonus, and 3, any other term or condition under which the bonus is payable subject to the requirements of this paragraph, including 1, the condition under which which the agreements may be terminated before the agreed-upon service period has been completed, and 2, the effect of the termination described in the subclause 1. 3, recruitment, hiring, and onboarding, facilitating the recruitment, hiring, and onboarding of additional U.S. Immigration and Customs Enforcement personnel to carry out immigration enforcement activities, including by A, investing in information technology recruitment and marketing, and B, hiring staff necessary to carry out information technology recruitment and marketing activities. 4, transportation, funding for transportation costs and related costs associated with alien departure or removal operations. 5, information technology, funding for information technology investments to support enforcement and removal operations, including improvements to fee collections. 6, facility upgrades, funding for facility upgrades to support enforcement and removal operations. 7, fleet modernization, funding for fleet modernization to support enforcement and removal operations. 8, family unity, promoting family unity by A, maintaining the care and custody during the period in which a charge described in Clause 1 is pending in accordance with the applicable laws of an alien who, 1, is charged only with a misdemeanor offense under Section 275A of the Immigration and Nationality Act, 8 U.S.C. 1325A, and 2, entered the United States with the alien's child who has not attained 18 years of age, and B, detaining such an alien with the alien's child. 9, 287G agreements, expanding, facilitating, and implementing agreements under Section 287G of the Immigration and Nationality Act, 8 U.S.C. 1357G. 10, Victims of Immigration Crime Engagement Office, hiring and training additional staff to carry out the mission of the Victims of Immigration Crime Engagement Office and for providing non-financial assistance to the victims of crime perpetrated by aliens who are present in the United States without authorization. 11, Office of the Principal Legal Advisor, hiring additional attorneys and the necessary support staff within the Office of the Principal Legal Advisor to represent the Department of Homeland Security and Immigration Enforcement and Removal Proceedings. Section 100053, Appropriation for Federal Law Enforcement Training Centers. A, appropriation. In addition to amounts otherwise available, there is appropriated to the Secretary of Homeland Security for the Federal Law Enforcement Training Centers for fiscal year 2025 out of any money in the Treasury not otherwise appropriate, $750 million to remain available until September 30th, 2029 for the purposes described in subsection B and C. B, training, not less than $285 million of the amounts available under subsection A shall be for supporting the training of newly hired federal law enforcement personnel employed by the Department of Homeland Security and state and local law enforcement agencies operating in support of the Department of Homeland Security. C, facilities, not more than $465 million of the amount available under subsection A shall be for procurement, construction, and maintenance of improvements to training equipment for and related expenses of facilities to the federal law enforcement training centers. Section 100054, appropriation for the Department of Justice. In addition to amounts otherwise available, there is appropriated to the Attorney General for the Department of Justice for fiscal year 2025 out of any money in the Treasury not otherwise appropriate $3,330 million to remain available through September 30th, 2029 for the following purposes. 1, Executive Office for Immigration Review. A, in general, hiring immigration judges and necessary support staff for the Executive Office for Immigration Review to address the backlog of petitions, cases, and removals. B, staffing levels. Effective November 1, 2028, the Executive Office for Immigration Review shall be comprised of not more than 800 immigration judges along with the necessary support staff. 2, combating drug trafficking. Funding efforts to combat drug trafficking, including trafficking of fentanyl and its precursor chemicals and illegal drug use. 3, prosecution of immigration matters. Funding efforts to investigate and prosecute immigration matters, gang-related crimes involving aliens, children trafficking, and smuggling involving aliens within the United States, unlawful voting by aliens, violations of the Alien Registration Act, 1940, 54 Stat, Chapter 439, and violation of or fraud relating to Title IV of the Personal Responsibility and Work Opportunity Act of 1996, Public Law 104-193, 110 Stat 2277, including hiring additional Department of Justice personnel to investigate and prosecute such matters. 4, non-party or other injunctive relief, hiring additional attorneys and necessary support staff for the purpose of continuing implementation of assignments by the Attorney General pursuant to Sections 516, 517, and 518 of Title 28 United States Code to conduct litigation and tend to the interests of the United States in suits pending in a court of the United States or in a court of the state in suits seeking non-party or other injunctive reliefs against the federal governments. 5, Edward Byrne Memorial Assistance Grant Fund and Office of Community-Oriented Policing. In general, increasing funds for the Edward Byrne Memorial Justice Assistance Grant Program and the Office of Community-Oriented Policing for initiatives associated with investigating and prosecuting violent crime. 2, criminal enforcement initiatives. And 3, immigration enforcement and removal efforts. B, limitations. No funds made available under this subsection shall be made available to community violence intervention and prevention initiative programs. C, eligibility. To be eligible to receive funds made available under the subsection, a state or local government shall be in full compliance as determined by the Attorney General with Section 642 of the Legal Immigration Reform and Immigrant Responsibility Act of 1996, 8 U.S.C. 1373. 6, fiscally responsible lawsuit settlements, hiring additional attorneys and necessary support staff for the purposes of maximizing lawsuit settlements that require the payment of fines and penalties to the Treasury of the United States in lieu of providing for the payment to any person or entity other than the United States, other than a payment that provides restitution or otherwise directly remedies actual harm directly in proximity caused by the party making the payment or constitutes payment for services rendered in connection with the case. 7, compensation for incarceration of criminal aliens. A, in general, providing compensation to a state or political subdivision of a state for the incarceration of criminal aliens. B, use of funds. The amounts made available under subparagraph A shall only be used to compensate a state or local subdivision of a state as appropriate with respect to the incarceration of an alien who, 1, has been convicted of a felony or 2 or more misdemeanors, and 2, 1, entered the United States without inspection or at any time or place other than designated by the Secretary of Homeland Security. 2, was the subject of removal proceedings at the time the alien was taken into custody by the state or a political subdivision of the state, or 3, was admitted as a non-immigrant and at the time the alien was taken into custody by the state or a political subdivision of the state had failed to maintain the non-immigrant status in which the alien was admitted or to which it was changed or to comply with the conditions of any such status. C, limitation. Amounts made available under the subsection shall be distributed to more than one state. The amounts made available under subparagraph A may not be used to compensate any state or political subdivision of a state if the state or political subdivision of the state prohibits or in any way restricts a federal, state, or local government entity, official, or other personnel from doing any of the following. 1, complying with the immigration laws as defined in Section 101A.17 of the Immigration Nationality Act, 8 U.S.C. 1101A.17. 2, assisting or cooperating with federal law enforcement entities, officials, or other personnel regarding the enforcement of the immigration laws. 3, undertaking any of the following law enforcement activities as such activities relate to information regarding the citizenship or immigration status, lawful or unlawful, the admissibility or deportability, and the custody status of any individual. 1, making inquiries to any individual to obtain such information regarding such individual or any other individuals. 2, notifying the federal government regarding the presence of individuals who are encountered by law enforcement officials or other personnel of the state or political subdivision of a state. 3, complying with requests with such information from federal law enforcement entities, officials, or other personnel. Section 100055, Bridging Immigration-Related Deficits Experience Nationwide Reimbursement Fund. A, establishment. There is established within the Department of Justice a fund to be known as the Bridging Immigration-Related Deficit Experience Nationwide Biden Reimbursement Fund, referred to in this section as the fund. B, use of funds. The Attorney General shall use amounts appropriated or otherwise made available for the funds for grants to eligible states, state agencies, and units of local government pursuant to their existing statutory authorities for any of the following purposes. 1, locating and apprehending aliens who have committed a crime under federal, state, or local law in addition to being unlawfully present in the United States. 2, collection and analysis of law enforcement and investigation information within the United States to counter gang or other criminal activity. 3, investigating and prosecuting A, crimes committed by aliens within the United States, and B, drug and human trafficking crimes committed within the United States. 4, court operations related to the prosecution of A, crimes committed by aliens, and B, drug and human trafficking crimes. 5, temporary criminal detention of aliens. 6, transporting aliens described in paragraph 1 within the United States to locations related to the apprehension, detention, and prosecution of such aliens. 7, vehicle maintenance, logistics, transportation, and other support provided to law enforcement agencies by state agencies to enhance the ability to locate and apprehend aliens who have committed crimes under federal, state, or local law in addition to being unlawfully present in the United States. C, appropriation. In addition to amounts otherwise available for the purposes described in subsection B, there is appropriated to the Attorney General for fiscal year out of any money in the Treasury not otherwise appropriated, not to exceed $3.5 trillion to remain available until September, $3.5 billion to be remain available until September 30th, 2028 for the fund of qualified and documented expenses that achieve such purpose. D, grant eligibility for completed, ongoing, or new activities. The Attorney General may provide grants under this section to state agencies and units of local government for expenditures made by state agencies or local government for completed, ongoing, or new activities determined to be eligible for such grant funding that occurred on or after January 20th, 2021. Amounts made available under this section shall be distributed to more than one state. Section 100056, appropriation for the Bureau of Prisons. A, appropriation in addition to amounts otherwise available, there is appropriated to the Director of Bureau of Prisons for fiscal year 2025 out of any money in the Treasury not otherwise appropriated $5 billion to remain available through September 30th, 2029 for the purposes described in subsections B and C. Salaries and benefits, not less than $3 billion of the amount made available under subsection A shall be for hiring and training of new employees, including correctional officers, medical professionals, and facilities and maintenance employees, the necessary support staff, and for additional funding for salaries and benefits for the current workforce of the Bureau of Prisons. C, facilities, not more than $2 billion of the amount made available under subsection A shall be for addressing maintenance and repairs to facilitate maintained or operated by the Bureau. Repairs to facilities maintained or operated by the Bureau of Prisons. Section 10057, appropriation for the United States Secret Service. A, appropriation. In addition to amounts otherwise available, there is appropriated to the Director of the United States Secret Service, referred to in the section as the Director, for fiscal year 2025, out of any money in the Treasury not otherwise appropriate, $1.170 billion to remain available through September 30th, 2029 for the purpose described in subsection B. B, use of funds. Amounts made available under subsection A may only be used for 1, additional U.S. Secret Service resources, including personnel, training facilities, programming, technology, and 2, performance, retention, and signing bonuses for qualified United States Secret Service personnel in accordance with subsection C. C, performance, retention, and signing bonuses. 1, performance bonuses. The Director, at the Director's discretion, may provide performance bonuses to any Secret Service agent, officer, or analyst who demonstrates exemplary service. 2, retention bonuses. The Director may provide retention bonuses to any Secret Service agent, officer, or analyst who commits to 2 years of additional service within the Secret Service. 3, signing bonuses. The Director may provide a signing bonus to any Secret Service agent, officer, or analyst who, A, is hired on or after the date of the enactment of this act, and B, commits to 5 years of service within the United States Secret Service. 4, service agreement. In providing retention or signing bonus under the subsection, the Director shall provide each qualifying individual with a written service agreement that includes A, the commencement and termination dates of the required service period or provisions for the determination of such date, B, the amount of the bonus, and C, any other term or condition under which the bonus is payable subject to the requirements under the subsection, including 1, the conditions under which the agreement may be terminated before the agreed upon service period has been completed, and 2, the effect of the termination described in clause 1. Subtitle B, judiciary matters. I'm going to do that.
Section 100101, appropriation to the Administrative Office of the United States Courts. In addition to amounts otherwise available, there is appropriated to the Director of the Administrative Office of the United States Courts out of the amounts in the Treasury not otherwise appropriated $1,250,000 for each fiscal years 2025 through 2028 for the purpose of continuing analyses and reporting pursuant to Section 604A2 of Title 28 United States Code to examine the state of the dockets of the courts and to prepare the transmit statistical data and reports as to the business of the courts, including an assessment of the number, frequency, and related metrics of judicial orders issuing non-party relief against the federal government and their aggregate cost impact on the taxpayers of the United States, as determined by each court when imposing securities for the issuance of preliminary injunctions or temporary restraining orders against the federal government pursuant to Rule 65C of the Federal Rules of Civil Procedure. Section 100102, appropriation to the Federal Judicial Center. A, appropriation. In addition to amounts otherwise available, there is appropriated to the Director of the Federal Judicial Center out of amounts in the Treasury not otherwise appropriated $1 million for each of fiscal years 2025 through 2028 for the purpose described in subsection B. B, use of funds. The Federal Judicial Center shall use the amounts appropriated under subsection A for the continued implementation of programs pursuant to Section 620B3 of Title 28 United States Code to stimulate, create, develop, and conduct programs of continuing education and training for personnel of the judicial branch, including training on the absence of constitutional and statutory authority, supporting legal claims that seek non-party relief against the federal government, and strategic approaches for mitigating the aggregate cost impact of such legal claims on the taxpayers of the United States. Subtitle C, Radiation Exposure Compensation Matters. Section 100201, Extension of a Fund. Section 3D of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note is amended. 1, by striking the first sentence and inserting the fund shall terminate on December 31, 2028, and 2, by striking the end of that 2-year period and inserting such date. Section 100202, claims relating to atmospheric testing. A, leukemia claims relating to Trinity test in New Mexico and test in the Nevada site. Section 4A1A of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended 1 in Clause 1A and Subclause 1 by striking October 31, 1958, and inserting November 6, 1962. B in Subclause 2, 1 by striking in the affected area and inserting in an affected area, and 2 by striking or after the semicolon. C by redesignating Subclause 3 as Subclause 4, and D by inserting after Subclause 2 the following. 3, was physically present in an affected area for a period of at least 1 year during the period beginning on September 24, 1944 and ending on November 6, 1962, and 2 in Clause 2, 1 of striking physical presence described in Subclause 1 or 2 of Clause 1, or on-site participation described in Clause 1, 3, and inserting physical presence described in Subclause 1, 2, or 3 and Clause 1 or on-site participation described in Clause 1, 4. B, amounts for claims relating to leukemia, Section 4A1 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note is amended 1 in subparagraph A by striking an amount and inserting the amount. 2, by striking subparagraph B and inserting the following. B, amount. If the conditions described in subparagraph C are met, an individual who is described in subparagraph A shall receive $100,000. And 3, in subparagraph C, by adding at the end the following. 4, no payment under this paragraph previously has been made to the individual on behalf of the individual or to a survivor of the individual. C, conditions for claims related to leukemia, Section 4A1C of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note is amended 1 by striking Clause 1 and 2 by redesignating Clauses 2 and 3 as Clauses 1 and 2 respectively. D, specified diseases claims relating to the Trinity test in New Mexico and test at the Nevada site, Section 4A2 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended 1 in subparagraph A by striking in the affected area and inserting in an affected area. B, by striking 2 years and inserting 1 year. And C, by striking October 31, 1958 and inserting November 6, 1962. 2 in subparagraph B, A, by striking in the affected area and inserting in an affected area, and B, by striking or at the end of inserting a semicolon. 3, by redesignating subparagraph C as subparagraph D, and 4, by inserting after subparagraph B the following. C, was physically present in an affected area for a period of at least 1 year during the period beginning of September 24, 1944, and ending on November 6, 1962. Or E, amounts for claims related to specified diseases, Section 4A2 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended in the matter following subparagraph D as redesignated by subsection D of this section. 1, by striking $50,000 in the case of an individual described in subparagraph A or B, or $75,000 in the case of an individual described in subparagraph C, and inserting $100,000. 2, Clause 1 by striking and inserting a semicolon. 3, in Clause 2 by striking the period at the end and inserting and 4, by adding at the end the following. 3, no payment under this paragraph previously has been made to the individual or on behalf of the individual or to a survivor of the individual. F, downwind states. Section 4B1 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note is amended to read as follows. 1, affected area means A, except as provided under subparagraph B. 1, the states of New Mexico, Utah, and Idaho. 2, in the state of Nevada, the counties of White Pine, Nye, Lander, Lincoln, Eureka, and that portion of Clark County that consists of townships 13 through 16 at ranges 63 through 71. And 3, in the state of Arizona, the counties of Coconino, Yavapai, Navajo, Apache, Gila, and Mojave. And B, with respect to a claim by an individual under subsection A1, A1(3) or subsection A2C, only New Mexico, and section 100203, claims relating to uranium mining. A, employees of mines and mills, section 5A1A1 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended to read as follows. 1, as employed in a uranium mine or uranium mill, including an individual who is employed in the transport of uranium ore or vanadium uranium ore from such mine or mill located in Colorado, New Mexico, Arizona, Wyoming, South Dakota, Washington, Utah, Idaho, North Dakota, Oregon, or Texas at any time during the period beginning on January 1, 1942, and ending on December 31, 1990, or 2, was employed as a core driller in a state referred to in a subclause 1 during the period described in such subclause, and B, minors, section 5A1A21 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended by inserting or renal cancer or any other chronic renal disease, including nephritis and kidney tubal tissue injury after non-malignant respiratory disease. C, millers, core drillers, and ore transporters. Section 5A1A22 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note is amended 1, by inserting core driller after was a miller, 2, by inserting or was involved in remediation efforts at such a uranium mine or uranium mill after ore transporter, 3, by inserting 1 after clause 1, and 4, by striking or renal cancers and all that follow and inserting or renal cancer or any other chronic renal disease, including nephritis and kidney tubal tissue injury, or D, combined work histories, section 5A1A2 of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 22 note, as amended by subsection C, is further amended 1 in subclause 1 by striking or at the end, and 2, by adding at the end the following. 3AA does not meet the conditions of subclause 1 or 2. BB worked during the period described in clause 1, or in 2 or more of the following positions: miner, miller, core driller, and ore transporter. CC, meter paragraph 4 and 5. And D, submits written medical documentation that the individual developed lung cancer, anomaly, special rules relating to combined work histories, section 5A of the Radiation Compensation Act, Public Law 101-426, 42 U.S.C. 2210, U.S.C. 2210 note, as amended by adding at the end the following. Special rule 4, special rule relating to combined work histories for individuals with at least 1 year of experience. An individual meets the requirements under this paragraph if the individual worked in 1 or more of the positions referred to in paragraph 1A23BB for a period of at least 1 year during the period described in paragraph 1A11. 5, special rule relating to combined work histories for minors. An individual meets the requirements of this paragraph if the individual during the period described in paragraph 1A11 worked as a minor and was exposed to such number of working level months that the Attorney General determines, when combined with the exposure of such individual to radiation through work as a miller, core driller, or transporter during the period described in paragraph 1A11, results in such individual being exposed to a total level of radiation that is greater or equal to the level of exposure of an individual described in paragraph 4. F, definition of core driller. Section 5B of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended 1, in paragraph 7 by striking and at the end, 2, in paragraph 8 by striking the period at the end and inserting and 3, by adding at the end the following. 9, the term core driller means any individual employed to engage in the act or process of obtaining cylindrical rock samples of uranium or vanadium by means of a borehole drilling machine for the purpose of mining uranium or vanadium. Section 100204, claims relating to Manhattan project waste. The Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note is amended by inserting after Section 5 the following. Section 5A, claims relating to Manhattan project waste. A, in general, a claimant shall receive compensation for a claim made under this act as described in subsection B or C if 1, a claim for compensation is filed with the Attorney General, A, by an individual described in paragraph 2, or B, on behalf of that individual by an authorized agent of that individual if the individual is deceased or incapacitated, such as 1, an executor of estate of that individual, or 2, a legal guardian or conservative of that individual. 2, that individual, or if applicable, an authorized agent of that individual demonstrates that such individual, A, was physically present in an affected area for a period of at least 2 years after January 1, 1949, and B, contracted a specified disease after such period of physical presence. 3, the Attorney General certifies that the identity of that individual, and if applicable, the authorized agent of that individual is not fraudulent or otherwise misrepresented. And 4, the Attorney General determines that the claimant has satisfied the applicable requirements of this act. B, losses available to living affected individuals. 1, in general, in the event of a claim qualifying for compensation under subsection A that is submitted by the Attorney General to be eligible for compensation under this section at a time when the individual described in subsection A2 is living, the amount of compensation under this section shall be in an amount that is greater of $50,000 or the total amount of compensation for which the individual is eligible under paragraph 2. 2, losses due to medical expenses. A claimant described in paragraph 1 shall be eligible to receive upon submission of contemporaneous written medical records, reports, or billing statements created by or at the direction of a licensed medical professional who provided contemporaneous medical care to the claimant, additional compensation in the amount of all documented out-of-pocket medical expenses incurred as a result of the specified disease suffered by that claimant, such as any medical expenses not covered, paid for, or reimbursed through A, any public or private health insurance, B, any employee health insurance, C, any workers' compensation program, or D, any other public, private, or employee health program or benefit. 3, limitation. No claimant is eligible to receive compensation under this subsection with respect to medical expenses unless the submission described in paragraph 2 with respect to such expenses are submitted on or before December 31, 2028. C, payments to beneficiaries or deceased individuals in the event that an individual described in subsection A2 who qualifies for compensation under subsection A is deceased at the time of submission of the claim. 1, a surviving spouse may, upon submission of a claim and records sufficient to satisfy the requirements of subsection A with respect to the deceased individual, receive compensation in the amount of $25,000, or 2, in the event that there is no surviving spouse, the surviving children, minor or otherwise, of the deceased individual may, upon submission of a claim and records sufficient to satisfy the requirements of subsection A with respect to the deceased individual, receive compensation in the total amount of $25,000 paid in equal shares to each surviving child. D, affected areas. For purposes of this section, the term affected area means 1, in the state of Missouri, the zip codes of 63031, 63033, 63034, 63042, 63045, 63074, 63114, 63135, 63138, 63044, 63121, 63140, 63145, 63147, 63102, 63304, 63134, 63043, 63341, 63368, and 63367. 2, in the state of Tennessee, the zip codes of 37716, 37840, 37719, 37748, 37763, 37828, 37769, 37710, 37845, 37887, 37829, 37854, 37830, and 37831. 3, in the state of Alaska, the zip codes of 99546 and 99547, and 4, in the state of Kentucky, the zip codes of 42001 and 42003 and 42086. E, specified disease. For purposes of this section, the term specified disease means any of the following. A, 1, any leukemia provided that the initial exposure occurred after 20 years of age and the onset of the disease was at least 2 years after the first exposure. 2, any of the following diseases provided that the onset was at least 2 years after the initial exposure. A, multiple myeloma. B, lymphoma other than Hodgkin's disease. C, primary cancer of the 1, thyroid. 2, male or female breasts. 3, esophagus. 4, stomach. 5, pharynx. 6, small intestine. 7, pancreas. 8, bile ducts. 9 gallbladder, 10 salivary gland, 11 urinary bladder, 12 brain, 13 colon, 14 ovary, 15 bone, 16 renal, 17 liver, except if cirrhosis or hepatitis B is indicated, or 18 lung. F, physical presence, 1, in general. For purposes of this section, the Attorney General may not determine that a claimant has satisfied the requirements under subsection A unless demonstrated by submission of A, contemporaneous written residential documentation, or at least one additional employer-issued or government-issued document or record that the claimant, for at least 2 years after January 1, 1949, was physically present in an infected area, or B, other documentation determined by the Attorney General to demonstrate that the claimant, for at least 2 years after January 1, 1949, was physically present in an affected area. Two types of physical presence. For purposes of determining physical presence under this section, a claimant shall be considered to have been physically present in an affected area if A, the claimant's primary residence was in the affected area, B, the claimant's place of employment was in an affected area, or C, the claimant attended school in the affected area. G, disease contraction in affected areas. For purposes of this section, the Attorney General may not determine that a claimant has satisfied the requirements under subsection A unless the claimant submits 1, written medical records or reports created by or at the direction of a licensed medical professional, created contemporaneously with the provision of medical care to the claimant, that the claimant, after a period of physical presence in an affected area, contracted a specific disease, or 2, other documentation determined by the Attorney General to demonstrate that the claimant contracted a specified disease after a period of physical presence in an affected area. Section 100205, Limitations on Claims, Section 8A of the Radiation Exposure Compensation Act, Public Law 101-426, 42 U.S.C. 2210 note, is amended by striking 2 years after the date of enactment of the RECA Extension Act of 2022 and inserting December 31, 2027.
Mr. President.
I recognize the Majority Leader.
Thank you, Mr. President. Mr. President, I would like to start by just taking a moment to thank the clerks who stayed up all night reading the amendment and getting us to this point. I know it was a long night and that we're not finished yet, but I want them to know that the Senate appreciates their dedication, their stamina, and their service. In just a moment, I'm going to make a point of order against the substitute amendment that I offered on behalf of Chairman Graham. I believe the chair should rule that there is no point of order against the amendment because the Budget Act, under the Budget Act, I should say, the Senate looks to the Budget Committee to assess the budgetary effects of an amendment. Basically, this has to do with the current policy baseline that we decided to use in the budget resolution for this bill and how we handle points of order related to it. This is an issue that I think we need to deal with right off the bat. Therefore, I make a point of order under Section 313B1E of the Congressional Budget Act against the substitute amendment number 2360.
Under the Congressional Budget Act and the precedents of the Senate, the chair must rely on determinations made by the Budget Committee in assessing the budgetary effects of the amendment. Section 312 of the Budget Act states, for the purposes of this title and Title IV, the levels of new budgetary authority, outlays, direct spending, new entitlement authority, and revenues for a fiscal year shall be determined on the basis of estimates made by the Committee on the Budget of the House of Representatives or the Senate as applicable. Unless the Budget Committee, speaking through its chairman, asserts that the amendment causes a violation of the Budget Act, the chair will not so hold. The point of order is not well taken.
Mr. President.
I recognize the Democrat leader.
I appeal the ruling of the chair, and I ask for the yeas and nays.
The yeas and nays are ordered. The appeal is debatable for 1 hour under this act. Sorry, is there a sufficient second? There appears to be. The yeas and nays are ordered.
Mr. President.
I recognize the Democrat leader.
Mr. President, first, let me thank everyone who stayed overnight to take part in the reading of this bill. My colleagues, the cloakrooms, the floor staff, everyone who made it possible. I would say this to the cloakrooms and particularly our great floor staff. You are all amazing. You're the unsung heroes of what goes on here. Without you, none of us could do our work. So thank you for your dedication, your excellence, your perseverance, your strength. Now, Senate Democrats will now commence 4 parliamentary inquiries to show the hypocrisy of what Republicans are trying to do here in the Senate, and to expose how they're trying to hide the true costs of their billionaire giveaways to the American people. I thank my colleagues who will speak momentarily, as well as all of my colleagues who have come to the floor as we debate this bill before Vote-A-Rama. So before I yield to them, I just want to hammer home exactly what is going on here in the Senate for the people back home. Republicans are about to pass the single most expensive bill in U.S. history to give tax breaks to billionaires while taking away Medicaid, SNAP benefits, and good-paying jobs for millions of people. CBO just this morning said it will explode the debt by $3.3 trillion. And they said it will likely cost more over time. More than that, closer to $4 trillion. Rather than be honest with the American people about the true costs of their billionaire giveaways, Republicans are doing something the Senate has never done before, deploying fake math and accounting gimmicks to hide the true cost of their bill. Look, Republicans can use whatever budgetary gimmicks they want to try and make the math work on paper, but you can't paper over the real-life consequences of adding tens of trillions to the debt. Sky-high interest rates, higher borrowing costs for cars, for homes, for credit cards. Americans are going to feel this, unfortunately, everywhere they look. Americans' household wealth will be permanently hobbled. There aren't enough budgetary gimmicks in the world to change that fact. And for what? Why are Republicans doing this? So that billionaires can pay less in taxes while tens of millions lose their health care benefits and pay more for everyday expenses. I now yield to my colleague from Oregon for the first parliamentary inquiry.
Mr. President.
I recognize the senator from Oregon.
Parliamentary inquiry.
The senator will state his inquiry.
When the House bill was first laid before the Senate, was the operative baseline under which it would be considered the current law baseline under Section 257 of the Balanced Budget and Emergency Deficit Control Act of 1985?
Yes.
Thank you.
I recognize the Democrat leader.
I rise for a parliamentary inquiry.
The senator will state his inquiry.
Has the Senate ever used a baseline other than current law baseline under 257 for enforcement of budget points of order, including under Section 313 of the Budget Act, during the consideration of a reconciliation measure? Has it ever been used?
No.
One big, beautiful bill. Act. Section 2, Table of Contents. The table of contents of this act is as follows. Section 1, Short Title. Section 2, Table of Contents. Title 1, Committee on Agriculture, Nutrition, and Forestry. Subtitle A, Nutrition. Section 10101, Reevaluation of Thrifty Food Plan. Section 10102, Modifications to SNAP Work Requirements for Able-Bodied Adults. Section 10103, Availability of Standard Utility Allowances based on receipt on energy assistance. Section 10104, Restrictions on Internet Expenses. Section 10105, Matching Funds Requirements. Section 10106, Administrative Cost Sharing. Section 10107, National Education and Obesity Prevention Grant Programs. Section 10108, Alien SNAP Eligibility. Subtitle B, Forestry. Section 10201, Rescissions of Amounts for Forestry. Subtitle C, Commodities. Section 10301, Effective Reference Price. Section 10302, Base Acres. Section 10303, Producer Election. Section 10304, Price Loss Coverage. Section 10305, Agriculture Risk Coverage. Section 10306, Equitable Treatment of Certain Entities. Section 10307, Payment Limitations. Section 10308, Adjusted Gross Income Limitation. Section 10309, Marketing Loans. Section 10310, Repayment of Marketing Loans. Section 10311, Economic Adjustment Assistance for Textile Mills. Section 10312, Sugar Price Updates. Section 10313, Dairy Policy Updates. Section 10314, Implementation. Subtitle D, Disaster Assistance Programs. Section 10401, Supplemental Agriculture Disaster Assistance. Subtitle E, Crop Insurance. Section 10501, Beginning Farmer and Rancher Benefit. Section 10502, Area-Based Crop Insurance Coverage and Affordability. Section 10503, Administrative and Operative Expense Adjustments. Section 10504, Premium Support. Section 10505, Program Compliance and Integrity. Section 10506, Reviews, Compliance, and Integrity. Section 10507, Poultry Insurance Pilot Program. Subtitle F, Additional Investments in Rural America. Section 10601, Conservation. Section 10602, Supplemental Agriculture Trade Promotion Program. Section 10603, Nutrition. Section 10604, Research. Section 10605, Energy. Section 10606, Horticulture. Section 10607, Miscellaneous. Title II, Committee on Armed Services. Section 2001, Enhancement of Department of Defense Resources for Improving the Quality of Life for Military Personnel. Section 20002, Enhancement of Department of Defense Resources for Shipbuilding. Section 20003, Enhancement of Department of Defense Resources for Integrated Air and Missile Defense. Just write pending on that. Get them to send it out. Section 20004, Enhancement of Department of Defense Resources for Munitions and Defense Supply Chain Resiliency. Section 20005, Enhancement of Department of Defense Resources for Scaling Low-Cost Weapons into Production. Section 20006, Enhancement of Department of Defense Resources for Improving the Efficiency and Cybersecurity of the Department of Defense. Section 20007, Enhancement of Department of Defense Resources for Air Superiority. Section 20008, Enhancement of Resources for Nuclear Forces. Section 20009, Enhancement of Department of Defense Resources to improve capabilities of United States Indo-Pacific Command. Section 20010, Enhancement of Department of Defense Resources for improving the readiness of the Department of Defense. Section 20011, Improving Department of Defense Border Support and Counter-Drug Missions. Section 20012, Department of Defense Oversight. Section 20013, Military Construction Projects Authorized. Section 20014, Multi-Year Operational Plan. Title III, Committee on Banking, Housing, and Urban Affairs. Section 30001, Funding Cap for the Bureau of Consumer Financial Protection. Section 30002, Rescission of Funds for Green and Resilient Retrofit Program for Multifamily Housing. Section 30003, Securities and Exchange Commission Reserve Fund. Section 30004, Appropriations for Defense Production Act. Title IV, Committee on Commerce, Science, and Transportation. Section 40001, Coast Guard Mission Readiness. Section 40002, Spectrum Auctions. Section 40003, Air Traffic Control Improvements. Section 40004, Space Launch and Reentry Licensing and Permitting User Fees. Section 40005, Mars Missions, Artemis Mission, and Moon to Mars Program. Section 40006, corporate average fuel economy civil penalties. Section 40007, payment for lease of metropolitan Washington airports. Section 40008, rescission of certain amounts for the National Oceanic Atmospheric Administration. Section 40009, reduction in annual transfers to Travel Promotion Fund. Section 40010, treatment of unobligated funds for alternative fuel and low-emission aviation technology. Section 40011, rescission of amounts appropriated for Public Wireless Supply Chain Innovation Fund. Section 40012, support for artificial intelligence under the Broadband Equity, Access, and Deployment Program. Title V, Committee on Energy and Natural Resources. Subtitle A, Oil and Gas Leasing. Section 50101, Onshore Oil and Gas Leasing. Section 50102, Offshore Oil and Gas Leasing. Section 50103, Royalties on Extracted Methane. Section 50104, Alaska Oil and Gas Leasing. Section 50105, National Petroleum Reserve, Alaska. Subtitle B, Mining. Section 50201, Coal Leasing. Section 50202, Coal Royalty. Section 50203, Leases for Known Recoverable Coal Resources. Section 50204, Authorization to Mine Federal Coal. Subtitle C, Lands. Section 50301. Section 50302, Timber Sales and Long-Term Contracting for the Forest Service and the Bureau of Land Management. Section 50303, Renewable Energy Fees on Federal Land. Section 50304, Renewable Energy Revenue Sharing. Section 50305, Rescission of National Park Service and Bureau of Land Management Funds. Section 50306, Celebrating America's 250th Anniversary. Subtitle D, Strategic Petroleum Reserve. Section 50401, Strategic Petroleum Reserve. Section 50402, Repeals Rescissions. Section 50403, Energy Dominance Financing. Section 50404, Transformational Artificial Intelligence Models. Subtitle E, Water. Section 50501, Water Conveyance and Surface Water Storage Enhancement. Title VI, Committee on Environment and Public Works. Section 60001, Rescission of Funding for Clean Heavy-Duty Vehicles. Section 60002, Repeal of Greenhouse Gas Reduction Fund. Section 60003, Rescission of Funding for Diesel Emission Reductions. Section 60004, Rescission of Funding to Address Air Pollution. Section 60005, Rescission of Funding to Address Air Pollution at Schools. Section 60006, Rescission of Funding for Low Emissions Electricity Program. Section 60007, Rescission of Funding for Section 211O of the Clean Air Act. Section 60008, Rescission of Funding for Implementation of the American Innovation and Manufacturing Act. Section 60009, Rescission of Funding for Enforcement, Technology, and Public Information. Section 60010, Rescission of Funding for Greenhouse Gas Corporate Reporting. Section 60011, Rescission of Funding for Environmental Product Declaration Assistance. Section 60012, Rescission of Funding for Methane Emissions and Waste Reduction Incentive Program for Petroleum and Natural Gas Systems. Section 60013, Rescission of Funding for Greenhouse Gas, Air Pollution Plans, and Implementation Grants. Section 60014, Rescission of Funding for Environmental Protection Agency Efficient, Accurate, and Timely Reviews. Section 60015, Rescission of Funding for Low Embodied Carbon Labeling for Construction Materials. Section 60016, Rescission of Funding for Environmental and Climate Justice block grants. Section 60017, rescission of funding for ESA recovery plans. Section 60018, rescission of funding for environmental and climate data collection. Section 60019, rescission of neighborhood access and equity grant program. Section 60020, rescission of funding for federal building assistance. Section 60021, rescission of funding for low-carbon materials for federal buildings. Section 60022, rescission of funding for GSA emerging and sustainable technologies. Section 60023, rescission of environmental review implementation funds. Section 60024, rescission of low-carbon transportation materials grants. Section 60025, John F. Kennedy Center for Performing Arts. Section 60026, project sponsor opt-in fees for environmental services. Title VII, Finance. Subtitle A, Tax. Section 70001, references to the Internal Revenue Code of 1986, etc. Chapter 1, providing permanent tax relief for middle-class families and workers. Section 70101, extension and enhancement of reduced rates. Section 70102, extension and enhancement of increased standard deduction. Section 70103, termination of deduction of personal exemptions other than temporary senior deduction. Section 70104, extension and enhancements of increased child tax credit. Section 70105, extension and enhancement of deduction for qualified business income. Section 70106, extension and enhancement of increased estate and gift tax exemption amounts. Section 70107, extension of increased alternative minimum tax exemption amounts and modification of phase-out thresholds. Section 70108, extension and modification of limitation on deduction for qualified residence interest. Section 70109, extension and modification of limitation on casualty loss deduction. Section 70110, termination of miscellaneous itemized deductions other than educator expenses. Section 70111, limitation on tax benefits of itemized deductions. Section 70112, extension and modification of qualified transportation fringe benefits. Section 70113, extension and modification of limitation on deduction and exclusions for moving expenses. Section 70114, extension and modification of limitation on wagering losses. Section 70115, extension and enhancement of increased limitation on contributions to ABLE accounts. Section 70116, extension and enhancement of savers credit allowed for ABLE contributors. Section 70117, extension of rollovers for qualified tuition programs to ABLE accounts permitted. Section 70118, extension of treatment of certain individuals performing services in the Sinai Peninsula and enhancement to include additional areas. Section 70119, extension and modification and exclusion from gross income of student loans discharged on account of death or disability. Section 70120, limitation on individual deductions for certain state and local taxes, etc. Chapter 2, delivering on presidential priorities to provide new middle-class tax relief. Section 70201, no tax on tips. Section 70202, no tax on overtime. Section 70203, no tax on car loan investment. Section 70204, Trump accounts and contribution pilot program. Chapter 3, establishing certainty and competitiveness for American job creators. Subtitle A, permanent U.S. business tax reform and boosting domestic investment. Section 70301, full expensing for certain business property. Section 70302, full expensing of domestic research and experimental expenditures. Section 70303, modification of limitation on business interest. Section 70304, extension and enhancement of paid family and medical leave credit. Section 70305, exceptions from limitations on deduction for business meals. Section 70306, increased dollar limitations for expensing of certain depreciable business assets. Section 70307, special depreciation allowance for qualified production property. Section 70308, enhancement of advanced manufacturing investment credit. Section 70309, spaceports are treated like airports under exempt facility bond rules. Subtitle B, Permanent America First International Tax Reforms. Part 1, Foreign Tax Credit. Section 70311, modifications related to foreign tax credit limitation. Section 70312, modifications to determination of deemed paid credit for taxes properly attributable to tested income. Section 70313, sourcing certain income from the sale of inventory produced in the United States. Part 2, foreign-derived deduction eligible income and net CFC tested income. Section 70321, modification of deduction for foreign-derived deduction eligible income and net CFC tested income. Section 70322, determination of deduction eligible income. Section 70323, rules related to deemed intangible income. Part 3, base erosion minimum tax. Section 70331, extension and modification of base erosion minimum tax amount. Part 4, business interest limitation. Section 70341, coordination of business interest limitation and interest capitalization provisions. Section 70342, definition of adjusted taxable income for business interest limitation. Part 5, other international tax reforms. Section 70351, permanent extension of look-through rule for related controlled foreign corporations. Section 70352, repeal of election for 1 month deferral and determination of taxable year of specified foreign corporations. Section 70353, restoration of limitation on downward attribution of stock ownership in applying constructive ownership rules. Section 70354, modification to pro rata share rules. Chapter 4, investing in American families, communities, and small businesses. Subchapter A, permanent investments in families and children. Section 70401, enhancement of employer-provided child care credit. Section 70402, enhancement of adoption credit. Section 70403, recognizing Indian tribal governments for purposes of determining whether a child has special needs for purposes of the adoption credit. Section 70404, enhancement of the Dependent Care Assistance Program. Section 70405, enhancement of child and dependent care tax credit. Subtitle B, permanent investments in students and reforms to tax-exempt institutions. Section 70411, tax credit for contributions of individuals to scholarship-granting organizations. Section 70412, exclusion for employer payments of student loans. Section 70413, additional expenses treated as qualified higher education expenses for purpose of 529 accounts. Section 70414, certain post-secondary credentializing expenses treated as qualified higher education expenses for purposes of 529 accounts. Section 70415, modification of excise tax on investment income of certain private colleges and universities. Section 70416, expanding application of tax on excess compensation within tax-exempt organizations. Subchapter C, permanent investments in community development. Section 70421, permanent renewal and enhancement of opportunity zones. Section 70422, permanent enhancement of low-income housing tax credit. Section 70423, permanent extension of new markets tax credit. Section 70424, permanent and expanded reinstatement of partial deduction for charitable contributions of individuals who do not elect to itemize. Section 70425, 0.5% floor on deduction of contributions made by individuals. Section 70426, 1% floor on deduction of charitable contributions made by corporations. Section 70427, permanent increase in limitations on cover over of tax on distilled spirits. Section 70428, nonprofit community development activities in remote native languages. Section 70429, adjustment of charitable deduction for certain expenses incurred in support of Native Alaskan subsistent whaling. Section 70430, exception to percentage of completion method of accounting for certain residential construction contracts. Subchapter D, permanent investments in small business and rural America. Section 70431, expansion of qualified small business stock gain exclusion. Section 70432, repeal of revision to de minimis rules for third-party network transactions. Section 70433, increase in threshold for requiring information reporting with respect to certain payees. Section 70434, treatment of certain qualified sound recording productions. Section 70435, exclusion of interest on loans secured by rural or agricultural real property. Section 70436, reduction of transfer and manufacturing taxes for certain devices. Section 70437, treatment of capital gains from the sale of certain farmland property. Section 70438, extension of rules for treatment of certain disaster-related personal casualty losses. Chapter 5, ending Green New Deal spending, promoting America First energy, and other reforms. Subchapter A, termination of Green New Deal subsidies. Section 70501, termination of previously owned clean vehicle credit. Section 70502, termination of clean vehicle credit. Section 70503, termination of qualified commercial clean vehicles credit. Section 70504, termination of alternative fuel vehicle refueling property credit. Section 70505, termination of energy efficient home improvement credit. Section 70506, termination of residential clean energy credit. Section 70507, termination of energy efficient commercial building deduction. Section 70508, termination of new energy efficient home credit. Section 70509, termination of cost recovery for energy, property, and qualified clean energy facilities, property, and technology. Section 70510, modifications of zero-emission nuclear power production credit. Section 70511, termination of clean hydrogen production credit. Section 70512, termination and restrictions on clean electricity production credit. Section 70513, termination and restrictions on clean electricity investment credit. Section 70514, phase out and restrictions on advanced manufacturing production credit. Section 70515, restriction on the extension of Advanced Energy Project Credit Program. Subchapter B, enhancement of America First energy policy. Section 70521, extension and modification of clean fuel production credit. Section 70522, restrictions on carbon oxide sequestration credit. Section 70523, intangible drilling and development costs taken into account for purposes of computing adjusted financial statement income. Section 70524, income from hydrogen storage, carbon capture, advanced nuclear, hydropower, and geothermal energy added to qualifying income of certain publicly traded partnerships. Section 70525, allow for payments to certain individuals who die fuel. Subchapter C, other reforms. Section 70531, modifications to de minimis entry privilege for commercial shipments. Chapter 6, enhancing deduction and income tax credit, guardrails, and other reforms. Section 70601, modification and extension of limitation on excess business losses of non-corporate taxpayers. Section 70602, treatment of payments for partnerships to partners for property or services. Section 70603, excessive employee remuneration from controlled group members and allocation of deduction. Section 70604, third-party litigation funding reforms. Section 70605, excise tax on certain remittance transfers. Section 70606, enforcement provisions with respect to COVID-related employee retention credits. Section 70607, Social Security number requirement for American Opportunity and Lifetime Learning credits. Section 70608, Task Force on the Replacement of the Direct File. Subtitle B, Health. Chapter 1, Medicaid. Chapter A, reducing fraud and improving enrollment processes. Section 71101, moratorium on implementation of rule relating to eligibility and enrollment in Medicare savings programs. Section 71102, moratorium on implementation of rule relating to eligibility and enrollment for Medicaid CHIP and the Basic Health Program. Section 71103, reducing duplicate enrollment under the Medicaid and CHIP programs. Section 71104, ensuring deceased individuals do not remain enrolled. Section 71105, ensuring deceased providers do not remain enrolled. Section 71106, payment reduction related to certain erroneous excess payments under Medicaid. Section 71107, eligibility redeterminations. Section 71108, revising home equity limit for determining eligibility for long-term care services under the Medicaid program. Section 71109, alien Medicaid eligibility. Section 71110, expansion FMAP for certain states providing payments for health care furnished to certain individuals. Section 71111, expansion of FMAP for emergency Medicaid. Subchapter B, preventing wasteful spending. Section 7112, moratorium on implementation of rule relating to staffing standards for long-term care facilities under the Medicare and Medicaid programs. Section 71113, reducing state Medicaid costs. Section 71114, prohibiting federal Medicaid and CHIP funding for certain items and services. Section 71115, federal payments to prohibited entities. Subchapter C, stopping abusive financing practices. Section 7116, sunsetting increased FMAP incentive. Section 71117, provider taxes. Section 71118, state-directed payments. Section 71119, requirements regarding waiver of uniform tax requirement for Medicaid provider tax. Section 71120, requiring budget neutrality for Medicaid demonstration projects under Section 1115. Subchapter D, increasing personal accountability. Section 71121, requirement for states to establish Medicaid community engagement requirements for certain individuals. Section 71122, modifying cost-sharing requirements for certain expansion individuals under the Medicaid program. Subchapter E, expanding access to care. Section 71123, making certain adjustments to coverage of home or community-based services under Medicaid. Section 71124, determination of FMAP for high-poverty states. Chapter 2, Medicare. Subchapter A, strengthening eligibility requirements. Section 71201, limiting Medicare coverage of certain individuals. Subchapter B, improving services for seniors. Section 71202, temporary payment, increase under the Medicare physician fee schedule to account for exceptional circumstances. Section 71203, expanding and clarifying the exclusion for orphan drugs under the drug price negotiation program. Section 71204, application of cost living adjustment to non-labor related portion for hospital outpatient department services furnished in Alaska and Hawaii. Chapter 3, health tax. Subchapter A, improving eligibility criteria. Section 71301, permitting premium tax credit only for certain individuals. Section 71302, disallowing premium tax credit during periods of Medicaid ineligibility due to alien status. Subchapter B, preventing waste, fraud, and abuse. Section 71303, requiring verification of eligibility for premium tax credit. Section 71304, disallowing premium tax credit in case of certain coverage enrolled in during special enrollment period. Section 71305, eliminating limitation on recapture of advance payment of premium tax credit. Section 71306, permanent extension of safe harbor for absence of deductible for telehealth services. Section 71307, allowance of bronze and catastrophic plans and connection with health savings accounts. Section 71308, treatment of direct primary care service arrangements. Chapter 4, protecting rural hospitals and providers. Section 71401, Rural Health Transformation Program. Subtitle C, increase in debt limit. Section 72001, modification of limitation on the public debt. Title 8, Committee on Health, Education, Labor, and Pensions. Subtitle A, exemption of certain assets. Section 80001, exemption of certain assets. Subtitle B, loan limits. Section 81001, establishment of loan limits for graduate and professional students and parent borrowers, termination of graduate and professional plus loans. Subtitle C, loan repayment. Section 82001, loan repayment. Section 82002, deferment, forbearance. Section 82003, loan rehabilitation. Section 82004, public service loan forgiveness. Section 82005, student loan servicing. Subtitle D, Pell Grants. Section 83001, eligibility. Section 83002, workforce Pell Grants. Section 83003, Pell shortfall. Section 83004, federal Pell Grants exclusion relating to other grant aid. Subtitle E, Accountability, Section 84001, Ineligibility based on low earnings outcomes. Subtitle F, Regulatory Relief, Section 85001, Delay of rule relating to borrower defense to repayment. Section 85002, Delay of rule relating to closed school discharges. Subtitle G, Limitation on Authority. Section 86001, Limitation on proposing or issuing regulations and executive actions. Subtitle H, Garden of Heroes. Section 87001, Garden of Heroes.
Subtitle 1, Office of Refugee Resettlement, Section 88001, Potential Sponsor Vetting for Unaccompanied Alien Children Appropriation. Title 9, Committee on Homeland Security and Governmental Affairs. Subtitle A, Homeland Security Provisions. Section 90001, Border Infrastructure and Wall System. Section 90002, U.S. Customs and Border Protection Personnel, Fleet Vehicles and Facilities. Section 90003, Detention Capacity. Section 90004, Border Security, Technology, and Screening. Section 90005, State and Local Assistance. Section 90006, Presidential Residence Protection. Section 90007, Department of Homeland Security Appropriations for Border Support. Subtitle B, Governmental Affairs Provisions. Section 90101, FEHB Improvements. Section 90102, Pandemic Response Accountability Committee. Section 90103, Appropriation for the Office of Management and Budget. Title 10, Committee on the Judiciary. Subtitle A, Immigration and Law Enforcement Matters. Part 1, Immigration Fees. Section 100001, Applicability of the Immigration Laws. Section 100002, Asylum Fee. Section 100003, Employment Authorization Document Fees. Section 100004, Immigration Parole Fee. Section 100005, Special Immigrant Juvenile Fee. Section 100006, Temporary Protected Status Fee. Section 100007, Visa Integrity Fee. Section 100008, Form I-94 Fee. Section 100009, Annual Asylum Fee. Section 100010, Fee relating to renewal and extension of employment authorization for parolees. Section 100011, Fee relating to renewal or extension of employment authorization for asylum applicants. Section 100012, Fee relating to renewal and extension of employment authorization for aliens granted temporary protected status. Section 100013, Fees relating to applications for adjustment of status. Section 100014, Electronic System for Travel Authorization Fee. Section 100015, Electronic Visa Update System Fee. Section 100016, Fee for aliens ordered removed in absentia. Section 100017, Inadmissible Alien Apprehension Fee. Section 100018, Amendment to Authority to Apply for Asylum. Part 2, Immigration and Law Enforcement Funding. Section 100051, Appropriation for the Department of Homeland Security. Section 10052, Appropriation for U.S. Immigration and Customs Enforcement. Section 10053, Appropriation for Federal Law Enforcement Training Centers. Section 10054, appropriation for the Department of Justice. Section 10055, bridging immigration-related deficits experienced nationwide reimbursement fund. Section 10056, appropriation for the Bureau of Prisons. Section 10057, appropriation for the United States Secret Service. Subtitle B, Judiciary Matters. Section 100101, appropriation to the Administrative Office of the United States Courts. Section 100102, appropriation to the Federal Judicial Center. Subtitle C, Radiation Exposure Compensation Matters. Section 100201, extension of fund. Section 100202, claims relating to atmospheric testing. Section 100203, claims relating to uranium mining. Section 100205, limitations on claims. Title I, Committee on Agriculture, Nutrition, and Forestry. Subtitle A, Nutrition. Section 10101, reevaluation of Thrifty Food Plan. A, in general, Section 3 of the Food and Nutrition Act of 2008, 7 U.S.C. 2012 is amended by striking subsection U, inserting the following. U, Thrifty Food Plan. 1, in general, the term Thrifty Food Plan means a diet required to feed a family of 4 persons consisting of a man and a woman ages 20 through 50, a child ages 6 through 8, and a child ages 9 through 11, using the items and quantities of food described in the report of the Department of Agriculture entitled Thrifty Food Plan 2021. And each successor report updated pursuant to this subsection, subject to the conditions that A, the relevant market baskets of the Thrifty Food Plan shall only be changed pursuant to paragraph 4. B, the cost of the Thrifty Food Plan shall be the basis for uniform allotments for all households regardless of the actual composition of the household. And C, the cost of the Thrifty Food Plan may only be adjusted in accordance with this subsection. 2, household adjustments. The Secretary shall make household adjustments using the following ratios of household size as a percentage of the maximum 4-person allotment. A, for a one-person household, 30%. B, for a 2-person household, 55%. C, for a 3-person household, 79%. D, for a 4-person household, 100%. E, for a 5-person household, 119%. F, for a 6-person household, 143%. G, for a 7-person household, 158%. H, for an 8-person household, 180%. I, for a household of 9 persons or more, an additional 22% per person, which additional percentage shall not total more than 200%. 3, allowable cost adjustments. The Secretary shall, A, make cost adjustments in the Thrifty Food Plan for Hawaii and the urban and rural parts of Alaska to reflect the cost of food in Hawaii and urban and rural Alaska. B, make cost adjustments in the separate Thrifty Food Plans for Guam and the Virgin Islands of the United States to reflect the cost of food in those states, but not to exceed the cost of food in the 50 states and the District of Columbia. And C, on October 1st, 2025, and on each October 1st thereafter, adjust the cost of the Thrifty Food Plan to reflect changes in the Consumer Price Index for all urban consumers published by the Bureau of Labor Statistics of the Department of Labor for the most recent 12-month period ending in June. 4, reevaluation of market baskets. A, reevaluation. Not earlier than October 1st, 2027, the Secretary may reevaluate the market baskets of the Thrifty Food Plan based on current food prices, food composition data, consumption patterns, and dietary guidance. B, cost neutrality. The Secretary shall not increase the cost of the Thrifty Food Plan based on a reevaluation under this paragraph. B, conforming amendments. 1, Section 16C1A22 of the Food and Nutrition Act of 2008, 7 U.S.C. 2025 C1A22 is amended by striking Section 3U4 and inserting Section 3U3. 2. Section 19A2A2 of the Food and Nutrition Act of 2008, 7 U.S.C. 2028A2A2 is amended by striking Section 3U4 and inserting Section 3U3. 3. Section 27A2 of the Food and Nutrition Act of 2008, 7 U.S.C. 2036A2 is amended by striking Section 3U4, each place it appears, and inserting Section 3U3. Section 1012, modifications to SNAP work requirements for able-bodied adults. A, exceptions. Section 6.0 of the Food and Nutrition Act of 2008, 7 U.S.C. 20150 is amended by striking paragraph 3 and inserting the following. 3, exceptions. Paragraph 2 shall not apply to an individual if the individual is A, under 18 or over 65 years of age, B, medically certified as physically or mentally unfit for employment, C, a parent or other member of a household with responsibility for a dependent child under 14 years of age, D, otherwise exempt under subsection D2. E, a pregnant woman. F, an Indian or urban Indian, as such terms are defined in paragraphs 13 and 28 of Section 4 of the Indian Healthcare Improvement Act. Or G, a California Indian described in Section 809A of the Indian Healthcare Improvement Act. B, standardizing enforcement. Section 604 of the Food and Nutrition Act of 2008, 7 U.S.C. 201504 is amended, 1, in subparagraph A by striking clause 2 and inserting the following. 2, is in a non-contiguous state and has an unemployment rate that is at or above 1.5 times the national unemployment rate, 8%, and 2, by adding at the end the following. C, definition of non-contiguous state. 1, in general, in this paragraph, the term non-contiguous state means a state that is not one of the contiguous 48 states or the District of Columbia. 2, exclusion. The term non-contiguous state does not include Guam or the Virgin Islands of the United States. C, waiver for non-contiguous states. Section 6.0 of the Food and Nutrition Act of 2008, 7 U.S.C. 20150 is amended, 1, by redesignating paragraph 7 as paragraph 8, and 2, by inserting after paragraph 6 the following. 7, exemption for non-contiguous states. A, definition of non-contiguous state. 1, in general, in this paragraph, the term non-contiguous state means a state that is not one of the contiguous 48 states or the District of Columbia. 2, exclusions. In this paragraph, the term non-contiguous state does not include Guam or the Virgin Islands of the United States. B, exemption. Subject to subparagraph D, the Secretary may exempt individuals in a non-contiguous state from compliance with the requirements of paragraph 2 if 1, the state agency submits to the Secretary a request for that exemption made in such form and at such time as the Secretary may require, and including the information described in subparagraph C, and 2, the Secretary determines that based on that request, the state agency is demonstrating a good faith effort to comply with the requirements of paragraph 2. C, good faith effort determination. In determining whether a state agency is demonstrating a good faith effort or for purposes of subparagraph B2, the Secretary shall consider 1, any action taken by the state agency toward compliance with the requirements of paragraph 2, 2, any significant barriers to or challenges in meeting those requirements, including barriers or challenges relating to funding, design, development, procurement, or installation of necessary systems or resources. 3, the detailed plan and timeline of the state agency for achieving full compliance with those requirements, including any milestones as defined by the Secretary. And 4, any other criteria determined appropriate by the Secretary. D, duration of exemption. 1, in general, an exemption granted under subparagraph B shall expire not later than December 31st, 2028, and may not be renewed beyond that date. 2, early termination. The Secretary may terminate an exemption granted under subparagraph B prior to the expiration date of that exemption if the Secretary determines that the state agency, one, has failed to comply with the reporting requirements described in subparagraph E, or two, based on the information provided pursuant to subparagraph E, failed to make continued good faith efforts towards compliance with the requirements of this subsection. E, reporting requirements. A state agency granted an exemption under subparagraph B shall submit to the Secretary, one, quarterly progress reports on the status of the state agency in achieving the milestones toward full compliance described in subparagraph C3, and two, information on specific risks or newly identified barriers or challenges to full compliance, including the plan of the state agency to mitigate those risks, barriers, or challenges. Section 10103, availability of standard utility allowances based on receipt of energy assistance. A, standard utility allowance. Section 5E 6C 4I of the Food and Nutrition Act of 2008, 7 U.S.C. 2014 E6C 4I is amended by inserting with an elderly or disabled member after households. B, third-party energy assistance payments. Section 5K4 of the Food Nutrition Act of 2008, 7 U.S.C. 2014 K4 is amended, 1, in subparagraph A by inserting without an elderly or disabled member before shall be, and 2, in subparagraph B by inserting with an elderly or disabled member before under a state law. Section 10104, restrictions on internet expenses. Section 5E6 of the Food and Nutrition Act of 2008, 7 U.S.C. 2014 E6 is amended by adding at the end of the following. E, restrictions on internet expenses. Any service fee associated with internet connection shall not be used in computing the excess shelter expense deduction under this paragraph. Section 10105, matching funds requirements. A, in general, Section 4A of the Food and Nutrition Act of 2008, 7 U.S.C. 2013A, is amended, 1, by striking A subject to and inserting the following. A, program. 1, establishment subject to, and 2, by adding at the end the following. 2, state quality control incentive. A, definition of payment error rate. In this paragraph, the term payment error rate has the meaning given the term in Section 16C2. B, state cost share. 1, in general, beginning in fiscal year 2028, if the payment error rate of a state is determined under Clause 2 is 1, less than 6%, the federal share of the cost of the allotment described in paragraph 1 for that state in a fiscal year shall be 100%, and the state share shall be 0%. 2, equal to or greater than 6%, but less than 8%. The federal share of the cost of the allotment described in paragraph 1 for that state in a fiscal year shall be 95%, and the state share shall be 5%. 3, equal to or greater than 8%, but less than 10%. The federal share of the cost of the allotment described in paragraph 1 for that state in a fiscal year shall be 90%, and the state share shall be 10%. And 4, equal to or greater than 10%. The federal share of the cost of the allotment described in paragraph 1 for that state in a fiscal year shall be 85%, and the state share shall be 15%. 2, elections. 1, fiscal year 2028. For fiscal year 2028, to calculate the applicable state share under Clause 1, a state may elect to use the payment error rate of the state from fiscal year 2025 or 2026. 2, fiscal year 2029 and thereafter. For fiscal year 2029 and each fiscal year thereafter, to calculate the applicable state share under Clause 1, the Secretary shall use the payment error rate of the state for the third fiscal year preceding the fiscal year for which the state share is being calculated. 3, maximum federal payment. The Secretary may not pay towards the cost of an allotment described in paragraph 1 an amount that is greater than the applicable federal share under paragraph 2. 4, waiver authority. A, In general, the Secretary may waive the requirement under paragraph 2 for a non-contiguous state excluding Guam and the Virgin Islands of the United States for a period of not more than 2 years if, 1, the Secretary determines that the waiver is necessary, and 2, the non-contiguous state is 1, actively implementing a corrective action plan as described in Section 275.17 of Title VII Code of Federal Regulations or a successor regulation, and 2, carrying out any other activities determined necessary by the Secretary to reduce its payment error rate as defined in paragraph 2. B, termination of authority. The waiver authority under subparagraph A shall terminate on the date that is 4 years after the date of enactment of this paragraph. B, limitation on authority. Section 13A1 of the Food and Nutrition Act of 2008, 7 U.S.C. 2022A1 is amended in the first sentence by inserting or the payment or disposition of a state share under Section 4A2 after 16C 1D12. Section 10106, administrative cost sharing. Section 16A of the Food and Nutrition Act of 2008, 7 U.S.C. 2025A, is amended in the matter preceding paragraph 1 by striking agency an amount equal to 50% and inserting agency through fiscal year 2026, 50%, and for fiscal year 2027 and each fiscal year thereafter, 25%. Section 10107, National Education and Obesity Prevention Grant Program. Section 28D1F of the Food and Nutrition Act of 2008, 7 U.S.C. 2036A D1F is amended by striking for fiscal year 2016 and each subsequent fiscal year, and inserting for each of fiscal years 2016 through 2025. Section 10108, Alien SNAP eligibility. Section 6F of the Food and Nutrition Act of 2008, 7 U.S.C. 2015F, is amended to read as follows. F, no individual who is a member of a household otherwise eligible to participate in the Supplemental Nutrition Assistance Program under this section shall be eligible to participate in the Supplemental Nutrition Assistance Program as a member of that or any other household unless he or she is, 1, a resident of the United States, and 2, either A, a citizen or a national of the United States, B, an alien lawfully admitted for permanent residence as an immigrant as defined by sections 101A15 and 101A20 of the Immigration and Nationality Act, excluding, among others, alien visitors, tourists, diplomats, and students who enter the United States temporarily with no intention of abandoning their residence in a foreign country. C, an alien who has been granted the status of Cuban and Haitian entrant as defined in Section 501E of the Refugee Education Assistance Act of 1980, Public Law 96-422, or D, an individual who lawfully resides in the United States in accordance with a compact of free association referred to in Section 402B2G of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996. The income less at state option or a pro rata share and financial resources of the individual rendered ineligible to participate in the Supplemental Nutrition Assistance Program under this subsection shall be considered in determining the eligibility and the value of the allotment of the household of which such individual is a member. Subtitle B, Forestry, Section 10201, Rescission of Amounts for Forestry. The unobligated balances of amounts appropriated by the following provisions of Public Law 117-169 are rescinded. 1. Paragraphs 3 and 4 of Section 23001, A, 136, Stat 2023. 2. Paragraphs 1 through 4 of Section 23002A, 136, Stat 2025. 3. Section 23003A2, 136 Stat 2026. 4. Section 23005, 136 Stat 2027. Subtitle C, Commodities. Section 10301, Effective Reference Price, A, Effective Reference Price. Section 11118B2 of the Agricultural Act of 2014, 7 U.S.C. 9011 8B2 is amended by striking 85 and inserting beginning with the crop year 2025, 88. B, Reference Price. Section 1111 of the Agricultural Act of 2014, 7 U.S.C. 9011, is amended by striking paragraph 19 and inserting the following. 19, Reference Price. A, in general, effective beginning with the 2025 crop year, subject to subparagraphs B and C, the term reference price with respect to a covered commodity for a crop year means the following. 1, for wheat, $6.35 per bushel. 2, for corn, $4.10 per bushel. 3, for grain, sorghum, $4.40 per bushel. 4, for barley, $5.45 per bushel. 5, for oats, $2.65 per bushel. 6, for long grain rice, $16.90 per hundredweight. 7, for medium grain rice, $16.90 per hundredweight. 8, for soybeans, $10 per bushel. 9, for other oil seeds, $23.75 per hundredweight. 10, for peanuts, $630 per ton. 11, for dry peas, $13.10 per hundredweight. 12, for lentils, $23.75 per hundredweight. 13, for small chickpeas, $22.65 per hundredweight. 14, for large chickpeas, $25.65 per hundredweight. 15, for seed cotton, 42 cents per pound. B, effectiveness. Effective beginning with the 2031 crop year, the reference price is defined in subparagraph A with respect to a covered commodity shall equal the reference price in the previous crop year multiplied by 1.005. C, limitation. In no case shall a reference price for a covered commodity exceed 113% of the reference price for such covered commodity listed in subparagraph A. Section 10302, base acres. Section 1112 of the Agricultural Act of 2014, 7 U.S.C. 9012, is amended, 1, in subsection D3A by striking 2023 and inserting 2031, and by adding at the end of the following. E, additional base acres. 1, in general, as soon as practicable after the date of enactment of this subsection and notwithstanding subsection A, the Secretary shall provide notice to owners of eligible farms pursuant to paragraph 3 and allocate to those eligible farms a total of not more than an additional 30 million base acres in the manner provided in this subsection. An owner of a farm that is eligible to receive an allocation of base acres may elect to not receive that allocation by notifying the Secretary not later than 90 days after receipt of the notice provided by the Secretary under this paragraph. 2, content of notice. The notice under paragraph 1 shall include the following. A, information that the allocation is occurring. B, information regarding the eligibility of the farm for an allocation of base acres under paragraph 3. C, information regarding how an owner may appeal a determination of ineligibility for an allocation of base acres under paragraph 3.
Through an appeals process established by the Secretary. 3, eligibility. A, in general, subject to subparagraph D, effective beginning with the 2026 crop year, a farm is eligible to receive an allocation of base acres if, with respect to the farm, the amount described in subparagraph B exceeds the amount described in subparagraph C. B, 5-year average sum. The amount described in this subparagraph with respect to a farm is the sum of I, the 5-year average of I, the acreage planted on the farm to all covered commodities for harvest, grazing, haying, silage, or other similar purposes for the 2019 through 2023 crop years. And 2, any acreage on the farm that the producers were prevented from planting during the 2019 through 2023 crop years to covered commodities because of drought, flood, or other natural disaster, or other conditions beyond the control of the producers as determined by the Secretary, plus 2, the lesser of 1, 15, subsection 1, 15% of the total acres on the farm, and 2, the 5-year average of AA, the acreage planted on the farm to eligible non-covered commodities for harvest, grazing, haying, silage, or other similar purposes for the 2019 through 2023 crop years, and subsection BB, any acreage on the farm that producers were prevented from planting during the 2019 through 2023 crop years to eligible non-covered commodities because of drought, flood, or other natural disaster, or other condition beyond the control of the producers, as determined by the Secretary. C, total number of base acres for covered commodities. The amount described in this subparagraph with respect to a farm is the total number of base acres for covered commodities on the farm, excluding unassigned crop base, as in effect on September 30, 2024. D, effect of no recent plantings of covered commodities in the case of a farm for which the amount determined under Clause I of subparagraph B is equal to 0. That farm shall be ineligible to receive an allocation of base acres under the subsection. E, acreage planted on the farm to eligible non-covered commodities defined in this paragraph. The term acreage planted on the farm to eligible non-covered commodities means acreage planted on a farm to commodities other than covered commodities, trees, bushes, vines, grass, or pasture, including cropland that was idle or fallow, as defined by the Secretary. 4, number of base acres, subject to paragraphs 3 and 8. The number of base acres allocated to an eligible farm shall, subsection A, be equal to the difference obtained by subtracting the amount determined under subparagraph C of paragraph 3 from the amount determined under subparagraph B of that paragraph. And B, include unassigned crop base. 5, allocation of acres. A, allocation. The Secretary shall allocate the number of base acres under paragraph 4 among those covered commodities planted on the farm at any time during the 2019 through 2023 crop years. B, allocation formula. The allocation of additional base acres for covered commodities shall be in proportion to the ratio of subsection I, the 5-year average of I, the acreage planted on the farm to each covered commodity for harvest, grazing, haying, silage, or other similar purposes for the 2019 through 2023 crop years. And 2, any acreage on the farm that producers were prevented from planting during the 2019 through 2023 crop years to that covered commodity because of drought, flood, or other natural disaster, or other condition beyond the control of the producers as determined by the Secretary. To the 5-year average determined under paragraph 3BI. Inclusion C, inclusion of all 5 years in average. For the purpose of determining a 5-year acreage average under subparagraph B for a farm, the Secretary shall not exclude any crop year in which a covered commodity was not planted. D, treatment of multiple planting or prevented planting. For the purpose of determining under subparagraph B the acreage on a farm that producers planted or were prevented from planting during the 2019 through 2023 crop years to covered commodities, if the acreage that was planted or prevented from being planted was devoted to other covered commodity in the same crop year, other than a covered commodity produced under an established practice of double cropping, the owner may elect the covered commodity to be used for that year in determining the 5-year average, but may not include both the initial covered commodity and the subsequent covered commodity. E, limitation. The allocation of additional base acres among covered commodities on a farm under this paragraph may not result in a total number of base acres for the farm in excess of the number of acres on the farm. 6, reduction by the Secretary. In carrying out this subsection, if the total number of eligible acres allocated to base acres across all farms in the United States under this subsection would exceed 30 million acres, the Secretary shall apply an across-the-board prorated reduction to the number of eligible acres to ensure the number of allocated base acres under this subsection is equal to 30 million acres. 7. Payment yield. Beginning with crop year 2026, for the purpose of making price loss coverage payments under Section 1116, the Secretary shall establish payment yields to base acres allocated under this subsection equal to A, the payment yield established on the farm for applicable covered commodity, and B, if no such payment yield for the applicable covered commodity exists, a payment yield equal to the average payment yield for the covered commodity for the county in which the farm is situated, or to determine pursuant to Section 1113C. 8. Treatment of new owners. In the case of a farm for which the owner on the date of enactment of this subsection was not the owner for the 2019 through 2023 crop years, the Secretary shall use the planting history of the prior owner or owners of that farm for the purposes of determining A, eligibility under paragraph 3, B, eligibility acres under paragraph 4, and C, the allocation of acres under paragraph 5. Section 10303, producer election. A, in general, Section 1115 of the Agricultural Act of 2014, 7 U.S.C. 9015, is amended 1. In subsection A, in the matter preceding paragraph 1, by striking 2023 and inserting 2031. 2. In subsection C, A, in the matter preceding paragraph 1, I, by striking crop year or and inserting crop year, and 2, by inserting or the 2026 crop year after 2019 crop year. B, in paragraph 1, I, by striking crop year or and inserting crop year, and II, by inserting or the 2026 crop year after 2019 crop year, and C, in paragraph 2, I, in subparagraph A, by striking and at the end, II, in subparagraph B, by striking the period at the end and inserting and 3, by adding at the end the following. C, the same coverage for each covered commodity on the farm for the 2027 through 2031 crop years as was applicable for the 2025 crop year. And 3, by adding at the end the following. 1, higher of price loss coverage payments and agricultural risk coverage payments. For the 2025 crop year, the Secretary shall, on a covered commodity by covered commodity basis, make the higher of price loss coverage payments under Section 1116 and agricultural risk covered county coverage payments under Section 1117 to the producers on a farm for the payment acres for each covered commodity on the farm. B, federal crop insurance supplemental coverage options. Section 508C4C 4 IV of the Federal Crop Insurance Act 7 U.S.C. 1508 C4C IV is amended by striking crops for which the producer has elected under Section 1116 of the Agricultural Act of 2014 to receive agricultural risk coverage in acres and inserting acres. Section 10304, price loss coverage. Section 1116 of the Agricultural Act of 2014, 7 U.S.C. 9016 is amended. 1, in subsection A2, in the matter preceding subparagraph A by striking 2023 and inserting 2031. 2, in subsection C1B, A, in the subparagraph heading by striking 2023 and inserting 2031. And B, in the matter preceding clause I by striking 2023 and inserting 2031. 3, in subsection D, in the matter preceding paragraph 1 by striking 2025 and inserting 2031, and 4, in subsection G, A, by striking subparagraph F of section 1111-19 and inserting paragraph 19A VI of section 1111, and B, by striking 2012 through 2016, each place it appears, and inserting 2017 through 2021. Section 10305, agricultural risk coverage. Section 1117 of the Agricultural Act of 2014, 7 U.S.C. 9017 is amended 1 in subsection A in the matter preceding paragraph 1 by striking 2023 and inserting 2031. 2 in subsection C, A, in paragraph 1 by inserting for each of the 2014 through 2024 crop years and 90% of the benchmark revenue for each of the 2025 through 2031 crop years before the period at the end. B, by striking 2023 each place it appears and inserting 2031. And C, in paragraph 4B in the subparagraph heading by striking 2023 and inserting 2031. 3, in subsection D1 by striking subparagraph B and inserting the following. BI, for each of the 2014 through 2024 crop years, 10% of the benchmark revenue for the crop year applicable under subsection C and II. For each of the 2025 through 2031 crop years, 12% of the benchmark revenue for the crop year applicable under subsection C and 4 in subsections E, G5, and I5 by striking 2023 each place it appears and inserting 2031. Section 10.306, equitable treatment of certain entities. A, in general, Section 1001 of the Food Security Act of 1985, 7 U.S.C. 1308, is amended 1 in subsection A, by redesignated paragraph 5 as paragraph 6, and B, by inserting after paragraph 4 the following. 5, qualified pass-through entity. The term qualified pass-through entity means A, a partnership within the meaning of subchapter K of Chapter 1 of the Internal Revenue Code of 1986, B, an S corporation as defined in Section 1361 of that code, C, a limited liability company that does not affirmatively elect to be treated as a corporation, and D, a joint venture or general partnership. 2, in subsections B and C by striking except a joint venture or general partnership, each place it appears, and inserting except a qualified pass-through entity, and 3, in subsection D by striking subtitle B of Title I of the Agricultural Act of 2014, or B, attribution of payment, Section 1001 E3 of the Food Security Act of 1985, 7 U.S.C. 1308 E3 is amended. 1, in the clause heading by striking joint ventures and general partnerships and inserting qualified pass-through entities. 2, by striking a joint venture or a general partnership and inserting a qualified pass-through entity. 3, by striking joint ventures and general partnerships and inserting qualified pass-through entities. And 4, by striking the joint venture or general partnership and inserting the qualified pass-through entity. C, persons actively engaged in farming. Section 1001 of the Food Security Act of 1985, 7 U.S.C. 1308 1B2 is amended. 1, subparagraphs A and B by striking a general partnership, a participant in a joint venture, each place it appears, and inserting a qualified pass-through entity. And 2, in subparagraph C by striking a general partnership, joint venture, or similar entity and inserting a qualified pass-through entity or a similar entity. D, joint and several liability. Section 100BD of the Food Security Act of 1985, 7 U.S.C. 1308-2D is amended by striking partnerships and joint ventures and inserting qualified pass-through entities. E, exclusion from AGI calculation. Section 1001D of the Food Security Act of 1985, 7 U.S.C. 1308-3AD is amended by striking general partnership or joint venture, each place it appears. Section 10.307, payment limitations. Section 1001 of the Food Security Act of 1985, 7 U.S.C. 1308 is amended 1 in subsection B, A, by striking the and inserting subject to subsection I, the, and B, by striking $125,000 and inserting $155,000. And 2, in subsection C, A, by striking the and inserting subject to subsection I, the, and B, by striking $125,000 and inserting $155,000. And 3, by adding at the end the following. I, adjustment for the 2025 crop year and each crop year thereafter. The Secretary shall annually adjust the amounts described in subsections B and C for inflation based on the Consumer Price Index for all urban consumers published by the Bureau of Labor Statistics of the Department of Labor. Section 10.308, adjusted gross income limitation. Section 1001DB of the Food Security Act of 1985, 7 U.S.C. 1308-3AB is amended 1 in paragraph 1 by striking paragraph 3 and inserting paragraphs 3 and 4, and 2 by adding at the end the following. 4. Exception for certain operations. A. Definitions. In this paragraph, I. Accepts payment or benefit. The term accepted payment or benefit means I. A payment or benefit under Subtitle E of Title I of the Agricultural Act of 2014, 7 U.S.C. 908, at sequence 2. A payment or benefit under Section 196 of the Federal Agricultural Improvement and Reform Act of 1996, 7 U.S.C. 7333, and 3. A payment or benefit described in paragraph 2C received on or after October 1st, 2024. II. Farming, ranching, or silviculture activities. The term farming, ranching, or silviculture activities include agritourism, direct-to-consumer marketing of agricultural products, the sale of agricultural equipment owned by the person or legal entity, and other agricultural-related activities as determined by the Secretary. B. Exception. In the case of an accepted payment or benefit, the limitation established by paragraph 1 shall not apply to a person or legal entity during a crop, fiscal, or program year as appropriate, if greater than or equal to 75% of the average gross income of the person or legal entity derives from farming, ranching, or silviculture activities. Section 10309, Marketing Loans. A. Availability of non-recourse marketing assistance loans for loan commodities. Section 1201B1 of the Agricultural Act of 2014, 7 U.S.C. 9031B1 is amended by striking 2023 and inserting 2031. B. Loan rates for non-recourse marketing assistance loans. Section 1202 of the Agricultural Act of 2014, 7 U.S.C. 9032 is amended 1 in subsection B. A, in the subsection heading by striking 2023 and inserting 2025, and B, in the matter preceding paragraph 1 by striking 2023 and inserting 2025. 2, by redesignating subsections C and D as subsections D and E, respectively. 3, by inserting after subsection B the following. C, 2026 through 2031 crop years. For the purposes of each of the 2026 through 2031 crop years, the loan rate for a marketing assistance loan under Section 1201 for a loan commodity shall be equal to the following. 1, in the case of wheat, $3.72 per bushel. In the case of corn, $2.42 per bushel. In the case of grain sorghum, $2.42 per bushel. 4, in the case of barley, $2.75 per bushel. 5, in the case of oats, $2.20 per bushel. 6, in the case of upland cotton, 55 cents per pound. 7, in the case of extra long staple cotton, $1 per pound. In the case of long grain rice, $7.70 per hundredweight. 9, in the case of medium grain rice, $7.70 per hundredweight. 10, in the case of soybeans, $6.82 per bushel. 11, in the case of other oil seeds, $11.10 per hundredweight for each of the following kinds of oil seeds. A, sunflower seed. B, rapeseed. C, canola. D, safflower. E, flaxseed. F, mustard seed. G, cranberry. H, sesame seeds. I, other oil seeds designated by the Secretary. 12, in the case of dry peas, $6.87 per hundredweight. 13, in the case of lentils, $14.30 per hundredweight. 14, in the case of small chickpeas, $11 per hundredweight. 15, in the case of large chickpeas, $15.40 per hundredweight. 16, in the case of grated wool, $1.60 per pound. 17, in the case of non-grated wool, 55 cents per pound. 18, in the case of mohair, $5 per pound. 19, in the case of honey, $1.50 per pound. 20, in the case of peanuts, $390 per ton. 4, in subsection D, as so redesignated by striking A11 and B11 and inserting A11, B11, and C11, and 5, in subsection E, as so redesignated in paragraph 1 by striking 25 cents and inserting 30 cents. C, payment of cotton storage costs. Section 1204G of the Agricultural Act of 2014, 7 U.S.C. 9034G is amended 1 by striking effective and inserting the following. 1, crop years 2014 through 2025, effective. 2, in paragraph 1, as so designated by striking 2023 and inserting 2025. And 3, by adding at the end the following. 2, payment of cotton storage costs effective for each of the 2026 through 2031 crop years. The Secretary shall make cotton storage payments for upland cotton and extra long staple cotton available in the same manner as the Secretary provided storage payments for the 2006 crop of upland cotton, except that the payment rate shall be equal to the lesser of A, the submitted storage charge for the current marketing year, and B, in the case of storage in I, California or Arizona, a payment rate of $4.90, and 2, II, any other state, a payment rate of $3. D, loan deficiency payments. 1, continuation. Section 1205A2B of the Agricultural Act of 2014, 7 U.S.C. 9035A2B is amended by striking 2023 and inserting 2031. 2, payments in lieu of LDPS. Section 1206 of the Agricultural Act of 2014, 7 U.S.C. 9036 is amended in subsections A and D by striking 2023, each place it appears, and inserting 2031. E, special competitive provisions for extra long staple cotton. Section 1208A of the Agricultural Act of 2014, 7 U.S.C. 9038A is amended in the matter preceding paragraph 1 by striking 2026 and inserting 2032. F, availability of recourse loans. Section 1209 of the Agricultural Act of 2014, 7 U.S.C. 9039 is amended in subsections A, 2, B, and C by striking 2023, each place it appears, and inserting 2031. Section 310, repayment of marketing loans. Section 1204 of the Agricultural Act of 2014, 7 U.S.C. 9034 is amended 1 in subsection B, A, by redesignating paragraph 1 as subparagraph A and indenting appropriately. B, in the matter preceding subparagraph A as so redesignated by striking the Secretary and inserting the following. 1, in general, the Secretary, and C, by striking paragraph 2 and inserting the following. BI, in the case of long grain rice and medium grain rice, the prevailing world market price for the commodity as determined and adjusted by the Secretary in accordance with this section, or II, in the case of upland cotton, the prevailing world market price for the commodity as determined and adjusted by the Secretary in accordance with this section. 2, refund for upland cotton. In the case of repayment for a marketing assistance loan for upland cotton at a rate described in paragraph 1 BII, the Secretary shall provide the producer a refund, if any, in an amount equal to the difference between the lowest prevailing world market price as determined and adjusted by the Secretary in accordance with this section during the 30-day period following the date on which the producer repays the marketing assistance loan, and the repayment rate. 2, in subsection C, A, by striking the period at the end and inserting semicolon, and B, by striking at the loan rate and inserting the following, at a rate that is lesser of 1, the loan rate, and C, by adding at the end the following. 2, the prevailing world market price for the commodity as determined and adjusted by the Secretary in accordance with this section. 3, subsection D, A, in paragraph 1 by striking and medium grain rice and inserting medium grain rice and extra long staple cotton. B, by redesignating paragraphs 1 and 2 as subparagraphs A and B respectively and indenting appropriately. C, in the matter preceding subparagraph A as so redesignated by striking for purposes and inserting the following. 1, in general, for purposes, and D, by adding at the end the following. 2, upland cotton. In the case of upland cotton, for any period when price quotations for middling M 3/32-inch cotton are available, the formula under paragraph 1A shall be based on the average of the 3 lowest price growths that are quoted. And 4, in subsection E, A, in the subsection heading by inserting extra long staple cotton and upland cotton. B, in paragraph 2, I, in the paragraph heading by inserting upland before cotton, and 2 in subparagraph, and II in subparagraph B in the matter preceding clause I by striking 2024 and inserting 2032. C, by redesignating paragraph 3 as paragraph 4, and D by inserting after paragraph 2 the following. 3, extra long staple cotton. The prevailing world market price for extra long staple cotton determined under subsection D, A, shall be adjusted to United States quality and location with the adjustment to include the average costs to market the commodity, including average transportation cost as determined by the Secretary, and B, may be further adjusted during the period beginning on the date of enactment of the Act entitled An Act to Provide for Reconciliation pursuant to Title II of H. Conres 14, 119th Congress, and ending on July 31st, 2032. If the Secretary determines the adjustment is necessary, I, to minimize potential loan forfeitures, I, to minimize the accumulation of stocks of extra long staple cotton by the federal government, I, to ensure that extra-long staple cotton produced in the United States can be marketed freely and competitively, and IV, to ensure an appropriate transition between current crop and forward crop price quotations, except that the Secretary may use forward crop price quotations prior to July 31st of a marketing year only if I, there are insufficient current crop price quotations, and II, the forward crop price quotation is the lowest such quotation available. Section 10.311, Economic Adjustment Assistance for Textile Mills. Section 1207C of the Agricultural Act of 2014, 7 U.S.C. 9037C is amended by striking paragraph 2 and inserting the following. 2. Value of assistance. The value of the assistance provided under paragraph 1 shall be A, for the period beginning on August 1st, 2013 and ending on July 31st, 2025, 3 cents per pound, and B, beginning on August 1st, 2025, 5 cents per pound. Section 10.312, Sugar Program Updates. A, Loan Rate Modification. Section 156 of the Federal Agricultural Improvement and Reform Act of 1996, 7 U.S.C. 7272, is amended 1 in subsection A, in paragraph 4 by striking and at the end, B, in paragraph 5 by striking 2023 crop years and inserting 2024 crop years, and C, by adding at the end the following. 6, 24 cents per pound for raw cane sugar for each of the 2025 through 2031 crop years. 2, in subsection B-A, in paragraph 1 by striking and at the end, B, in paragraph 2 by striking 2023 crop years and inserting 2024 crop years, and C, by adding at the end the following. 3, a rate that is equal to 136.55% of the loan rate per pound of raw cane sugar under subsection A6 for each of the 2025 through 2031 crop years. And 3, in subsection I, by striking 2023 and inserting 2031. B, adjustments to Commodity Credit Corporation storage rates. Section 167 of the Federal Agricultural Improvement and Reform Act of 1996, 7 U.S.C. 7287, is amended 1 by striking subsection A and inserting the following. A, in general, for the 2025 crop year and each subsequent crop year, the Commodity Credit Corporation shall establish rates for the storage of forfeited sugar in an amount that is not less than 1. In the case of refined sugar, 34 cents per hundredweight per month, and 2. In the case of raw cane sugar, 27 cents per hundredweight per month, and 2. In subsection B, A, in the subsection heading by striking subsequent and inserting prior, and B, by striking and subsequent and inserting through 2024. C, modernization beet sugar allotments. 1, sugar estimates. Section 359BA1 of the Agricultural Adjustment Act of 1938, 7 U.S.C. 1359BBA1 is amended by striking 2023 and inserting 2031. 2, allocation to the processors. Section 359CG2 of the Agricultural Adjustment Act of 1938, 7 U.S.C. 1359CCG2 is amended A by striking in the case and inserting the following. A, in general, except as provided in subparagraph B in the case, and B, by adding at the end the following. B, exception. If the Secretary makes an upward adjustment of paragraph 1A in adjusting allocations among beet sugar processors, the Secretary shall give priority to beet sugar processors with available sugar. 3, timing of reassignment. Section 359EB2 of the Agricultural Adjustment Act of 1938, 7 U.S.C. 1359EEB2 is amended A by redesignating subparagraphs A through C as clauses I through III, respectively, and indenting appropriately. B, in the matter preceding clauses I as so redesignated by striking if the Secretary and inserting the following. A, in general, if the Secretary, and C, by adding at the end the following. B, timing. In carrying out subparagraph A, the Secretary shall I make an initial determination based on the World Agricultural Supply and Demand estimates approved by the World Agricultural Outlook Board for January that shall be applicable to the crop year for which allotments are required, and II provide for an initial reassignment under subparagraph AI not later than 30 days after the date on which the World Agricultural Supply and Demand estimates described in Clause I is released. D, reallocations of tariff rate quota shortfall. Section 359K of the Agricultural Adjustment
Act of 1938, 7 U.S.C. 1359 KK is amended by adding at the end the following. C, reallocation. 1, initial reallocation. Subject to paragraph 3, following the establishment of the tariff rate quotas under subsection A for a quota year, the Secretary shall, A, determine which countries do not intend to fulfill their allocation for the quota year, and B, reallocate any forecasted shortfall in the fulfillment of the tariff rate quotas as soon as practicable. 2, subsequent reallocation. Subject to paragraph 3, not later than March 1 of a quota year, the Secretary shall reallocate any additional forecasted shortfall in the fulfillment of the tariff rate quotas for raw cane sugar established under subsection A1 for that quota year. 3, cessation of effectiveness. Paragraphs 1 and 2 shall cease to be in effect if A, the agreement suspending the countervailing duty investigation on sugar from Mexico, signed December 19, 2014, is terminated, and B, no countervailing duty order under Subtitle A of Title VII of the Tariff Act of 1930, 19 U.S.C. 1671 et sequitur, is in effect with respect to sugar from Mexico. D, refined sugar. 1, definition of domestic sugar industry. In this subsection, the term domestic sugar industry means domestic A, sugar beet producers and processors, B, producers and processors of sugar cane, and C, refiners of raw cane sugar. 2, study required. A, in general, not later than 180 days after the date of enactment of this subsection, the Secretary shall conduct a study on whether the establishment of additional terms and conditions with respect to refined sugar imports is necessary and appropriate. B, elements. In conducting the study under subparagraph A, the Secretary shall examine the following. I, the need for 1, defining refined sugar as having a minimum polarization of 99.8 degrees or higher. 2, establishing a standard for color or reflectance-based units for refined sugar such as those utilized by the International Commission on Uniform Methods of Sugar Analysis. 3, prescribing specifications for packaging type for refined sugar. 4, prescribing specifications for transportation modes for refined sugar. 5, requiring evidence that sugar imported as refined sugar will not undergo further refining in the United States. 6, prescribing appropriate terms and conditions to avoid unlawful sugar imports. And 7, establishing other definitions, terms, and conditions or other requirements. II, the potential impact of modifications described in each of the subclauses 1 through 7 of Clause I of the domestic sugar industry. III, whether based on the needs described in Clause I and the impact described in Clause II, the establishment of additional terms and conditions is appropriate. C, consultation. In conducting the study under subparagraph A, the Secretary shall consult with representatives of the domestic sugar industry and users of refined sugar. D, report. Not later than 1 year after the date of enactment of this subsection, the Secretary shall submit to the Committee on Agriculture of the House of Representatives and the Committee on Agriculture, Nutrition, and Forestry of the Senate a report that describes the findings of the study conducted under subparagraph A. 3, establishment of additional terms and conditions permitted. A, in general, based on the findings in the report submitted under paragraph 2D, and after providing notice to the Committee on Agriculture of the House of Representatives and the Committee on Agriculture, Nutrition, and Forestry of the Senate, the Secretary may issue regulations in accordance with subparagraph B to establish additional terms and conditions with respect to refined sugar imports that are necessary and appropriate. B, promulgation of regulations. The Secretary may issue regulations under subparagraph A if the regulations, 1, do not have an adverse impact on the domestic sugar industry, and 2, are consistent with the requirements of this part, Section 156 of the Federal Agriculture Improvement and Reform Act of 1996, 7 U.S.C. 7272, and obligations under international trade agreements that have been approved by Congress. E, clarification of tariff rate quota adjustments. Section 359KB1 of the Agriculture Adjustment Act of 1938, 7 U.S.C. 1359 KKB1 is amended in the matter preceding subparagraph A by striking "if there is N" and inserting "for the sole purpose of responding directly to N." F, period of effectiveness. Section 359LA of the Agriculture Adjustment Act of 1938, 7 U.S.C. 1359 LLA, is amended by striking 2023 and inserting 2031. Section 10313, Dairy Policy Updates. A, Dairy Margin Coverage Production History. 1, Definition. Section 14018 of the Agricultural Act of 2014, 7 U.S.C. 9051-8, is amended by striking "when the participating dairy operation first registers to participate in dairy margin coverage." 2, Production History of Participating Dairy Operations. Section 1405 of the Agricultural Act of 2014, 7 U.S.C. 9055, is amended by striking subsections A and B and inserting the following. A, Production History. Except as provided under subsection B, the production history of a dairy operation for dairy margin coverage is equal to the highest annual milk marketings of the participating dairy operation during any one of the 2021, 2022, or 2023 calendar years. B, Election by new dairy operations. In the case of a participating dairy operation that has been in operation for less than a year, the participating dairy operations shall elect one of the following methods for the Secretary to determine the production history of the participating dairy operation. 1, the volume of the actual milk marketings for the months the participating dairy operation has been in operation extrapolated to a yearly amount. 2, an estimate of the actual milk marketings of the participating dairy operation based on the herd size of the participating dairy operation relative to the national rolling herd average data published by the Secretary. B, dairy margin coverage payments. Section 1406A1C of the Agricultural Act of 2014, 7 U.S.C. 9056A1C, is amended by striking $5 million each place it appears and inserting $6 million. C, premiums for dairy margins. 1, Tier 1. Section 1407B of the Agricultural Act of 2014, 7 U.S.C. 9057B, is amended. A, in the subsection heading by striking $5 million and inserting $6 million, and B, in paragraph 1 by striking $5 million and inserting $6 million. 2, Tier 2. Section 1407C of the Agricultural Act of 2014, 7 U.S.C. 9057C, is amended. A, in the subsection heading by striking $5 million and inserting $6 million, and B, in paragraph 1 by striking $5 million and inserting $6 million. 3, premium discounts. Section 1407G of the Agricultural Act of 2014, 7 U.S.C. 9057G, is amended. A, in paragraph 1 by striking 2019 through 2023 and inserting 2026 through 2031, and 2, by striking January 2019 and inserting January 2026, and B, in paragraph 2 by striking 2023 each place it appears and inserting 2031. D, duration. Section 1409 of the Agricultural Act of 2014, 7 U.S.C. 9059, is amended by striking 2025 and inserting 2031. Section 10314, implementation. Section 1614C of the Agricultural Act of 2014, 7 U.S.C. 9097C, is amended by adding at the end the following. 5, further funding. The Secretary shall make available to carry out Subtitle C of Title I of the Act entitled "An Act to Provide for Reconciliation Pursuant to Title II of H. Con. Res. 14, 119th Congress," and the amendments made by that subtitle $50 million to remain available until expended, of which A, not less than $5 million shall be used to carry out paragraphs 3 and 4 of subsection B. B, $3 million shall be used for activities described in paragraph 3A. C, $3 million shall be used for activities described in paragraph 3B. D, $9 million shall be used, 1, to carry out mandatory surveys of dairy production costs and product yield information to be reported by manufacturers required to report under Section 273 of the Agricultural Marketing Act of 1946, 7 U.S.C. 1637B, for all products processed in the same facility or facilities, and 2, to publish the results of such surveys biennially, and E, $1 million shall be used to conduct the study under subsection D of Section 359K of the Agricultural Adjustment Act of 1938, 7 U.S.C. 1359KK. Subtitle D, Disaster Assistance Programs. Section 10401, Supplemental Agricultural Disaster Assistance. A, Livestock Indemnity Payments. Section 1501B of the Agricultural Act of 2014, 7 U.S.C. 9081B is amended, 1, by striking paragraph 2 and inserting the following. 2, payment rates. A, losses due to predation. Indemnity payments to an eligible producer on a farm under paragraph 1A shall be made at a rate of 100% of the market value of the affected livestock on the applicable date as determined by the Secretary. B, losses due to adverse weather or disease. Indemnity payments to an eligible producer on a farm under subparagraph B or C of paragraph 1 shall be made at a rate of 75% of the market value of the affected livestock on the applicable date as determined by the Secretary. C, determination of market value. In determining the market value described in subparagraphs A and B, the Secretary may consider the ability of eligible producers to document regional price premiums for affected livestock that exceed the national average market price for those livestock. D, applicable date defined. In this paragraph, the term applicable date means, with respect to livestock, as applicable, 1, the day before the date of death of the livestock, or 2, the day before the date of the event that caused the harm of the livestock to the livestock that resulted in a reduced sale price, and 2, by adding at the end the following. 5, additional payment for unborn livestock. A, in general, in the case of unborn livestock death losses incurred on or after January 1, 2024, the Secretary shall make an additional payment to eligible producers on farms that have incurred such losses in excess of the normal mortality due to a condition specified in paragraph 1. B, payment rate. Additional payments under subparagraph A shall be made at a rate, 1, determined by the Secretary, and 2, less than or equal to 85% of the payment rate established with respect to the lowest weight class of the livestock, as determined by the Secretary, acting through the administrator of the Farm Service Agency. C, payment amount. The amount of a payment to an eligible producer that has incurred unborn livestock death losses shall be equal to the payment rate determined under subparagraph B multiplied in the case of livestock described in 1, subparagraph A, B, or F of subsection A4 by 1, 2, subparagraph D of each subsection by 2, 3, subparagraph E of each subsection by 12, and 4, subparagraph G of such subsection by the average number of birthed animals for one gestation cycle for the species of such livestock as determined by the Secretary. D, unborn livestock death losses defined. In this paragraph, the term unborn livestock death losses means losses of any livestock described in subparagraph A, B, D, E, F, or G of subsection A4 that was gestating on the date of the death of the livestock. B, Livestock Forage Disaster Program, Section 1501 C3D21 of the Agricultural Act of 2014, 7 U.S.C. 9081 C3D21 is amended, 1, by striking 1 monthly payment and inserting 2 monthly payments, and 2, by striking county for at least 8 consecutive and inserting the following: county for not less than AA, 4 consecutive weeks during the normal grazing period for the county, as determined by the Secretary, shall be eligible to receive assistance under this paragraph in an amount equal to 1 monthly payment using the monthly payment rate determined under subparagraph B or BB, 7 of the previous 8 consecutive. C, emergency assistance for livestock, honeybees, and farm-raised fish. 1, in general, Section 1501D of the Agricultural Act of 2014, 7 U.S.C. 9081D is amended by adding at the end the following: 5, assistance for losses due to bird depredation. A, definition of farm-raised fish. In this paragraph, the term farm-raised fish means fish propagated and reared in a controlled freshwater environment. B, payments. Eligible producers of farm-raised fish, including fish grown as food for human consumption, shall be eligible to receive payments under this subsection to aid in the reduction of losses due to piscivorous birds. C, payment rate. 1, in general, the payment rate for payments under subparagraph B shall be determined by the Secretary, taking into account: 1, costs associated with the deterrence of piscivorous birds; 2, the value of lost fish and revenue due to bird depredation; and 3, costs associated with disease loss from bird depredation. 2, minimum rate. The payment rate for payments under subparagraph B shall be not less than $600 per acre of farm-raised fish. D, payment amount. The amount of a payment under subparagraph B shall be the product obtained by multiplying: 1, the applicable payment rate under subparagraph C, and 2, 85% of the total number of acres of farm-raised fish that the eligible producer has in production for the calendar year. 2, emergency assistance for honeybees. In determining honeybee colony losses eligible for assistance under Section 1501D of the Agricultural Act of 2014, 7 U.S.C. 9081D, the Secretary shall utilize a normal mortality rate of 15%. D, Tree Assistance Program. Section 1501E of the Agricultural Act of 2014, 7 U.S.C. 9081E is amended: 1, in paragraph 2B by striking 15%, adjusted for normal mortality, and inserting normal mortality; and 2, in paragraph 3, A, in subparagraph A1 by striking 15% mortality, adjusted for normal mortality, and inserting normal mortality; and B, in subparagraph B, 1, by striking 50 and inserting 65, and 2, by striking 15% damage or mortality, adjusted for normal tree damage and mortality, and inserting normal tree damage or mortality. Subtitle E, Crop Insurance. Section 10501, Beginning Farmer and Rancher Benefit. A, definitions. 1, in general, Section 502B3 of the Federal Crop Insurance Act, 7 U.S.C. 1502B3, is amended by striking 5 and inserting 10. 2, conforming amendment. Section 522C7 of the Federal Crop Insurance Act, 7 U.S.C. 1522C7, is amended by striking subparagraph F. B, increase in assistance. Section 1508E of the Federal Crop Insurance Act, 7 U.S.C. 1508E, is amended by adding at the end the following. 9. Additional support. A. In general, in addition to any other provision of this subsection, except paragraph 2A regarding payment of a portion of premiums, a beginning farmer or rancher shall receive additional premium assistance, that is, the number of percentage points specified in subparagraph B greater than the premium assistance that would otherwise be available for the applicable policy, plan of insurance, and coverage level selected by the beginning farmer or rancher. B. Percentage points adjustments. The percentage points referred to in subparagraph A are the following. 1. For each of the first and second reinsurance years that a beginning farmer or rancher participates as a beginning farmer or rancher in the applicable policy or plan of insurance, 5 percentage points. 2. For the third reinsurance year that a beginning farmer or rancher participates as a beginning farmer or rancher in the applicable policy or plan of insurance, 3 percentage points. 3. For the fourth reinsurance year that a beginning farmer or rancher participates as a beginning farmer or rancher in the applicable policy or plan of insurance, 1 percentage point. Section 10502, Area-Based Crop Insurance Coverage and Affordability. A. Coverage level. Section 508C4 of the Federal Crop Insurance Act, 7 U.S.C. 1508C4 is amended, 1, in subparagraph A by striking Clause 2 and inserting the following. 2. May be purchased at any level not to exceed 1. In the case of the individual yield or revenue coverage, 85%. 2. In the case of individual yield or revenue coverage aggregated across multiple commodities, 90%. And 3. In the case of area yield or revenue coverage as determined by the corporation, 95%. And 2 in subparagraph C. A in clause 2 by striking 14 and inserting 10, and B in clause 3(1) by striking 86 and inserting 90. B. Premium subsidy. Section 508E2H1 of the Federal Crop Insurance Act, 7 U.S.C. 1508E2H1, is amended by striking 65 and inserting 80. Section 10503, Administrative and Operating Expense Adjustments. Section 508K of the Federal Crop Insurance Act, 7 U.S.C. 1508K, is amended by adding at the end the following. 10. Additional expenses. A. In general, beginning with the 2026 reinsurance year and for each reinsurance year thereafter, in addition to the terms and conditions of the standard reinsurance agreement, to cover additional expenses for loss adjustment procedures, the corporation shall pay an additional administrative and operating expense subsidy to approved insurance providers for eligible contracts. B. Payment amount. In the case of an eligible contract, the payment to an approved insurance provider required under subparagraph A shall be the amount equal to 6% of the net book premium. C. Definitions. In this paragraph, 1. Eligible contract. The term eligible contract, 1, means a crop insurance contract entered into by an approved insurance provider in an eligible state, and 2, does not include a contract for AA, catastrophic risk protection under subsection B, BB, an area-based plan of insurance or similar plan of insurance as determined by the corporation, or CC, a policy under which an approved insurance provider does not incur loss adjustment expenses as determined by the corporation. 2. Eligible state. The term eligible state means a state in which, with respect to an insurance year, the loss ratio for eligible contracts is greater than 120% of the total net book premium written by all approved insurance providers. 11. Specialty crops. A. Minimum reimbursement. Begin with the 2026 reinsurance year, and for each reinsurance year thereafter, The rate of reimbursement to approved insurance providers and agents for administrative and operating expenses with respect to crop insurance contracts covering agricultural commodities described in Section 101 of the Specialty Crops Competitiveness Act of 2004, 7 U.S.C. 1621 Note, Public Law 108-465, shall be equal to or greater than the percentage that is the greater of the following. 1, 17% of the premium used to define loss ratio. 2, the percent of the premium used to define loss ratio that is otherwise applicable for the reinsurance year under the terms of the standard reinsurance agreement in effect for the reinsurance year. B, other contracts. In carrying out subparagraph A, the corporation shall not reduce, with respect to any reinsurance year, the amount or the rate of reimbursement to approved insurance providers and agents under the standard reinsurance agreement described in Clause 2 of such subparagraph for administrative and operating expenses with respect to contracts covering agricultural commodities that are not subject to such subparagraph. C, administration. The requirements of this paragraph and the adjustments made pursuant to this paragraph shall not be considered a renegotiation under paragraph 8A. 12, A&O inflation adjustment. In general, subject to subparagraph B, beginning with the 2026 reinsurance year and for each reinsurance year thereafter, the corporation shall increase the total administrative and operating expense reimbursements otherwise required under the standard reinsurance agreement in effect for the reinsurance year in order to account for inflation in a manner consistent with the increases provided with respect to the 2011 through 2015 reinsurance years under the enclosure included in Risk Management Agency Bulletin numbered MGR 10007 and dated June 30, 2010. B, special rule for 2026 reinsurance year. The increase under subparagraph A for the 2026 reinsurance year shall not exceed the percentage change for the preceding reinsurance year included in the Consumer Price Index for all urban consumers published by the Bureau of Labor Statistics and the Department of Labor. C, administration. An increase under subparagraph A, 1, shall apply with respect to all contracts covering agricultural commodities that were subject to an increase during the period of the 2011 through 2015 reinsurance years under the enclosure referred to in that subparagraph, and 2, shall not be considered a renegotiation under paragraph 8A. Section 10504, premium support. Section 508E2 of the Federal Crop Insurance Act, 7 U.S.C. 1508E2 is amended, 1, in subparagraph C1 by striking 64 and inserting 69, 2, in subparagraph D1 by striking 59 and inserting 64, 3, in subparagraph E1 by striking 55 and inserting 60, 4, in subparagraph F1 by striking 48 and inserting 51, and 5, in subparagraph G1 by striking 38 and inserting 41. Section 10505, Program Compliance and Integrity. Section 515L2 of the Federal Crop Insurance Act, 7 U.S.C. 1515L2, is amended by striking than and all that follows through the period at the end and inserting the following. Than, A, $4 million for each of fiscal years 2009 through 2025, and B, $6 million for fiscal year 2026 and each subsequent fiscal year. Section 10506, Reviews, Compliance, and Integrity. Section 516B2C1 of the Federal Crop Insurance Act, 7 U.S.C. 1516B2C1, is amended in the matter preceding subclause 1 by striking for each fiscal year and inserting for each of fiscal years 2014 through 2025, and $10 million for fiscal year 2026 and each fiscal year thereafter.
Section 10507, Poultry Insurance Pilot Program. Section 523 of the Federal Crop Insurance Act, 7 U.S.C. 1523, is amended by adding at the end the following. J, Poultry Insurance Pilot Program. 1, in general, notwithstanding subsection A2, the corporation shall establish a pilot program under which contract poultry growers, including growers of broilers and laying hens, may elect to receive index-based insurance from extreme weather-related risk resulting in increased utility costs, including costs of natural gas, propane, electricity, water, and other appropriate costs, as determined by the corporation associated with poultry production. 2, stakeholder engagement. The corporation shall engage with poultry industry stakeholders in establishing the pilot program under paragraph 1. 3, location. The pilot program established under paragraph 1 shall be conducted in a sufficient number of counties to provide a comprehensive evaluation of the feasibility, effectiveness, and demand among producers in the top poultry producing states as determined by the corporation. 4, approval of policy or plan, notwithstanding section 5081. The board shall approve a policy or plan of insurance based on the pilot program under paragraph 1. A, in accordance with section 508H, and B, not later than 2 years after the date of enactment of this subsection. Subtitle F, additional investments in rural America, section 10601, conservation. A, in general, section 1241A of the Food Security Act of 1985, 16 U.S.C. 3841A is amended. 1, in paragraph 2 by striking subparagraphs A through F and inserting the following. A, $625 million for fiscal year 2026. B, $650 million for fiscal year 2027. C, $675 million for fiscal year 2028. D, $700 million for fiscal year 2029. E, $700 million for fiscal year 2030. And F, $700 million for fiscal year 2031, and 2, in paragraph 3A and subparagraph A by striking clauses 1 through 5 and inserting the following. 1, $2,655 million for fiscal year 2026. 2, $2,855 million for fiscal year 2027. 3, $3,255 million for fiscal year 2028. 4, $3,255 million for fiscal year 2029. 5, $3,255 million for fiscal year 2030, and 6, $3,255 million for fiscal year 2031, and B, in subparagraph B, by striking clauses 1 through 5 and inserting the following. 1, $1,300 million for fiscal year 2026. 2, $1,325 million for fiscal year 2027. 3, $1,350 million for fiscal year 2028. 4, $1,375 million for fiscal year 2029, 5, $1,375 million for fiscal year 2030, and 6, $1,375 million for fiscal year 2031. B, Regional Conservation Partnership Programs, Section 1271D of the Food Security Act of 1985, 16 U.S.C. 3871D is amended by striking subsection A and inserting the following. A, availability of funding. Of the funds of the Commodity Credit Corporation, the Secretary shall use to carry out the program to the maximum extent practicable. 1, $425 million for fiscal year 2026. 2, $450 million for fiscal year 2027. 3, $450 million for fiscal year 2028. 4, $450 million for fiscal year 2029. 5, $450 million for fiscal year 2030. And 6, $450 million for fiscal year 2031. C, Grassroots Source Water Protection Programs, Section 1240 OB of the Food Security Act of 1985, 16 U.S.C. 3839 BB. 2, B is amended. 1, in paragraph 1 by striking 2023 and inserting 2031, and 2, in paragraph 3A and subparagraph A by striking and at the end. B, in subparagraph B by striking the period at the end and inserting and. C, by adding at the end of the following. C, $1 million beginning in fiscal year 2026 to remain available until expended. D, voluntary public access and habitat incentive programs, Section 1240 RF1 of the Food Security Act of 1985, 16 U.S.C. 3839 BB. 5F1 is amended. 1, by striking 2023 and inserting 2023, and 2, by inserting and $70 million for the period of fiscal years 2025 through 2031 before the period at the end. E, watershed protection and flood prevention. Section 15 of the Watershed Protection and Flood Prevention Act, 16 U.S.C. 1012A, is amended by striking $50 million for fiscal year 2019 and each fiscal year thereafter, and inserting $150 million for fiscal year 2026 and each fiscal year thereafter to remain available until expended. F, feral swine eradication and control pilot program, Section 2408G1 of the Agricultural Improvement Act of 2018, 7 U.S.C. 8351, note, Public Law 115-334 is amended, 1, by striking 2023 and inserting 2023, and 2, by inserting $105 million for the period of fiscal years 2025 through 2031 before the period at the end. G, rescission. The unobligated balances of amounts appropriated by Section 21001A of Public Law 117-169, 136 Stat 2015 are rescinded. Section 10602, Supplemental Agricultural Trade Promotion Program. A, in general, the Secretary of Agriculture shall carry out a program to encourage the accessibility, development, maintenance, and expansion of commercial export markets for United States agricultural commodities. B, funding of the funds of the Commodity Credit Corporation. The Secretary of Agriculture shall make available to carry out the Section $205 million for fiscal year 2027 and each fiscal year thereafter. Section 10603, Nutrition, Section 203D-D5 of the Emergency Food Assistance Act of 1983, 7 U.S.C. 7507D5 is amended by striking 2024 and inserting 2031. Section 10604, Research. A, urban, indoor, and other emerging agricultural programs, production, research, education, and extension initiative. Section 1672ED1B of the Food, Agricultural, Conservation, and Trade Act of 1990, 7 U.S.C. 5925GD1B is amended by striking fiscal year 2024 to remain available until expended, and inserting each of fiscal years 2024 through 2031. B, Foundation for Food and Agricultural Research. Section 7601G1A of the Agricultural Act of 2014, 7 U.S.C. 5939G1A is amended by adding at the end of the following. 4, further funding not later than 30 days after the date of enactment of this clause of the funds of the Commodity Credit Corporation, the Secretary shall transfer to the Foundation to carry out the Section $37 million to remain available until expended. C, scholarships for students at 1890 institutions, Section 1446B1 of the National Agricultural Research Extension and Teaching Policy Act of 1977, 7 U.S.C. 3222AB1 is amended by adding at the end the following. C, further funding of the funds of the Commodity Credit Corporation, the Secretary shall make available to carry out this section $60 million for fiscal year 2026 to remain available until expended. D, assistive technology program for farmers with disabilities. Section 1680 of the Food, Agriculture, Conservation, and Trade Act of 1997, U.S.C. 5933 is amended, 1, in subsection C2 by inserting and subsection D after paragraph 1, and 2 by adding at the end of the following. D, mandatory funding. Subject to subsection C2 of the funds of the Commodity Credit Corporation, the Secretary shall use to carry out this section $8 million for fiscal year 2026 to remain available until expended. E, Specialty Crop Research Initiative. Section 412K1B of the Agricultural Research Extension and Education Reform Act of 1998, 7 U.S.C. 7632K1B is amended by striking section $80 million for fiscal year 2014 and inserting the following section. 1, $80 million for each of fiscal years 2014 through 2025, and 2, $175 million for fiscal year 2026. F, Research Facilities Act, Section 6 of the Research Facilities Act, 7 U.S.C. 390D is amended, 1, in subsection C by striking subsection A and inserting subsections A and E, and 2, by adding at the end the following. E, mandatory funding subject to subsections B, C, and D of the funds of the Commodity Credit Corporation. The Secretary shall make available to carry out the competitive grant program under Section 4, $125 million for fiscal year 2026 and each fiscal year thereafter. Section 10605, Energy, Section 9005G1F of the Farm Security and Rural Investment Act of 2002, 7 U.S.C. 8105G1F is amended by striking 2024 and inserting 2031. Section 10606, Horticulture. A, Plant, Pest, and Disease Management and Disaster Prevention, Section 420F of the Plant Protection Act, 7 U.S.C. 7721F is amended, 1 in paragraph 5 by striking and at the end, 2 by redesignating paragraph 6 as paragraph 7, 3 by inserting after paragraph 5 the following: 6, $75 million for each of fiscal years 2018 through 2025, and 4 in paragraph 7 as so redesignated by striking $75 million for fiscal year 2018 and inserting $90 million for fiscal year 2026. B, specialty crop block grants, Section 101.11 of the Specialty Crops Competitiveness Act of 2004, 7 U.S.C. 1621, note, Public Law 108, 465 is amended, 1 in subparagraph D by striking and at the end, 2 by redesignating subparagraph E as subparagraph F, 3 by inserting after subparagraph D the following: E, $85 million for each of fiscal years 2018 through 2025, and 4 in subparagraph F as so redesignated by striking $85 million for fiscal year 2018 and inserting $100 million for fiscal year 2026. C, Organic Production and Market Data Initiative, Section 7407 D1 of the Farm Security and Rural Investment Act of 2002, 7 U.S.C. 5925 CD1 is amended, 1 in subparagraph B by striking and at the end, 2 in subparagraph C by striking the period at the end and inserting and by 3 by adding at the end the following: D, $10 million for the period of fiscal years 2026 through 2031. D, modernization and improvement of international trade technology systems and data collection, Section 2123C4 of the Organic Foods Production Act of 1997, U.S.C. 6522C4 is amended in the matter preceding subparagraph A by striking and $1 million for fiscal year 2024 and inserting $1 million for fiscal years 2024 and 2025 and $5 million for fiscal year 2026. E, National Organic Certification Cost Share Program, Section 10606 D1C of the Farm Security and Rural Investment Act of 2002, 7 U.S.C. 6523 D1C is amended by striking 2024 and inserting 2031. F, Multiple Crop and Pesticide Use Survey, Section 10109C of the Agricultural Improvement Act of 2018, Public Law 115-334, 132, Stat 4907 is amended by adding at the end the following: 3, further mandatory funding of the funds of the Commodity Credit Corporation. The Secretary shall use to carry out the Section $5 million for fiscal year 2026 to remain available until expended. Section 10607, miscellaneous. A, Animal Disease Prevention and Management. Section 10409 AD1 of the Animal Health Protection Act, 7 U.S.C. 8308 AD1 is amended, 1 in subparagraph B. A, in the heading by striking subsequent fiscal years and inserting fiscal years 2023 through 2025, and B, by striking fiscal year 2023 and each fiscal year thereafter and inserting each of fiscal years 2023 through 2025, and 2, by adding at the end the following: C, fiscal years 2026 through 2030 of the funds of the Commodity Credit Corporation. The Secretary shall make available to carry out the Section $233 million for each of fiscal years 2026 through 2030, of which 1, not less than $10 million shall be made available for each such fiscal year to carry out subsection A. 2, not less than $70 million shall be made available for each such fiscal year to carry out subsection B. And 3, not less than $153 million shall be made available for each such fiscal year to carry out subsection C. D, subsequent fiscal years of the funds of the Commodity Credit Corporation. The Secretary shall make available to carry out the section $75 million for fiscal year 2031, each fiscal year thereafter, of which not less than $45 million shall be made available for each of those fiscal years to carry out subsection B. B, Sheep Production and Marketing Grant Program, Section 209C of the Agricultural Marketing Act of 1946, 7 U.S.C. 1627 AC is amended, 1, by striking 2019 and inserting 2019, and 2, by inserting and $3 million for fiscal year 2026 after fiscal year 2024. The C, Pima Agricultural Cotton Trust Fund, Section 12314 of the Agricultural Act of 2014, 7 U.S.C. 2101, note, Public Law 113-79 is amended, 1, in subsection B in the matter preceding paragraph 1 by striking 2024 and inserting 2031, and 2, in subsection H by striking 2024 and inserting 2031. D, Agricultural Wool Apparel Manufacturers Trust Fund, Section 12315 of the Agricultural Act 2014, 7 U.S.C. 7101, note, Public Law 113-79 is amended by striking 2024 each place it appears and inserting 2031. E, Wool Research and Promotion, Section 12316A of the Agricultural Act of 2014, 7 U.S.C. 7101, note, Public Law 113-79 is amended by striking 2024 and inserting 2031. F, Emergency Citrus Disease Research and Development Trust Fund, Section 12605D of the Agricultural Improvement Act of 2018, 7 U.S.C. 7632, note, Public Law 115-334 is amended by striking 2024 and inserting 2031. Title II, Committee on Armed Services, Section 20001, Enhancement of Department of Defense Resources for Improving the Quality of Life for Military Personnel. A, appropriations. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. One, $230,480,000 for restoration and modernization costs under the Marine Corps Barracks 2030 initiative. Two, $119 million for base operating support costs under the Marine Corps. Three, $1 billion for Army, Navy, Air Force, and Space Force sustainment, restoration, and modernization of military unaccompanied housing. $2 billion for the Defense Health Program. 5, $2.9 billion to supplement the basic allowance for housing payable to members of the Army, Air Force, Navy, Marine Corps, and Space Force, notwithstanding Section 403 of Title 37 United States Code. 6, $50 million for bonuses, special pays, and incentive pays for members of the Army, Air Force, Navy, Marine Corps, and Space Force pursuant to Titles 10 and 37 United States Code. 7, $10 million for the defense activity for non-traditional education, supports online academic skills course program for members of the Army, Air Force, Navy, Marine Corps, and Space Force. 8, $100 million for tuition assistance for members of the Army, Air Force, Navy, Marine Corps, and Space Force pursuant to Title 10 United States Code. 9, $100 million for child care fee assistance for members of the Army, Air Force, Navy, Marine Corps, and Space Force under Part 2 of Chapter 88 of Title 10 United States Code. 10, $590 million to increase the temporary lodging expense allowance under Chapter 8 of Title 37 United States Code to 21 days. 11, $100 million for Department of Defense impact aid payments to local educational agencies under Section 2008 of Title 10 United States Code. 12, $10 million for military spouse professional licensure under Section 1784 of Title 10 United States Code. 13, $6 million for Armed Forces Retirement Home Facilities. 14, $100 million for the Defense Community Infrastructure Program. 15, $100 million for Defense Advanced Research Projects Agencies, DARPA, Casualty Care Research, and 16, $62 million for modernization of Department of Defense Child Care Center staffing. B, temporary increase in percentage of value of authorized investment in certain privatized military housing projects. 1, in general, during the period beginning on the date of the enactment of this section and ending on September 30th, 2029, the Secretary concerned shall apply. A, paragraph 1 of subsection C of Section 2875 of Title 10 United States Code by substituting 60% of 33 1/3%, and B, paragraph 2 of such subsection by substituting 60% for 45%. 2, secretary concerned defined. In this subsection, the term secretary concerned has the meaning given such term in Section 101 of Title 10 United States Code. C, temporary authority for acquisition or construction of privatized military unaccompanied housing. Section 2881A of Title 10 United States Code is amended. 1, by striking the heading and inserting temporary authority for acquisition or construction of privatized military unaccompanied housing. 2, by striking Secretary of the Navy each place it appears and inserting secretary concerned. 3, by striking under the pilot projects each place it appears and inserting pursuant to this section. 4, in subsection A, by striking the heading and inserting in general, and B, by striking carry out not more than 3 pilot projects under the authority of this section or another provision of this subchapter to use the private sector, and inserting use the authority under this subchapter to enter into contracts with appropriate private sector entities. 5, in subsection C, by striking privatized housing and inserting privatized housing units. 6, by redesignating subsection F as subsection E, and 7, in subsection E as so redesignated. A, by striking under the pilot programs and inserting under this section, and B, by striking September 30th, 2009 and inserting September 30th, 2029. Section 20002, enhancement of Department of Defense resource for shipbuilding. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $250 million for the expansion of accelerated training and defense manufacturing program. 2, $250 million for United States production of turbine generators for shipbuilding and industrial bases. 3, $450 million for United States additive manufacturing for wire production and machining capacity for shipbuilding and industrial base. 4, $492 million for the next generation shipbuilding techniques. 5, $85 million for United States made steel plate for shipbuilding industrial base. 6, $50 million for machining capacity for naval propellers for shipbuilding industrial base. 7, $110 million for rolled steel and fabrication facility for shipbuilding industrial base. 8, $400 million for expansion of collaborative campus for naval shipbuilding. 9, $450 million for application of autonomy and artificial intelligence to naval shipbuilding. 10, $500 million for the adoption of advanced manufacturing techniques in the shipbuilding industrial base. 11, $500 million for additional dry dock capability. 12, $50 million for the expansion of cold spray repair technologies. 13, $450 million for additional maritime industrial workforce development programs. 14, $750 million for additional supplier development across the naval shipbuilding industrial base. 15, $250 million for additional advanced manufacturing processes across the naval shipbuilding industrial base. 16, $4,600 million for a second Virginia-class submarine in fiscal year 2026. 17, $5,400 million for 2 additional guided missile destroyers, DDG ships. 18, $160 million for advanced procurement of landing ship medium. 19, $1,803,941,000 for procurement of landing ship medium. 20, $295 million for development of a second landing craft utility shipyard and production of additional landing craft utility. 21, $100 million for advanced procurement for light replenishment oiler program. 22, $600 million for the lease or purchase of new ships through the National Defense Sea Lift Fund. 23, $2,725 million for the procurement of TAO oilers. 24, $500 million for cost to complete for rescue and salvage ships. 25, $300 million for production of ship-to-shore connectors. 26, $1,470 million for the implementation of a multi-ship amphibious warship contract. 27, $80 million for accelerated development of vertical launch system reloading at sea. 28, $250 million for expansion of Navy corrosion control programs. 29, $159 million for leasing of ships for Marine Corps operations. 30, $1,534 million for expansion of small unmanned surface vessel production. 31, $2,100 million for development, procurement, and integration of purpose-built medium unmanned surface vessels. 32, $1,300 million for expansion of unmanned underwater vehicle production. 33, $188,360,000 for the development of testing of maritime robotic autonomous systems and enabling technologies. 34, $170 million for the development of a test resource management center, robotic autonomous systems proving ground. 35, $250 million for the development, production, and integration of wave-powered unmanned underwater vehicles. And 36, $150 million for retention of inactive reserve fleet ships. Section 20003, enhancement of Department of Defense resources for integrated air and missile defense. A, next-generation missile defense technologies, in addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $250 million for development and testing of directed energy capabilities by the Undersecretary for Research and Engineering. 2, $500 million for national security space launch infrastructure. 3, $2 billion for air-moving target indicator military satellites. 4, $400 million for expansion of multi-service advanced capability hypersonic test bed program. 5, $5,600 million for development of space-based and boost phase intercept capabilities. 6, $7,200 million for the development, procurement, and integration of military space-based sensors. And 7, $2,550 million for the development, procurement, and integration of military missile defense capabilities. B, Laird Homeland Defense. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $2,200 million for acceleration of hypersonic defense systems. 2, $800 million for accelerated development and deployment of next-generation intercontinental ballistic missile defense systems. 3, $408 million for Army space and strategic missile test range infrastructure restoration and modernization in the United States Indo-Pacific Command Area of Operations west of the international date line. 4, $1,975 million for improved ground-based missile defense radars. And 5, $530 million for the design and construction of Missile Defense Agency missile instrumental range safety ship. Section 20004, enhancement of Department of Defense resources for munitions and defense supply chain resiliency. A, appropriations. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $400 million for the development, production, and integration of Navy and Air Force long-range anti-ship missiles. 2, $380 million for production capacity expansion for Navy and Air Force long-range anti-ship missiles. 3, $490 million for the development, production, and integration of Navy and Air Force long-range air-to-surface missiles. 4, $94 million for the development, production and integration of alternative Navy and Air Force long-range air-to-surface missiles. 5, $630 million for the development, production, and integration of long-range Navy air defense and anti-ship missiles. 6, $688 million for the development, production, and integration of long-range multi-service cruise missiles. 7, $250 million for the production, capacity expansion, and supplier base strengthening of long-range multi-service cruise missiles. 8, $70 million for the development, production, and integration of short-range Navy and Marine Corps anti-ship missiles. 9, $100 million for the development of an anti-ship seeker for short-range Army ballistic missiles. 10, $175 million for production, capacity expansion for next-generation Army medium-range ballistic missiles. 11, $50 million for the mitigation of diminishing manufacturing sources for medium-range air-to-air missiles. 12, $250 million for the procurement of medium-range air-to-air missiles. 13, $225 million for the expansion of production capacity for medium-range air-to-air missiles. 14, $50 million for the development of second sources for components of short-range air-to-air missiles. 15, $325 million for production capacity improvements for air-launched anti-radiation missiles. 16, $50 million for the accelerated development of Army next-generation medium-range anti-ship ballistic missiles. 17, $114 million for the production of Army next-generation medium-range ballistic missiles. 18, $300 million for the production of Army medium-range ballistic missiles. 19, $85 million for the accelerated development of Army long-range ballistic missiles. 20, $400 million for the production of heavyweight torpedoes. 21, $200 million for the development, procurement, and integration of mass-producible autonomous underwater munitions. 22, $70 million for the improvement of heavyweight torpedo maintenance activities. 23, $200 million for the production of lightweight torpedoes. 24, $500 million for the development, procurement, and integration of maritime mines. 25, $50 million for the development, procurement, and integration of new underwater explosives. 26, $55 million for the development, procurement, and integration of lightweight multi-mission torpedoes. 27, $80 million for the production of sono buoys. 28, $150 million for the development, procurement, and integration of air-delivered long-range maritime mines. 29, $61 million for the acceleration of Navy expeditionary loitering munitions deployment. 30, $50 million for the acceleration of one-way attack unmanned aerial systems with advanced autonomy. 31, $1 billion for the expansion of the one-way attack unmanned aerial systems industrial base. 32, $200 million for investments in solid rocket motor industrial base through the Industrial Base Fund established under Section 4817 of Title 10 United States Code. 33, $400 million for investments in the emerging solid rocket motor industrial base through the Industrial Base Fund established under Section 4817 of Title 10 United States Code. 34, $42 million for investments in second sources for large diameter solid rocket motors for hypersonic missiles. 35, $1 billion for the creation of next-generation automated munitions production factories. 36, $170 million for the development of advanced radar depot for repair, testing, and production of radar and electronic warfare systems. 37, $25 million for the expansion of the Department of Defense industrial base policy analysis workforce. 38, $30,300,000 for the repair of Army missiles. 39, $100 million for the production of small and medium ammunition. 40, $2 billion for additional activities to improve the United States stockpile of critical minerals through the National Defense Stockpile Transaction Fund, authorized by Subchapter 3 of Chapter 5 of Title 5 United States Code. 41, $10 million for the expansion of Department of Defense armaments cooperation workforce. 42, $500 million for the expansion of the Defense Exportability Features Program. 43, $350 million for protection of Navy long-range air and missile defense interceptors. 44, $93 million for replacement of Navy long-range air and missile defense interceptors. 45, $100 million for development of a second solid rocket motor source for Navy air defense and anti-ship missiles. 46, $65 million for expansion of production capacity of Missile Defense Agency long-range anti-ballistic missiles. 47, $225 million for expansion of production capacity for Navy air defense and anti-ship missiles. 48, $103,300,000 for expansion of depot-level maintenance facility for Navy long-range air and missile defense interceptors. 49, $18 million for creation of domestic source for guidance section of Navy short-range air defense missiles. 50, $65 million for integration of Army medium-range air and missile defense interceptor with Navy ships. 51, $176,100,000 for production of Army long-range movable missile defense radar. 52, $167 million for accelerated fielding of Army short-range gun-based air and missile defense system. 53, $40 million for development of low-cost alternatives to air and missile defense interceptors. 54, $50 million for acceleration of Army next-generation shoulder-fired air defense system. 55, $91 million for production of Army next-generation shoulder-fired air defense system. 56, $500 million for development, production, and integration of counter unmanned aerial system programs. 57, $350 million for development, production, and integration of non-kinetic counter unmanned aerial systems programs. 58, $250 million for development, production, and integration of land-based counter unmanned aerial systems programs. 59, $200 million for development, production, and integration of ship-based counter unmanned aerial systems programs. 60, $400 million for acceleration of hypersonic strike programs. 61, $167 million for procurement of additional launchers for Army medium-range air and missile defense interceptors. 62, $500,000 for expansion of defense advanced manufacturing techniques. 63, $1 million for establishment of the Joint Energetics Transition Office. 64, $200 million for acceleration of Army medium-range air and missile defense interceptors. 65, $150 million for additive manufacturing for propellant. 66, $250 million for expansion and acceleration of penetrating munitions production. And 67, $50 million for development, procurement, and integration of precision extended range artillery.
B, appropriation. In addition to amounts otherwise available, there is appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, $3.3 billion for grants and purchase commitments made pursuant to the Industrial Base Fund established under Section 4817 of Title 10, United States Code. C, appropriation. In addition to amounts otherwise available, there is appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, $5 billion for investments in critical mineral supply chains made pursuant to the Industrial Base Fund established under Section 4817 of Title 10, United States Code. D, appropriations. In addition to amounts otherwise available, there is appropriated to the Secretary of Defense out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, $500 million to the Department of Defense Credit Program account to carry out the Capital Assistance Program, including loans, loan guarantees, and technical assistance established under Section 149E of Title 10, United States Code for critical minerals and related industries and projects, including related covered technology categories, provided that 1, such amounts are available to subsidize gross obligations for the principal amount of direct loans and total loan principal, any part of which is to be guaranteed, not to exceed $100 billion, and 2, such amounts are available to cover all costs and expenditures as provided under Section 149E5B of Title 10, United States Code. Section 20005, enhancement of Department of Defense resources for scaling low-cost weapons into production. A, appropriations. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, 1, $25 million for the Office of Strategic Capital Global Technology Scout Program. 2, $1.4 billion for the expansion of the Small Unmanned Aerial System Industrial Base. 3, $400 million for the development and deployment of the Joint Fires Network and associated joint battle management capabilities. 4, $400 million for the expansion of advanced command and control tools to combatant commands and military departments. 5, $100 million for the development of shared secured facilities for the Defense Industrial Base. 6, $50 million for the creation of additional Defense Innovation Unit on-ramp hubs. 7, $600 million for the acceleration of strategic capabilities office programs. 8, $650 million for the expansion of mission capabilities office joint prototyping and experimentation activities for military innovation. 9, $500 million for the accelerated development and integration of advanced 5G, 6G technologies for military use. 10, $25 million for testing of simultaneous transmit and receive technology for military spectrum agility. 11, $50 million for the development, procurement, and integration of high-altitude stratospheric balloons for military use. 12, $120 million for the development, procurement, and integration of long-endurance unmanned aerial systems for surveillance. 13, $40 million for the development, procurement, and integration of alternative positioning and navigation technology to enable military operations in contested electromagnetic environments. 14, $750 million for the acceleration of innovative military logistics and energy capability development and deployment. 15, $125 million for the acceleration of development of small, portable, modular nuclear reactors for military use. 16, $1 billion for the expansion of programs to accelerate the procurement and fielding of innovative technologies. 17, $90 million for the development of reusable hypersonic technology for military strikes. 18, $2 billion for the expansion of Defense Innovation Unit ceiling of commercial technology for military use. 19, $500 million to prevent delays in delivery of attributable autonomous military capabilities. 20, $1.5 billion for the development, procurement, and integration of low-cost cruise missiles. 21, $124 million for improvements to Test Resource Management Center artificial intelligence capabilities. 22, $145 million for the development of artificial intelligence to enable one-way attack unmanned aerial systems and naval systems. 23, $250 million for the development of the Test Resource Management Center digital test environment. 24, $250 million for the advancement of the artificial intelligence ecosystem. 25, $250 million for the expansion of Cyber Command artificial intelligence lines of effort. 26, $250 million for the acceleration of the quantum benchmarking initiative. 27, $1 billion for the expansion and acceleration of qualification activities and technical data management to enhance competition in defense industrial base. 28, $400 million for the expansion of the Defense Manufacturing Technology Program. 29, $1,685 million for military cryptographic modernization activities. 30, $90 million for Apex accelerators, the Mentor Protege program, and cybersecurity support to small non-traditional contractors. 31, $250 million for the development, procurement, and integration of Air Force low-cost counter-air capabilities. 32, $10 million for additional Air Force wargaming activities. And 33, $20 million for the Office of Strategic Capital Workforce. B, appropriations. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, $1 billion to the Department of Defense Credit Program account to carry out the Capital Assistance Program, including loans, loan guarantees, and technical assistance established under Section 149E of Title 10 U.S. Code, provided that 1, such amounts are available to subsidize gross obligations for the principal amount of direct loans and total loan principal, any part of which is to be guaranteed not to exceed $100 billion, and 2, such amounts are available to cover all costs and expenditures as provided under Section 149E5B of Title 10 U.S. Code. Section 20006, enhancement of Department of Defense resources for improving the efficiency and cybersecurity of the Department of Defense. In addition to amounts otherwise available, they are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $150 million for business systems replacement to accelerate the audits of the financial statements of the Department of Defense pursuant to Chapter 9A and Section 2222 of Title 10 U.S. Code. 2, $200 million for the deployment of automation and artificial intelligence to accelerate the audits of the financial statements of the Department of Defense pursuant to Chapter 9A and Section 2222 of Title 10 United States Code. 3, $10 million for the improvement of the budgetary and programmatic infrastructure of the Office of the Secretary of Defense, and 4, $20 million for defense cybersecurity programs of the Defense Advanced Research Projects Agency. Section 20007, enhancement of Department of Defense resources for air superiority. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $3,150 million to increase F-15 aircraft production. 2, $361,220,000 to prevent the retirement of F-22 aircraft. 3, $127,460,000 to prevent the retirement of F-15E aircraft. 4, $187 million to accelerate installation of F-16 electronic warfare capability. 5, $116 million for C-17A mobility aircraft connectivity. 6, $84 million for KC-135 mobility aircraft connectivity. 7, $440 million to increase C-130J production. 8, $474 million to increase EA-37B production. 9, $678 million to accelerate the Collaborative Combat Aircraft Program. 10, $400 million to accelerate production of the F-47 aircraft. 11, $750 million to accelerate the F/A-XX aircraft. 12, $100 million for production of advanced aerial sensors. 13, $160 million to accelerate V-22 reliability and safety improvements. 14, $100 million to accelerate production of MQ-25 aircraft. 15, $270 million for development, procurement, and integration of Marine Corps unmanned combat aircraft. 16, $96 million for the procurement and integration of infrared search and track pods. 17, $50 million for the procurement and integration of additional F-15EX fuel tanks. 18, $600 million for the development, procurement, and integration of Air Force long-range strike aircraft. 19, $500 million for the development, procurement, and integration of Navy long-range strike aircraft. Section 20008, enhancement of resources for nuclear forces. A, DoD appropriations. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $2.5 billion for risk reduction activities for the Sentinel Intercontinental Ballistic Missile Program. 2, $4.5 billion only for expansion of production capability of B-21 long-range bomber aircraft and the purchase of aircraft only available through the expansion of production capabilities. 3, $500 million for improvements to the Minuteman III intercontinental ballistic missile system. 4, $100 million for capability enhancements to intercontinental ballistic missile reentry vehicles. 5, $148 million for the expansion of D5 missile motor production. 6, $400 million to accelerate the development of Trident D5 LE-2 submarine-launched ballistic missiles. 7, $2 billion to accelerate the development, procurement, and integration of the nuclear-armed sea-launched cruise missile. 8, $62 million to convert Ohio-class submarine tubes to accept additional missiles not to be obligated before March 1st, 2026. 9, $168 million to accelerate the production of the Survivable Airborne Operations Center program. 10, $65 million to accelerate the modernization of nuclear command, control, and communications. 11, $210,300,000 for the increased production of MH-139 helicopters. And 12, $150 million to accelerate the development, procurement, and integration of military nuclear weapons delivery programs. B, NNSA appropriations. In addition to amounts otherwise available, there are appropriated to the Administrator of the National Nuclear Security Administration for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1. $200 million to perform National Nuclear Security Administration Phase 1 studies pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 2. $540 million to address deferred maintenance and repair needs of the National Nuclear Security Administration pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 3. $1 billion to accelerate the construction of National Nuclear Security Administration facilities pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 4. $400 million to accelerate the development, procurement, and integration of the warhead for the nuclear-armed, sea-launched cruise missile pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 5. $750 million to accelerate primary capability modernization pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 6. $750 million to accelerate secondary capability modernization pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 7. $120 million to accelerate domestic uranium enrichment centrifuge deployment for defense purposes pursuant to Section 3211 of the National Nuclear Security Administration Act, 50 U.S.C. 2401. 8. $10 million for National Nuclear Security Administration evaluation of spent fuel reprocessing technology. And 9. $115 million for accelerating nuclear national security missions through artificial intelligence. Section 20009, enhancement of Department of Defense resources to improve capabilities of United States Indo-Pacific Command. In addition to amounts otherwise available, there are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1. $365 million for Army exercises and operations in the Western Pacific Area of Operations. 2. $53 million for Special Operations Command exercises and operations in the Western Pacific Area of Operations. 3. $47 million for Marine Corps exercises and operations in Western Pacific Area of Operations. 4. $90 million for Air Force exercises and operations in Western Pacific Area of Operations. 5. $532,600,000 for the Pacific Air Force Biennial Large-Scale Exercise. 6. $19 million for the development of naval small craft capabilities. 7. $35 million for military additive manufacturing capabilities in the United States Indo-Pacific Command Area of Operations west of the International Date Line. 8. $450 million for the development of airfields within the area of operations of United States Indo-Pacific Command. 9. $1.1 billion for development of infrastructure within the area of operations of United States Indo-Pacific Command. 10. $124 million for mission networks for United States Indo-Pacific Command. 11. $100 million for the Air Force regionally based cluster preposition base kits. 12. $115 million for exploration and development of existing Arctic infrastructure. 13. $90 million for the accelerated development of non-kinetic capabilities. 14. $20 million for United States Indo-Pacific Command military exercises. 15. $143 million for anti-submarine sonar arrays. 16. $30 million for surveillance and reconnaissance capabilities for United States Africa Command. 17. $30 million for surveillance and reconnaissance capabilities for United States Indo-Pacific Command. 18. $500 million for the development, coordination, and deployment of economic competition effects within the Department of Defense. 19. $10 million for the expansion of Department of Defense workforce for economic competition. 20. $1 billion for offensive cyber operations. 21. $500 million for personnel and operations costs associated with forces assigned to United States Indo-Pacific Command. 22. $300 million for the procurement of mesh network communications capabilities for Special Operations Command Pacific. 23, $850 million for the replenishment of military articles. 24, $200 million for the acceleration of Guam Defense System program. 25, $68 million for the Space Force facilities improvements. 26, $150 million for ground moving target indicator military satellites. 27, $528 million for DARC and Silent Barker military space situational awareness programs. 28, $80 million for Navy Operational Support Division. 29, $1 billion for the X-37B military spacecraft program. 30, $3,650 million for the development, procurement, and integration of United States military satellites and the protection of United States military satellites. 31, $125 million for the deployment, procurement, and integration of military space communications. 32, $350 million for the development, procurement, and integration of military space command and control systems. Section 20010, enhancement of Department of Defense resources for improving the readiness of the Department of Defense. In addition to amounts otherwise available, they are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $1.4 billion for a pilot program on OPN-8 maritime spares and repair pool. 2, $700 million for a pilot program on OPN-8 maritime spares and repair pool for amphibious ships. 3, $2.118 billion for spares and repairs to keep Air Force aircraft mission capable. 4, $1.5 billion for Army depot modernization and capacity enhancement. 5, $2 billion for Navy depot and shipyard modernization and capacity enhancement. 6, $250 million for Air Force depot modernization and capacity enhancement. 7, $1.640 billion for Special Operations Command equipment, readiness and operations. 8, $500 million for National Guard unit readiness. 9, $400 million for Marine Corps readiness and capabilities. 10, $20 million for upgrades to Marine Corps utility helicopters. 11, $310 million for next generation vertical lift, assault, and infrastructure acro medical evacuation aircraft. 12, $75 million for the procurement of anti-lock braking systems for the Army wheeled transport vehicles. 13, $230 million for the procurement of Army wheeled combat vehicles. 14, $63 million for the development of advanced rotary wing engines. 15, $241 million for the development, procurement, and integration of Marine Corps amphibious vehicles. 16, $250 million for the procurement of Army tracked combat transport vehicles. 17, $98 million for additional advanced Army light rotary wing capabilities. 18, $1.5 billion for increased depot maintenance and shipyard maintenance activities. 19, $2.5 billion for Air Force facilities sustainment, restoration, and modernization. 20, $92,500,000 for the completion of robotic combat vehicle prototyping. 21, $125 million for Army operations. 22, $10 million for the Air Force Concepts Development and Management Office. And 23, $320 million for Joint Special Operations Command. Section 20011, improving Department of Defense border support and countering drug missions. In addition to amounts otherwise available, they are appropriated to the Secretary of Defense for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, $1 billion for the deployment of military personnel in support of border operations, operations and maintenance activities in support of border operations, counter-narcotics and counter-transnational criminal organization mission support, the operation of national defense areas and construction in national defense areas, and the temporary detention of migrants on Department of Defense installations in accordance with Chapter 15 of Title 10, United States Code. Section 20012, Department of Defense Oversight, In addition to amounts otherwise available, there is appropriated to the Inspector General of the Department of Defense for fiscal year 2025, out of any money in the Treasury not otherwise appropriated, $10 million to remain available through September 30th, 2029, to monitor Department of Defense activities for which funding is appropriated in this title, including 1. Programs with mutual technological dependencies, 2. Programs with related data management and data ownership considerations, and 3. Programs particularly vulnerable to supply chain disruptions and long lead time components. Section 20013, Military Construction Projects Authorized. A. Authorization of appropriations. Funds are hereby authorized to be appropriated for military construction, land acquisition, and military family housing functions of each military department as defined in Section 101A of Title 10, United States Code, as specified in this title. B. Spending plan. Not later than 30 days after the date of the enactment of this title, the Secretary of each military department shall submit to the Committees on Armed Services of the Senate and House of Representatives a detailed spending plan by project for all funds made available by this title to be expended on military construction projects. Section 20014, Multi-Year Operational Plan. A. In general, not later than 60 days after the date of the enactment of this Act, the Secretary of Defense and the Administrator of the National Nuclear Security Administration shall submit to the Committees on Armed Services of the Senate and the House of Representatives a plan detailing how the funds appropriated to the Department of Defense and the National Nuclear Security Administration under the Act will be spent over the 4-year period ending with fiscal year 2029. B. Quarterly updates. 1. In general, not later than the last day of each calendar quarter beginning during the applicable period, the Secretary of Defense shall submit to the Committees on Armed Services of the Senate and the House of Representatives a report on the plan established under subsection A, including A. Any updates to the plan, B. Progress made in implementing the plan, and C. Any changes in circumstances or challenges in implementing the plan. 2. Applicable period. For purposes of paragraph 1, the applicable period is the period beginning 1 year after the date of the plan required under subsection A is due and ending on September 30th, 2029. C. Reduction in appropriation. 1. In general, in the case of any failure to submit a plan required under subsection A or the report required under subsection B by the date specified in paragraph 2, the amounts made available to the Department of Defense under this Act shall be reduced by $100,000 for each day after such specified date that the report has not been submitted to Congress. 2. Specified date. For purposes of the reduction in appropriations under paragraph 1, the specified date is the date that is 60 days after the date the plan or report is required to be submitted under subsection A or B, as the case may be. Title 3, Committee on Banking, Housing, and Urban Affairs. Section 30001, Funding Cap for the Bureau of Consumer Financial Protection. Section 1017A2A3 of the Consumer Financial Protection Act 2010, 12 U.S.C. 5497A2A3 is amended by striking 12 and inserting 6.5. Section 30002, Rescission of Funds for Green and Resilient Retrofit Program for Multifamily Housing. The unobligated balances of amounts made available under Section 30002A of the Act entitled An Act to Provide for Reconciliation pursuant to Title II of S. Con. Res. 14, approved August 16, 2022, Public Law 117, 169, 136, Statute 2027, are rescinded. Section 30003, Securities and Exchange Commission Reserve Fund. A. In general, Section 4 of the Securities Exchange Act of 1934, 15 U.S.C. 78D is amended, 1, by striking subsection 1, and 2, by redesignating subsections J and K as subsections I and J, respectively. B. Technical and conforming amendment. Section 21FG2 of the Securities Exchange Act of 1934, 15 U.S.C. 78U G 6.2 is amended to read as follows. A. Use of fund. The fund shall be available to the Commission without further appropriation or fiscal year limitation for paying awards to whistleblowers as provided in subsection B. C. Transition provision. during the period beginning on the date of enactment of this Act and ending on October 1st, 2025, the Securities and Exchange Commission may expend amounts in the Securities and Exchange Commission Reserve Fund that were obligated before the date of enactment of this Act for any program, project, or activity that is ongoing as of the day before the date of enactment of this Act, in accordance with subsection 1 of subsection 4 of the Securities Exchange Act of 1934, 15 U.S.C. 78D, as in effect on the day before the date of enactment of this Act. D, transfer of remaining amounts. Effective on October 1st, 2025, the obligated and unobligated balances of amounts in the Securities and Exchange Commission Reserve Fund shall be transferred to the general fund of the Treasury. E, closing of account. For the purposes of Section 1555 of Title 31, United States Code, the Securities and Exchange Commission Reserve Fund shall be considered closed and thereafter shall not be available for obligation or expenditure for any purpose upon execution of the transfer required under subsection D. Section 30004, Appropriations for Defense Production Act. In addition to amounts otherwise available, there is appropriated for fiscal year 2025, out of amounts not otherwise appropriated, $1 billion to remain available until September 30th, 2027, to carry out the Defense Production Act, 50 U.S.C. 4501. Title IV, Committee on Commerce, Science, and Transportation.
Section 40001, Coast Guard Mission Readiness. A, in general, Chapter 11 of Title 14 United States Code is amended by adding at the end the following. Subchapter 5, Coast Guard Mission Readiness. Section 1181, Special Appropriations. In addition to amounts otherwise available, there is appropriated to the Coast Guard for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $24,593,500,000,000 to remain available until September 30th, 2029, notwithstanding paragraphs 1 and 2 of Section 1105A and Sections 1131, 1132, 1133, and 1156 to use expedited processes to procure or acquire new operational assets and systems, to maintain existing assets and systems, to design, construct, plan, engineer, and improve necessary shore infrastructure, and to enhance operational resilience for monitoring, search and rescue, interdiction, hardening of maritime approaches, and navigational safety, of which $1,142,500,000,000 is provided for procurement and acquisition of fixed-wing aircraft, equipment related to such aircraft, and training simulators and program management for such aircraft to provide for security of the maritime border. $2,283,000,000,000 is provided for procurement and acquisition of rotary wing aircraft, equipment related to such aircraft, and training simulators and program management for such aircraft to provide for security of the maritime border. 3, $266 billion is provided for procurement and acquisition of long-range unmanned aircraft and base stations, equipment related to such aircraft and base stations, and program management for such aircraft and base stations to provide for security of the maritime border. 4, $4,300,000,000,000 is provided for procurement of offshore patrol cutters, equipment related to such cutters, and program management for such cutters to provide operational presence and security of the maritime border for the interdiction of persons and controlled substances. 5, $1 trillion is provided for procurement of fast response cutters, equipment related to such cutters, and program management for such cutters to provide operational presence and security of the maritime border for interdiction of persons and controlled substances. 6, $4.3 trillion is provided for procurement of polar security cutters, equipment related to such cutters, and program management for such cutters to ensure timely presence of the Coast Guard in the Arctic and Antarctic regions. 7, $3.5 trillion is provided for procurement of Arctic security cutters, equipment related to such cutters, and program management for such cutters to ensure timely presence of the Coast Guard in the Arctic and Antarctic regions. 8, $816 billion is provided for procurement of light and medium ice-breaking cutters and equipment related to such cutters from shipyards that have demonstrated success in the cost-effective application of design standards and in delivering on schedule and within budget vessels of size and tonnage that are not less than the size and tonnage of the cutters described in this paragraph, and for program management for such cutters to expend domestic icebreaking capacity. 9, $126 billion is provided for procurement of waterways, commerce cutters, equipment related to such cutters, and program management for such cutters to support aids to navigation, waterways, and coastal security, and to search and rescue in inland waterways. 10, $4.379 trillion is provided for design, planning, engineering, recapitalization, construction, rebuilding, and improvement of, and program management for shore facilities, of which A, $425 billion is provided for design, planning, engineering, construction of, and program management for 1, the enlisted boot camp barracks and multi-use training center, and 2, other related facilities at the enlisted boot camp. B, $500 billion is provided for 1, construction, improvement, and dredging of the Coast Guard yard, and 2, acquisition of a floating dry dock for the Coast Guard yard. C, not more than $2,729,500 million is provided for home ports and hangars for cutters and aircraft for which funds are appropriated under paragraph 1 through 9, and D, $300 billion is provided for home porting of the existing polar icebreaker commissioned into service in 2025. 11, $2.2 trillion is provided for aviation cutter and shore facility depot maintenance and maintenance of command, control, communication, computer, and cyber assets. 12, $170 billion is provided for improving maritime domain awareness on the maritime border at United States ports and land-based facilities and in the cyber domain. And 13, $75 billion is provided for provided to contract the services of acquire or procure autonomous maritime systems. B, technical and conforming amendment. The analysis for Chapter 11 of Title 14 United States Code is amended by adding at the end the following. Subchapter 5, Coast Guard Mission Readiness, 1181, Special Appropriations. Section 4002, Spectrum Auctions. A, definitions. In this section, 1, Assistant Secretary. The term Assistant Secretary means the Assistant Secretary of Commerce for Communications and Information. 2, Commission. The term Commission means the Federal Communications Commission. 3, Covered Band. The term covered band, A, except as provided in subparagraph B, means the band of frequencies between 1.3 gigahertz and 10.5 gigahertz, and B, does not include 1, the band of frequencies between 3.1 gigahertz and 3.45 gigahertz for purpose of auction, reallocation, modification, or withdrawal, or 2, the band of frequencies between 7.4 gigahertz and 8.4 gigahertz for purpose of auction, reallocation, modification, or withdrawal. 4, full power commercial licensed use cases. The term full power commercial licensed use cases means flexible use wireless broadband services with base station power levels sufficient for high power, high density, and wide area communication mobile services consistent with the service rules under Part 27 of Title 47, Code of Federal Regulations, or any successor regulations for wireless broadband deployment through the covered band. B, general auction authority. 1, amendment, section 309(1)11 of the Communications Act of 1934, 47 U.S. Code 309(1)11 is amended by striking, grant a license or permit under this subsection shall expire March 9, 2023, and all that follows, and inserting the following, complete a system of competitive bidding under this subsection shall expire September 30th, 2034, except that with respect to the electromagnetic spectrum, A, between frequencies of 3.1 gigahertz and 3.45 gigahertz, such authority shall not apply, and B, the frequencies of 7.4 gigahertz and 8.4 gigahertz, such authority shall not apply. 2, spectrum auctions. The Commission shall grant licenses through systems of competitive bidding before the expiration of the general auction authority of the Commission under Section 309(1)11 of the Communications Act of 1934, 47 U.S.C. 309(1)11 as amended by paragraph 1 of this subsection for not less than 300 megahertz, including by completing a system of competitive bidding not later than 2 years after the date of enactment of this act for not less than 100 megahertz in the band between 3.9 gigahertz and 4.2 gigahertz. C, identification for reallocation. In general, the Assistant Secretary, in consultation with the Commission, shall identify 500 megahertz of frequencies in the covered band for reallocation to non-federal use, shared federal and non-federal use, or a combination thereof, for full power commercial licensed use cases that, A, as of the date of enactment of this act are allocated for federal use, and B, shall be in addition to the 300 megahertz of frequencies for which the Commission grants licenses under subsection B2. 2, schedule. The Assistant Secretary shall identify the frequencies under paragraph 1 according to the following schedule. A, not later than 2 years after the date of enactment of this act, the Assistant Secretary shall identify not less than 200 megahertz of frequencies within the covered band. B, not later than 4 years after the date of enactment of this act, the Assistant Secretary shall identify any remaining bandwidth required to be identified under paragraph 1. 3, required analysis. A, in general, in determining under paragraph 1 which specific frequencies within the covered band to reallocate, the Assistant Secretary shall determine the feasibility of the reallocation of frequencies. B, requirements. In conducting the analysis of subparagraph A, the Assistant Secretary shall assess the net revenue potential, relocation or sharing costs as applicable, and the feasibility of reallocating specific frequencies with the goal of identifying the best approach to maximize net proceeds of system of competitive bidding for the Treasury, consistent with Section 309(1) of the Communication Act of 1934, 47 U.S. Code 309(1). D, auction. The Commission shall grant licenses for the frequencies identified for a reallocation under subsection C through systems of competitive bidding in accordance with the following schedule. 1, not later than 4 years after the date of enactment of this act, the Commission shall, after notifying the Assistant Secretary, complete one or more systems of competitive bidding for not less than 200 megahertz of the frequencies. 2, not later than 8 years after the date of enactment of this act, the Commission shall, after notifying the Assistant Secretary, complete one or more systems of competitive bidding for any frequencies under subsection C that remain to be auctioned after compliance with paragraph 1 of this subsection. E, limitation. The President shall modify or withdraw any frequencies proposed for reallocation under this section not later than 60 days before the commencement of a system of competitive bidding scheduled by the Commission with respect to that frequency. If the President determines that such modification or withdrawal is necessary to protect the national security of the United States. F, appropriation. In addition to amounts otherwise available, there is an there is appropriated to the Department of Commerce for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $50 billion to remain available through September 30th, 2034 to provide additional support for the Assistant Secretary to, 1, conduct a timely spectrum analysis of the bands of frequencies, A, between 2.7 gigahertz and 2.9 gigahertz, B, between 4.4 gigahertz and 4.9 gigahertz, C, between 7.25 gigahertz and 7.4 gigahertz, and 2, publish a biennial report with the last report to be published not later than June 30th, 2034 on the value of all spectrum used by federal entities as defined in Section 113(1) of the National Telecommunication and Information Administration Organization Act 47 U.S.C. 923(1) that assesses the value of bands of frequencies of increments of not more than 100 megahertz. Section 40003, Air Traffic Control Improvements. A, in general, for the purpose of the acquisition, construction, sustainment, and improvement of facilities and equipment necessary to improve or maintain aviation safety, in addition to amounts otherwise made available, there is appropriated to the Administrator of the Federal Aviation Administration for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. 1, $4,750 billion for telecommunications and infrastructure modernization and system upgrades. $3 trillion for radar system replacement, $500 billion for runway safety technologies, runway lighting systems, airport surface surveillance technologies, and to carry out Section 347 of the FAA Reauthorization Act of 2024, for $300 billion for enterprise information systems, display systems, 5, $80 billion to acquire and install not less than 50 automated weather observing systems, to acquire and install not less than 60 visual weather observing systems, to acquire and install not less than 64 weather camera sites, and to acquire and install weather stations. 6, $40 billion to carry out Section 44745 of Title 49 United States Code, except for the activities described in paragraph 5. 7, $1,900 billion for necessary actions to construct a new air route traffic control center in the subsection referred to as ARTCC, provided that not more than 2% of such amount is used for planning or administrative purposes, provided further that at least 3 existing ARTCCs are divested and integrated into the newly constructed ARTCC. 8, $100 billion to conduct an ARTCC realignment and consolidation effort under which at least 10 existing ARTCCs are closed or consolidated to facilitate recapitalization of ARTCC facilities owned and operated by the Federal Aviation Administration. 9, $1 trillion to support recapitalization and consolidation of terminal radar approach control facilities. In this subsection, referred to as TRACONs, the analysis of identification of TRACONs for divestment, consolidation, or integration, planning, site selection, facility acquisition, and transition activities and other appropriate activities for carrying out such divestment, consolidation, or integration, and the establishment of brand new TRACONs. 10, $350 billion for unstaffed infrastructure and replacement. 11, $50 billion to carry out Section 961 of FAA Reauthorization Act of 2024. 12, $300 billion to carry out Section 619 of the FAA Reauthorization Act of 2024. 13, $50 billion to carry out Section 621 of the FAA Reauthorization Act of 2024 and to deploy remote tower technology in untowered airports. 14, $100 billion for air traffic control advanced training technologies. B, quarterly reporting, not later than 180 days after the date of enactment of this act, and every 90 days thereafter, the Administrator of the Federal Aviation Administration shall submit to Congress a report that describes any expenditures under this section. Section 40004, Space Launch and Reentry Licensing and Permitting User Fees. A, in general, Chapter 509 of Title 51, United States Code, is amended by adding at the end of the following new section. Section 50924, Space Launch and Reentry Licensing and Permitting User Fees. A, fees. 1, in general, the Secretary of Transportation shall impose a fee which shall be deposited in the account established under subsection B on each launch or reentry carried out under a license or permit issue under Section 50904 during 2026 or a subsequent year, in an amount equal to the lesser of A, the amount specified in paragraph 2 for the year involved per pound of the weight of the payload, or B, the amount specified in paragraph 3 for the year involved. 2, paragraph 2, specified amount. The amount specified in this paragraph is A, for 2026, 25 cents, B, for 2027, 35 cents, C, for 2028, 50 cents, D, for 2029, 60 cents, E, for 2030, 75 cents, F, for 2031, $1, G, for 2032, $1.25, C, for 2033, $1.50, and I, for 2034, and each subsequent year, the amount specified in this paragraph for the previous years increased by the percentage increase in the Consumer Price Index for all urban consumers, all items United States city average over the previous year. 3, paragraph 3, specified amount. The amount specified in this paragraph is A, for 2026, $30,000, B, for 2027, $40,000, C, for 2028, $50,000, D, for 2029, $75,000, E, for 2030, $100,000, F, for 2031, $125,000, G, for 2032, $170,000, H, for 2033, $200,000, and I, for 2034, and each subsequent year, the amount specified in this paragraph for the previous year increased by the percentage increase in the Consumer Price Index for all urban consumers, all items United States city average over the previous year. B, Office of Commercial Space Transportation Launch and Reentry Licensing and Permitting Fund. There is established in the Treasury of the United States a separate account which shall be known as the Office of Commercial Space Transportation Launch and Reentry Licensing and Permitting Fund for the purposes of expenses of the Office of Commercial Space Transportation of the Federal Aviation Administration and to carry out Section 603B of the FAA Reauthorization Act of 2024. 70% of the amounts deposited into the fund shall be available for such purposes and shall be available without further appropriation and without fiscal year limitations. B, clerical amendment. The table of sections for Chapter 509 of Title 51 United States Code is amended by inserting after the item relating to Section 50923 the following. 50924, Space Launch and Reentry Licensing and Permitting User Fees. Section 40005, Mars Missions, Artemis Missions, and Moon to Mars Program. In general, Chapter 203 of Title 51 United States Code is amended by adding at the end of the following. Section 20306, Special Appropriations for Mars Missions, Artemis Missions, and Moon to Mars Program. A, in general, In addition to amounts otherwise available, there is appropriated to the administration for the fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $9,995 billion to remain available until September 30th, 2032 to use as follows. $700 billion to be obligated not later than fiscal year 2026 for the procurement using a competitively bid firm fixed price contract with the United States commercial provider as defined in section 501017 of a high-performance Mars telecommunications orbiter. A, that one is capable of providing robust continuous communication for a Mars sample return mission as described in section 4323C of the National Aeronautics and Space Transition Authorization Act of 2017, 51 U.S. Code 20302, note Public Law 115-10. And two, future Mars surface, orbital, and human exploration missions. Two, supports autonomous operations, onboard processing, and extended mission duration capabilities. And three, is selected from among the commercial proposals that one, receive funding from the administration in fiscal year 2024 or 2025 for commercial design studies for Mars sample returns, and two, proposed a separate, independently launched Mars telecommunications orbiter supporting an end-to-end Mars sample return mission, and B, which shall be delivered to the administration not later than December 31st, 2028. Two, $2,600 billion to meet the requirements of Section 20302A using the program of record known as of the date of the enactment of this section as Gateway and as described in Section 10811B2B4 of the National Aeronautics and Space Administration Authorization Act of 2022, 51 U.S.C. 20302, note Public Law 117-167, of which not less than $750 billion shall be obligated for each of fiscal years 2026, 2027, and 2028. Three, $4,100 billion for expenses related to meeting the requirements of Section 10812 of the National Aeronautics and Space Administration Authorization Act of 2022, 5 U.S. Code 2031301, Public Law 117-167, for the procurement, transportation, integration, operation, and other necessary expenses of the Space Launch System for Artemis Mission 4 and 5, of which not less than $1,025 billion shall be obligated for each of fiscal years 2026, 2027, 2028, 2029. Four, $20 billion for expenses related to the continued procurement of the multipurpose crew vehicle described in Section 303 of the National Aeronautics and Space Administration Authorization Act of 2020, 42 U.S. Code 18323, known as the Orion, for use with the Space Launch System on the Artemis 4 mission and reuse in subsequent Artemis missions, of which not less than $20 billion shall be obligated not later than fiscal year 2026. 5, $1,250 billion for expenses related to the operation of the International Space Station and for the purpose of meeting the requirements under Section 503A of the National Aeronautics and Space Administration Authorization Act of 2010, 42 U.S.C. 18353A, of which not less than $250 billion shall be obligated for such expenses for each of fiscal years 2025, 2026, 2027, 2028, and 2029. 6, $1 trillion for infrastructure improvements at the manned spaceflight centers of the administration, of which not less than A, $120 billion shall be obligated not later than fiscal year 2026 for the construction, revitalization, recapitalization, and other infrastructure projects and improvements at the center described in Executive Order 12641, 53 Federal Register 18816, related to designating certain facilities of the National Aeronautics and Space Administration in the state of Mississippi as the John C. Stennis Space Center. B, $250 billion shall be obligated not later than fiscal year 2026 for construction, revitalization, recapitalization, and other infrastructure projects and improvements at the center described in Executive Order 11129, 28 Federal Register 12787, relating to designating certain facilities in the National Aeronautics and Space Administration and of the Department of Defense in the state of Florida at the John F. Kennedy Space Center. C, $300 billion shall be obligated not later than fiscal year 2026 for construction, revitalization, recapitalization, and other infrastructure projects and improvements at the center described in the joint resolution entitled Joint Resolution to Designate the Manned Spacecraft Center in Houston, Texas as the Lyndon B. Johnson Space Center in honor of the late president, approved February 17, 1973, Public Law 93-8, 87, Statute 7. D, $100 billion shall be obligated not later than fiscal year 2026 for construction, revitalization, recapitalization, and other infrastructure projects and improvements at the center described in Executive Order 10870, 25 Federal Register 2197, relating to designating facilities of the National Aeronautics and Space Administration in Huntsville, Alabama as the George C. Marshall Space Flight Center. E, $300 billion shall be obligated not later than fiscal year 2026 for construction, revitalization, recapitalization, and other infrastructure projects and improvements at the Michaud Assembly Facility in New Orleans, Louisiana. And F, $85 billion shall be obligated to carry out subsection B, of which not less than $5 million shall be designated for the transportation of the space vehicle described in that subsection, with the remainder transferred not later than the date, that is 18 months after the date of enactment of this section, and entity designated under the subsection for the purpose of constructing a facility to house the space vehicle referred to in that subsection. 7, $325 billion to fulfill contract number 80JSC024CA002 issued by the National Aeronautics and Space Administration on June 26, 2024, space vehicle transfer in general, not later than 30 days after the date of enactment of this section. The administrator shall identify the space described in paragraph 2 to be
B, placed on public exhibition at an entity within the metropolitan statistical area where such center is located. 2, space vehicle described. A space vehicle described in this paragraph is a vessel that A, has flown into space, B, has carried astronauts, and C, is selected with the concurrence of an entity designated by the administrator. 3, transfer. A, in general, not later than 18 months after the date of the enactment of this section, the space vehicle identified under paragraph 1 shall be transferred to an entity designated by the administrator. B, title, not later than 1 year after the date on which a space vehicle is identified under paragraph 1, the federal government shall, as applicable, transfer the title to the space vehicle to the entity designated by the administrator. C, responsibility. The transfer under this paragraph shall be carried out under the administrator or acting administrator. C, obligation of funds. Funds appropriated under subsection A shall be obligated as follows. 1, not less than 50% of the total funds in subsection A shall be obligated not later than September 30th, 2028. 2, 100% of funds shall be obligated not later than September 30th, 2029. 3, all associated outlays shall occur not later than September 30th, 2034. B, clerical amendment. The table of sections for Chapter 203 of Title 51 United States Code is amended by adding at the end the following: 20306, Special Appropriations for Mars Missions, Artemis Missions, and Moons to Mars Program. Section 40006, corporate average fuel economy civil penalties. A, in general, Section 32912 of Title 49 United States Code is amended. 1, in subsection B, in the matter preceding paragraph 1 by striking $5 and inserting $0, and 2, in subsection C1B by striking $10 and inserting $0. B, effect applicability. The amendments made by subsection A shall 1, take effect on the date of the enactment of this section, and 2, apply to all model years of manufacture for which the Secretary of Transportation has not provided a notification pursuant to Section 32903B2B of Title 49 United States Code, specifying the penalty due for the average fuel economy of that manufacturer being less than the applicable standard prescribed under Section 32902 of that title. Section 40007, payments for lease of metropolitan Washington airports. Section 49104B of Title 49 United States Code is amended to read as follows. B, payments. 1, in general, subject to paragraph 2, under the lease, the airport's authority must pay to the general fund of the Treasury annually an amount computed using the GNP price deflator, A, during the period from 1987 to 2026, equal to $3 million in 1987 dollars, and B, for 2027 and subsequent years, equal to $15 million in 2027 dollars. 2, renegotiation. The Secretary and Airports Authority shall renegotiate the level of lease payments at least once every 10 years to ensure that in no year the amount specified in paragraph 1B is less than $15 million in 2027 dollars. Section 40008, rescission of certain amounts for the National Oceanic and Atmospheric Administration. Any unobligated balances of amounts appropriated or otherwise made available by sections 40001, 40002, 40003, and 40004 of Public Law 117-169, 136-2028 are hereby rescinded. Section 40009, reduction in annual transfer to Travel Promotion Fund. Subsection D2B of the Travel Promotion Act of 2009, 22 U.S.C. 2131 D2B is amended by striking $100 million and inserting $20 million. Section 40010, treatment of unobligated funds for alternative fuel and low emissions aviation technology. Out of the amounts made available in Section 40007A of Title IV of Public Law 117-169, 49 U.S.C. 44504 note, any obligated balances of such amounts are hereby rescinded. Section 40011, rescission of amounts appropriated to Public Wireless Supply Chain Innovation Fund. Of the unobligated balances of amounts made available under Section 106A of the CHIPS Act of 2022, Public Law 117-167, 136-1392, $850 million are permanently rescinded. Section 40012, support for artificial intelligence under the Broadband Equity, Access, and Deployment Program. A, in general, Section 60102 of Division F of Public Law 117-58, 47 U.S.C. 1702 is amended. 1, in subsection A2, A, by redesignating subparagraphs B through N as subparagraphs F through R, respectively. B, by redesignating subparagraph A as subparagraph D. C, by inserting before subparagraph D as so redesignated the following. A, artificial intelligence. The term artificial intelligence has the meaning given the term in Section 5002 of the National Artificial Intelligence Initiative Act of 2020, 15 U.S.C. 9401. B, artificial intelligence model. The term artificial intelligence model means a software component of an information system that implements artificial intelligence technology and uses computational, statistical, or machine learning techniques to produce outputs from a defined set of inputs. C, artificial intelligence system. The term artificial intelligence system means any data system, software, hardware, application, tool, or utility that operates in whole or in part using artificial intelligence. D, by inserting after subparagraph D as so redesignated the following. E, automated decision system. The term automated decision system means any computational process derived from machine learning, statistical modeling, data analytics, or artificial intelligence that issues a simplified output, including a score, classification, or recommendation, to materially influence or replace human decision-making. And E, by striking subparagraph O as so redesignated and inserting the following. O, project. The term project means an undertaking by a sub-grantee under this section to construct and deploy infrastructure for the provision of 1, broadband services, or 2, artificial intelligence models, artificial intelligence systems, or automated decision systems. 2, in subsection B, by adding at the end the following. 5, appropriation for fiscal year 2025. A, in general, in addition to any amounts otherwise appropriated to the program, there is appropriated to the Assistant Secretary for fiscal year 2025 out of any funds in the Treasury not otherwise appropriated, $500 million to remain available until expended to carry out the program. B, set aside for artificial intelligence infrastructure master services agreements of the amount appropriated under subparagraph A, $25 million shall be used by the Assistant Secretary for the purpose of negotiating master service agreements on behalf of subgrantees of an eligible entity or political subdivision to enable access to quantity purchasing and licensing discounts for the construction, acquisition, and deployment of infrastructure, for the provision of artificial intelligence models, artificial intelligence systems, or automated decision systems funded under this section. 3, in subsection F, A in paragraph 5 by striking and at the end, B by redesignating paragraph 6 as paragraph 7, and C by inserting after paragraph 5 the following. 6, the construction and deployment of infrastructure for the provisions of artificial intelligence models, artificial intelligence systems, or automated decision systems, and 4, in subsection G3 by striking subparagraph B and inserting the following. B, may, in addition to other authority under applicable law, deobligate grant funds awarded to an eligible entity that 1, violates paragraph 2, 2, demonstrates an insufficient level of performance or wasteful or fraudulent spending as defined in advance by the Assistant Secretary, or 3, if obligated, any funds made available under subsection B5A is not in compliance with subsection Q or R, and 5, in subsection J1, A in subparagraph A, 1 in clause 3 by striking and at the end, 2 by redesignating clause 4 as clause 5, and 3 by inserting after clause 3 the following. 4, certifies that the eligibility entity of obligated any funds made available under subsection B5A is compliance with subsections Q and R, and B in subparagraph B, 1 in clause 3 by striking and at the end, 2 by redesignating clause 4 as clause 5, and 3 by inserting after clause 3 the following. 4, certifies that the eligibility entity of obligated any funds made available under subsection B5A is in compliance with subsections Q and R, and C in subparagraph C, 1 by redesignating clauses 4 and 5 as clauses 5 and 6 respectively, 2 by inserting after clause 3 the following. 4, certifies that the eligibility entity, if obligated, any funds made available under subsection B5A is in compliance with subsections Q and R, and 6, by adding at the end the following. P, receipt of funds conditioned on temporary pause and efficiencies. On and after the date of the enactment of this subsection, no funds made available under subsection B5A may be obligated to an eligible entity or political subdivision thereof that is not in compliance with subsections Q and R. Q, temporary pause. 1, in general, except as provided in paragraph 2, no eligible entity or political subdivision thereof to which funds made available under subsection B5A are obligated on or after the date of enactment of this subsection may enforce during the 10-year period beginning on the date of enactment of this subsection any law or regulation that eligible entity or political subdivision thereof limiting, restricting, or otherwise regulating artificial intelligence models, artificial intelligence systems, or automated decision systems entered into interstate commerce. 2, rule of construction. Paragraph 1 may not be construed to prohibit the enforcement of any law or regulation. A, the primary purpose and effect of which is to 1, remove legal impediments to or facilitate the deployment or operation of an artificial intelligence model, artificial intelligence system, or automated decision system. Or 2, streamline licensing, permitting, routing, zoning, procurement, or reporting procedures in a manner that facilitates the adoption of artificial intelligence models, artificial intelligence systems, or automated decision systems. Or B, that does not impose any substantive design, performance, data holding, documentation, civil liability, taxation fee, or other requirement of artificial intelligence models, artificial intelligence systems, or automated decision systems, unless that requirement is imposed under 1, federal law, 2, a general applicable law, such as a body of common law, and C, that does not impose a fee or bond unless 1, the fee or bond is reasonable and cost-based, and 2, under the fee or bond, artificial intelligence models, artificial intelligence systems, and automated decision systems are treated in the same manner as other models and systems that perform comparable functions. R, master service agreements. An eligible entity or political subdivision thereof to which funds made available under subsection B5A are obligated on or after the date of the enactment of this subsection shall certify to the Assistant Secretary either that 1, each subgrantee of the eligible entity or political subdivision is utilizing applicable master service agreements negotiated using amounts made available under subsection B5B, or 2, each contract, license, purchase order, or service agreement entered into, procured, or made by a subgrantee of the eligible entity or political subdivision for purposes described in subsection B5B is at least as cost-effective as the terms of executable master services agreements, as applicable, negotiated by the Assistant Secretary using amounts made available under subsection B5B. B, technical conforming amendments. Section 60102A1 of Division F of Public Law 117-58, 47 U.S.C. 1702A1 is amended, 1, in subparagraph B by striking a project and inserting a project described in subsection A2OI, and 2, in subparagraph D by striking a project and inserting a project described in subsection A2OI. Title 5, Committee on Energy and Natural Resources. Subtitle A, Oil and Gas Leasing. Section 50101, Onshore Oil and Gas Leasing. A, Repeal of Inflation Reduction Act provisions. 1, onshore oil and gas royalty rates, subsection A of section 50262 of Public Law 117-169-136.2056 is repealed, and provision of law amended or repealed by that subsection is restored or revived as if the subsection had not been enacted into law. 2, non-competitive leasing. Subsection E of section 50262 of Public Law 117-169-136.2057 is repealed, and any provision of law amended or repealed by that subsection is restored or revived as if the subsection had not been enacted into law. B, requirement to immediately resume onshore oil and gas leases. 1, in general, the Secretary of the Interior shall immediately resume quarterly onshore oil and gas lease sales in compliance with the Mineral Leasing Act 30 U.S.C. 181 et sec. 2, requirement, the Secretary of the Interior shall, A, that any oil and gas lease required under paragraph 1 is conducted immediately on completion of an applicable scoping, public comment, and environmental analysis requirements under the Mineral Leasing Act 30 U.S.C. 181 et sec. and the National Environmental Policy Act of 1965, 42 U.S.C. 4321, and B, that the process described in subparagraph A are conducted in a timely manner to ensure compliance with subsection B1. 3, lease of oil and gas lands. Section 17B1A of the Mineral Leasing Act 30 U.S.C. 226B1A, as amended by subsection A, is amended by inserting, for purposes of the previous sentence, the term eligible land means all lands that are subject to leasing under this act and are not excluded from leasing by statutory prohibition. And the term available with respect to eligible lands means those that have been designated as open for leasing under a land use plan developed under Section 202 of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1712, and that have been nominated for leasing through the submission of an expression of interest, are subject to drainage in the absence of leasing, or are otherwise designated as available pursuant to regulations adopted by the Secretary after sales are necessary. C, quarterly lease sales. 1, in general, in accordance with the Mineral Leasing Act, 30 U.S.C. 181, each fiscal year the Secretary of the Interior shall conduct a minimum of 4 oil and gas lease sales of available land in each of the following states: A, Wyoming, B, New Mexico, C, Colorado, D, Utah, E, Montana, F, North Dakota, G, Oklahoma, H, Nevada, I, Alaska. 2, requirement. In conducting a lease sale under paragraph 1 in a state described in that paragraph, the Secretary of the Interior, A, shall offer not less than 50% of available parcels nominated for oil and gas development under the applicable resource management plan in effect for relevant Bureau of Land Management resource management areas within the applicable state, and B, shall not restrict the parcels offered to one Bureau of Land Management field office within the applicable state unless all nominated parcels are located within the same Bureau of Land Management field office. 3, replacement sales. The Secretary of the Interior shall conduct a replacement sale during the same fiscal year if A, a lease sale under paragraph 1 is canceled, delayed, or deferred, including for a lack of eligible parcels, or B, during a lease sale under paragraph 1, the percentage of acreage that does not receive a bid is equal to or greater than 25% of the acreage offered. D, Mineral Leasing Act reforms. Section 17 of the Mineral Leasing Act, 30 U.S.C. 226, as amended by subsection A, is amended. 1, by striking the section designation and all that follows through the end of subsection A and inserting the following. Section 17, leasing of oil and gas parcels. A, leasing authorized. 1, in general, any parcel of land subject to disposition under this act that is known or believed to contain oil or gas deposits shall be made available for leasing subject to paragraph 2 by the Secretary of the Interior not later than 18 months after the date of the receipt of the Secretary of an expression of interest in the leasing applicable parcel of land available for disposition under this section. If the Secretary determines that the parcel of land is open to oil or gas leasing under the approved resource management plan applicable to the planning area in which the parcel of land is located, that is in effect on the date on which the expression of interest was submitted to the Secretary, referred to in this subsection as the approved resource management plan. 2, resource management plans. A, lease and terms and conditions. A lease issued by the Secretary under the section with respect to applicable parcel of land made available for leasing under paragraph 1. 1 shall be subject to the terms and conditions of the approved resource management plan, and 2 may not require any stipulations or mitigation requirements not included in the approved resource management plan. B, effective amendment. The initiation of an amendment to an approved resource management plan shall not prevent or delay the Secretary from making the applicable parcel of land available for leasing in accordance with the approved resource management plan if the other requirements in this section have been met as determined by the Secretary's. 2, in subsection P by adding at the end the following. 4, term. A permit to drill approved under this section shall be valid for a single, non-renewable 4-year period beginning on the date that the permit to drill is approved. And 3, by striking subsection Q and inserting the following. Q, commingling of production. The Secretary of Interior shall approve applications allowing for the commingling of production from 2 or more sources, including the area of oil and a gas lease, the area included in a drilling spacing unit, a unit participating area, a communitized area, or non-federal property. Before production reaches the point of royalty measurement, regardless of ownership, the royalty rates and the number of percentage of acres for each source, if the applicant agrees to install measurement devices for each source, utilize an allocation method that achieves volume measurement, uncertainty levels within plus or minus 2% during the production phase reported on a monthly basis, or utilize an approved periodic well testing methodology. Production from multiple oil and gas leases, drilling space units, communitized areas, or participating areas from a single wellbore shall be considered a single source. Nothing in this subsection shall prevent the Secretary of the Interior from continuing the current practice of exercising discretion to authorize higher percentage volume measurements, uncertainty levels, if appropriate technical and economic justifications have been provided. Section 50102, offshore oil and gas leasing. A, lease sales. 1, Gulf of America region. A, in general. Notwithstanding the 2024 to 2029 National Outer Continental Shelf Oil and Gas Leasing Program and any successor leasing program that does not satisfy the requirements of this section, in addition to lease sales, which may be held under the program and except within areas subject to existing oil and gas leasing moratoria, the Secretary of the Interior shall conduct a minimum of 30 region-wide oil and gas lease sales in a manner consistent with the schedule described in subparagraph B, in the region identified in the map, depicting the lease terms and economic conditions accompanying the final notice of sale of the Bureau of Oceanic Energy Management entitled Gulf of Mexico Outer Continental Shelf Region-Wide Oil and Gas Lease Sale 25485 FedReg 8010, February 12, 2020. B, timing requirement. Of the not fewer than 30 region-wide lease sales required under this paragraph, the Secretary of Interior shall, 1, hold not fewer than 1 lease sale in the region described in subparagraph A by December 15, 2025, 2, hold not fewer than 2 lease sales in the region in each of the calendar years 2026 to 2039, 1 of which shall be held by March 15th of the applicable calendar year, and 1 of which shall be held after March 15th, but not later than August 15th of the applicable calendar year, and 3, hold not fewer than 1 lease sale in the region in calendar year 2040, which shall be held on March 15th, 2040. Alaska region. A, in general, the Secretary of the Interior shall conduct a minimum of 6 offshore lease sales in a manner consistent with the schedule described in subparagraph B in the Cook Inlet Planning Area as identified in the 2017 to 2022 Outer Continental Shelf Oil and Gas Leasing Proposed Final Program published on November 18, 2016 by the Bureau of Ocean Energy Management, as announced in the Notice of Availability of the Bureau of Ocean Energy Management entitled Notice of Availability of the 2017 to 2022 Outer Continental Shelf Oil and Gas Leasing Program Proposed Final Program, 81 Federal Register 84612, November 23, 2016. B, timing requirements. Of the not fewer than 6 lease sales required under this paragraph, the Secretary of the Interior shall hold not fewer than 1 lease sale in the area described in subparagraph A in each calendar years 2026 to 2028, and in each of the calendar years 2030 to 2032, by March 15th of the applicable calendar year. B, requirements. 1, terms and stipulations for Gulf of America sales. In conducting lease sales under subsection A1, the Secretary of the Interior, A, shall subject to subparagraph C, offer the same lease form, lease terms, economic conditions, and lease stipulations 4 through 9 as contained in the final notice of the sale of the Bureau of Ocean Energy Management entitled Gulf of Mexico, Outer Continental Shelf Region, Wide Oil and Gas Sale, 254-85 Fed Reg 8010, February 12, 2020. B, may update lease stipulations 1 through 3 and 10 described in the final notice of sale to reflect current conditions for lease sales conducted under subsections A1. C, shall set the royalty rate at not less than 12.5%, but not greater than 16 2/3%. D, shall, for a lease in water depths of 800 meters or deeper, issue as a result of a sale, set the primary term for 10 years. 2, terms and stipulations for Alaska region sales. A, in general. In conducting lease sales under subsection A2, the Secretary of the Interior shall offer the same lease form, lease terms, economic conditions, stipulations as contained in the final notice of sale of the Bureau of Ocean Energy Management entitled Cook Inlet Planning Area, Outer Continental Shelf Oil and Gas Lease Sale, 244-82 Fed Reg 23291, May 22nd, 2017. B, revenue sharing, notwithstanding Section 8G and Section 9 of the Outer Continental Shelf Lands Act, 43 U.S.C. 1337G 1338, and beginning in fiscal year 2034 of the bonuses, rents, royalties, and other revenues derived from lease sales conducted under subsection A2, 1, 70% shall be paid to the state of the Alaska, and 2, 30% shall be deposited in the Treasury and credited to miscellaneous receipts. 3, area offered for lease. A, Gulf of America region. For each offshore lease sale conducted under subsection A1, the Secretary of the Interior shall, 1, offer not fewer than 80 million acres, or 2, if there are fewer than 80 million acres that are unleased and available, offer all unleased and available acres. B, Alaska region. For each offshore lease sale conducted under subsection A2, the Secretary of the Interior shall, 1, offer not fewer than 1 million acres, or 2, if there are fewer than 1 million acres that are unleased and available, offer all unleased and available acres. C, offshore commingling. The Secretary of the Interior shall approve a request of an operator to commingle oil and gas production from multiple reservoirs within a single wellbore completed on the Outer Continental Shelf in the Gulf of America region unless the Secretary of the Interior determines that conclusive evidence establishes that the commingling would, 1, could not be conducted by the operator in a safe manner, or 2, would result in the ultimate recovery from the applicable reservoirs to be reduced in comparison to the expected recovery of those reservoirs if they had not been commingled. D, offshore oil and gas royalty rate. 1, repeal Section 50261 of Public Law 117-169, 136-2056 is repealed, and any provision of law amended or repealed by that section is restored or revived as if that section had not been enacted into law. 2, royalty rate. Section 8A1 of the Outer Continental Shelf Lands Act, 43 U.S.C. 1337A1, as amended by paragraph 1, is amended. A, in subparagraph A, by striking not less than 12.5% and inserting not less than 12.5%, but not more than 16 2/3%. B, in subparagraph C, by striking not less than 12.5% and inserting not less than 12.5%, but not more than 16 2/3%. C, in subparagraph F, by striking no less than 12.5% and inserting not less than 12.5%, but not more than 16 2/3%. And D, in subparagraph H, by striking no less than 12.5% and inserting not less than 12.5%, but not more than 16 2/3%. E, limitations on amount of distributed qualified Outer Continental Shelf revenues. Section 105F1 of the Gulf of Mexico Energy Security Act of 2006, 43 U.S.C. 1331, note Public Law 109-432, is amended. 1, in subparagraph B, by striking "and" at the end. 2, in subparagraph C, by striking 2055 and inserting 2024, and 3, by adding at the end the following. D, $650 million for each of fiscal years 2025 to 2034, and E, $500 million for each of fiscal years 2035 through 2055. Section 50103, royalties on extracted methane. Section 50263 of Public Law 117-169, 30 U.S.C. 1727 is repealed. Section 50104, Alaska oil and gas leasing. A, definitions. In this section, 1, coastal plain. The term coastal plain has the meaning given the term in Section 2001A of Public Law 115-97, 16 U.S.C. 3143 note. 2, oil and gas program. The term oil and gas program means the oil and gas programs established under Section 20001B2 of Public Law 115-97, 16 U.S.C. 3143 note. 3, secretary. The term secretary means the Secretary of the Interior acting through the Bureau of Land Management. B, lease sales required. 1, in general, subject to paragraph 3, in addition to the lease sales required under Section 20001C1A of Public Law 115-97, 16 U.S.C. 3143 note, the Secretary shall conduct not fewer than 4 lease sales area-wide under the oil and gas program by not later than 10 years after the date of the enactment of this Act. 2, terms and conditions. In conducting lease sales under paragraph 1, the Secretary shall offer the same terms and conditions as contained in the record of decision described in the Notice of Availability of the Bureau of Land Management entitled Notice of Availability of the Record of Decision for the Final Environmental Impact Statement for the Coastal Plain Oil and Gas Leasing Program, Alaska 85, Federal Register 51754, August 21, 2020. 3, sale acreage schedule. A, acreages. In conducting the lease sales required under paragraph 1, the Secretary shall offer for lease under the oil and gas program 1, not fewer than 400,000 acres area-wide in each lease sale, and 2, those areas that have the highest potential for the discovery of hydrocarbons. B, schedule. The Secretary shall offer 1, the initial lease sale under paragraph 1 not later than 1 year after the date of the enactment of this Act. 2, a second lease sale under paragraph 1 not later than 3 years after the date of the enactment of this Act. 3, a third lease sale under paragraph 1 not later than 5 years after the date of the enactment of this Act. And 4, a fourth lease sale under the paragraph 1 not later than 7 years after the date of the enactment of this Act. 4, rights of way. Section 20001C2 of Public Law 115-97, 16 U.S.C. 3143 note shall apply to leases awarded under this subsection. 5, surface development. Section 20001C3 of Public Law 115-97, 16 U.S.C. 3143 note shall apply to leases awarded under this subsection. C, receipts. Notwithstanding Section 35 of the Mineral Leasing Act, 30 U.S.C. 191, and Section 20001 B5 of Public Law 115-97, 16 U.S.C. 3143 note of the amount adjusted bonus, rental, and royalty receipts derived from the oil and gas program operations on the coastal plain pursuant to this section. 1A, for each of fiscal years 2025 through 2033, 50% shall be paid to the state of Alaska, and B, for the fiscal year 2034, each fiscal year thereafter, 70% shall be paid to the state of Alaska, and 2, the balance shall be deposited into the Treasury as miscellaneous receipts. Section 50105, National Petroleum Reserve, Alaska. A, definitions. In this section, 1, NPRA, Final Environmental Impact Statement. The term NPRA, Final Environmental Impact Statement, means the final environmental impact statement published by the Bureau of Land Management entitled National Petroleum Reserve in Alaska, Integrated Activity Plan Final Environmental Impact Statement, and dated June 2020, including the errata sheet dated October 6, 2020, and excluding the errata sheet dated September 20th, 2022.
2, NPRA, Record of Decision. The term NPRA, Record of Decision, means the record of decision published by the Bureau of Land Management entitled National Petroleum Reserve in Alaska, Integrated Activity Plan Record of Decision, and dated December 2020. 3, Program. The term program means the competitive oil and gas leasing, exploration, development, and production program established under Section 107 of the Naval Petroleum Reserves Reduction Act of 1976, 42 U.S.C. 6506A. 4, Secretary. The term Secretary means the Secretary of the Interior. B, restoration of NPRA oil and gas leasing program, effective beginning on the date of enactment of this Act. 1, the Secretary shall expeditiously restore and resume oil and gas lease sales under the Program for Domestic Energy Production and Federal Revenue, subject to the requirements of this section. And 2, the final rule of the Bureau of Land Management entitled Management and Protection of the National Petroleum Reserve in Alaska, 89 Fed Reg 38712, May 7, 2024, shall have no force or effect until January 1, 2035. C, resumption of MPRA lease sales. 1, in general, subject to paragraph 2, the Secretary shall conduct not fewer than 5 lease sales under the program by not later than 10 years after the date of enactment of this act. 2, sales acreages. Schedule A, acreages. In conducting the lease sales required under paragraph 1, the Secretary shall offer not fewer than 4 million acres in each sale. B, schedule. The Secretary shall offer I, an initial lease sale under paragraph 1 not later than 1 year after the date of enactment of this act, and II, an additional lease sale under paragraph 1 not later than every 2 years after the date of enactment of this act. D, terms and stipulations for MPRA lease sales. In conducting lease sales under subsection C, the Secretary shall offer the same lease form, lease terms, economic conditions, and stipulations as described in MPRA final environmental impact statement and the MPRA record of decision. C, receipts. Section 107I of the Naval Petroleum Reserves Reduction Act of 1976, 42 U.S.C. 6506A1 is amended. 1, by striking all receipts from and inserting the following. 1, in general, except as provided in paragraph 2, all receipts from. 2, by adding at the end the following, 2% share for fiscal year 2034 and thereafter. Beginning in fiscal year 2034, of the receipts from sales, rentals, bonuses, and royalties on leases issued pursuant to the section after the date of enactment of the act entitled An Act to Provide for Reconciliation pursuant to Title II of H. Con. Res. 14, 119th Congress. A, 70% shall be paid to the state of Alaska, and B, 30% shall be paid into Treasury of the United States. Subtitle B, mining. Section 50201, coal leasing. A, definitions. In this section, 1, coal lease. The term coal lease means a lease entered into by the United States as a lessor through the Bureau of Land Management and an applicant on Bureau of Land Management Form 3400012 or a successor form that contains the terms of coal lease. 2, qualified application. The term qualified application means an application for a coal lease pending as of the date of enactment of this act or submitted within 90 days thereafter under the lease by application program administered by the Bureau of Land Management pursuant to Mineral Leasing Act 30 U.S.C. 181 et sec, for which any required environmental review is commenced or the Director of the Bureau of Land Management determines can commence within 90 days after receiving the application. B, coal leasing activities. Not later than 90 days after the date of enactment of this act, the Secretary of the Interior, 1, shall, A, with respect to each qualified application, 1, if not previously published for public comment, publish any required environmental review. 2, establish the fair market value of the applicable coal tract. 3, hold a lease sale with respect to the applicable coal tract. 4, identify the highest bidder or at above the fair market value and take all other intermediate actions necessary to identify the winning bidder and grant the qualified application. And 2, may, A, with respect to a previously issued coal lease, grant any additional approvals of the Department of the Interior required for mining activities to commence, and B, after completing the actions required by clause I through 4 of paragraph 1A, grant the qualified application and issue that applicable lease to the person that submitted the qualified application if that person submitted the winning bid in the lease sale held under clause 3 of paragraph 1A. Section 50202, coal royalty. A, rate. Section 7A of the Mineral Leasing Act 30 U.S.C. 207A is amended in the fourth sentence by striking 12.5% and inserting 12.5%, except such amounts shall not be more than 7% during the period that begins on the date of enactment of the act entitled An Act to Provide for Reconciliation pursuant to Title II of H. Con. Res. 14, 119th Congress and ends September 30th, 2034. B, applicability to existing leases. The amendment made by subsection A shall apply to a coal lease, 1, issued under Section 2 of the Mineral Leasing Act 30 U.S.C. 201 before, on, or after the date of enactment of this act, and 2, that has not been terminated. C, advanced royalties. With respect to a lease issued under Section 2 of the Mineral Leasing Act 30 U.S.C. 201, for which the leasee has paid advanced royalties under Section 7B of that act, 30 U.S.C. 207B, the Secretary of the Interior shall provide to the leasee a credit for the difference between the amount paid by the leasee and advanced royalties for the lease before the date of the enactment of this act and the amount the leasee would have to be repaid if the amendment made by subsection A had been made before the leasee paid advanced royalties for the lease. Section 50203, leases for known recoverable coal resources. Notwithstanding Section 2A3A of the Mineral Leasing Act 30 U.S.C. 201A3A and Section 202A of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1712A, not later than 90 days after the date of enactment of this act, the the Secretary of the Interior shall make available for lease known recoverable coal resources of not less than 4 million additional acres on federal land located in the 48 contiguous states in Alaska, subject to the jurisdiction of the Secretary, but which shall not include any federal land within 1, a national monument, 2, a national recreation area, 3, a component of the National Wilderness Preservation System, 4, a component of the National Wild and Scenic River System, 5, a component of the National Trail System, 6, a National Conservation Area, 7, a unit of the National Wildlife Refuge System, 8, a unit of the National Fish Hatchery System, or 9, a unit of the National Park System. Section 50204, authorization to mine federal coal. Authorization in order to provide access to coal reserves in adjacent state or private land that, without an authorization, could not be mined economically. Federal coal reserves located in federal land, subject to a mining plan previously approved by the Secretary of the Interior as of the date of enactment of this act, and adjacent to coal reserves in adjacent state or private land are authorized to be mined. B, requirement. Not later than 90 days after the date of the enactment of this act, the Secretary of the Interior shall, without substantial modification, take such steps as are necessary to authorize the mining of federal land described in subsection A. C, NEPA. Nothing in this section shall prevent a review under the National Environmental Policy Act of 1969, 42 U.S.C. 4321 et sec. Subtitle C, lands. Section 50302, timber sales and long-term contracting for the Forest Service and the Bureau of Land Management. A, Forest Service. Definitions in this subsection. A, forest plan. A term forest plan means a land and resource management plan prepared by the Secretary for a unit of the National Forest System pursuant to Section 6 of the Forest and Rangeland Renewable Resources Planning Act of 1974, 16 U.S.C. 1604. B, National Forest System. 1, in general, the term National Forest System means land of the National Forest System as defined in Section 11A of the Forest and Rangeland Renewable Resources Planning Act of 1974, 16 U.S.C. 1609A, administered by the Secretary. 2, exclusions. The term National Forest System does not include any forest reserve not created from the public domain. C, Secretary. The term Secretary means the Secretary of Agriculture acting through the Chief of the Forest Service. 2, timber sales on public domain forest reserves. A, in general, for each of fiscal years 2026 through 2034, the Secretary shall sell timber annually on National Forest System land in a total quantity that is not less than 250 million board feet greater than the quantity of board feet sold in the previous fiscal year. B, limitation. The timber sales under subparagraph A shall be subject to the maximum allowable sale quality of timber and projected timber sale quality under the applicable forest plan in effect on the date of enactment of this act. 3, long-term contracting for the Forest Service. A, long-term contracting. For the period of fiscal years 2025 through 2034, the Secretary shall enter into not fewer than 40 long-term timber sale contracts with private persons or other public-private entities under subsection A of Section 14 of the National Forest Management Act of 1976, 16 U.S.C. 472A, for the sale of national forest materials as defined in subsection E1 of that section in the National Forest System. B, contract length. The period of a timber sale contract entered into meet the requirement under subparagraph A shall be not less than 20 years, with options for extensions or renewals as determined by the Secretary. C, receipts. Any monies derived from the timber sale contract entered into meet the requirements under subparagraphs A and B shall be deposited in the general fund of the Treasury. B, Bureau of Land Management. 1, definitions in this subsection. A, public lands. The term public lands has the meaning given term in Section 103 of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1702. B, Resource Management Plan. The term Resource Management Plan means a land use plan prepared for public lands under Section 202 of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1712. C, Secretary. The term Secretary means the Secretary of the Interior acting through the Director of the Bureau of Land Management. 2, timber sales on public land. A, in general, for each of fiscal years 2026 through 2034, the Secretary shall sell timber annually on public lands in a total quantity that is not less than 20 million board feet greater than the quantity of board feet sold in the previous year. B, limitation. The timber sales under subparagraph A shall be subject to the applicable resource management plan in effect on a date of enactment of this act. 3, long-term contracting for the Bureau of Land Management. A, long-term contracting. For the period of fiscal years 2025 through 2034, the Secretary shall enter into not fewer than 5 long-term contracts with private persons or other public or private entities under Section 1 of the Act of July 31st, 1947, commonly known as the Materials Act of 1947, 61 Stat 681, Chapter 406, 30 U.S.C. 601, for the disposal of vegetative materials described in that section on public lands. B, contract length. The period of a contract entered into to meet the requirement under subparagraph A shall be not less than 20 years, with options for extensions or renewals as determined by the Secretary. C, receipts. Any monies derived from a contract entered into to meet the requirements under subparagraphs A and B shall be deposited in the general fund of the Treasury. Section 50303, renewable energy fees on federal land. A, definitions in this section. 1, annual adjustment factor. The term annual adjustment factor means 3%. 2, encumbrance factor. The term encumbrance factor means A, 100% for a solar energy generation facility, and B, an amount determined by the Secretary but not less than 10% for a wind energy generation facility. 3, national forest system. A, in general, the term national forest system means land of the national forest system as defined in Section 11A of the Forest and Rangeland Renewable Resources Planning Act of 1974, 16 U.S.C. 1609A, administered by the Secretary of Agriculture. B, exclusion. The term national forest system does not include any forest reserve not created from the public domain. 4, per acre rate. The term per acre rate with respect to a right-of-way means the average of the per acre pasture land rental rates published in the cash rent survey by the National Agricultural Statistics Service for the state in which the right-of-way is located over the 5 calendar year period preceding the issuance or renewal of the right-of-way. 5, project. The term project means a system described in Section 2801.9A4 of Title 43, Code of Federal Regulations, as in effect on the date of enactment of this Act. 6, public land. The term public land means A, public lands as defined in Section 103 of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1702, and B, national forest system land. 7, renewable energy project. The term renewable energy project means a project located on public land that uses wind or solar energy to generate energy. 8, right-of-way. The term right-of-way has the meaning given the term Section 103 of the Federal Land Policy and Management Act, 1976, 43 U.S.C. 1702. 9, secretary. The term secretary means A, Secretary of the Interior, with respect to land controlled or administered by the Secretary of the Interior, and B, the Secretary of Agriculture, with respect to national forest system land. B, acreage rent for wind and solar rights-of-way. 1, in general, pursuant to Section 504G of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1764G, the Secretary shall, subject to paragraph 3 and not later than January 1 of each calendar year, collect from the holder of a right-of-way for a renewable energy project an acreage rent in an amount determined by the equation described in paragraph 2. 2, calculation of acreage rent rate. A, equation. The amount of acreage rent collected under paragraph 1 shall be determined using the following equation. Acreage rent equals A times B times 1 plus C D squared. B, definitions. For purposes of the equation described in subparagraph A, 1, the letter A means per acre rate. 2, the letter B means the encumbrance factor. 3, the letter C means the annual adjustment factor. 4, the letter D means the year and the term of right-of-way. 3, payment until production. The holder of a right-of-way for renewable energy project shall pay an acreage rent collected under paragraph 1 until the date of which energy generation begins. C, capacity fees. In general, the Secretary shall, subject to paragraph 3, annually collect a capacity fee from the holder of a right-of-way for a renewable energy project based on the amount described in paragraph 2. 2, calculation of capacity fee. The amount of a capacity fee collected under paragraph 1 shall be equal to the greater of A, an amount equal to the acreage rent described in subsection B, and B, 3.9% of the gross proceeds from the sale of electricity produced by the renewable energy project. 3, multiple use reduction factor. A, application. The holder of a right-of-way for a wind energy generation project may request that the Secretary apply a multiple use reduction factor of 10% to the amount of a capacity fee determined under paragraph 2 by submitting to the Secretary an application at such time in such manner and containing such information as the Secretary may require. B, approval. The Secretary may approve an application submitted under subparagraph A only if not less than 25% of the land within the area of the right-of-way is authorized for use, occupancy, or development with respect to an activity other than the generation of wind energy for the entirety of the year in which the capacity fee is collected. C, late determination. 1, in general, if the Secretary approves an application under subparagraph B for a wind energy generation project after the date on which the holder of the right-of-way for the project begins paying a capacity fee, the Secretary shall apply the multiple use reduction factor described in subparagraph A to the capacity fee for the first year beginning after the date of approval and each year thereafter for the period during which the right-of-way remains in effect. 2, refund. Secretary may not refund the holder of a right-of-way for the difference in the amount of a capacity fee paid in a previous year. D, late payment fee termination. 1, in general, the Secretary may charge the holder of a right-of-way for a renewable energy project a late payment fee if the Secretary does not receive payment for the acreage rent under subsection B or the capacity fee under subsection C by the date that is 15 days after the date on which the payment was due. 2, termination of right-of-way. The Secretary may terminate a right-of-way for a renewable energy project if the Secretary does not receive payment for the acreage rent under subsection B of the capacity fee under subsection C by the date that is 90 days after the date on which payment was due. Section 50304, renewable energy revenue sharing. A, definitions. In this section, 1, county. The term county includes a parish, township, borough, and other similar independent unit of local government. 2, covered land. The term covered land means that land that is A, public land administered by the Secretary, and B, not excluded from the development of solar or wind energy under 1, a land use plan, or 2, other federal law. 3, national forest system. In general, the term national forest system means the land of the national forest system as defined in Section 11A of the Forest and Rangeland Renewable Resources Planning Act of 1974, 16 U.S.C. 1609A, administered by the Secretary of Agriculture. B, exclusion. The term national forest system does not include any forest reserve not created from the public domain. 4, public land. The term public land means A, public lands as defined in Section 103 of the Federal Land Policy and Management Act of 1976, 43 U.S.C. 1702, and B, national forest system land. 5, renewable energy project. The term renewable energy project means a system described in Section 2801.9A4 of Title 43 Code of Federal Regulations as in effect on the date of enactment of this act, located on covered land that uses wind or solar energy to generate energy. 6, secretary. The term secretary means A, the Secretary of the Interior with respect to land controlled or administered by the Secretary of the Interior, and B, the Secretary of Agriculture with respect to the national forest system land. B, disposition of revenue. 1, disposition of revenues. Beginning on January 1, 2026, the amounts collected from a renewable energy project as bonus bids, rentals, fees, or other payments under a right-of-way permit, lease, or other authorization shall A, be deposited in the general fund of the Treasury, and B, without further appropriation for fiscal year limitation, has allocated as follows. 1, 25% shall be paid from amounts in the general fund of the Treasury to the state within the boundaries of which the revenue is derived. 2, 25% shall be paid from amounts in the general fund of the Treasury to each county and a state within the boundaries of which the revenue is derived, to be allocated among each applicable county based on the percentage of county land from which the revenue is derived. 2, payments to states and counties. A, in general, amounts paid to states and counties under paragraph 1 shall be used in accordance with the requirements of Section 35 of the Mineral Leasing Act, 30 U.S.C. 191. B, payments in lieu of taxes. A payment to a county under paragraph 1 shall be in addition to a payment in lieu of taxes received by the county under Chapter 69 of Title 31 United States Code. C, timing. The amounts required to be paid under paragraph 1B for an applicable fiscal year shall be made available for the fiscal year that immediately follows fiscal year for which the amounts were collected. Section 50305, rescission of National Park Service and Bureau of Land Management funds. There are rescinded the unobligated balances of amounts made available by the following sections of Public Law 117-169, commonly known as the Inflation Reduction Act of 2022, 136 Statute 1818, 1, Section 50221, 136 Statute 2052, 2, Section 50221, 136 Statute 2052, 3, Section 50223, 136 Statute 2052, Section 50306, celebrating America's 250th anniversary. In addition to amounts otherwise available, there is appropriated to the Secretary of the Interior, acting through the Director of the National Park Service, for fiscal year 2025, out of any money in the Treasury not otherwise appropriated, $150 million for events, celebrations, and activities surrounding the observance and commemoration of the 250th anniversary of the founding of the United States to remain available through fiscal year 2028. Subtitle D, Energy. Section 50401, Strategic Petroleum Reserve. A, Energy Policy and Conservation Act definitions. In this section, the terms related facility, storage facility, and Strategic Petroleum Reserve have the meanings given those terms in Section 152 of the Energy Policy and Conservation Act 42 U.S.C. 6232. B, appropriations. In addition to the amounts otherwise available, there is appropriated to the Department of Energy for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. $218 million for maintenance of, including repairs to storage facilities and related facilities of Strategic Petroleum Reserve, and to $171 million to acquire by purchase petroleum products for storage in the Strategic Petroleum Reserve. C, repeal of Strategic Petroleum Reserve drawdown and sale mandate. Section 200003 of Public Law 115-97, 42 U.S.C. 6241, note, is repealed. Section 50402, repeals, rescissions. A, repeal and rescission. Section 50142 of Public Law 117-169, 163, Statute 2044, commonly known as the Inflation Reduction Act of 2022, is repealed, and the unobligated balance of amounts made available under that section as in effect on the day before the date of enactment of this act is rescinded. B, rescissions. 1, in general, the unobligated balances of amounts made available under the sections described in paragraph 2 are rescinded. 2, sections described. The sections referred to in paragraph 1 are the following sections of Public Law 117-179, commonly known as the Inflation Reduction Act of 2022. A, section 50123, 42 U.S.C. 1879B5. B, section 50141, 136, statute 2042. C, section 50144, 136, statute 2044. D, section 50145, 136, stat 2045. E, section 50151, 42 U.S.C. 18715. 5, F, section 50152, 42 U.S.C. 18715A. G, section 50153, 42 U.S.C. 18715B. H, section 50161, 42 U.S.C. 17113B. Section 50403, energy dominance financing. A, in general, section 1706 of the Energy Policy Act of 2005, 42 U.S.C. 16517, is amended, 1, in subsection A in paragraph 1 by striking or at the end, B, in paragraph 2 by striking avoid, and all that follows through the period at the end and insert increased capacity or output, or, and C, by adding at the end the following. 3, support or enable the provision of known or forecastable electric supply at time intervals necessary to maintain or enhance grid reliability or other system adequacy needs. 2, by striking subsection C. 3, by redesignating subsections D through F as subsections C through E, respectively. 4, in subsection C, as so redesignated. A, in paragraph 1 by adding and at the end. B, by striking paragraph 2, and C, by redesignating paragraph 3 as paragraph 2. 5, in subsection E, as so redesignated, by striking 4 in the matter preceding paragraph 1, and all that follows through the period at the end of the paragraph 2, and inserting 4, enabling the identification, leasing, development, production, processing, transportation, transmission, refining, and generation needed for energy and critical minerals, and 6, by adding at the end of the following F, funding. I, in general, in addition to amounts otherwise available, there is appropriated to the Secretary for fiscal years 2025 out of any money in the Treasury not otherwise appropriated, $1 trillion to remain available through September 30, 2028 to carry out activities under the section. 2, administrative costs of the amount made available under paragraph 1. The Secretary shall not use more than 3% for administrative expenses. B, commitment authority, section 50144B of Public Law 117-169, commonly known as the Inflation Reduction Act of 2022. 136, stat 2045 is amended by striking 2026 and inserting 2028. Section 50404, transformational artificial intelligence models. A, definitions in this section. 1, American Science Cloud. The term American Science Cloud means a system of United States government, academic, and private sector programs and infrastructures utilizing cloud computing technologies to facilitate and support scientific research, data sharing, and computational analysis across various disciplines while ensuring compliance with applicable legal, regulatory, and privacy standards. 2, artificial intelligence. The term artificial intelligence has the meaning given term in Section 5002 of the National Artificial Intelligence Initiative Act of 2020, 15 U.S.C. 9401. B, transformational models. The Secretary of Energy shall, 1, mobilize national laboratories to partner with industry sectors within the United States to curate the scientific data of the Department of Energy across the National Laboratory Complex so that the data is structured, cleaned, and pre-processed in a way that makes it suitable for use in artificial intelligence and machine learning models, and 2, initiate seed efforts for self-improving artificial intelligence models for science and engineering powered by the data described in paragraph 1. C, uses. Microelectronics. The curated data described in subsection B1 may be used to rapidly develop next-generation microelectronics that have greater capabilities beyond Moore's law while requiring lower energy consumption. 2, new energy technologies. The artificial intelligence models developed under subsection B2 shall be provided to the scientific community through the American Science Cloud to accelerate innovation in discovery, science, and engineering for new energy technologies. D, appropriations. There is appropriated out of any funds in the Treasury not otherwise appropriated $150 million to remain available through September 30th, 2026 to carry out this section. Subtitle E, water. Section 50501, water conveyance and surface water storage enhancement. In addition to amounts otherwise available, there is appropriated to the Secretary of the Interior acting through the Commissioner of Reclamation for fiscal year 2025 on any funds in the Treasury not otherwise appropriated $1 billion to remain available through September 30th, 2034 for construction and associated activities that restore or increase the capacity or use of existing conveyance facilities constructed by the Bureau of Reclamation, or for construction and associated activities that increase the capacity of existing Bureau of Reclamation surface water storage facilities in a manner as determined by the Secretary of the Interior acting through the Commissioner of Reclamation, provided that for the purposes of Section 203 of the Reclamation Reform Act of 1982, 43 U.S.C. 390cc, or Section 3404A of the Reclamation Projects Authorization and Adjustment Act of 1992, Public Law 102-575, 106-4708, a contract or agreement entered into pursuant to this section shall not be treated as a new or amended contract, provided further that none of the funds provided under this section shall be reimbursable or subject to matching or cost-sharing requirements. Title VI, Committee on Environment and Public Works, Section 60001, rescission of funding for clean heavy-duty vehicles. The unobligated balances of amounts made available to carry out Section 132 of the Clean Air Act, 42 U.S.C. 7432, are rescinded. Section 60002, repeal of Greenhouse Gas Reduction Fund. Section 134 of the Clean Air Act, 42 U.S.C. 7434, is repealed, and the unobligated balances of amounts made available to carry out that section as in effect on the day before the date of enactment of this act are rescinded. Section 60003, rescission of funding for diesel emissions reductions. The unobligated balances of amounts made available to carry out Section 60104 of Public Law 117-169, 136.2067 are rescinded. Section 60004, rescission of funding to address air pollution. The unobligated balances of amounts made available to carry out Section 60105 of Public Law 117-169, 136.2067 are rescinded. Section 60005, rescission of funding to address air pollution at schools. The unobligated balances of amounts made available to carry out Section 60106 of Public Law 117-169, 136.2069 are rescinded. Section 60006, rescission of funding for the Low Emissions Electricity Program. The unobligated balances of amounts made available to carry out Section 135 of the Clean Air Act, 42 U.S.C. 7435 are rescinded. Section 6007, rescission of funding for Section 2110 of the Clean Air Act. The unobligated balances of amounts made available to carry out Section 60108 of Public Law 117-169, 136.2070 are rescinded. Section 60008, rescission of funding for implementation of the American Innovation and Manufacturing Act. The unobligated balances of amounts made available to carry out Section 60109 of Public Law 117-169, 136.2071 are rescinded.
Section 60009, rescission of funding for enforcement technology and public information. The unobligated balances of amounts made available to carry out Section 60110 of Public Law 117-169, 136.2071 are rescinded. Section 60010, rescission of funding for greenhouse gas corporate reporting. The unobligated balances of amounts made available to carry out 60111 of Public Law 117-169, 136.2072 are rescinded. Section 60011, rescission of funding for environmental products declaration, assistance, the unobligated balances of amounts made available to carry out Section 60112 of Public Law 117-169, 42 U.S.C. 4321, Note 136, Stat 2072 are rescinded. Section 60012, rescission of funding for methane emissions and waste reduction incentive program for petroleum and natural gas systems. A, rescission. The unobligated balances of amounts made available to carry out subsections A and B of Section 136 of the Clean Air Act, 42 U.S.C. 7436 are rescinded. B, period. Section 136G of the Clean Air Act, 42 U.S.C. 7436G is amended by striking calendar year 2024 and inserting calendar year 2034. Section 60013, rescission of funding for greenhouse gas air pollution plans and implementation grants. The unobligated balances of amounts made available to carry out Section 137 of the Clean Air Act, 42 U.S.C. 7437 are rescinded. Section 60014, rescission of funding for Environmental Protection Agency, efficient, accurate, and timely reviews. The unobligated balances of amounts made available to carry out Section 60115 of Public Law 117-169, 136 Stat 2077 are rescinded. Section 60015, rescission of funding for low embodied carbon labeling for construction materials. The unobligated balances of amounts made available to carry out Section 60116 of Public Law 117-169, 42 U.S.C. 432, Note 136 Stat 2077 are rescinded. Section 60016, rescission of funding for environmental and climate justice block grants. The unobligated balances of amounts made available to carry out Section 138 of the Clean Air Act, 42 U.S.C. 7438 are rescinded. Section 60017, rescission of funding for ESA recovery plans. The unobligated balances of amounts made available to carry out Section 60301 of Public Law 117-169, 136 Stat 2079 are rescinded. Section 60018, rescission of funding for environmental and climate data collection. The unobligated balances of amounts made available to carry out 60401 of Public Law 117-169, 136 Stat 2079 are rescinded. Section 60019, rescission of neighborhood access and equity grant program. The unobligated balances of amounts made available to carry out Section 177 of Title 23 United States Code are rescinded. Section 60020, rescission of funding for federal building assistance. The unobligated balances of amounts made available to carry out Section 60502 of Public Law 117-169, 136 Stat 2083 are rescinded. Section 60021, rescission of funding for low-carbon materials for federal buildings. The unobligated balances of amounts made available to carry out Section 60503 of Public Law 117-169, 136 Stat 2083 are rescinded. Section 60022, rescission of funding for GSA emerging and sustainable technologies. The unobligated balances of amounts made available to carry out 60504 of Public Law 117-169, 136 Stat 2083 are rescinded. Section 60023, rescission of environmental review implementation funds. The unobligated balances of amounts made available to carry out Section 178 of Title 23 United States Code are rescinded. Section 60024, rescission of low-carbon transportation material grants. The unobligated balances of amounts made available to carry out Section 179 of Title 23 United States Code are rescinded. Section 60025, John F. Kennedy Center for the Performing Arts. In general, in addition to amounts otherwise available, there is appropriate for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $256,657,000 to remain available until September 30th, 2029 for necessary expenses for capital repair, restoration, maintenance, backlog, and security structures of the building site and site of the John F. Kennedy Center for Performing Arts. B, administrative costs. Of the amounts made available under subsection A, not more than 3% may be used for administrative costs necessary to carry out this section. Section 60026, project sponsor, opt-in fees for environmental reviews. Title I of the National Environmental Policy Act of 1969, 42 U.S.C. 4331 at sequence is amended by adding the following. Section 112, project sponsor opt-in fees for environmental reviews. A, process. 1, project sponsor. A project sponsor that intends to pay a fee under the section for the preparation or supervision of the preparation of an environmental assessment or environmental impact statement for a project shall submit to the Council A, a description of the project, and B, a declaration of whether the project sponsor intends to prepare the environmental assessment or environmental impact statement under Section 10 7F. 2, Council of Environmental Quality. Not later than 15 days after the date on which the council receives information described in paragraph 1 from a project sponsor, the council shall provide to the project sponsor notice of the amount of the fee to be paid under this section as determined under subsection B. 3, Payment of fee. A project sponsor may pay a fee under this section after the receipt of the notice described in paragraph 2. 4, Deadline for environmental reviews for which a fee is paid. Notwithstanding section 107G1A, an environmental assessment for which a fee is paid under the section shall be completed not later than 180 days after the date on which the fee is paid. And B, an environmental impact statement for which a fee is paid under the section shall be completed not later than 1 year after the date of publication of the notice of the intent to prepare the environmental impact statement. B, fee amount. The amount of a fee under the section shall be 1, 125% of the anticipated cost to prepare the environmental assessment or environmental impact statement. And 2, in the case of an environmental assessment or environmental impact statement to be prepared in whole or in part by a project sponsor under section 107F, 125% of the anticipated cost to supervise preparation of and, as applicable, prepare the environmental assessment or environmental impact statement. Title 7, Finance, Subtitle A, Tax, Section 70001, references to the Internal Revenue Code of 1986, etc. A, references. Except as otherwise expressly provided whenever in this title an amendment or repeal is expressed in terms of an amendment to or repeal of a section or other provision, the reference shall be considered to be made to a section or other provision of the Internal Revenue Code of 1986. B, certain rules regarding effect of rate changes not applicable. Section 15 of the International Revenue Code of 1986 shall not apply to any change in rate of tax by reason of any provision of or amendment made by this title. Chapter 1, providing permanent tax relief for middle-class families and workers. Section 70101, extension and enhancement of reduced rates. A, in general, Section 1J is amended. 1, in paragraph 1 by striking and before January 1, 2026, and 2 by striking 2018 through 2025 in the heading and inserting beginning after 2017. B, inflation adjustment. Section 1J3BI is amended by inserting solely for the purpose is of determining the dollar amounts at which any rate bracket higher than 12% ends and at which any rate bracket higher than 22% begins before subsection F3. C, effective date. The amendments made by this section shall be applied to taxable years beginning after December 31st, 2025. Section 70102, extension and enhancement of increased standard reduction. A, in general, Section 63C7 is amended 1 by striking and before January 1st, 2026 in the matter preceding subparagraph A, and 2 by striking 2018 through 2025 in the heading and inserting beginning after 2017. B, additional increase in standard deduction. Paragraph 7 of Section 63C is amended 1 by striking $18,000, both places it appears in subparagraphs AI and BII, and inserting $23,625. 2, by striking $12,000, both places it appears in subparagraphs AII and BII, and inserting $15,750. 3, by striking 2018 in subparagraph BII and inserting 2025. And 4, by striking 2017 in subparagraph BII and inserting 2024. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70103, termination of deduction for personal exemptions other than temporary senior deduction. A, in general, Section 151D5 is amended 1 by striking 2018 through 2025 in the heading and inserting beginning after 2017. 2, by striking and before January 1st, 2026. And 3, by adding at the end the following new subparagraph. C, deductions for seniors. I, in general, in the case of a taxable year beginning before January 1st, 2029, there shall be allowed a deduction in an amount equal to $6,000 for each qualified individual with respect to the taxpayer. II, qualified individual. For purposes of Clause I, the term qualified individual means I, the taxpayer, if the taxpayer has attained age 65 before the close of the taxable year, and II, in the case of a joint return, the taxpayer's spouse, if such spouse has attained age 65 before the close of the taxable year. III, limitation based on modified adjusted gross income. I, in general, in the case of any taxpayer for any taxable year, the $6,000 amount in Clause I shall be reduced, but not below 0, by 6% of so much of that taxpayer's modified adjusted gross income as exceeds $75,000, $150,000 in the case of a joint return. II, modified adjustment gross income. For the purpose of this clause, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from gross income under sections 911, 931, or 933. 4, Social Security number required. 1, in general clause, I shall not apply with respect to a qualified individual unless the taxpayer includes such qualified individual Social Security number on the return of tax for the taxable year. 2, Social Security number. For the purpose is of subclause 1, the term Social Security number has the meaning given such term in section 24H7. 5, married individuals. If the taxpayer is a married individual within this meaning of section 7703, this subparagraph shall apply only if the taxpayer and the taxpayer's spouse file a joint return for the taxable year. B, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2 is amended by striking and at the end of subparagraph U, by striking the period at the end of subparagraph V and inserting and by inserting after subparagraph V the following new subparagraph W. An omission of a correct Social Security number required under section 151D5C relating to deduction for seniors. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70104, extension and enhancement of increased child tax credit. A, extension and increase of expanded child tax credit. Section 24H is amended 1 in paragraph 1 by striking and before January 1st, 2026. 2 in paragraph 2 by striking $2,000 and inserting $2,200, and 3 by striking 2018 through 2025 and in the heading and inserting beginning after 2017. B, Social Security number required. Section 24H7 is amended to read as follows. 7, Social Security number required. A, in general, no credit shall be allowed under the section to a taxpayer with respect to any qualifying child unless the taxpayer includes on the return of the tax for the taxable year 1, the taxpayer's Social Security number, or in the case of a joint return, the Social Security number of at least one spouse, and 2, the Social Security number of such qualifying child. B, Social Security number. For the purposes of this paragraph, the term Social Security number means any Social Security number issued to an individual by the Social Security Administration, but only if the Social Security number is issued 1, to a citizen of the United States or pursuant to subclause I or that portion of subclause III that relates to subclause I of section 205C2BI of the Social Security Act, and 2, before the due date for such return. C, inflation adjustments. In general, section 24I is amended to read as follows. I, inflation adjustments. 1, maximum amount of refundable credit. In the case of a taxable year beginning after 2024, the $1,400 amount in subsection H5 shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under section 1F3 for the calendar year in which the taxable year began, determined by substituting 2017 for 2016 in subparagraph A, II thereof. 2, special rule for adjustment of credit amount. In the case of a taxable year beginning after 2025, the $2,200 amount in subsection H2 shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under section 1F3 for the calendar year in which the taxable year begins, determined by substituting 2024 for 2016 in subparagraph A, II thereof. 3, rounding. If any increase under the subsection is not a multiple of $100, such increase shall be rounded to the next lowest multiple of $100. D, conforming amendment. Section 24H5 is amended to read as follows. 5, maximum amount of refundable credit. The amount determined under subsection D1A with respect to any qualifying child shall not exceed $1,400, and such subsection shall appear without regard to paragraph 4 of this subsection. E, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2I is amended by striking section 24E and inserting section 24F, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70105, extension and enhancement of deduction for qualified business income. A, increase in taxable income limitation phase-in amount. 1, in general. Subparagraph B of section 199AB3 is amended by striking $50,000, $100,000 in case of a joint return. Each place it appears, and inserting $75,000, $150,000 in the case of a joint return. 2, conforming amendment. Paragraph 3 of section 199AD is amended by striking $50,000, $100,000 in the case of a joint return. Each place it appears, and inserting $75,000, $150,000 in the case of a joint return. B, minimum deduction for active qualified business income. 1, in general. Subsection I of section 199A is amended to read as follows. I, minimum deduction for active qualified business income. 1, in general. In the case of an applicable taxpayer for any taxable year, the deduction allowed under subsection A for the taxable year shall be equal to the greater of A, the amount of such deduction determined without regard to the subsection, or B, $400. 2, applicable taxpayer. For the purpose is of this subsection A. In general, the term applicable taxpayer means with respect to any taxable year, a taxpayer whose aggregate qualified business income with respect to all active qualified trades or businesses of the taxpayer for such taxable years at least $1,000. B, active qualified trade or business. The active qualified trade or business means with respect to any taxpayer for any taxable year, any qualified trade or business of the taxpayer in which the taxpayer materially participates within the meaning of Section 469H. 3, inflation adjustment. In the case of any taxable year beginning after 2026, the $400 amount in paragraph 1B and the $1,000 amount in paragraph 2A shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under Section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2025 for calendar year 2016 in subparagraph A, II thereof. If any increase under this paragraph is not a multiple of 5, such increase shall be rounded to the nearest multiple of $5. 2, conforming amendment. Section 199AA is amended by inserting except as provided in subsection I before it there. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70106, extension and enhancement of increased estate and gift tax exemption amounts. A, in general. Subsection 2010C3 is amended 1, in subparagraph A by striking $5 million and inserting $15 million. 2, in subparagraph B, A, in the matter preceding clause I by striking 2011 and inserting 2026, and B in clause II by striking calendar year 2010 and inserting calendar year 2025, and 3 by striking subparagraph C. B, effective date. The amendments made by this section shall apply to estates of decedents dying and gifts made after December 31st, 2025. Section 70107, extension of increased alternative minimum tax exemption amounts and modification of phase-out thresholds. A, in general, Section 55D4 is amended 1 in subparagraph A by striking and before January 1st, 2026, and 2 by striking and before 2026 in the heading. B, modification of inflation adjustment. Section 55D4B is amended 1 by striking 2018 and inserting 2018-2026 in the case of $1 million, amount in subparagraph AIII, and 2 by striking determined by substituting calendar year 2017 for calendar year 2016 in subparagraph AII thereof, and inserting determined by substituting for calendar year 2016 in subparagraph AII thereof. 1, calendar year 2017 in the case of $109,400 amount in subparagraph AII, and the $70,300 amount in subparagraph AIII, and 2, calendar year 2025 in the case of $1 million amount in subparagraph AIII. C, modification of phase-out amount. Section 55D4AII is amended by striking and at the end of subclause II and by adding at the end of the following new subclause. 4, by substituting 50% for 25%, and D, effective date. The amendments made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70108, extension and modification of limitation on deduction for qualified resident interest. A, in general, Section 163H3F is amended 1 in clause I, A, by striking and before January 1st, 2026. B, by redesignated subclauses 3 and 4 as subclauses 4 and 5 respectively. C, by striking out subclauses 3 and subclause 5 as so redesignated and inserting subclause 4. And D, by inserting after subclause 2 the following new subclause 3, mortgage insurance premiums treated as interest. Clause 4 of subparagraph E shall not apply. 2, by striking clauses 2 and redesignated clauses 3 and 4 as clauses 2 and 3 respectively, and 3 by striking 2018 through 2025 in the heading and inserting beginning after 2017. B, effective date. The amendments made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70109, extension and modification of limitation on casualty loss deduction. In general, Section 165H5 is amended 1 in subparagraph A by striking and before January 1st, 2026, and 2 by striking 2018 through 2025 in the heading and inserting beginning after 2017. B, extension to state-declared disasters. 1 in general, subparagraph A of Section 165H5 is amended by subsection A is further amended by striking I5 and inserting I5 or a state-declared disaster. 2, exception related to personal casualty gains. Clause I of Section 165H5B is amended by striking as so defined and inserting as so defined or a state-declared disaster. 3, state-declared disaster. Paragraph 5 of Section 165H is amended by adding at the end the following new subparagraph. C, state-declared disaster for the purpose is of this paragraph. 1, in general, the term state-declared disaster means with respect to any state, any natural catastrophe, including any hurricane, tornado, storm, high water, wind-driven water, tidal wave, tsunami, earthquake, volcanic eruption, landslide, mudslide, snowstorm, or drought, or regardless of case, any fire, flood, or explosion in any part of the state, which in the determination of the governor of such state or mayor in the case of the District of Columbia and the Secretary causes damage of sufficient severity and magnitude to warrant the application of the rules of this section. 2, state. The term state includes the District of Columbia, the Commonwealth of Puerto Rico, the Virgin Islands, Guam, American Samoa, and the Commonwealth of the Northern Mariana Islands. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. 70110, termination of miscellaneous itemized deductions other than educator expenses. A, in general, Section 67G is amended by striking and before January 1st, 2026, and 2, by striking 2018 through 2025, the heading inserted beginning after 2017. B, deduction for educator expenses. 1, in general, Section 67B is amended by striking and at the end of paragraph 11, by striking the period at the end of paragraph 12, and inserting and by adding the following new paragraph. 13, the deductions allowed by Section 162 for educator expenses as defined in subsection G. 2, inclusion of coaches and certain non-athletic instructional equipment. Section 67 is amended by redesignated subsection G as amended by the section as subsection H, and by inserting after subsection F the following new section. G, educator expenses. For the purpose of subsection B13, the term educator expenses means expenses of a type which would be described in section 62A2D if 1, such section were applied, A, without regard to dollar limitation, and B, without regard to other than non-athletic supplies for courses of instruction in health or physical education in clause 2 thereof, and C, by substituting as part of instructional activity for in the classroom in clause 2 thereof, and 2, section 62D1A, where were applied to inserting interscholastic sports administrator or coach after counselor. C, effective date. The amendments made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70111, limitation on tax benefit of itemized deductions. A, in general, Section 68 is amended to read as follows. A, in general, in the case of an individual, the amount of the itemized deductions otherwise allowable for the taxable year determined without regard to this section shall be reduced by 2/37 of the lesser of 1. Such amount of itemized deductions, or 2, so much of the taxable income of the taxpayer for the taxable year determined without regard to the section increased by such amount of itemized deductions as exceeds the dollar amount at which the 37% tax bracket under Section 1 begins with respect to the taxpayer. B, coordination with other limitations. The section shall be applied after the application of any other limitation on allowance of any itemized deductions. B, limitation not applicable to determination of deduction for qualified business income. 1, in general, Section 199 AE1 is amended by inserting without regard to Section 68 and after shall be computed. 2, patrons of specified agricultural and horticultural cooperatives. Section 199 AG2B is amended by inserting Section 68 or after without regard to. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70112, extension and modification of qualified transportation fringe benefits. A, in general, Section 132F is amended 1 by striking subparagraph D of paragraph 1, 2, and paragraph 2 by inserting and at the end of subparagraph A by striking and at the end of subparagraph B and inserting a period, and by striking subparagraph C. 3, by striking other than a qualified bicycle commuting reimbursement in paragraph 4, 4 by striking subparagraph F of paragraph 5, and 5 by striking paragraph 8. B, inflation adjustment. Clause 2 of Section 132F6A is amended by striking 1998 in Clause 2 and inserting 1997. C, coordination with disallowance of certain expenses. Subsection 1 of Section 274 is amended 1 by striking benefits and all that follows through no deduction and inserting benefits, no deduction, and 2 by striking paragraph 2. D, effective date. The amendments made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70113, extension and modification of limitation on deduction and exclusion for moving expenses. A, extension of limitation on deduction. Section 217K is amended 1 by striking and before January 1st, 2026, and 2 by striking 2018 through 2025 in the heading and inserting beginning after 2017. B, allowance of deduction for members of the intelligence community. Section 217K, as amended by subsection A, is further amended 1 by striking 2017, except in the case, and inserting 2017. 1, in general, except in the case, and 2 by adding at the end of the following new paragraph, 2, members of the intelligence community and employee or new appointee of the intelligence community as defined in Section 3 of the National Security Act of 1947, 50 U.S.C. 3003, other than a member of the Armed Forces of the United States who moves pursuant to a change in assignment which requires relocation shall be treated for the purposes of this section in the same manner as an individual to whom subsection G applies. C, extension of limitation on exclusion. Section 132G2 is amended, 1, by striking and before January 1st, 2026, and 2, by striking 2018 through 2025 in the heading and inserting beginning after 2017. D, allowance of exclusion for members of the intelligence community. 132G2 of the Internal Revenue Code of 1986 is amended by inserting or an employee or new appointee of the intelligence community as defined in Section 3 of the National Security Act of 1947, 50 U.S.C. 3003, other than a member of the Armed Forces of the United States who moves pursuant to a change in assignment that requires relocation after a change of station. E, effective date. The amendments made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70114, extension and modification of limitation on wagering losses. A, in general, Section 165 is amended by striking subsection D and inserting the following. D, wagering losses. 1, in general, for purpose of losses from wagering transactions, the amount allowed as a deduction for any taxable year, A, shall be equal to 90% of the amount of such losses during such taxable year, and B, shall only be allowed to the extent of the gains from such transactions during such taxable year. 2, special rule. For the purpose is of paragraph 1, the term losses from wagering transactions includes any deduction otherwise allowable under this chapter incurred in carrying on any wagering transaction. B, effective date. The amendments made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70115, extension and enhancement of increased limitation on contributions to ABLE accounts. A, in general, Section 529AB2B is amended, 1, in clause 1 by inserting determined by substituting 1996 for 1997, in paragraph 2B thereof after section 2503B, and 2, in clauses 2 by striking before January 1st, 2026. B, effective dates. 1, in general, except as otherwise provided in the subsection, the amendments made. This section shall apply to the contributions made after December 31st, 2025. 2, modified inflation adjustment. The amendment made by subsection A1 shall apply to taxable years beginning after December 31st, 2025. Section 70116, extension and enhancement of savers credit allowed for ABLE contributions. A, extension. 1, in general, Section 25BD1 is amended to read as follows. 1, in general, the term qualified retirement savings contributions means with respect to any taxable year, the sum of A, the amount of contributions made by the eligible individual during such taxable year to the ABLE account within the meaning of Section 529A, of which such an individual is the designated beneficiary, and B, in the case of any taxable year beginning before January 1st, 2027. 1, the amount of the qualified retirement contributions as defined in Section 219E made by the eligible individual. 2, the amount of 1, any elective deferrals as defined in Section 402G3 of such individual, and 2, any elective deferral of compensation by such individual under an eligible deferred compensation plan as defined in Section 457B of an eligible employer described in Section 457E1A, and 3, the amount of voluntary employee contributions by such individual to any qualified retirement plan as defined in Section 4974C, 2, coordination with Secure 2.0 Act of 2022 Amendment, paragraph 1 of Section 103E of the Secure 2.0 Act of 2022 was repealed, and the Internal Revenue Code of 1986 shall be applied and administered as though such paragraph were never enacted. 3, effective date. The amendments and repeal made by the subsection shall apply to taxable years ending after December 31st, 2025. B, increase of credit amount. 1, in general, Section 25BA is amended by striking $2,000 and inserting $2,100. 2, effective date. The amendment made by the subsection shall apply to taxable years beginning after December 31st, 2026. Section 70117, extension of rollovers from qualified tuition programs to ABLE accounts permitted. A, in general, Section 529C3C 13 is amended by striking before January 1st, 2026. B, effective date. The amendment made by the section shall apply to taxable years beginning after December 31st, 2025. Section 70118, extension of treatment of certain individuals performing services in the Sinai Peninsula and enhancement to include additional areas. Treatment made permanent. Section 11026A of Public Law 115-97 is amended by striking with respect to the applicable period. Kenya, Mali, Burkina Faso, and Chad included as hazardous duty areas. Section 11026B of Public Law 15-97 is amended to read as follows. B, qualified hazardous duty area. For purposes of the section, the term qualified hazardous duty area means each of the following locations, but only
during the period for which any member of the Armed Forces of the United States is entitled to special pay under Section 310 of Title 37, United States Code, relating to special pay, duty subject to hostile fire or imminent danger for services performed in such location. 1, the Sinai Peninsula of Egypt. 2, Kenya. 3, Mali. 4, Burkina Faso. 5, Chad. C, conforming amendment. Section 1126 of Public Law 115-97 is amended by striking subsections C and D. D, effective date. The amendments made by this section shall take effect on January 1st, 2026. Section 70119, extension and modification of exclusion from gross income of student loans discharged on account of death or disability. A, in general, Section 108F5 is amended to read as follows. 5, discharges on account of death or disability. A, in general, in the case of an individual, gross income does not include any amount which, but for this subsection, would be includable in gross income for such taxable year by reason of the discharge, in whole or in part, of any loan described in subparagraph B, if such a discharge was 1, pursuant to subsection A or D of Section 437 of the Higher Education Act of 1965, or the parallel benefit under Part D of Title IV of such act relating to the repayment of loan liability. 2, pursuant to Section 464C1F of such act, or 3, otherwise discharged on account of death or total and permanent disability of the student. B, loans discharged. A loan is described in this subparagraph if such loan is 1, a student loan as defined in paragraph 2, or 2, a private education loan as defined in Section 140A of the Consumer Credit Protection Act, 15 U.S.C. 1650A. C, Social Security number requirement. 1, in general, subparagraph A shall not apply with respect to any discharge during any taxable year unless the taxpayer includes the taxpayer's Social Security number on the return of tax for such taxable year. 2, Social Security number. For purposes of this subparagraph, the term Social Security number has the meaning given such term in Section 24H7. B, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by this Act, is further amended by striking "and" at the end of subparagraph 5, by striking the period at the end of subparagraph W, and inserting "and by inserting after subparagraph W the following new subparagraph. X, an omission of a correct Social Security number required under Section 108F5C relating to discharges on account of death or disability. C, effective date. The amendments made by this section shall apply to discharges after December 31st, 2025. Section 70120, limitation on individual deductions for certain state and local taxes, etc. A, in general, Section 164B6 is amended, 1, by striking "and before January 1, 2026, and 2, by striking $10,000, $5,000 in the case of a married individual filing a separate return, and inserting the applicable limitation amount, half the applicable limitation amount in the case of a married individual filing a separate return. B, applicable limitation amount. Section 164B is amended by adding at the end the following new paragraph. 7, applicable limitation amount. A, in general. For purposes of paragraph 6, the term applicable limitation amount means 1, in the case of any taxable year beginning in calendar year 2025, $40,000. 2, in the case of any taxable year beginning in calendar year 2026, $40,400. 3, in the case of any taxable year beginning after calendar year 2026 and before 2030, 101% of the dollar amount in effect under this subparagraph for taxable years beginning in the preceding calendar year. And 4, in the case of any taxable year beginning after calendar year 2029, $10,000. B, phase down based on modified adjusted gross income. 1, in general, except as provided in Clause 3, in the case of any taxable year beginning before January 1st, 2030, the applicable limitation amount shall